And we're back. Monday morning.
Welcome back.
What day is it?
World Traveler. I know you don't even know what day it is.
May 19th.
You traveled the globe this weekend.
Yeah, my world travels to Omaha, Nebraska.
Look at you.
Which was great. I don't mean that in any kind of demeaning way. It was fantastic. But yeah, it did feel like longer than it was. I only missed Friday, and I did, for anybody watching that is in the Tasty Trade universe that has to do with my future, I was checking in on emails and chats and everything else.
I believe the 63rd day of PTO this year. So it's a generous
63rd.
schedule you negotiated.
Well, thankfully, the new year is about to renew.
Right. Then you go back to 70.
Okay. Yeah, perfect.
Yeah. Why bother? Don't even come in.
It did feel like a long weekend, though. It's only an hour flight, but I will say this, because it's an hour flight, no one gets up, and there is 30 minutes of BS before and after the actual flying.
Yeah.
And so, like, I've never from a flight had to pee more than getting off of that. Like,
you got to get to the airport an hour early. You got to go through the bullshit. You got to wait and everything. You know,
and I have a coffee. I sink a coffee like right before, like I get through security. I grab a coffee. I've got like 20, 30 minutes to boarding. I sink the coffee, and then I get on the flight, and I'm like, okay, I'm feeling good. I'm feeling good. Like the first part, we get up in the air. I'm, listening to podcasts, whatever, and then like by the end of it, I'm like, oh, I'm gonna pee my pants, and then like the seatbelt thing goes on, and he's like, we're starting our descent, but the descent is 30 minutes, and it's like. So I can't get up, and like.
See, you're a rule follower. I would have definitely rule broken it.
I know. Having traveled with you, I know you would have broken the rules. And I thought about it. I even thought like when we.
What are you gonna do? Pull out like a taser?
Trust me.
Down
My mind went through all of the iterations. We land.
Frank's going to airport jail.
We're still like taxiing, and obviously like no one's allowed to move. But at that point, I'm like,
there it's hard to get.
I'm literally like, I'm going to have to go into the bathroom at this airport and pull out dirty pants from my trip and replace my pants because I'm gonna pee on this flight. And it was like unbearable. Like I couldn't, like I was walking to the bathroom like hunched over because I thought I was gonna like I don't know. It was awful.
So I saw a picture.
But the trip was great.
You went and did some shooting.
We did. So my buddy who already there was also like a funny dichotomy of my friend, really good friend from college. We both were in the same program. We've remained really good friends.
Major of math and small animal. Okay?
He didn't do the animals.
Okay.
He just did the math.
Obviously not with the guns. So,
yeah. And so, but he got married. He had like you and I have been talking about with my life.
This was a bachelor party.
He got married at the end of last year, and he and his wife just had their families in New York. He does very well for himself, but the idea of having a wedding in New York with like friends and family and all this stuff, the cost got so large that he was just like, I don't want to do this stuff. So he got married last year. We had the bachelor party. This most recent weekend. Oh, we got to replace mics. Uh-oh.
Here we go.
There we go.
Spectacular.
That'll be better for everybody. So there was a funny dichotomy of like, he's already married, but we're on this bachelor party. And so like, when certain nefarious things happen, they're supposed to happen before you get married. Wow. But it's like, well, he's already married, and here we are. That being said, I didn't go to any of those nefarious activities, so I don't know exactly what happened. I got to pull. This is a prime weekend for being sober because you get to just be like, it's like 10 or 11, and you're like, oh man, like you guys are going to the strip club. I'm sorry, I don't feel like I would really enjoy it. I'm kind of tired. I need to go home.
You made it to 10? I usually have.
I made it to 11:30.
I'm usually back in by 7:45, 8 o'clock at the latest.
11:30. I'm sitting there like falling asleep, listening to people drunkenly tell stories about whatever. So I made it pretty good. But yeah, we did this like there's 12 of us. We went to like a shooting range because he loves guns and whatever. And we didn't just like shoot gun. You scared me because you were like, oh,
Well, that's what
my
they did.
son did that.
That's what they did in Vegas, where they had all the wild. You could take an AK-47,
Yeah.
whatever.
And I was like,
Uzi.
oh man, like I don't want to. And someone else on the trip, I was telling him about what you had told me about that, and how like they're putting all this ammo in front of you, and then like at the end of the day, it's like, oh, here's the bill. It's like $3,000,
Right.
and it's like, oh man. And so I'm talking about that. And my one friend was like, oh yeah, like if you do that in like Vegas or certain
Right.
places, like they'll take you like out to the middle of nowhere, and like you can like shoot what are those things called, like a grenade launcher or an RPM, whatever
An
that
RPG. Yeah.
like
Rocket
and
propelled grenade.
blow up like a car or something like that. And I was just
I
like,
can only imagine what they're going to charge you for that thrill.
I could not imagine. But no, it was really great. This guy just like this like former cop or whatever in Nebraska.
So you shot targets indoors.
He set up a course
Oh, nice.
in the
Yeah.
range, and so yeah, there were like, I don't know, maybe 10 targets, but you have to like move with a Glock. Is that?
Yeah, but my brother-in-law does that. It's tactical shooting, where they move from spot to spot, and it's different situations.
It was cool. So
Yeah.
it was timed, and then based on what part of the target you hit, you would, if you hit it like in the like chest here, there were no seconds added. But if you hit it like here or like out here, they would add like 3 or 5 seconds. If you missed it, they would add 5
so
seconds.
are you thinking about strapping up now?
Absolutely not. I'm thinking about watching Sicario again, though, because it was, and I will tell you, there were like 2 or 3 guys who shoot, I guess, like regularly,
Yeah.
and they got like the top 2 or 3 positions. Me, number 4.
That a boy.
Moved through
Look
the
at
course,
you.
and the best part of it, I beat Spencer, the bachelor, that my best friend, who he hates losing in anything. And he was the one who wanted to do it. So that was like all I ever wanted
How
was
does
to
an
beat him.
inflatable guy hold a gun?
He's real. These people were all real.
Okay, we'll stick with the real.
Omaha Steaks. I don't know if you've ever heard of this.
Yeah.
Very good. Very good.
Yeah,
if you
they're
go to
very-
Omaha, you should probably eat a steak.
Yeah.
It was very good.
Look at you. And either you go 30 ounces or you don't go at all.
It was like it was a classic 12 dudes, pretty much all work in finance. And so it was like Spencer trying to be like, all right, let's just order like this. But of course, like one of them gets like 2 Manhattans, and it's like, actually, we need the seafood tower and we need this and whatever. And so like it was a classic case of like, by the end of both dinners, we have literally like, I don't know, like probably 100 ounces of steak still sitting there.
Yeah.
And like
Nobody can pack it.
hundreds of ounces of mushrooms and potatoes and all of this stuff that everybody needed. That sounded like a good idea. It was, but I will say, yeah, I got like Delmonico. Have you ever heard?
Yeah.
It was unbelievable. And everybody tried to get cute with the like, oh, I want the green chimichurri or whatever. Bernays with the Delmonico. It was,
See? There you go.
it was unbelievable. I felt amazing. And honestly, I didn't eat yesterday until 5 p.m. and I like, not a problem, because I put that thing down and it was unreal. So yeah,
Well
if you go
done.
to Omaha, the steaks.
for you.
What did you have a steak this weekend?
I did. I had a steak on Friday. Yes. Not an Omaha steak, just a regular, like, a public steak. So, I can't go bougie like you.
It is funny. They did try to, and I steered us away. They almost got a couple of guys in our group.
On the Wagyu stuff?
Well, no, it's not even Wagyu. It's like, well, so like here are steaks, and they're like
how long
65 to $80. No, here's this one. You've heard this one before, I'm sure. But for $150 or $200, we have these cuts from this ranch that's 11 miles away, and like no one gets any beef from this ranch. Like this is the beef that goes to like this one French Laundry in San Francisco. Like is the only beef they only send beef there. Like it's half, like Wagyu. It's half this friggin' thing, and it's $200. And they're like talking about this. The woman that's serving us was great. Was talking it up, and of course the guys are like, "Oh man, like I feel like we got to get some steaks from that ranch." And I was like, "Guys, we just learned about it 2 minutes ago. We don't have to. We absolutely don't
There's not
have to get the
a
steak.
sense of beef urgency at this point.
Well, because it's like, of course, like if you were really into steak and you went to the restaurant we went to because you knew that they had had cuts from this ranch, I would get it. But it's like she just told us about it, and like we don't care, and you're all drunk. So like let's just get the $75 steak. How about that?
Wow.
But it was fun, man. It was
for you.
it was a goofy time.
Good
People
for
are
you.
so weird. What has been going on? Our
Yeah,
credit
look at
rating
you.
is
You leave
screwed.
one day and the wheels come out. I mean, obviously, with you out of the office, Moody's was very uncomfortable.
Did Moody's check in on us while I was gone on Friday?
Yeah, and they said 63 days PTO, credit downgrade for the U.S.
So tell me. So let's bring up the platform to take a look at the prices because they're a lot lower if you're holding U.S. dollars. What happened?
This came out at
Over the weekend.
3:45 our time in Chicago. So futures were still open. We were still open. SpotFX was still open. SPOOs got sold off about 60, 70 points. Bonds got knocked down a point and a half. And again, which I am not the conspiracy guy, but bonds were getting sold all Friday, really hard. And nothing else was really moving. We really had a relatively quiet Friday afternoon.
Can we hold on the bond piece for a second? Because I want you to explain this because honestly, I lose track of this sometimes, which isn't like, oh, Frank's a genius. But having traded
Really? You
bonds,
tell me that every day.
I should probably know this better. When in a textbook, when there's a sell-off in risk-on markets like equities, they tell you that bonds are a flight to quality and tend to move higher in price and lower in yield.
Right.
This is a particular scenario where they're directly saying, yes, there's fear in the overall market, but it's stemming from the fact that the credit rating of the U.S. is now lower and we have less faith in the U.S. servicing their debt, paying back this debt.
Yes.
Bonds move lower on that move because if you have a worse credit rating, the theory with that is you should have a higher interest rate.
Exactly.
So can you kind of lay out with the move like last night, what is happening? Because some people might look at SPOOs down 70 and say, hey, bonds should be up a point.
Right. But as you would think, there's everything from AAA, which the U.S. used to be, down to A, B, double B minus. These
South
are
America, which isn't a shot at South America,
No,
but just
but
historically not
and
good
traditionally,
debt servicers.
that is a rating of the likelihood of, you're absolutely right. All things taken aside, the likelihood of repaying debt. And a lower credit score would imply a lower probability of the principal being, and again, what's a bondholder's risk? Well, they're guaranteed an income stream for a period of time. Now, that could be below the prevailing market rate or higher than the market rate, but the key thing that you want as a bondholder is you want your interest rate paid, but you want your principal
You want your money back. Yeah.
And the idea that there is less likelihood of you getting your principal back, and again, keep that in context. You're talking macroeconomic. That would command a higher interest rate. So you're asking the person who is taking the bond from you, giving you cash, to assume more risk. He's going to want to be compensated by a higher interest rate.
Sure.
So it's very basic. That's what it's saying.
If I have one friend who's an investment banker and one friend who's a guitarist, and I love them equally, and they're both equally talented, the one who's a guitarist would probably have to pay me a higher interest rate if they were both to borrow $1,000 from me. That's essentially the same, but with central banks across the globe.
Right. And does that mean, I think it is the idea of that with the budget they're floating, whatever creative math they're doing, they're going to have to borrow an extra $5 trillion.
Okay.
Now,
Sounds like a lot.
if you think that, sure, nobody's defaulting in the U.S. The U.S. government isn't going to default. But then becomes the question of, okay, there's a market price for everything, whether it be crude oil, currencies, your home. And that's dictated by supply and demand. And that It's what the market does. It sets an equalized value between supply and demand. If you're telling me that there's going to be, over a short period of time, 6 trillion more bonds that have to be sold to finance the U.S. government, that means there's more supply coming on versus what currently exists as demand. And traditionally, in other words, if you drove up to a car, an auto dealer's parking lot, and he had an extra 100 cars on trailers,
Sure.
you would think, okay, this guy's got to move some cars. Prices are
But
going
it's
to
not
come down.
necessarily that this car is going to fall apart when you drive
No,
off the
it's
lot.
just the price at which you're going to get for the car.
Gotcha.
And it's the same thing here. There's more debt coming. It means there's going to have to be more people interested in buying. At what price are they going to be buying? So the market is, again, has this bill passed? No. Has any of this debt been issued? No. What they're anticipating, what the market likes to do, is price in that effect immediately.
And what you're seeing in the Forex space, because now, okay, that was great.
Different animal. Because now we're breaking the context of, well, you guys have been talking so long about this difference in interest rates between the two countries is one of the great drivers. And you would think, okay, U.S. rates are moving higher.
Moving higher today, yeah.
Long-term rates are moving higher.
Sure.
Short-term rates are unchanged. So currencies are usually more impacted by short-term rates, not long-term rates. So this is a little bit of a different animal. And when you think about this in terms of if higher long-term rates, which have more to do with corporate borrowing and the formation of capital for growth of the economy, rates are going to be higher. That could put an extra damper on economic growth. That then impacts, okay, how many dollars do I need if the U.S. is not transacting that much? So we see a situation where the dollar actually falls in value, even though interest rates are higher in the U.S.
And here you have that short-term rate story. And as you can see, I of course love the distribution. This is for December, so end of the year. Expected about 50 bips lower than where we currently are. Is that right? Yeah, we're currently four and a quarter.
That was, if you go down and look just a week ago, that distribution was dramatically different.
Well, actually, to your point, in the last week, it has been relatively similar, edging a little bit lower, so it's up a little bit. If you go back, a month ago, it was much lower amid the fear and selling. So we'll see where it goes from here. But to your point, most of the action probably in the 5 to 30 year range in the Treasury market. And when you bring in the Forex piece of this, not the same as what we've been talking about with interest rate differentials, because the kicker to interest rate differentials when you're looking at that, especially if you're trying to measure, boons to 10-year treasuries or BTPs or whatever, when you're looking at the equivalent of treasuries, which is different than the overnight interest rate set by a central bank, you have to factor in the risk or the rating or whatever you want to say, because of course you get down this list here, Pete, and you go into maybe the emerging US dollar pairs, and you might see some of these currencies that have much higher interest rates, but have much different risk factors involved in those regions. For example, the dollar peso in here, to be short dollars, long peso, it's like, oh man, that's a really nice overnight rate that I'm getting paid to be long pesos. Well, that comes with inherent risks. Whereas in this section here, among these pairs, it's often thought they're all pretty equivalent. And so those interest rate differentials, people look at it with a magnifying glass. But when something like this happens, when a credit rating is downgraded among these UK, Japan, US, Euro area, some of the commodity currencies, whatever, Switzerland, it's almost like a foundational shift, like a re-level setting of like, okay, the US rates might be higher for 10 years than they are in the Euro area, but now the credit rating is lower there.
Yeah, absolutely. And I think you highlighted that great. Mexican rates appreciably on top of U.S. rates. And that's partially to hold the currency in place. But it is one factor of many that go into currency valuation. Now, the other thing too is euro was down sub 112. We were we went out Friday at 111.40. Remember the lower end of our 115 to 111 range. So this is also the market's reaction. Would we have the same reaction if we were at 113.5 or 114? I don't think so.
Yeah, it'd be hard to say. And so this is all I think, great context from Pete.
I think what it does highlight is that, this just reinforces this idea. We've talked about this a lot. The range is no longer 105 to 110 in the euro. It's somewhere fishy, sloppily around 111, back up to the highs. And there's some interesting trade to be. You have to adjust your lens from what it was last year to what it is, or even the beginning of this year, to what it is now, except the range. And I think it goes back to does this mean I'm buying euros because the dollar is going to just collapse? No. But what it does say is that we may have been selling 111s and 111 and 50s on the way up, and those were a great trade when they traded back to 108. But now we accept the new range, and we're not afraid to look at trading, what I always say, both sides of the market.
Well, and just to put a bow on the theory part of the conversation here, it's translating to U.S. dollar weakness.
Yeah.
For all of, again, it's so hard. I always bring up, like, in history class where it's like you're studying whatever war, and it's like, what was the reason for the war? And, like, they want to say, like, it was this one thing. They killed the Ferdinand guy, whatever. But, like, it's really, like, 30 things. Isn't that his name?
Yeah.
But it's really, like, it's always so many different things.
It is.
And so right now it's translating to higher rates in the U.S., lower equity prices in the U.S., risk-off sentiment pervading abound, and U.S. dollar weakness for a multitude of factors. Diving into that U.S. dollar weakness, I am surprised to see that among these pairs, the weakness is really gravitating in this euro-dollar pair, where I would have expected dollar-yen to be up 100, 150 points, only up 65. And this euro-dollar, even though it's given back about 20 points in the last hour here, Pete, up 100 points on the day. To your point, we went out at the end of last week below 111.50 after trading above it for the majority of the week, so a dip going into the weekend, and then a big rally on that last 15 minutes actually going into the weekend. Like you were saying, maybe a little bit of some of that news kind of coming to market right before the market closed on Friday. Obviously, we open lower in equities, higher in euro dollar, whatever market you're looking at the start of this story, but then throughout the European session coming in here.
Right at that 1:30 time window when the UK came in.
Huge move.
You saw a pretty big move. So this is something we continue to see Sunday nights too, as Asia takes a bite at it. Then once Europe and the UK come in, they tend to do a little bit more damage. I think what this gives us as traders is more elasticity in all these things. We're back
100%
into the range. 100, we talk about, do I take my one standard deviation move from the opening here at 112.5, or do I take it from where we opened at, let's just say 111.70, or from the close Friday? We're almost at two standard deviations of movement right now. So a big move. Going to probably see some interesting back and forth today. I think this is another one where we're getting outsized movements back into a relatively healthy range, because we sat in a range when we were down at 105 that was 22, 23 pips a day. We're getting 100 pip ranges, which is great.
It's great to see. And to your point there, when you come to the platform and it's like, oh, we're already at a 1.5 standard deviation move, what do I do? It's up to whoever. I would say whatever you usually would do in a situation like this. For me, when I was, professionally trading and also like when I dabble here and now, it's to me a matter of like, okay, well, if I'm a contrarian and I wanted to be short into this move, maybe to start the day, I would put on a little of my size, maybe like a quarter unit or a half unit or something like that, short, and look for another one standard deviation move or something throughout the U.S. session.
That's
Same
exactly
thing,
right.
flip it for a trend follower. I would be obviously long, looking for that.
Well,
and
we took a day to get back to the middle of the range. That's where we are at 112 and a half.
It's a huge move, and so this is all to say I wouldn't necessarily look at this and be like, oh, well, the U.S. market hasn't opened yet, so I'm going to wait for another 50 or 60 point move in the U.S. session.
Yeah, and when we look at 7 o'clock, U.S. market is open.
Exactly.
Clock's ticking right now. It'll be interesting to see if they can hold on to the bulk of this move or it gives back a little bit of ground. They tried it a little bit higher right into London lunch, which is 5:30 our time in Chicago. It'll be interesting to see if we base build from this and we start to take a bite out of 113, or if dollar yen starts, we see something sub 144. But there's lots of interesting
I was going to say,
here.
Yeah, last thing before we get out of here is just make sure to look at the dynamics between some of these U.S. dollar pairs among the major currencies, because, you're seeing Aussie and Kiwi both up appreciably, and it's almost the risk off kind of like safe haven currencies like your Swiss franc and yen are actually kind of lagging behind.
Yeah.
I wonder if at some point amid this news story as it develops this week, that dynamic flips. There's something weird about that to me right now.
Right.
We'll watch to see if that flips. But
They actually had bigger moves, Swiss and yen, safe havens, right at Sunday night.
That would make
the
sense.
euro just didn't do much.
Yeah.
So now the other side of the coin is playing through. But keep 60 cents in your mind. That's been the rejected high in Kiwi for a long time.
Oh, whoops. Yeah. Right. If we can, and this is now we're talking about this week.
Yeah.
If there's a continuation of this story, or if the price action continues to be volatile,
But
I would watch
even
those
this one
dynamics.
gives you some great setups because if this does pull back a little bit, you're still picking up congestion at the bottom of that 58 to 60 cent range. If you're looking for the dollar truly to weaken up a little bit, if you really feel this is way overdone on nothing, which you can argue to an extent, it's just stating the obvious.
Mm-hmm.
If they need to borrow more money, it's going to cost a little bit more for them to finance it. What's the long-term effect on the dollar and the economy? Not much. Then maybe 113.5 is an interesting level.
It'll be fun to see how it develops, but you'll have to get that from Tom, Tony, and Vanetta coming up next. Stay tuned, and thanks for watching. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Do you believe the efficient market hypothesis holds up completely, or do you think that there's some merit to technical analysis?
I definitely think there's merits to technical analysis. I think technical analysis sort of identifies these greed and fear pockets in the market and where everybody is sort of trading around. So I think that's fascinating, and it gives you sort of areas of the market where people are clinging to, so you can choose to take advantage of that however you want to.
I think the efficient market hypothesis is perfect just the way it is, but I think that there's always going to be some sort of inefficiency, whether it be wide bid-ask spreads, illiquidity, in the rare cases of inside info or nefarious things. There's always going to be that aspect, but I think from the main point of efficient market hypothesis is that you can buy and sell right now at basically the same price, and that is very much true.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knucklehead. Happy Monday to just you, sounding off. I do miss Vanetta. She has a voice of an angel, as you just heard her singing that song. She's amazing. We do miss her. I think she'll be back tomorrow, won't she?
I don't know. I think Wednesday.
Oh, one more day of paradise.
I'll frame a picture of her and put it on your desk, okay? In case you miss her.
Thank you. I appreciate it. Sadnov, I see that you're wearing my golf quarter zip there today. You and I played golf this weekend.
No. This is a different one. This is a fancy schmancy one.
Oh, it's not the one that you were going to gift me to keep me warm. You were so kind to me.
Oh,
on the golf
that's
course.
what it is. I was going to gift this to you. You're right. That's
okay. It is. All right. I thought it looked familiar. Familiar.
Yeah.
Are you wearing it because it has my scent on there, and you just wanted to be with me? Is that what it was?
Yes.
That's what I figured. What I figured.
Yeah,
Not too creepy, but okay. I get it.
I'm going to bottle your scent because I think we can make a fortune on on your Batista fragrance. Well, we'll have
that makes sense. That makes
we'll have
sense.
to come up with a good name
sure.
for it, but I think it could be a big seller. Big.
I think so too.
Scent of a trader.
That's right. Well, the scent of a winner this weekend, Sadnov, on the golf course, took down Slappy and what do we call Donnie? What is Donnie? What do we?
Donnie. Donnie.
He has that much respect, huh? I mean, just call him Donnie. He must be up there in the food chain. Yes, Donnie and Slappy. Slappy must be very low in the food chain, although he deserves to be very high.
Yeah, those guys were very depressed last night. I went out for a late afternoon lunch with them, and they were very depressed.
Thanks. I didn't get the nod. All right, I appreciate it.
You could have had
even though
nod.
I played with you the whole day.
You could have had the nod, but you
I ran out of there so fast my head was spinning.
A little Irish goodbye.
Well, we dismantled them, Sadnov. It was nice to play with you again. You still got it. I got to give you credit. You played well. I mean, you're not like you're nowhere near what you used to be. I mean, you're just a little cute. You're just an okay golfer now. You used to be. It was fun to watch. Now
that's fair.
You're an okay golfer. Right.
Yeah. Yesterday I played good. That was a good round for me.
If you can make it, you'll be one of those golfers that'll shoot 2 or 3 over their age. You know what I mean?
Yeah.
Like you'll be 79, 80 if you make it. It's a big if, but you'll be 79, 80 shooting an 84 or something like that.
If I played,
you'll be one of those guys.
If I played more, I think I could. I think it's someday. Yeah, I had a chance to shoot a couple over my age. Yeah, I played more, but I don't play enough. That was only my second time. That was only my second time this year. So the short game sucks. That kind of stuff.
Yeah, you can't have feel for anything.
Yeah, I mean, I hung in there until.
Although when it came time on the par 3, that was well guarded by a lot of sand traps, and I was in a lot of sand traps. Sadnov. There was one guy who lipped his birdie putt. Yes, that was me, Sadnov. Yeah.
That was
the highlight of my day.
That was your best shot of the day. But
it was. Carried our team again, Sadnov.
It cost me because I tried to get too cute after that.
Right. Me being on the green about 8 feet from the hole or so made you do something silly. Right. I get that. As partners on the team. Yeah, I get it.
Yeah, that's what you do.
Yeah.
But that was good. That was a good day. I mean, what's so funny is when we were done.
Don't get used to it, Sadnov. Don't get used to it. You're not gonna make this a weekly thing with me.
Oh, that's okay. We don't want it to be. But when we got done, the sun came out for the whole afternoon.
Yeah,
literally the entire.
I gotta tell you something. That course we played at Harborside, which is on the south side of Chicago. It's windy even when it's not windy. I mean, it is a cold, blistering, windy track for sure.
Well, it has no trees.
Yes. Yeah. I guess that's.
It's a treeless course, but it's quite challenging. And I think you were in 75 sand traps. I counted them.
I did find the beach a lot yesterday. I never got good at it either. I took a lot of practice. I never.
No. It's not your thing. You'd be better off on a golf course without sand traps.
Yes, yeah, I was. It was getting a little bit obnoxious for a little while. Yes, I did find every sand trap. That is true.
Yeah,
but still, a fun time had by all, Sadnov. But now it's back to work, Sadnov. You were already at work last night, so good job out of you.
That's the name of our show. Back to work by 11.
Yes.
I was. Well, after we played golf, without you, we went out to lunch, and then little local diner, Swedish diner, which was great. And then we, and then I watched.
You went to Milord's favorite, right? I mean,
yes,
yes. That's right. Well, you wanted. Did the boys pick up your lunch at least?
No, it's okay.
Those animals have no regard for losing.
So
unbelievable.
So after that, we had the show. I watched a little of the PGA, not a lot, because Scotty Scheffler was killing everybody. It wasn't even close.
He is good.
Yeah, he's good. But and we had the show last night. The Sunday night show, which was fun. And before the show, it was really funny because we were screaming and yelling at each other for about 15 minutes before the show started. And then when the show started, we were all like, oh, we're all friends. It was great. We should have played the 15 minutes before. And then I watched the hockey game, which I thought was going to be, like a great classic Game 7. And all it was Florida.
Well, the Panthers came to play. I mean, that's for sure.
That's a team built for the Stanley Cup playoffs and as well coached as any professional sports team I've ever seen. They didn't.
Yeah.
They manhandled in a Game 7 on the opponent's ice. They manhandled Toronto.
From the opening puck drop, it really was. I honestly don't think the Maple Leafs would have been able to beat the Blackhawks last night. I mean,
I thought Justin Bieber was going to cry.
I don't know, man. They just got a monkey on their back. I don't know what it is in this Game 7. And Marchand is just a killer. I think he's like 6-0 against them in Game 7. It's unbelievable.
Well, I know the Boston fans were happy. Because Boston.
If they got rid of Marchand? No, why would they be happy? I don't think they're happy at all.
Well, no, they're happy because they got rid of him only because they had a horrible team this year, and so they were just giving the guy, they were respect. It was out of respect. So give him a chance to win a Stanley Cup, but they're happy because he's your guy.
Yeah. It's like, representative. You mean? Why are you happy about Seth Jones? He was an old Blackhawk. Are you happy about him?
I didn't care about Seth Jones, but he did play great. Last night.
That's how bad the Toronto Maple Leafs played last night. They made Seth Jones look good.
But like when Patrick Kane went to another team, you're like rooting for him. You want him to be good. That's all.
I saw Patrick Kane in a regular season game score in overtime to beat the Blackhawks. I mean, I don't know if anybody was happy. I mean, it was good to see. If you're going to lose to somebody, in overtime, your old captain. But I mean,
he was never a captain. Just remember that. There's only one captain in Chicago.
That's true. You're right.
Chicago is a
good
city.
Call.
Chicago is a city that doesn't captain. The captain's rare in the city.
That's true.
This is a city that has. This is a city that has one captain, Johnny Taves. That's it.
That's true. You got it. I stand corrected.
Yeah.
I think he was an assistant, wasn't he? I think so.
Kane? Yeah, assistant coach. Assistant.
Yeah. Yeah. He had the A. Yeah. Alternative captain. Yeah.
But it was good. I stayed up, watched the whole game. I don't know why, and just because it's going to be fun. I didn't watch any of the basketball playoffs, and
I didn't do that either.
Yeah. So I didn't do anything else because I got a lot of stuff going on this week, and I got to be.
How do you feel? How do you feel this morning?
I mean, pretty good. I feel like I could go. I feel like I could go 36. No, I feel like I could go another 18.
You couldn't. You couldn't.
I
thought
do
you'd break
yesterday.
down around the 15th or 16th hole. You broke down the 18th
I started
hole.
officially breakdown on the 18th.
Yeah, 18th hole. I thought it'd be the 15th, 16th. Broke down the 18th. I call it like I see
Yeah, I
it.
held it all the way out to 18. Then I just like, all right, swing got
Yeah,
lazy.
because I was doing the heavy lifting. You just had to come in every once in a while and sweep up. That's why you could last so far. Usually, you don't have a partner of my caliber.
Let me just
so
tell
by
you.
14th.
Let me just tell you, you were quite the load, okay, for quite some time. That's okay. I didn't say anything.
No, you did throw some digs. You did throw some digs. I forget them exact.
I was better than I usually am.
You were better. I'll give you that too. You were better than usual. And my Taiwanese sources said you came in walking pretty normal today into the office, so that's pretty good.
Yeah, no, I felt fine. Yeah, I felt fine. It wasn't you know what? It's probably because it was so damn cold yesterday.
Yeah, it was. You got another cold day this morning, Sal. Now 40 some odd degrees here in Chicago. It was 80 a couple of days ago and 60 yesterday and 40 now.
I know it's really incredible, but I don't care. I don't care. It'll be a 2-month summer.
It's like it always is.
June, July, by August, it'll get cold again. Yeah. Anyway, looking forward to. I think it's going to be a good week of trading too. I don't know why, but I think it's going to be a short week. But I think it's going to be a good week. Yeah,
you got volatility up 50 cents, Sosnoff, to 2022. Even the S&P
that's not that much, by the way.
It's not. I was gonna talk to you. I was just gonna say, even the S&P is down 60 and change, and that's a little misleading too, right? Because we sold off right on the close.
No, that includes that.
Oh, does it?
Yeah.
I didn't do the math. Oh, good. Well, even the S&Ps are down 60.
That includes that because they went back to the actual 3 p.m. close. That 60 is on the 3 p.m. close.
So they're really down 30 overnight from.
No. When you see the cash markets open this morning, they'll be down like the spiders will be down 6.
As even the S&Ps are down 61, makes sense. Nasdaq down 311, Russell down 29, Dow down 230. Sadnoff, what do you think of this move after the rate cut from Moody's? Volatility up 50 cents, I said. Bonds trading down to 111.19 to 111.29. Where you thought we would be? Thought we'd be lower in the market? Thought bonds would be lower? What'd you think?
I talked about this last night with Victor. I was surprised how orderly the market was last night when it opened. During the entire show we did last night, there was only a $5 range in the S&Ps, and there was only like a couple tick range in the bonds. They were trading 112.20, 112.20. And they got about a point lower this morning because I bought some at 111.20. I bought some at 112.16 last night. And
111.21.
111.21 this morning, which is really surprising to me. So the overnight move, they went from down about 40 last night when we were doing the show, down about 80. Now they're down 60, so they're right in the middle. And the bonds have rallied back a little bit. They're almost 112. So it's kind of like, if you're asking me, am I surprised? I had to ask one of our clients to send me the last couple of downgrades because I didn't even remember who was who. And there's only been 3 of them since 2011. One was S&P, one was Moody's, and this was Moody's, and one was Fitch. And so,
all different credit
agencies. And you got to know my personal feeling about credit agencies is very negative because I've always thought they're a scam. And the reason I say
that, if they get Lehman Brothers right, it's a scam. So yeah.
Well, the reason I say that is because when we were a public company, we were required to get, we were required to have a credit agencies come in and do an evaluation, things like that. And they charge you like an arm and a leg. It's like the most ridiculous thing in the world. And basically it's for board purposes and it's for governance and things like that. And it's such a scam. And it just pisses me off. And so like, I can only imagine, I'm not sure.
Put some context. Context behind it? Why do you say it's a scam? Because they what do they really look at? How do they? It's all objective. It's all subjective.
It's all because how do they know about your business? They send some 23-year-old kid in. Okay, it's like having
some fractional share millennial. Go ahead.
Some fractional share Gen Y or Gen Z or like I remember like 2 or 3 23-year-olds showed up in our office and they're like, okay, now we're going to tell you what the valuation of your company is. I'm like, really? You guys are going to figure this out? Like, we can't figure it out, and you're going to figure this out somehow. And they come back and they're like, a month later and $1 million later, they're like, okay, here's what you're worth. Like, okay, thank you so much. This is very helpful. And the only reason you do it is because you have to do it, for board. It's ridiculous. It's almost blackmail. So I've never had any respect for any of these agencies. I just can't stand them. So like when they downgrade this stuff, like I don't read. It sounds like something I read anything into. I think it's good for creating volatility in the markets. But if you're asking me, like, do I think Apple is a better is any kind of a worse company or because they downgraded U.S. debt yesterday? No. I mean. Do I think that the U.S. debt market should be down 2 full handles in the bonds? No. I
because
doubt
of this is what you're saying.
Yeah, I doubt it's going to change that much, but whatever. It does make I think it keeps them relevant.
It makes for good TV, Sadnoff. I think we were on our way to 6,000 before this. We're now 100 handles below that.
But I think what it does is for like Moody's or S&P or Fitch, it makes them relevant. That's what we talked about in the past. I think it just creates relevancy for can you imagine if you owned a business and all you have to do is put out a report and all of a sudden you're on the front page of every single financial publication and every single news channel, everything. You just got so much free publicity. It's insane. All because you did a
you're the talk of the town. You're the belle of the ball.
Yeah, right. And what? Because you put out a report? I don't know. Something I don't love about it.
Something doesn't seem right about it. Yeah, I totally agree. I thought you were going to have that stance. I just didn't know.
I wouldn't. Let's put it this way: I wouldn't buy or sell stocks or buy or sell bonds based on somebody else's credit adjustment.
Okay, fair enough. Good.
Now
it'll
impact the markets. I mean, my one immediate takeaway from this is. They're not lowering rates anytime soon. Not at 111.
Yeah, well, it's basically reversed everything. I don't know if it's going to last. I mean, even the S&Ps were on a run.
I don't care about S&Ps. S&Ps can come back.
Well, I'm going to get there. Volatility was going lower. Volatility is now going higher. Bonds, which I guess when you're looking at this, the credit rating is going to have the most impact, I guess, on the bonds. No guess. I mean, that's a pretty logical thing there. They're going lower, which means rates go higher, not lower, especially if your credit rating is lower. Bitcoin, I don't think has much effect, but it's also lower by $1,600 or so. Oil, I don't think is going to do anything. It's down 37 cents. But gold reversed nicely too. Gold was kind of breaking lower. It's now up $57 to $32.45. It was under 32. So you definitely have some change in the market when the market was going in one direction. You got the euro higher too, Sadnoff, and that too was going lower also. So you had currencies going lower. The dollar was going higher. You got a complete reversal on everything. Is this day one to the reversal, or do we kind of do that V bottom and change everything in course? That's my next question.
I'd be really good if.
Oh, you're a buyer of bonds, so you're looking for a little bit of a reversion in price to the means. I mean,
yeah, in bonds.
You've talked about how you thought bonds going lower was an easier buy than the market going higher than where it closed on Friday.
I still think that. And I'm also. Yeah, I still think that. And I'm glad UNH is up a little bit this morning because it's amazing how that stock goes from 250 to, to 307 or whatever it is now. So that's a good thing. But
a couple of insiders buying stock there, so I don't know if they posturing.
Well, I mean, they're not posturing. I think, listen, if I was the CEO and they had taken my stock down by 50%, and I believe that
in a month,
and I believe that the company has fundamentally not changed at all, and if you think that the case brought up, I think it's the Department of Labor or something, or Department of Justice brought against you, if you think it's frivolous and it has no basis, you're damn straight I'd buy stock. And the street likes when the CEOs step up and buy stock. I don't blame them. I mean, I would like that too as a shareholder. I want to see. It always drove me crazy when CEOs don't buy their own stock.
Totally agree.
I've long been a proponent of everybody in management and everybody on the board. You better own stock. I have had all out wars with our boards over the years if I don't think that they own stock in our company. I'm like, listen, you don't have any skin in the game. Get the F out of the room, because it's not a conflict. Okay, it's actual support for the company. If you don't believe in it, get out.
Yep.
And I've had this battle, man, and it's ugly, and you should hear the other side. Well, we think it's a conflict and blah, blah, blah. I'm like, oh, that's bullshit. Give me that crap.
Right.
You know what? If you don't want to buy the stock, then get off the board.
Totally agree.
Listen, not everybody agrees with that. I'm telling you right now, not everybody agrees with that. And
that's true.
I've had plenty of arguments, plenty of fights. So if a CEO wants to go out and buy stock in a company when your stock's beaten down, God bless.
So be it. Yeah, should be it. Yeah, totally agree.
It's a good statement.
Yeah, totally. Definitely a good statement. So I got to make a quick statement here. I'm going to take a quick break so that we can cut this all up and come back, and we've got confirm and send next. Even the S&P down 64, trading near their lows. We'll be back in 90 seconds. Sound good to you?
Sure.
Sound good to me too. We'll be back in 90 seconds. Confirm and send next.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
So, Mas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the confirm and send. Let's just go over it real quickly, and then we'll get to those questions. Even the S&Ps are down 65, about 20 handles off of their lows. NASDAQ down 331. Russell down 30. Dow down 251. And volatility up by 54 cents off of its highs by about 20 cents. It is a 2.75% move. It seems low what's going on. It seems like a small move in volatility, maybe helping a little bit of this market reverse. Bonds down 118. That's a 111.26. Sad enough, that's a number we haven't seen since April or so in the bonds. Bonds have been on a slide for the last 10 days or so. Bitcoin 1,500 down 1,570, trading 102, almost 103, in that pretty tight range after the last 4 or 5 days, near the lower end of its range. Oil down 32 cents, been basically a non-event mid-range for the last month or so right now. Gold up $57. Looked like it was going to collapse lower. Sad enough, it's caught a little bit of a bid. Gold up $58. That's an almost 2% move in gold. Silver doing a similar type move, up 43 cents. And the euro is up, also reversing its kind of weakness that it's had for the last couple of days. Sad enough, that's all I have right now. Most stocks are lower, except for a few of the pigs like UNH, which is up $6 or $7.
Yeah. Most of the stocks I'm looking at pre-market this morning, they're down pretty good. Pretty good, pretty ugly opening.
A lot of these stocks have had big rallies. This news, I mean, it was a fragile market.
I understand that. I'm just saying NASDAQ's down a little more than the S&Ps this morning. So
yes, NASDAQ and the Russell are the weakest. The Dow and the S&Ps are the strongest. The Dow being the strongest.
Yeah, we haven't done anything this morning except just a couple of option trades and maybe buy a few bonds. That's it.
Sure, in the futures market because they're open, right?
That's right. It is 7:28 in the morning. It's Monday. It's sometime in the middle of May. I have no idea what the date is. And
it's the 19th, Thomas.
It is the 19th. It's the 19th of May.
It is. I wouldn't lie to you.
Yeah, I believe you. Whatever. It's a very big week for me. I'm taking a road trip this week. I plan to stop at Buc-ee's one day and get my first Buc-ee's brisket sandwich. I am.
You got to buy the grandson a Buc-ee's bathing suit.
Got to buy a Buc-ee's bathing suit. Got to buy myself a Buc-ee's bathing suit.
And Buc-ee pajamas. I wear them all around. I love them.
Got to wear Buc-ee's pajamas.
Just the bottom size. Don't go like bottom top. That's obnoxious.
Okay, just the bottoms. And yeah, I got some other things. I got some other road stops. I don't take a lot of road trips. I don't drive a lot. Like I don't drive.
Sadov, I'm so sad that I sold my RV. I think you would have had a great
it's okay.
time.
I don't need your RV.
Your wife would have been able to drive it. She's going to do the driving. I'm going to text her and ask her. She's going to do the driving. It's 100%, right?
We're going to share.
There's no way you can make this.
We're going to share.
No way you can make it.
I don't want to make it. I'll let her drive half. Yeah.
You know what?
What?
I'd rather lie outside naked and have cabs run over me than hand over the keys to the wife. I don't know what's happened to you, Sadnov.
Why? I don't care about it. I don't like driving that much.
I don't like driving either, Sadnov, but I don't like somebody else driving even more. I mean,
I don't like her driving me either because she's a horrible driver, so I don't want her driving me, but whatever.
I gotta tell you, so last time I went on a road trip with her, she was a horrible driver, Sadnov. I would not let her go to the grocery store. Are you kidding me?
Right, I know. She thinks she's like Mario Andretti.
I'm sure she is. You're dating yourself, by the way, with Mario Andretti as a racer. I think he retired 30 years ago.
I think he's still alive.
He might be still alive, but he hasn't driven professionally in a while.
Mario Andretti would have sure been proud, however that song goes.
When did Mario Andretti retire? 1994.
30 years ago.
Yeah, that's what I said.
Yeah, well, whatever.
Okay.
I like a little Mario Andretti. Sure. All right,
I
let's
don't
do
even
it.
know what that means. I'm not gonna even touch it.
I don't know. I mean, when I was growing up, he was like, he was the guy, I guess.
Yep, he was the man.
He was. All right, let's take a look, confirm and send. Monday, May 19th, like the bat said. These are emails that came into us over the weekend. When Vanetta is not here, we do a little extended confirm and send. She'll be back on Wednesday. Normally, she does the news. But, I've been so anti-news for so long, but she came with the furniture. So we've let that continue since we started Tasty. But you'll see no other news on Tasty. That's for sure.
Plus, she has pictures of Sadnoff in compromising positions. Otherwise, we could have gotten rid of this too.
I don't even think she'd want to save those. Monday, May 19th. Let's see it. What do we got here, John?
I'm ready.
Oh, yeah. Is the put-call ratio still used? And is it a reliable indicator for market direction?
Yeah, I mean, you can still find put-call ratio. You can find it on our platform, too, in some drop-down, I'm sure. I mean...
Are you sure?
I'm
not so sure you can.
I'd have to look for it. I was taking a guess.
I don't think we have it. I'd have to ask somebody, but is there a symbol for it? I don't know if there is.
I don't know. Francis gives it to me every once in a while. I can try to look for
it.
Well,
ask him where he gets it. Is there a symbol for it? I know you can look it up somewhere, but I haven't used it in 30 years. I mean, do you still use it?
No, well, I guess that answers your question there, Sadnov. I was going to say, is it a reliable indicator? Well, it's accurate. I mean, if they give you a put call ratio and 3-2 puts over calls, I would say it's accurate. I would say that that's reliable. Now, for market direction, I don't think it has any bearing whatsoever. Zero. Makes for a good story, though.
It's funny, when I first got in this business, people always talk about the put call ratio. This is like 40 some odd years, early 80s. They go, you see the put call ratio? You see the put call ratio? But
I believe we have it, Sadnov. It's $CP CE. Let's see if that comes up. Yeah. Put call ratio. There you go. 0.54, Sadnov.
What is it?
0.54. I guess that's going to be. I don't know how to determine that. Put call ratio of the CBOE equity. Looks like it's 0.54. Does that make just about 50-50? I don't know. I'd have to look at it.
I'm not exactly sure. You'd have to Google it and see what that means. I don't know.
Well, generally a ratio of 0.7 suggests bullish, and while a ratio above 1.0 indicates bearish. So ratios below 0.5 are considered extreme and could signal potential reversals.
Ratio below 0.5. So that means
we're right there. 0.54 is what I've got.
So that means, well, what's the symbol again? / what?
/CPCE. I can put a $CPCE. Okay. Look at us, Sadnov, learning as we go along here.
Well, first of all, I had no idea that there was a symbol for it. You could get it on the platform. And second of all, I'm not exactly sure what that means, that number, but they used to kind of quote it differently, so I'm not exactly sure. We'll have to just
No, I know. We used to too.
Just to confirm. I always thought it was the number.
It says generally a ratio below 0.7 suggests bullish sentiment. We're 0.54. So ratios below 0.5 are considered extremes and could signal potential reversals. So it's been a bullish if you're looking at this.
Yeah, so that means there's a lot more puts being bought than calls.
It's a bullish indicator. It was a bullish indicator going into Friday. It was reaching its extreme as it was 0.54 instead of under 0.5.
So what that means is there was a lot more puts being bought than calls last week, suggesting it's a contrarian suggesting that there's way too much bearishness out there. And it turns out, again, it's not a reliable indicator because, of course, the market's down today. So all those people that bought puts were right. So that's a perfect example. It's a great day to ask that question because it's a perfect example of why it doesn't work. But it used to be something people talked about all the time. I haven't used it, obviously, because I didn't even know the symbol. And I haven't heard anybody talk about it for, I don't know, 20, 30 years now. And it's obviously, it's almost at a very...
People throw it out there on Twitter and other places.
Of course they will.
When we get extreme moves.
But like I said, it's an extreme number suggesting extreme bullishness now. And of course, they're down big. So it doesn't mean anything. Let's go next slide. That answers your question.
Yeah.
You mentioned the addition of Spot FX to the Tasty Trade platform. I have a Tasty FX account. Is this going to be merged with my Tasty Trade account, or will they remain separate? Is there any advantage to trading Forex in one platform over another?
Thomas, I'm going to let you grab this. You know a lot more about it as it hasn't come to fruition yet than I do.
Yeah, so we're about to launch Spot Forex on the platform. There's a lot of new things coming to the Tasty Trade platform. Spot Forex, we're launching a brand new active trader interface. There's a lot of really cool stuff. We're upgrading the analysis tab. There's just a lot of stuff that we've been working on that's going to be rolling out. But the next thing that comes out is the new Spot FX platform, which is built into the Tasty Trade platform. The only problem is because of the regulatory requirements, you have to, everything's going to be from one platform, but you have to actually on the platform move money into your FX account. And there's a bunch of reasons for that because Spot FX is a little different than traditional margin and different account types. So, but we did it all in a single platform. Is this account going to be merged with my Tasty Trade account, or will they remain separate? They will be merged in the sense that you can access it from a single platform, but the money will remain separate. Is there an advantage to trading it one platform with the other? Sure. The advantage is you can access everything from a single platform. You can move the money back and forth yourself. So it's super simple. And there is an advantage, just that you have your Spot FX with everything else and the futures and everything else. You can hedge with different products, whatever you want. So there's definitely advantages. It's a really cool, we built a super cool interface, and I think you're going to like it.
Yep.
Let's go to the next slide. I work at a fund that manages about $300 million in assets. Does the Tasty style or Tasty approach work at this level for hedging purposes? If not, how would you suggest we hedge?
Well, 300. You'd. I mean, that's a decent sized account. No argument about that. I mean, you would be hedging with SPX or volatility futures and or even the S&Ps. I'm assuming being a S&P 500 fund. I think you're at the upper limits. It's doable. It's going to be a couple of contracts. Let's see. It's going to be about. Let's see. Maybe let's do 10 per 100. It's going to be some size. It'll be some size, 300 or so SPX. What do you think?
So if you were trying to hedge $300 million, is it, well, just because you manage $300 million, they're probably not going to hedge $300 million. But could you use a
Sure, you're going to have to lean one way or another, like if you're a long fund.
Could you use the listed markets to hedge a $300 million fund? And the answer is yes, but it won't be easy.
Yeah.
Now, what are your other choices? Well, there's an over-the-counter market, which is quite large, but your counterparty is whoever you make the deal with. So it's not really a competitive marketplace. So I don't think it's what you want to do. I'd much rather be in the listed marketplace. I think in the listed marketplace, you can get to 100 million without too much difficulty. I don't know about 200 or 300 million, but 100 million you can definitely get to. But the Tasty style approach is absolutely built for hedging purposes. So, you know, I mean, you're going to underhedge, number one. So for every $100 million you have in notional assets, you're probably going to do about 30 million in actual hedges. So I don't think it's that big a deal at all.
Beautiful.
Yeah, I think the Tasty style, Tasty approach is, it's harder to put $100 million to use. It's easy to hedge $100 million. That's all I'll say. Hedging is very different than putting money to use.
Got it.
Let's go next slide. Is there a minimum return on investment that you want to achieve with your trades?
Sure. If I'm looking inwards to myself in the beginning of the year, I definitely have. I mean, I take a lot more risk than risk-free returns. Let's just call them 5%. You know, a year. So I'm looking to make a multiple of that, 4, 5, 6 times that. I mean, I take the risk for it. I should be benefited by it. So yeah, sure. I guess there's a, but there are years when, you know, you're trading not so well and you're down, and you'll take any kind of return. You throw out all of the best laid plans of mice and men January 1 of that year.
You know, it's a total reasonable question if you were asking that to a fund manager or a prospective money manager or a hedge fund manager or a private equity firm. Is there a minimum return on investment that you want to achieve? This does not mean that you're getting that. It's just a question. Is there a minimum you want to achieve? When it comes to individual self-directed investing, I think it's a different animal. Like, I don't sit here, I don't begin the year, I didn't start 2025 and go, wow, there's a minimum return on investment I want to make this worthwhile for me. I never do that. I think that I think we look at this business as we're going to get whatever we can get from it. We're going to take whatever the market gives us. And there is no minimum, because I don't want to tie myself to a minimum. There's no maximum either. Like Tony said, I think it's a multiple of risk-free rates at the very least, but that's for storytelling. That's not actually for trading. You know, for storytelling, it's a great way to explain what you do. But for actual trading, I don't know if there's a minimum you want to achieve, because I don't think you want to be tied to that number. I think you want to go for as much as you can go for.
Perfect.
It's not a perfect answer. It's not a perfect answer,
but I mean, it's subjective, like anything else. But there's certainly a minimum that you would. It's
a difficult question to answer. Let's go next slide.
Yep.
I trade in a retirement account. I sometimes use naked puts, let them run until expiration, then turn them into a wheel if necessary. Other times, I just begin with a covered call. I'm wondering if one method has an advantage over another.
I mean, there's a small statistical edge to the naked put versus the covered call over many years of market movement, just from the research that we've done. I will say, I mean, I love the concept of the wheel strategy, but I don't do it. Like, if I'm selling puts in something because I'm bullish on it, and my puts get to the 21-ish days, and there's virtually zero chance of being put stock on a option that has just about 3 weeks left till expiration. I roll it, because if it already is basically stock, meaning there's no extrinsic value left to that put, the strategy I'm using is no longer beneficial to me. I mean, I'm not collecting any positive theta decay, giving me a little bit more upside potential and lowering my cost basis by selling premium. So I roll. Just by pure math, you can make more money on a covered call you have a higher probability of success with the naked put. That's just the math.
Naked puts are, first of all, there's no reason to let them expire, to let them run until expiration, because it's just, and let them turn to the wheel. I mean, sure, if you want to buy the stock, but I'd rather you just roll the puts and manage the puts and just keep collecting premium and roll them, whatever you have to do. But anyway, it doesn't matter. Like Tony said, the naked put has gives you a little bit less upside, but gives you a higher probability of profit than the covered call. So it really depends what you're looking for. There's no right answer here, but there is an optimal answer here. The naked put uses less capital, gives you a higher probability of profit. The covered call gives you more upside. Whatever you want. But our preference is the naked put.
That's what we typically default to.
What's your opinion on placing synthetic strangles with only 35 days to expiration remaining, being that we would only have 2 weeks until the 21 DTE management? Since iron condors tend to move more slowly, is 35 DTE enough time to capture my volatility crush, or should I push it out to the back month, which would then be 63 days?
Their math is accurate. I just looked between June and July. I mean, it's 3 days difference now because we just had the weekend. 45 days is optimal, and you're basically right in the middle of both. I guess you're closer to 45 days on the June options. I default to the June options in this time frame. Starting next week, if I'm looking for new trades, I am probably going to July. I will be going to July. That's how I do it. So I guess my cutoff is closer to 25-ish days before I'm trading the back month. But I have no problem with you doing this, especially if volatility is high. I have no problem doing it.
Of course not. Of course we have no problem with it. 35 days, 35 DT, perfect. 2 weeks, sure. Why not? I mean, totally fine. I would do
6 of one, half dozen of another. It's only good and better.
I would do it really 30 days or 28 days. Sure. Just keep going. Yeah, I mean, what's the big deal? You have to roll
you mechanically will be staying in June right now. You can do what this viewer is saying, but you will stay in June right now. You won't go to July.
No, not a chance. Nope, I'm all in June. I'm done with May because we went through expiration, and I'm all in June right now. And I'll start pushing stuff out to July, soon, but I'm not there yet. Let's go to the next slide. Target currently has a implied volatility of 73, and earnings coming. Is this week, Tony?
Earnings are going to be on the 21st before the market opens. We'll take a look at that tomorrow.
Okay. Target's having a rough year. It's down 40% year to date. No clue on how earnings will go, but do you take into account that the stock is down 40%? How do you trade into earnings, and how would you recommend someone with a Tasty Bite account size play for it?
Yeah, I mean, we're contrarians. If I show Tom Target at this point, now forget about what the implied volatility is. It's real high. IV rank is real high. I mean, he's probably, I'm not gonna put words in your mouth. You can answer it for yourself. But even if it was ABC stock, he'd be learning. He'd be leaning a little bit long rather than short, just as contrarians, especially if the volatility is high and puts are bid. So, we play a contrarian role. Markets are tight. We'd probably be in with a little bit of bullish delta.
I mean, all things equal, it would make me a little more nervous to be aggressively selling calls on a stock that was already down 40%. It'd be aggressive. You'd
be hard pressed to be aggressive on the bullish side too, right? I mean, you wouldn't. Yeah. You're not gonna. This is not gonna define your year.
Oh yeah. I'm not gonna do anything crazy in Target to start with, but this is a stock that's had some really big earnings moves to the downside. So that means I don't really trust it. It could have a huge move to the upside too. I I'd be more inclined after stock's down 40% to be comfortable selling puts than I would be calls, but that's up to you. But do we take it into account? Sure. 100%. Let's go next slide. In your May 17th video of 6 steps to build a portfolio, you said that for a $100,000 portfolio, you would consider 1 to 300 deltas as delta neutral. Does this scale with portfolio size? That is, for a $1 million portfolio, are $1,000 and 3,000 deltas still consistent or still considered delta neutral? Does it remain in the $1 to $300 range, 1 to 300 delta range?
Great question here. You're straight lining the numbers here. So I'm going to say, yeah, you're correct here. But that you're getting up there in size here. So I think as the account grows, you kind of skew those numbers a little bit more. I would look to cut them in half.
I wrote exactly that. I said, as the account gets larger, you are going to skew those numbers, and the numbers are going to become smaller. And that's exactly what we look at it. It's very different for the person with a $1 million account than the person with a $10,000 account. A $10,000 account that wants to keep 10 to 30 short deltas is nothing. But a $1 million account that wants to keep 1,000 to 3,000 deltas it can be a little more challenging at that point.
Sure.
I'm going to keep this thing super simple. On paper, it should scale the same way. But in reality, as account sizes get larger, we scale back the number of deltas. That's the easiest way to say it.
And how about the theta decay? Are you looking to stay in that same range?
Kind of. Yeah, pretty much. I stay in the same range.
Yeah.
Just a few less deltas. Yep. Let's go next slide.
Very good.
And I think this is the last one.
And that's all. And this is also how you become. Going back to the last one, just for a quick second, your own personal market opinion plays a role in there too, right? At one level in the market, I hope if you were playing the last couple of weeks, you would be a little bit lighter at that. Maybe now today you might be looking to get a little bit heavier. It's entirely up to you.
Here's a question we get a lot. It feels like the mechanics we use are super well defined. Sell premium and liquid underlyings with high VR at 45 days, then close a roll at 21 days. Correct me if I'm wrong, but managing positions between 45 and 21 DTE is optimal. If that is correct, why wouldn't I just use AI to do all this for me?
Because it's not optimal. I'll say it's subjective, and I know that's not a great answer. That's not optional. I'll say it's subjective, and I know that's not a great answer either. When you have, in my opinion, delta and size is what ruins accounts and makes it arguably not fun to be investing in the market. So yeah, I feel at least you have to really be diligent with your managing a position between this 45 and 21 days. You can't just set it and forget it. This is not a Ron Popeil machine. So no, you can't. It's hard to use AI in this situation.
This is a very fair question because we've always been a company that's brains over bots rather than letting bots do everything. And we were brains over bots before there was such a thing as AI. Now with AI in the picture, I can understand why people is like, hey, you know what? I got this trading bot and I'm going to let the bot do everything. I'm going to put in all the mechanics in, just let the bot do everything. Well, the problem...
Yeah, it's unemotional.
That's the good thing. The problem with it is that markets really move around and they don't know how much capital, and how much risk that you want to take. There's a reason that there are no truly successful kind of plug and play bots in this business. Everything is kind of run by a team of, like high frequency firms will use trading bots because they're interacting with tons of order flow. But retail customers that aren't interacting with tons of order flow, you can just use your laptop. I think it's much more difficult because I think the parameters change all day long. I think the parameters change all the time based on how you're doing, based on how the market's doing, based on the positions you have on. I think things change all the time. So let's be careful on this one. Okay. I still think it's brains over bots.
Very good, my friend. And you know what that means. We've reached that moment, Sadnova. It's time for us to take a quick 90-second break. Even the S&Ps are down 57. They've had a pretty tight range so far this morning. We'll take a quick 90-second break and come back. We got an options you have. I think Kai's coming in here, Sadnova, to talk about the week we just passed. We'll be back in 90 seconds. Take you live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going down in a blaze of glory. Lord, I never tried.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It's option jive.
That's right, Sadloff. It is time for an option jive, and we've got this man coming in the house, Kai. Kai, what's up, my friend?
Not much. How are you doing, guys?
Doing great. Thank you for asking. Better now that you're here, my friend.
Oh, thank you. Thank you. Did you guys play golf in this beautiful weather?
We did. We were teammates, so it's hard to
Oh, you did.
Yeah, well, we threw up balls to see who would play together, and I could see the look in the face of the other two opponents when they knew they were going up against Tom and Bat, that their day was over, and it came to fruition. They took it like men, and they lost.
Mm-hmm. Good. That's good. That's good.
Yeah.
They thought they were heavy favorites.
Well, after about 3 or 4 holes, I think they changed their mind.
You're not talking about Sahil, right?
Say again?
You're not talking about Sahil, right?
No.
They were playing during the weekend too. I thought they were playing against you guys.
No. They were practicing to play against us this weekend. That's what they were doing. They were practicing. Because they need to practice.
That's right.
Well, what do you got for us? We're going to practice on what happened last week, I think, a little bit here. You had some big news going on. I'm sure you're going to hit
it. The big news is not from me, but some summary from what happened last week. Right? Definitely last week is close to the week before. So it's relatively quiet before Friday, right? So the little summary for what happened last week, the first one is SPX actually came back to the positive territory since the beginning of this year. So we're up slightly less than 1% for SPX. Can we go to the first slide? So 0.93% actually for SPX since the beginning of the year. And from top to bottom, the large pullback, we already recovered 86%. And it only take less than 1.5 months. On average, the long-term, a large pullback, it took more than 2 months to recover to this level. So this is actually a very fast recover for any pullback that's larger than 15 to 20%. 20% actually.
Yeah, and it didn't get a lot of press.
Yeah. And the VIX finally falls back to below 17.5%. It's actually below the long-term medium average, medium level. It's 70.6 or something. So we're right at that level. But this morning it's actually increased again.
Yeah, it's up this morning. If you're looking at VIX, it looks like it's up over 10% this morning to 1930 and change, 2 points or so. I like to look at /VX, but yeah.
For sure. And the reason, one of the main reason is the Moody's cuts the U.S. credit rating from AAA to AA1. So it's not a crazy news, but it's very significant for the market. So bonds and the futures, equity markets both down. Gold is up a lot, right? That's the consequence we're facing.
Right. You know what? Even before this credit downgrade by Moody's, I mean, if we were to go a little bit lower on Monday after this rally that you're just showing up there, a slide, right here on the slide and just talked about. I mean, nobody would, a 1% move in the S&Ps. I mean, it's a Monday. It's business. It seems like business as usual. Even volatility, and I'm looking at /VX right now, up 2% and change. As foretold, the volatility would stay bid all through the weekend. Sadnoff, one of us on this network, said that. That was the bat. It seems like business as usual right now.
1% is nothing right now for SPX.
Yeah, exactly. That's the point I'm making.
It's
yeah,
definitely
much
nothing.
to do about nothing. Yeah.
I expect you guys to cancel this morning show if the market down 2.5% or more. But it's only
and go to phone calls. Yeah, I think we would have done that too, but didn't seem like any need with the way it
Cancel the
opened last
pregame
night,
show.
at least. Yeah.
Right.
Cancel the
So
post.
looking at indices last week, all up a lot. Thanks for mostly from the Monday and Tuesday. Because I believe we were talking about last Monday, it was up like almost 3% for SPX while we were talking, right, before market opens. So let's go to this first slide. The S&Px up 5.3%. NASDAQ leading everyone else is 7%. The rest are pretty much the same category, 3.5%, 4.5%. So pretty large move. I personally think this market is overbought for too much. I don't know how you guys think about it.
I mean, you could think all you want. I think it's overbought too much too, but the problem is that at any point you got short, it didn't work. So, it didn't pay to be
you
short.
got run over, right?
You got run over.
Okay. Stay neutral. Keep sending premium.
Yeah, and try to trade what's in front of you. That doesn't mean, last week you should have had long delta going in, but you saw volatility contracting. If you wanted to get short in an intelligent way. Maybe it's instead of selling premium, it's, a vertical spread or a diagonal spread or a calendar spread. You could still have the same opinion. You got to pare back your strategy, not be as aggressive.
Interesting thing is, because I'm organizing What's Your Assumption and Fast Market. Over the years, I saw when the market drops very quickly, we have fewer and fewer trades want to long become bullish. And when the market bounced, like this time, more than 5% from the bottom, we saw more and more bullish trades coming into the upper end of the trading range. That's pretty interesting. People really want to follow the trend.
Yes, they do. It's easier to be with the herd. Not as profitable, but easier to be with the herd.
Yeah. All right, so the next one, expect move, definitely 5.3% is going to break any expect move from the beginning of last week. So the prediction was, can we go to the next slide? The prediction is 2.2% only, and we're up more than 5%. Last week, we started with the VIX at 22. At the end of this Friday, it dropped to 17, so that's why the expect move 1.5%. I highly doubt this range is going to hold this week. Something is going to happen.
It does seem that way already. Yes, for sure.
Yeah. So
that expected move will change this morning pretty quickly, I think.
Exactly.
When the options open.
Yeah, but still is going to be with the VIX trading around 19, below 20%. The expected move range is still going to be below or roughly around 2% off SPX. Still not a very wide range. Okay, talking about IVR, last week is still a mixed one. Equity, we see the IVR drop, the bond increase. Currency is kind of mixed, right? The US dollars strengthen, but Japanese yen become very strong at the same time. So gold dropped. Crude oil that didn't change, natural gas, Bitcoin, whatever. These are not too important right now. But it's kind of mixed last week.
Sure. Yep.
Okay. All right. Some interesting movers last week. Definitely SPX first. Still has a very large push after a very quiet week the week before, up 5.3%. So we already briefly talked about it. We're in the positive territory this year. Up less than 1%, and we recovered very close to 90% of the top to bottom intraday range. Can we go to
surprising
the next slide? To you? 75%. I can expect that. 86%. I just don't think the tariff thing is 100% achievement or victory, because it literally didn't even change or improve anything before the tariff thing, right?
I mean, right. And again, that's how it played out, and it's in hindsight. Did like without knowing that, would you expect moves that were this big, or would you expect them to have been smaller?
Much smaller. I would believe the SPX should stay way below the beginning of this year, at least 5%, because the tariff thing's still going to hurt the global economy, right? It's not like you roll back to the level lower than before. It's still much higher.
Again, this is why nobody knows anything, right? And you just.
So I don't guess anything right now, although I have my assumption. But
good job.
Yeah. So can we go to the next slide? I don't see the SPX slide. Yeah, this is SPX, right? So the beginning of the year and the current level. Okay, so next one, VIX. VIX dropped back to 17 because we didn't have too much exciting movement from all the other assets. So VIX, if we were looking at VIX, the level is 17. It's actually, we were back to the contango. This is the first time since the drop from the top. Last week, we actually come back to the flat, trading within half a point range in VIX futures. Now we're in the contango. So let's see what's going to happen this week. At least from last week, we're back to the normal level in terms of SPX, equity market, and also implied volatility. Everything seems to come back to 2 or 3 months ago.
Fair. Yep. And volatility being mean reverting, getting proved one more time, right?
Oh yeah, very fast this time.
I mean, and the market's back to where it was too. You know what I mean? So you got to give that some credit too.
Yeah, I haven't showed this data yet, but this recovery is actually faster than 2021 speed. 2021, we took, I believe, 6 months to came all the way back up to the top. This we only took less than 2 months to almost get there.
Mm-hmm.
This is crazy.
Yep.
Okay. All right. The big movers, top 5 and bottom 5 movers from last week. Can we show that slide? Because I don't see it. Yeah, this is VIX. The next one. Yeah. So the biggest winners last week is SMCI, up 38%. The First Solar, Dell, Nvidia, Tesla, all these big techs are winners, especially the chips company, right? Because of the news, Nvidia news, and brought up all the related stocks, including AMD. So these are up all more than 10%. The IVR dropped below 30-40% after earnings. Nvidia still waiting for the earnings yet. The biggest loser definitely UNH, down 23%, 100% IVR. This is one of a kind if you still want to trade UNH. The funny thing is I put on a trade on Thursday after that big drop and took it off on Friday because I'm afraid. And the premium didn't even change that much after the price increased from 255 to 286. I put on bullish iron counter, it just didn't change that much.
Yeah, and UNH is one of the few stocks that's higher this morning, higher by about $7-8.
Oh, okay. Yeah, the premium didn't change that much, yeah.
Mm-hmm.
And the following big losers: Humana, Merck, Hershey's, CSV. These are the big downside movers, but not that much, like a 4 to 5%.
Mm-hmm.
So last week it's a pretty good week for most of the equities.
Oh, it was a good week for sure. Yeah.
So earnings review. Not too many big names last week, but we have the large movers to the downside. The top 3 are all from Monday morning. So the moves is actually happened on Tuesday. All 3 actually moves down more than 10%. That's it. The rest of the week are pretty quiet.
So I don't know if you were pretty quiet during this whole thing. What do you think about the move in the market and or the lack of earnings coming up now?
Well, I mean, earnings have been our best trade this quarter. So I'm a little bit upset.
Bummed to see them go.
A little bit bummed to see them go. I don't know what's left on the earnings calendar.
We have some interesting ones this week.
Yeah,
I think we have Home Depot too. I think we have Home Depot tomorrow morning.
Yeah. You're gonna see in 2 slides.
Sorry.
No, that's fine. So next slide is from the long-term view from this season. Last week we have more than 500 companies announce the earnings. Definitely fewer than the week before. Because of the positive return, on average, we didn't change from last week. It's still up 0.4% across all the earnings, 3,100 companies, and winners and losers getting closer and close to 50%. Now dropped 1% of winners from 52 to 51. In 2 weeks, it's probably going to be very close to somewhere between 51 to 50%. Okay, so last slide, the earnings this week. We don't have a lot of high-tech company, but some interesting names, right? We have Home Depot, we have the Palo Alto network, Baidu, we have Target, what is that blue one? We have the, I cannot see Zoom. Yeah, I think these are probably the one you want to play. I don't know. What do you say?
I mean, I'm not sure that we'll play Home Depot because I don't know how the market's in there. I haven't traded in a while.
Home Depot, I'm just going to look at June markets. They can be wide, Sosnoff.
Yeah.
I agree with you. I don't think Home Depot is going to be the best. I know Baidu, you like to play, Target you like to play, and that's really about it from this list. Zoom will be another one.
Yeah,
What about Palo Alto network?
Baidu, Target are probably it, I'm guessing.
What about the Nancy's most important stock, Palo Alto network?
Yeah.
I'm guessing Baidu and Target. Maybe we'll take a look at Home Depot today. What's the other one on there? What's the one in blue? I can't read it. Does that say
Pony AI? I don't know if you ever played that one.
Oh no,
we've never done that.
Yeah, decent imply the liquidity. I checked. It's not 4-star.
Markets are a little wide in there too, but again, this is an $18 stock with very high implied volatility, almost 175. So maybe it becomes this interesting.
Yeah, okay. I will pass. Okay.
Yep, that's it.
Awesome. Well, good job out of you. We'll take a quick 90-second break. So I don't know if even the S&P down around their lowest level from this morning so far, still off of their lows. They're down 68, which is about 14 handles off of their lows. We'll take a quick 90-second break and come back. We got more Tasty Live with the opening bell next. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Wolf!
The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. You know, that's what I do.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live with the opening bell. Sosnoff, the opening bell is about 7 minutes away. Go ahead. Go ahead. No, what do you? You have a package you want to open while I'm talking? What else you want to do?
I'm just.
I noticed you were real quiet the whole time when Kai was talking for about 15 or 17 minutes. You didn't say a word there. You saved it all up for when I'm speaking.
I'm just refilling my ice and giving myself getting ready for the markets to open. I'm a little
AMSR or whatever they used to call it. I forget what it was. Is that what you're doing, Saz?
Not a little AMSR, but
Well, can I get back to what I was doing? The middle of my sentence got in the way of the beginning of your ramblings.
What would you want to say? I mean, go ahead. I'm sure it's very.
Can I go now?
Yeah, go ahead.
Oh, here we go. Okay, I'm done. Yeah, 6 minutes. Go ahead.
No, what were you going to say? It's important.
No, listen. I was just going to recap the market. Even the S&P is pretty much where
I'm a really good listener. So go ahead.
Pretty much where they were of all the indices here. The one that's had probably the biggest notional movement are actually the bonds, which have been steady so far. They're down 120, about 10 ticks off of their lows, 111.25. I'm surprised you're not being a little bit more aggressive on your bond purchases. I know you did 2 tranches. You're down maybe a couple of ticks on the whole tranche that you did here. You sold them out pretty good on the way up. I'm surprised you haven't reloaded a little bit more per K.
I am doing it. I'm just doing it slowly because I'm not convinced that we're, I'm not seeing the blowout that I thought the kind of the bottom blowout.
You're not seeing any kind of capitulation, maybe giving a little bit of leeway to the downside for a little bit more.
I just sold some 113 puts too in June. I think I got filled. Yeah.
You did, sir. You did sell a little bit /ZB. What do you think about the notes here? I mean, the notes really aren't down even as much as the 30-year. Are you surprised that the notes are having less of a move?
I'm not surprised. The notes actually, I bought them at 109.21 about 3 days ago, and they're not even back to that level yet. I think the notes are a really good buy.
Why are the notes stronger right now than the 30-year?
Because the marketplace is crushing the back end on this ratings downgrade, but it's not impacting the front end. So on the short-term paper, and there's lots of reasons for that, because when you sit there and you say, I'm downgrading something, it's not going to impact something that's very short-term. It's really only going to impact the cost of borrowing longer term. And that's why you're seeing the kind of the notes and if you look at, you heard Pete this morning on, I think it was the 2-year. Hold on, let me see.
Let's see.
Yeah, I mean, the 2-year is barely down. And you're right, the 10-year hasn't really gone anywhere. If you look at the 10-year yields, they're only...
Yeah, but this is the 2-year yield that we're looking at, right?
No, I understand. But the 2-year yield...
So the yield... Go ahead.
All I was saying is the 2-year yield hasn't gone anywhere.
But it's been rallying, which
a little bit, but not as much as the
bond. If we were looking at a bond of the 2-year, that means the 2-year would be going lower.
I understand.
The bond itself on the 2-year is going lower because we're looking at yields here. When you're looking at /2,
I know, I understand. All I'm saying is that it's the shorter term paper is moving much slower than the long term paper. They're hitting the long term paper. The short term paper hasn't really moved that much. The 10-year yields are only up to 4.53. Which is...
Yeah, but don't you think this is going to be a short-term blip that Moody's going to reverse their stance, anytime soon? I think they're going to do it sooner.
They don't. The market may force them to reverse their stance, but they usually don't reverse their stance for a couple of years. This is not the kind of thing where they're going to go next week, oh, we made a mistake. This is the kind of thing, if anything... What I would say is that another rating agency may come out and say, you know what, these guys are idiots because they want to make them look bad, and then they might do something different, positive. But I don't think Moody's will do anything. Neither here nor there. All I'm saying is that on a relative basis, the 10 years the ZN doesn't seem that cheap to me, like compared to the ZBs.
Okay.
It depends how much money you have. If you have a smaller account and you want to trade something that's smaller, because a bunch of people have written me already today.
Sure.
And you want to trade something that's smaller, the ZB is about half the size. The ZN's half the size of the ZB, and the /10 10Y, which is the yield for the 10-year, is about 1/10 the size of ZN, but it's the opposite. So if you think rates are going to go lower, you have to short that, and that freaks people out sometimes.
This is the rates that you're trading. That's what I was trying to get to just a moment. The yield, I guess, is the best way to say it. So, if you think the yields are going to reverse and go lower, you would sell it. If you think the yields are going to continue going higher, then you would buy it. But that's probably the easiest way. It's like 100 shares of stock, right? /10Y.
Yeah. It's actually, here, I'll do this. I'll have a little fun with this.
I think before we get to the opening bell sound, I want to be first and wish Beth a happy birthday here. Beth, our producer, I know Scott took off for Beth's birthday. I think he took off the whole week, and that's why we'll be going to phone calls at 9:30 all week long. So if you have something to say, save it up for 9:30. We'll put the number up later in the day, about an hour from now, to celebrate Beth's birthday. We're going to go to phone calls all week long. How's that sound, Saz?
Well, if you want to celebrate Beth's birthday, I suggest sending treats to me.
It's all about you. I know Dr. Jim unfortunately has to share the birthday with Beth, so we don't even mention him. But happy birthday, Beth!
It's really funny. Somebody sent me an email over the weekend. Somebody from Milan, because we're going to Italy to do a show, and somebody sent me an email and they said, Tom, could you please bring Dr. Jim with you to Italy? So I was like, listen, we have a bunch of scheduling conflicts, but I'll see what Tony says. And Tony said no. Just kidding. We're all good. He's not coming, but we're all good. All right, let's take big winner this morning. UNH, Mr. Batista. UNH.
Yeah, UNH is up, one of the buckers to the market. UNH up $11, almost $12. So there you go, Sadnov, $12 to $304.
Can I say one good thing about UNH here?
I can't stop you.
They got new strikes.
Okay, that's good. That's good.
They have 2.5 point wide strikes, finally. They had $10 wide strikes before.
You are right. $2.5 wide strikes in June. I don't believe they have them in July. They do not. They're $10 wide strikes in July. Another reason why it should be in June right now. Even the S&P down 56. Let's take a look at what other buckers, since you went in that direction first in the market. UNH, which is now only up 7 and change. Humana, which is up 5. More importantly, on UNH, volatility, Ivy ranked down to 98. It was over 100, 120.30 actually at one point all week last week. So maybe volatility will contract a little bit in UNH. That's going to help us too. Volatility products all catching a bit here, obviously with volatility up around 49 or 50 cents. Some of the other buckers are fewer and far in between. So pretty much a down move in the market here across the board. Tesla down 15, Netflix down around 10. That's helping the NASDAQ and the Russell being the two weakest. Meta down 7 and change. Costco down 6. Pretty much broad-based, a little bit of a sell-off here, Sadnov.
Absolutely a very broad-based sell-off. And the good kids are going to have to do something. I mean, we don't have to do anything crazy, but I think we got to just get some of our positions. We got to roll some. We got to roll some of our indexes down just to neutralize our delta risk this morning. I think it's the easiest thing to do is find the simplest thing it is to adjust, and I don't think we have any more IWM, do we? We do not. Oh damn.
Oh no.
Let's see if we have any problem children this morning. Add gold a little bit. Why is gold every day on my list of problem children?
I don't know, man. It's just the way it is. You know that.
Every single day, like freaking clockwork. It's never.
I'm so glad I got out of that pig.
It's never off the list. It's always a problem child. And let's see what else we got. Nothing really. No earnings plays this morning, right?
No, sir. No, sir.
Let's see. Yeah, GLD's probably. I mean, our worst performer this morning is bonds, and they just rallied about, I don't know, 14, 15 ticks, would you say? Pretty much.
Yeah, they did.
Snapple's, our Apple position's not very pretty either.
Apple is down $5 in there, Sadnov, yes.
Yeah, Apple looks a little bit heavy this morning. And it's a pretty big move, 533. on a.
Yeah. Almost, most definitely.
Yeah, I rolled down some calls in Apple, but this is really for us. The worst positions we have on are all commodity positions today. They're bonds, and they are bonds and gold.
Yep. Bonds and gold is.
I'm going to blame you for taking me down in bonds and gold. Everything else seems to be okay. The biggest winner we have this morning is.
Oh, it's my fault.
Yes, biggest winner we have this morning is UNH. You know, it's funny. Over the weekend, I'm looking at the markets and I'm like, man, if I could be short anything, I'd love to be short Microsoft here. And of course, it's up.
Isn't that always the way it is, Sadnov?
Yeah. I mean, last night when I was talking to Victor and we were doing the show, he said, can you pick a couple of stocks where you think that they're still going to be a little bit overbought? And I go, well, for sure, Microsoft, which is actually up today. I said Microsoft, Coinbase, PLTR, and I can't remember the last one. I just don't have it in front. Oh, NVIDIA, which I thought was a little on the rich side.
PLTR is down $5. That's a pretty decent sized move of almost 3.5%.
The stock that's heaviest on the market right here this morning is Apple. And I'm not exactly. I don't really understand.
Yeah, Apple down $6 and change. That's your big mover for sure.
Yeah, it hasn't been able to buy an uptick.
Somebody did a put diagonal spread on there on Tuesday, Sadnov, in Apple, expecting a little bit of a down move in there. That's right. Option trades today, every Tuesday and Thursday. Unfortunately for you, today is Monday. We can't find another winner for you. Although, traded my UNH trade, you're still working.
I tried to. Let me just put an order. I'm gonna
try to subscribe, but you couldn't get anything done.
Yeah, no, I tried to erect an ice statue of you, but it was a little too warm outside. Yeah. Yeah, I'm not sure.
Yeah, I'm probably going to look to take my $1.40, $1.45 or so in a week on that $6 investment, Sadnov, in Apple. Well, as soon as we get to a break here, I'll be able to do that.
Yeah, one of the things I'm going to teach you when we go on the road in 2 weeks is like how to, I wrote about it last night. Okay. It's see it, cue it, trade it. Okay. Don't
That's
overthink.
Right, Sadnov. It's called conviction.
Don't overthink it. See it, cue it, trade it. Because
I hear you. 100%. I hear you 100%. Pull the trigger has never been a problem. Yeah. All right, are you ready to take a quick 90-second break?
Yeah, I'm looking at everything, and I think I'm ready to take a 90-second. I think I'm good here. I can take a short break, and I don't think I have to make any other adjustments, so we can move on.
Beautiful. Let's take a quick 90-second break. We can come back. We got more Tasty Live side off. Million following these messages. We've got the skinny on options, abstract applications. Oh boy, nothing says Monday like this man. Dr. Jim is next.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top weekly recap.
I had a pool like 30 years ago.
Okay, what do you want, a medal?
You did?
Huh?
Yeah, he did. No, indoor pool. It was quite nice.
Yeah.
You had an indoor pool?
1988.
Yeah.
I built it because it was a big warehouse. So we built an indoor lap pool, and it was 40.
The dog loved it.
Do you have an indoor basketball court too?
Yeah.
Wow.
But that was
and a racquetball basketball.
Yeah, but remember, it was a big warehouse, and it was like
No, I don't remember. I was not even alive.
Wait, listen for just a second. I want to go to Buc-ee's. I've never been to a Buc-ee's. I have watched a lot of Buc-ee's TikTok videos over the years, and I have watched everybody do food reviews of Buc-ee's, and I feel like I've never had the opportunity to go into a Buc-ee's because I've never been around one.
Sad enough, it's a humongous gas station. It's like the size of a city, and it's super clean, and they've got everything you want from new underwear to food to eat 24 hours a day, 7 days a week. It's beautiful, but don't sleep on the bathroom, Sadnov. Even if you don't have to go into the bathrooms. They are amazing. They are so freaking clean, and you can watch the attendant go in after you're done. Like every time somebody's done, bathroom attendant goes in there. It's the most amazing thing I've ever seen in my entire life. It's the best run bathroom in the world. When you're on the road, Sadnov, and you're looking to relieve yourself,
I have so much to say. I have so much to talk about this.
Please don't.
Here, he said he was listening to a podcast.
Yeah.
And he said somebody on the podcast was talking about, they knew us, and they were talking about it.
Yeah.
And the person said I don't know who the person was, they were the ones that gave you the beret. And I said, that's BS. I said, I think, but I got to ask Tom, I think it was a marketing company that sent it. I know the Goldfish was. Where did you get the beret the first time?
Where'd I get it?
Oh my God.
Yeah.
I'm telling you, I wish I was in the mafia and he was the only one that saw like what went on. He's amazing. He's great. You'd be a great witness on this.
Great witness.
I got it. I just had it made myself.
No, you did not.
Yes, I did.
Go ahead. Where'd you have it made?
We I'll tell you exactly what happened.
Go ahead.
So sometimes like my hair would get in my eyes, I'd like to wear glasses.
Like if the windows were open.
You always wore glasses.
Yeah, always. But
always.
if the windows just
Summer,
so people.
I'm explaining. Will you just let me explain?
Go ahead.
So we were coming up with different ideas over what we were going to give away. So we bought things like we got some barbecue sauce that was branded. We gave away stuff each month.
Yeah.
So 1 month I decided to make berets. We made aprons and sandals.
Yes, true. Facts. I still have my apron. I have my apron.
Okay. We made all.
I don't think they weren't sandals. They were
made sandals?
They were flip-flops.
Flip-flops.
They were flip-flops, not sandals.
And so one of the first things we got was a beret, but I didn't order them because I was like, these are too hard to like stretch.
They didn't fit your head. Be honest. They did not fit your head.
Can we explain how we originally shaped them? We got a basketball. Stretched them over a basketball.
How we originally? That's how we do it to this day. Are you kidding me? We're like an Italian.
And not a WNBA size. It was an NBA, not WNBA.
So that's how I did it.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. Birthday edition of Tasty Live. That's right. Nothing says happy birthday like Monday. And this man, Dr. Jim, happy birthday to you, Dr. Jim.
Man, what's going on? You know, we've talked about this before, but do you guys share a birthday with anybody famous? Tom, do you share a birthday with anybody famous?
Shaq.
That's pretty good. That's pretty good. Tony, anybody famous?
I don't know.
You've never looked this up?
No. No, I'm so self-centered. I'm so self-centered. I believe I'm the only one that has a birthday on July 12th.
Well, look it up. I'm curious, actually. I mean, look it up really quick because I, of course, share a birthday with our very own Beth Filoramo. Like, I mean, does it get more famous than that?
Shaq.
Oh, look.
Shaq.
I mean, maybe a little bit, but man, guys, it's a good day to be alive, man. Beth's birthday. It's my birthday today.
So Jim,
Cheryl Ladd is all I got for you.
Cheryl Ladd. Sure, Charlie's Angel.
Hey, see, I knew Sadnov would know.
Oh, you go. Yeah, you're in the way.
Is that who that? I can't remember. Is that who Cheryl Ladd is? Charlie's Angels.
Yeah. Charlie's Angels. Yeah. I mean,
you got anybody current?
Current Brock Lesnar. I could give you him.
Brock Lesnar.
How about Richard Simmons and Bill Cosby? Does that make you feel better?
Richard Simmons? Oh, that's a strong move right there. Yeah. Nice. All right. Well, there you go. Man, I don't know. Shaq might have to be the uptick though.
So Jim,
Christy Yamaguchi. How about that?
So Jim, I was telling Tony, I got an email from a really nice viewer.
I know. Oh, I know. No, I know that my Italian insiders, they're on you, man. Like you think I'm just domestic? Like you think that you can contain me to the U.S.? Man, think again, my friend. I got people everywhere. I know that they're on you.
You got people willing to fly you to Milan.
And I didn't know that, but that's what I'm saying. This is what I'm talking about, man. I've got people in the Dr. Jim inner circle, man. Like there's some diehards out there.
Yeah, this one guy. I mean, he really wanted you to come, and I'm like, scheduling conflicts and lot of things.
I mean, but just when you look at me, like when you size me up, when you kind of take me in, I mean, do I not just ooze Milan to you?
No, not
You're
really.
gonna get a haircut for your birthday is more important right now.
No, I might get some layers. I'll get some layers, but I'm not getting it now.
No. Jim, you got to go ponytail for sure.
No, I'm still. I want to, but I'm
top
still
knot,
just like,
dude. You gotta go
pineapple.
Top knot.
Pineapple. I could do like a pineapple.
You go top knot. You go top knot for sure.
You sexy. Go top knot.
Yeah. No, we'll do a little pineapple action. Yeah, definitely. Ooh. But yeah. No, I'll tell you what, man. I don't know that Autumn will necessarily be happy about me leaving the country. But whatever I can do for my people in Italy and whatever I can do to advance the Sosnoff Enterprises, man, you let me know and I will be there. I will be there because, man, think about the content, Tom. You, me, Dylan, and Rich in like the same show? Man, that's crazy stuff there, Tom. That's crazy stuff.
Well, I'm very excited. Anyway.
Yeah, when is Milan?
It's a month.
When is it again?
It's a month.
Oh, it's only in a month?
Yeah.
Yeah.
Wow.
Yeah.
Okay.
Yeah.
There you go.
I knew
Atlanta was coming
You can't get
up.
your wardrobe ready in a month.
Yeah, I
Dr.
don't know
Jim.
that I can.
Right.
I mean, the ponytail won't be ready. The top knot will be pretty weak still. I don't think I can do it. So okay.
Yeah, wait till next
all right.
year.
Yeah, I suppose so. Well, happy birthday to Beth. Very exciting times. Very good day. Very exciting day to be alive.
Mm-hmm.
Are you guys ready for some finance?
Sure.
Man, let's do it. All right, John, cue us up here on this morning's birthday piece. So what I wanted to do today was I wanted to talk about something we've talked about before, but it's been a while. And given the fact that we have talked about so many of the kind of component parts of this process, I thought we would bring this process up again today. The source of it all, the Wiener process. Now, in the past, I have referred to this because it's correctly referred to as the Wiener process. But I have learned in my study that it can also be pronounced the Wiener process. And guys, I've learned a couple of things in my 10 years at Tasty, but nothing more than no one seizes on the opportunity for fifth grade humor better than Tony Batista. So I thought, let's go Wiener process and let's try to sidestep, some of the booby traps that might lie ahead. Tony, you agree? Okay.
100%. 100%.
All right.
Keeps me young.
The Wiener process. All right, John, cue us on the intro slide here. So the mathematical properties and probabilistic outcomes of the marketplace are what drive us in managing our daily trades, whether it be with the individual positions that we monitor or the overall portfolio's risk and return metrics. Well, lying underneath many of the theories and the models that we lean on is something in mathematics that is referred to as a Wiener process. So, Tom, are you ready to learn the mathematical basis for why you've been so successful as a trader over these last 75 years?
Now, this is a mystery that not even Sosnoff has been able to solve. So I don't know if you could do this, Dr. Jim, but I have faith in you.
Bring it on, big boy. Bring it on.
Man, let's do it. All right, let's go. All right, John, hit us here on the next slide. So the Wiener children. So here we go. So the Wiener process, when you actually dig into the mathematics, and we're not going to dig into the mathematics today, we're going to go straight to the application. The last couple of shows we've had on the Skinny, we've dug into the mathematics. We've dug into the mathematics of volatility mean reversion, And then we dug into the mathematics of, stationarity and white noise and things like that. So today I want to kind of skip right to the application. And so sometimes we do the math on this show. Sometimes we do the application. Sometimes we do some kind of far out there intuition. So it can go in a number of different directions. But geometric Brownian motion, martingale models, and then stationarity and white noise. These three things all come from the mothership that is the Wiener process. Now, if you recall, Tom, geometric Brownian motion, of course, you remember that this is what we use to price. Did I lose my camera?
No, you're still there.
Am I still?
You did lose your
Turn
camera.
it back on.
Yeah.
I'm trying to, and it just. Oh no! You guys got my voice though?
Yeah.
Yeah, we still. We got the best part of you. We can't see the.
Well,
I can't
turn it back on because I can't. For some reason, it's not working. Huh? Hold on.
It should be on the top of your. Yeah. I know. First day with your new hand, as Sadnov would say.
Yeah. No, it's. Yeah, I lost it. John, can we just go with my voice?
Yeah, we can do that.
We can go with your best.
Okay.
This is your best part, Matt. John, can you draw like a stick figure in there?
We are looking. Hold on.
Yeah, but do it with a top knot. If you're gonna do it with a top knot.
We'll just call it a spike on top. We'll do that, please. Sure. Like
so
a
the
plant.
Wiener process. Okay, so we're gonna do this audio only style, like a podcast, right?
Mm-hmm.
So the Wiener process, you've got geometric Brownian motion, you've got martingale models, you've got stationarity and white noise. So the geometric Brownian motion, this is how financial assets are priced, right? This is with shock. This is with drift. We've talked about this before. A martingale model. Oh, there you go. You got a little shot of me right there. It's like I'm right there with you. I mean, look at that. You got the profile. We're looking kind of svelte. I mean, that's a big uptick over a live feed.
So we should go with this all the time. Totally agree with
John,
you.
keep this in the hopper, man. Like this is gonna be
I
the
love
new...
this. This is great. I love this.
So the martingale model, we recently learned that's what the Black-Scholes model uses because it assumes a risk-neutral world with risk-neutral pricing. And, that is very advantageous in a world where there is no positive drift. There is no risk aversion that's assumed. And so that's really, really nice. And then lastly, the stationarity and the white noise, we've learned that that's very important for volatility mean reversion. Otherwise, you can't have that. You need that property to have a mean reverting asset. So, Tom, you remember all of this, correct?
Yes, I do.
Okay, beautiful. All right. So now let's go to the next slide, which is kind of the Wiener Y, which is what I just kind of outlined there. But you've got geometric Brownian motion is going to be, one of the integral things that we use to, price equities and price stocks and things like that. Martingales we use for the Black-Scholes model. And then stationarity can only happen if you have, a volatility that's mean reverting, where you have this bounded process, this white noise process, the things that we just talked about. So, John, hit us on the next slide, actually, because I jumped a little bit ahead there. Losing my camera threw me off a bit. The Wiener bedrock. Tom, are you ready for the bedrock of what you've been doing? So all the money you're making this morning, bonds and Tesla and what, I know you want to short Microsoft. It's like all that stuff. It all comes from this, my friend. Are you ready?
Ready.
Sure.
All right. Obviously on the slide, you see a bell curve, right? You see a normal distribution, right? You see the thing that we use probably more than anything else in the world of, stats and quantitative principles. Here's what's fascinating about a Wiener process. A couple of things. Number one, if you actually were to look at the models of a Wiener process and dig into the models of a Wiener process, what you would notice is that in all the random variables that are in the Wiener process, the assumption that's made is that all those random variables that are used in the models follow a normal distribution. Now, these are just random variables, random metrics, like just what we observe in the marketplace. That is really, really important because if you remember, Tom, Tony, right, we've seen on this very show so many times everything funnels back to the normal distribution, right? The central limit theorem funnels back to the normal distribution, right? The law of large numbers funnels back to the normal distribution. Mean convergence funnels back to the normal distribution. Like so many things funnel back to the normal distribution. Now, in fairness, it's not going to be a perfect fit because with stocks, they're actually log normally distributed, of course. With volatility, You've got arch and garch, and you've got clustering and things we've talked about on this very show over the last couple of years. And so it's not a perfect fit, but man, it's pretty close. It's pretty close indeed, especially when you move to the second important point. So if you look at the two arrows that I have there on that slide, you have, a yellow arrow for the Wiener process, and then a smaller yellow arrow for geometric Brownian motion. Let's start with the smaller arrow. If I was sitting at the current price, right now of X bar, and I wanted to measure some movement in some asset, whether it be Microsoft, whether it be Tesla, whether it be bonds, whatever, I wanted to measure some movement in some financial asset. If I wanted to measure that journey from point A to B for one singular observation, the way to do that would be with geometric Brownian motion, because you've got the drift, you've got the shock. That's how you would begin to model that movement. If, however, I wanted to capture a collection of movements, like, a data set. So not just one movement now, but many, many, many movements, which is what we are interested in, right? This is what we care about. We care about, observations. We care about, a number of trades, not one single trade. This is where the Wiener process would be needed to do that, because what the Wiener process does is it actually builds out the bell curve. It actually builds out this cumulative observation effect, where now you are not measuring, the journey from point A to B. You're actually taking an integral of a Gaussian process, which a Gaussian process is just the formal fancy way of describing a bell curve or a normal distribution. Well, whenever you're taking an integral, Tom, I know you remember that you're finding what? When you take an integral, what are you looking for?
I don't know what you're trying to get out of me.
I'm just asking you what you're looking for when you take an integral, which I know that you know, because I know you.
What am I looking for when I take an integral? I'm looking for consistency in the measurement.
Okay. All right. Tony, when you take an integral, do you remember what you do? Tony, when you fire up ChatGPT and you say, hey, take this integral for me, what does it spit back to you?
I have no idea, paper tiger Dr. Jim, that's on the screen. I have no idea.
I'm telling you, man, that picture of me, y'all found a good one. Like, look at that. Like, I mean, have you guys seen the thing that's online now? Like, if you take pictures with other people and you're standing vertical, like you have the power in that relationship. Have you seen that before? Like, if the other person is leaning in, like they don't have any power, like you have the power.
Oh, I
would just like to point out, that I am at a perfect 90-degree angle in that picture. Look at that. I am straight up and down, Tom. Straight up and down.
Yeah, John, can you print me off a picture? Can you print me off that picture so I can have it?
Absolutely.
Thank you.
Tom wants it for his fridge.
Yeah.
I mean, on my birthday, you got to do it. Like, that's the way to do it. So with an integral, though, gentlemen, I'll save both of you because you guys are drowning fast here. With an integral, you're looking for the area under the curve. You're not looking for consistency, Tom.
I thought you said an interval. What did you say? I thought you said interval.
I said an integral.
Oh,
integral.
I thought you said interval.
Ah, okay.
I thought you said I was all right, Spider.
I thought you said what's an interval?
Enough. No. I said an integral. Okay, that's fair enough. Fair enough. But with an integral, you're looking for the space under the curve, the area under the curve, right? Well, gentlemen, look at this bell curve, right? Look at the orange region and like the orange-purple region. It's like if you're going to build out these areas, right, you need a collection of data points. You need a mathematical process that's going to do that for you. And anyone who's taken, Calc 1 or Calc 0 kind of knows, you take an integral to find that area. Well, that's what the Wiener process does, and that's what makes it so valuable to us. Even if we obviously never dig into the math, and I'm not sitting down like trying to crank out a Wiener process when I'm making trades and things like that. But when I look at a bell curve and I look at the normal distribution, it is baked in there. It is the thing that is essentially governing, the geometric Brownian motion, the martingale models in the Black-Scholes world, even the white noise and the stationarity that we saw with mean reverting volatility. It's critical, gentlemen. Critical, gentlemen. And so, your thoughts, Tom? My best segment ever, I think.
What's my takeaway here? I don't get the takeaway.
What did I just say to you? Tom, I just said to you that this is what is building out the mathematics that lie underneath everything we do. What more? I don't know how much. I don't know how I could find something that could do more for you. I don't know that I could give you a better takeaway than what we just discovered today. From a theoretical standpoint, this is number one, Tom. This is number one. And look at that picture. Straight up and down. Look at that picture.
I
could use a little bit more of a
He printed it off for you, Tom? Please leave it on my desk,
Show the
Tom. I don't
images,
want to be
Tom.
without one.
Look at that.
Great. That's great.
And he's even got wallet size.
Oh, wow.
You gave him a few wallet size?
Oh.
Man, that's some good stuff.
We're going to pass this out to everybody in the whole
wallet
office, Jim. This is exciting. I mean, yeah, this is great. I mean, I'm a little freaked out by the static Jim, as opposed to the regular Jim. So it's hard for me to pay attention. But
do you kind of feel like you're in a wax museum with Dr. Jim? Is the actual statue?
Yeah.
Yeah, that's scary stuff. Man.
No, Josh.
And look at that. Man, look at that hair. That was yesteryear, man. Look at that hair.
Yeah.
Man, that was yesteryear.
Yeah, they're banging on the window here. Josh, I said no, Josh. You can't have this picture. A lot of people want this picture.
I mean, that makes sense. That makes a lot, especially on my birthday. I mean, that makes a lot of sense. All right, let's get him a few takeaways so we can start passing out some pictures. Yeah, there you go. So
Tony, I'm posting this. I'm putting this in the men's room right after the show.
Absolutely.
Oh, I remember. Oh, this was back at 19 Sangamon. I remember that we had the. Do you guys remember we had that show, Assume the Position?
Oh yeah. With my man Dylan Radigan pointed at you while you went to the bathroom.
We had that in the men's room. Yeah, that was pretty funny. So the fact that I'm gonna kind of usurp Dylan's authority in the men's room, that's got to be an uptick, I would think. So let's get him a few takeaways. We'll get them on their way as we keep seeing over and over again. The normal distribution continues popping up all over the trading world, from the central limit theorem to the law of large numbers to here with a Wiener process, which ultimately just serves as yet another supporting data point for our leaning so heavily on its application. And I will try to get a new camera between now and From Theory to Practice.
Very good. Very good. I think very good, Tom. What do you think here?
I mean, Jim's a good-looking guy, but he's the first person we ever had break a camera.
Just look at that. Look at the vertical nature of that picture. I can't believe you guys, especially Tom, you're so immersed in the TikTok world. It's amazing to me that you don't know of this phenomenon. That if you're straight up and down, you have the power. If you were to look up, if people were to find pictures of you and me together, you'll always notice I'm straight up and down and you're leaning into me.
Yeah.
You're leaning into me as if you were my date, as if you were my woman.
I can dare to dream, Jim. I can dare to dream.
Jim, if he is your woman, you can do better. Let me just put it that way, Jim. I'm gonna leave it right there. You can do better. It's your birthday, Jim. Don't change anything. You can do a lot better. I can do a lot better too by taking a quick 90-second break here and come back. At
least Autumn won't be too jealous. She'll be okay with that.
That's true.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
With a big earnings week coming up next week and a time of really heightened volatility, what advice would you give to traders in terms of managing and attacking earnings in a time like this one?
I think this one in particular, just given the market volatility, I would be a little bit more conservative with the trades. Maybe instead of going a 10 or 20 point wide iron condor, go to a 5, because the market has been moving huge in both directions. There's tons of opportunities. There's no shortage of trades out there. I think earnings trades should be kind of pushed to the back burner in terms of your risk parameters.
What type of specific criteria do you look for in an earnings trade, and does that change in a time like right now?
Well, the main criteria is, of course, volatility, but you've got high volatility everywhere, so you'll have no shortage of high volatility to trade. I would say maybe going a little bit further out in time this time around, going into the May or the June monthly cycle as opposed to the weekly expirations, just to make it a little bit less volatile from a P&L standpoint for your positions.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, Market Measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Tomas, we are back, my friend. And you know what that means? Time for a little more Tasty Live with the market measure. Even the S&P sound of only down 18. Nasdaq is down 71. Russell's down 22. Dow's only down 9. Sound off. It's about to go positive. Volatility.
The Dow actually, if you must know, the Dow just went positive.
You are correct. The Dow is up 2. Sadnov can't stop this train. Won't stop this train. Gad, what are you doing here? Gad's mic is off, I believe.
Well, can you listen
there
to
we
me?
go. How you doing, Gad?
Okay, good. I was saying I'm here to add some colors to the show.
He's additive to the show. But before we do this, because Gad's responsible for the market measure, and I had a couple questions about it. It's been an incredible rally. Not only is the Dow just up on the day, but some of the other markets have come back. S&Ps were down almost 80 this morning at one point. They're only down 17 right now. The NASDAQ was down, I want to say, a little over 300. It's only down 70. Those are big rallies. Bonds are still down 109. We scalped a little bit in there. And that's probably pretty much it. But some of these NASDAQ stocks have turned around, like Meta and Microsoft. And I'm not looking at the rest of IBM and a couple of other tech stocks. So not looking at it all, but it's very, very interesting for sure. Anyway, Tony and I go on the road a week from Friday, and we just want to let everybody know, in case there's, we are going to be full by this time next week. So there won't be any room left at the show we're doing at the Buckhead Theater in Atlanta, Georgia. So if you want to sign up, please do it this week. This will be the final, this will be your final chance. And like I wrote last night in the Cherry Bomb, trade it, queue it up. I'm sorry. See it, queue it up, and trade it. And that's it. We're all about speed next Friday, or a week from Friday. We're just going to make as many trades as we can. We're going to explain them really fast. We're going to keep the pace moving. And the whole purpose behind it is so we create an environment of doers and not overthinkers.
Okay.
Consider yourself a doer?
Of course, yeah.
Of course you do, because you are. Tony, you consider yourself a doer?
I do.
Because that's the only choice we gave you. And which is a good thing.
I don't do as well as I do worse with multiple choice, so I'm glad you only gave me one choice, Thomas. Right. I appreciate that.
Right. It was a yes/no question.
Thank you. I do much better with that.
Yes. But anyway, Buckhead Theater, tastylive.com/events for all of our events, but tastylive.com/events for Buckhead Theater. And then, of course, for London or Milan, we'll start promoting those next week. All right, let's go to the market measure today. Because, Gad, you guys you and the rest of the research team answer a lot of questions about volatility.
Mm-hmm.
And one of the questions that people write into us all the time for is, well, how does historical volatility fit into this?
Okay.
I mean, that's the basis for this, isn't it?
It's a basis, yeah.
Yeah. I mean, where does historical volatility fit into everything? Tony, where does historical volatility? When Tony was a market measure, when Tony was a market maker, a lot of things that we did were, most market makers were very aware of historical volatility.
Mm-hmm.
It was a different era. We didn't have access to as much information as we have right now. We didn't have access to anywhere near the kind of tools and features, or really an understanding of all the kind of mathematics behind what we do.
Okay.
And so historical volatility was always like compared to implied volatility, that kind of thing. Hey, this is where this thing should be trading. Was kind of the thought process.
Okay.
Right? That's fair, Tony. That's what you.
Yeah, no, that's very fair. Very fair.
Yeah, I mean, we both used to look at historical volatility. We used to think that was kind of, the way even if you were pricing options, you would base things off a combination of, longer term, base things off like historical rather than implied, which is a different world.
Yep.
But as we move forward and we've built a couple of platforms, and as we've move to where we are today. When we think of Tasty, we don't really focus on historical volatility at all. Not really. Not really part of the equation. So, but today we're going to look at why it's not.
Why? Okay.
Yeah. Okay.
And why is it different, IV and historical ones?
Yeah. Why is it different?
Yeah.
So, understanding volatility differences. Let's do this. One of the main reasons we sell options is because we have evidence that historically, implied volatility overstates realized volatility, which is historical, about 85% of the time. Implied volatility at any given day is simply the anticipated one standard deviation move for the underlying for the next 30 days. Let's go to the next slide, John.
And this we can see on our platform, IV.
Yes, you can see this on our platform where it says implied volatility. But what is historical volatility? And how is it comparable to implied volatility if it's calculated from historical daily returns and IV is calculated from option prices? This is the important distinction. The reason that implied volatility that we use today, the reason it's called implied volatility we use today is calculated from actual option prices. So it's a real-time measure.
Real-time, yeah.
Historical volatility is calculated from historical,
returns.
What?
From the returns.
Yeah, from the daily returns,
yeah.
Historical daily returns. Let's go to the next slide, John. So we looked at the SPY, we looked at 10 years of data, 16 delta strangles, 45 days to expiration, managed 21 days. We computed the daily return and the historical volatility.
So this will show the step-by-step of the progress or the process how we get historical volatility.
We're just going to take you step by step through the process.
Yeah.
Because it's kind of cool. If you're a geek. Let's go. Gad is for sure a geek and thought this is kind of cool, which I understand.
Sure.
I like this. Let's go next slide. So on this slide, we show that the SPY historical volatility for 10 years averaged 1428, ranging from 3.51. Boy, that was, I knew we got low that year, but I didn't know we got to 3.51.
That's 3.1.
That's crazy. And to 76.20 in the COVID crisis. 2017 was exceptionally calm, was an average of 6.6%, while 2020 and 2022 saw major spikes. That's why we got so confused with, that was Trump's first year in office, and we felt like the chances of having volatility at 6.6% was zero. And it was the craziest thing. And it's reversed this time, but it's crazy. Recent data shows a return to normal levels with volatility consistently clustering in both high and low periods. So what you have here is the SPY historical volatility by year.
By each year since 2015.
Yeah.
And you can see since 2023, we have kind of consistent historical volatility according to daily returns.
Yeah, I mean, any surprises here, Tony? 2020 and 2022
no,
are the big ones, but
no.
everything else is kind of like,
Yeah.
This was kind of the general presentation of historical volatility of 10 years.
Yeah.
The historical one, the big picture. So you're going to go through the step by step how to get this historical volatility. For next slides.
Yeah. No, this is, we're basically going to break this down.
Yeah, break this down. Yeah.
Let's go next slide. So historical volatility is calculated by taking the rolling average, the rolling standard deviation of daily returns. In the example below, our rolling window, visualized by the colored curves spanning 4 days each, is 4. So what does that mean exactly?
So right here, we take like 8 days in general. Let's take 8 days.
Okay, 8 days.
8 days. And then we roll after 4 days. After each 4 days.
Okay.
In 8 days. For example, the return for day 1 is 1. But on 4th day, it's 3%. And then when we roll, what's the standard deviation between the first day and the 4th one?
Got it.
That's the standard deviation of the return on basing of rolling 4 days.
So this is how you figured out the standard deviation of the daily returns.
Exactly.
I got it.
Yep.
That makes sense. Okay. So let's go to the next slide, John. So on this slide, oh, I got it. We see those standard deviations that were calculated from the original returns data now comprise a new set where each value represents the standard deviation of the previous 4 days. So the final step to convert this data to true historical volatility is to annualize the results. This can be done by multiplying every standard deviation value by the square root of 252.
So for this table, when you see for the first 2-3 days, we don't have any data because we roll after 4 days, right?
The fourth day.
Exactly. 2.2 is the standard deviation of from 1 day to the fourth one, and continue up to the 1.3, which is between 5 and 8 days. That's the kind of like how we find the 4-day standard deviation of the returns. Then the next step will be to convert those standard deviation into the volatility, which will be annualized. And you have to use the square root of trading days, which is 250 days.
So you didn't do calendar days, you did the square root of trading days.
Trading days, exactly.
I like it.
Yeah.
So you're just showing us how you got to the number.
How we got the historical volatility.
Right. Okay. Interesting. Let's go to the next slide. So the square root of 252 comes from the idea that there are 252 trading days in a year. And the reason we use the square root is because volatility and time do not scale 1-to-1.
Exactly.
Yeah, that makes sense. So, okay, let's look at this. You have the 4-day standard deviation of returns and the 4-day historical volatility.
Yeah, when you do the square root of 252 of 2.2%, you get 34%.
Oh, so you just, okay, I got it.
Yep.
So you just multiplied everything out for us.
Yeah, exactly. Just show the whole process, how we figure out how to get these numbers. 4 days historical volatility from 4 days standard deviation of returns.
That's pretty ingenious. How do you figure all this stuff out?
Research. That's why
he asked me questions.
Did Tony do this for you?
That's
No.
right. That's right. That's exactly
Okay.
how it was done, Sadnov. I didn't do it. I just optimized it.
Okay. You checked his work.
Yep.
Let's go next slide. Since implied volatility measures the 30-day expected standard deviation, we can calculate the historical standard deviation of 30 days worth, 22 trading days of returns, and make IV and HV comparable. This means that the actual rolling window used for HV when comparing to IV is 22 instead of 4, as used in the previous slide. Okay, so that you just normalized everything.
I normalized it.
Yeah, I got it. Let's go to the last slide. John, please. So historical volatility is used to see what actually happens, whereas implied volatility is used to see what the market's expecting to happen. The two metrics are comparable because they both are based off of standard deviations. But when comparing implied volatility to historical volatility over time, we saw that 85% of the time, the volatility that IV was predicting over the next 30 days was higher than the actual historical volatility we saw over those 30 days.
Exactly. And this is important measure to see. As you said, we only have IV on our platform. But again, because we always deal with standard deviation, it's important to understand also the historical volatility, because to give you the idea of how your returns is going according to the past 30 days.
That's a very interesting study.
Thank you.
A little deep, a little heavy, but it's a really good way to explain how you got the historical volatility and how you made it comparable to
the IV.
Yeah, the IV. Thank you, Gad.
You get a sandwich today, Gad. Good job out of you. Sadnov says you get to eat. We're going to take a quick 90-second break, but I got a special little announcement to make here, Sadnov. We're going to phone calls, 855-238-2789 or 855-BE-TASTY. The phone number will be below in just a second. That's right. If you call in today, you might be eligible for an 8x10 glossy of Dr. Jim. Sadnov will personally send that to you. Give us a buzz. We got 4 or 5 lines open. Unfortunately, we have no Scott Sheridan today, but don't worry. Fortunately, we have Tom Sosnoff in his place, and we'll be able to answer all of your questions. You have any questions for the market? Any questions about the platform? Please give us a buzz, 855-238-2789 or 855-BE-TASTY. We'll be back in 90 seconds. Thank you for your time, Gad. Appreciate it. We'll be back in 90 seconds. Let's take you live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
All right, Tom. All right, Tony. All right, Jamal. Do you remember the first trade that you ever placed in your life?
The first trade I ever executed as a customer, I bought 2 puts in McDermott, which was an oil and gas company. First trade I ever did when I was on the trading floor was I bought a one lot of calls in National Semiconductor and sold them a teeny higher.
My first trade ever. Now, you're asking me this without any time to prepare, but my first trade ever was in a stock called Superior Oil, and the gentleman who traded with me, his name was Tonto. T-O-N was his acronym. He was a broker, and he gave me a teeny, a 16th, $6.25 on a trade. Tonto was the first guy who ever made a trade with me.
First trade I ever made was a stock trade. I bought a natural gas stock. So this was like 2005. And the crazy part about it is this was during around the time of Hurricane Katrina. And so after buying that, the natural gas stocks went crazy. I was immediately hooked. Immediately.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Damn.
Long live the trader nerd!
Man, you're a turd.
Trade junkie!
Tomas, we are back, my friend. You know what that means? Time for a little bit of phone calls. That's right. The number's right there. Call in now, 855-238-2789 or 855-BE-TASTY. That's right. The number's right there below me. Give us a buzz. I got 4 or 5 lines open. Sadnoff, no Scott Sheridan. What'd you do to him? Is he mad because he didn't get to play golf with us this weekend?
No. The reason you got to play is because he turned us down.
But man, you are relentless, man. Just when you think you're on the same page, solidarity, we're gonna gang up on somebody, man. You can stick a knife so deep into somebody's back, you can feel it in their chest, Sosnoff. Boy, oh boy. Oof,
no, I don't know what he was. I don't know. I really didn't. I didn't talk to him.
No, it's okay. It's okay. You.
I think he
summed it up.
I think he's his daughter's graduation's this week, so I think he's. In the Sheridan family, graduation is like a month-long thing. It's a month.
You mean it's not what they're supposed to do? That they spent 4 years trying to accomplish this?
It's like a month-long process. It's a very they take a lot of time. It's a big celebration. Then it's a trip around the world. There's a lot of things that go on.
It's good to be a Sheridan.
Yeah, it's good to be a Sheridan. In the Sosnoff household, we don't go to graduations.
No, I know that.
I never went to any of mine, but my kids thought it was important to go to theirs, which is ridiculous.
And just before people write in and say mean things about you, you did go to your kids' graduation. The
kicking and screaming, yes. I mean, yes, I did go to both my kids' graduations. One was in Yankee Stadium. That's how crazy that was. I'm like, who the hell? Who has a graduation in Yankee Stadium? And the other one was in the field, the basketball arena. And I was watching the wrong girl the entire time, thinking it was my daughter. And it was somebody else that had the same thing on their calf. So I was like, I wasn't even looking at the same person. My wife, she whacked me. She goes, what? Who are you looking at? I go, that's Kay. She goes, that's not her. She's over there. And I'm like, what? I'm like,
I expect nothing else from you, Sadnoff. That's actually, that's probably one of the first true stories you've told all day today.
I haven't told any stories today. That is a true story. When there's 12,000, when there's 18,000 people there, how could you find your own daughter? Crazy.
How could she find you? I mean, same thing.
Yeah. So no, I've never experienced the. I mean, for myself, no, nothing. So,
Sadnov, I think let's sum up the market here real quickly. Even the S&Ps are down 24. Volatility is only up 15 cents. I think you have to be surprised, and I think you were surprised earlier this morning when you said, I don't see the capitulation in the market to the downside. Is this actually healthy or good for the market right now that we didn't get kind of a blow-off bottom? We really just had a slightly exaggerated move to the downside. 1.5% is really nothing.
Yeah, I thought they were going to. Well, first of all, I've been more watching the bonds. We've scalped the bonds. Okay, nothing great, but at least we bought close to the bottom and whatever. We made some winning scalps, and they've rallied back to, almost, well, not a full point, but 3/4 of a point off their lows. Stocks have rallied really nicely. Seems like they're struggling right here, and I'm not sure if that will last.
Yeah, the Dow went positive for a second. It's down by 40 right now. Even the S&Ps were down around 10. They're down at 23.
Yeah, I've been watching the activity in different commodities. Gold, for example, it started to sell off a little bit, and then it rallied back. Now it's up 50 again, and got myself a little chopped up in some of these things. But for the most part, we've hung in there. I got this feeling, Pat, that it's just markets go down when you least expect them to, not when you expect them to. And markets go up when you least expect them to. So it's got kind of like, I'm fighting with it. I got my own demons I'm fighting with here. But I am happy that UNH rallied today. And that has
helped. $9, about $2-3 off its highs. Yeah.
Yeah. And that has helped all of us that have been long UNH. So that's a good thing. But we'll see what happens the rest of the week.
Good.
We'll see what happens.
Who cares what you think? We can think more about you in a moment. Let's get to the phone calls. I still got 4 or 5 lines open. Love to hear from you. We can go to New York. I got TD in New York.
Hey guys, how you doing? First time caller. I just discovered Tasty maybe about 3 weeks ago.
Awesome.
I have been trading, just trying to learn, and I find your platform absolutely stunning.
Great, man. Thank you. Appreciate the support.
Appreciate it.
And I just want to know, where do I get started? How do I get started without overwhelming myself on your platform?
I'll take it first time. You can add to it. I mean, I think you go to tastylive, what you're watching right now, and go to our Learn Center. It's right on the top of the URL, right on the top of the website there, and go through our Learn Center. It's free. You'll take a couple of tests afterwards. Nobody sees them. They're for your own. They're for your own good. And when you get 90s and 100s in those tests, I think you can't fully learn without doing. And I would put on just a one contract spread, one diagonal, a couple $100 in risk, a couple $100 over 40 or 60 days. You're looking at, $15, $20 worth of risk because you're going to close that trade within 21 days. It's the price of a cup of coffee at some places. And that's how you really learn. You learn by doing. Thomas?
So right, I've been on the website, but I find it that every time I click on something to learn, it takes me to another page and it asks me to sign in again when I'm already signed into the previous page.
They just want you to put in your your email address so that they can send you, the daily cherry bombs that we do and the other kind of publications that we do.
Hey, TD, have you downloaded the software yet?
No. Like I said, I'm just learning. So is there software to be downloaded?
Sure. So the first thing, just like Tony said, because I wasn't sure where you are in the process, but what Tony's suggesting is that on the Tasty Live site that you look at the Learn Center, and because everything we do is free. So all the stuff on the Learn Center is free. All the archives on our website is free. But when you're ready to really see what Tasty is all about, create a username and password, and then download our software. When you open up the platform, you'll see all the cool stuff that we've built, and you can play around with it. But this is before you fund an account or anything like that. You can play around with the software. You can set it up in its basic, format, and you can see all the different things that we offer, all the different strategies, all the different products, all the different ways to look at things. And I think it will change, it will engage you, it will excite you, and it will maybe change the way you look at, trading. And that's all we can ask for.
Now, Tom, is this Tasty Live or tastytrade.com? Because that's where I get confused a little bit. I'm not sure which one is which.
Yeah, sure. So
like I said, I'm new.
Let's make it really simple. Tasty Live is what you're watching right now. That's what Tony and I are doing. That's the network. We have a network. Mm-hmm. It's called Tasty Live. And in the network, there's lots of archives. There's lots of, there's tons of things you can do on the website, but that's all part of Tasty Live. It's content. It's research. It's what we call a think tank. But Tasty Trade is our brokerage firm. And Tasty Trade is our software platform, our web-based platform, our mobile platforms. And you have to create a username and password. And it's all free. But you have to create a username and password to download everything just to check it out.
Gotcha.
Okay? Two different websites, two different everything.
Okay. Like I said, I just discovered and I find you guys because I've been trying to, just learn the ins and outs of trades. I've got burned by, several people with their programs. And,
no, don't do that. Just take care of it yourself. We're all about the self-directed investor. That's you. And we're all about you doing it yourself. So we don't want to manage your money.
Guys fascinated. I just find you guys fascinating.
Thanks. We don't want to manage your money at all. We don't want to have anything to do with you other than to engage you and to hope you learn from us and then use our technology. And we will be coming to New York. We go to New York every year on our road trips. We'll be in New York. We'll be in New York later this year. Tony, when will we be in New York? Do you know?
Ooh, I'll find it for you.
I'll
give it to you for a second. Hold on.
We're doing a live event in New York later this summer. I just got to check the date.
September 19th.
Wow.
September 19th.
September 19th.
September 19th.
I would love to come. I would love to come and shake you guys' hands.
Yeah, I think we're going to be at the Webster Theater. Isn't that the Webster Theater, Tony?
We are going to be at Webster Hall. Webster Hall. 125 East 11th Street.
Yes.
125 East
11th Street.
11th Street.
You can sign up at tastylive.com/events, and I believe that's the old Ritz. Anyway, hey TD, we got to run, but thanks so much, man. Hopefully we'll meet you in person.
I appreciate you guys, all right?
Thanks.
Thank you, man. Appreciate you. We're going to go to Dallas. I got Eddie in Dallas. Eddie, what's up?
Hey, how you doing, guys?
Hey, Eddie.
So speaking of some software, I'm looking at the Tasty Threadless website, and I think I might have found an issue. I can't find Dr. Jim's self-portraits. Is there any chance to add that on there?
we can send you a link if you want it suitable for framing in your house. Yes.
Okay. Perfect.
It's going to be a free giveaway at all the shows.
Yeah, that's our new giveaway. Dr. Jim dolls, Dr. Jim portraits, everything.
That's a release. Okay. But just had a quick question for you guys. So I'm seeing how the S&P has been rising, over the past few days, nonstop. And I like holding negative delta in my portfolio, but it just feels like I'm missing out a little bit. I'm really getting. Do you guys have any words of wisdom? Or, I guess my assumption was wrong, but I want to stick to it. Would you guys, say otherwise?
Yeah. So I don't know if you have any words of wisdom. You're usually the guy that gives everybody a little bit of pep talk here.
Because it was a little bit muffled, so I just want to make sure I understand this. You're saying that you have short delta, and what should you do with that? I mean, how do you kind of flip
the market's been rallying, his assumption's been wrong.
Correct.
Yeah. So your question is, with the market rallying, how do you get rid of the short delta? Is that the question?
Or do you keep with it? Words of wisdom. What do you say? I'll go first. For me, it looks like not adding and actually reducing the delta by 20-ish to 25-ish% on the overall position that you have. So if it's a vertical spread, I probably do nothing with it. If it's like a strangle that has short delta to it, I'm going to roll up that untested side and reduce my delta by 25 to 50%. If I have that bias to the downside, it would be 25%. If I didn't have the bias to the downside, it would be closer to 50%. I think you have to stay mechanical. It's very hard not to admit when you're wrong, because you might not be wrong, but you're early in the process. A morning like this morning, I might have looked to really roll those puts up just because, again, I'm only rolling by 25%. I actually want it to still go in that same direction. So I think you stay mechanical. I don't think you add to positions. You could roll up vertical spreads if you ended up doing a debit spread that you paid, let's say it's a $5 wide vertical spread, you paid $2.50 for as a 50-50 shot, and now that's down to $1 or something like that. Looking to close that and opening up a position, say in July, at the same $2.50 might be something prudent to do. I think it's very hard to close losing trades, but I think you still have to do it. Thomas?
I mean, Tony's advice about not adding to the position is really good. And I have two suggestions. The first thing, Eddie, is that whenever somebody asks me this question, the first thing I say is to reduce the size of the position. So you can do that two ways. You can take off, some of the contracts. That's one way. Or you can aggressively, roll up, reduce the delta, which effectively reduces the risk. So you can do that by either rolling out to the next month or rolling up one of the untested side or adding an untested side. I mean, it has to be one of the above. Whatever it is that you do, you don't want to add to the position and you want to reduce risk. So that either means taking off some of the contracts or lowering the delta by making a credit-based adjustment.
Okay.
I would watch my buying. I would watch my buying power. I wouldn't want my buying power to grow.
Right.
Yes.
Right. Okay. Appreciate all you guys do. Thank you. Yeah.
You got it, man. Good luck to you.
Thanks,
Good luck
Eddie.
to you out there. All been in the same spot. We're gonna come home to Chicago, Sadnov. I got Ajit. Ajit, what's up, my man?
Ajit.
Ajit.
Yes, Ajit. Tommy's got it, but Tony, you need work on it.
We're working with them. His
Get in line. I mean, I need a lot of work with a lot of things.
All right, fair enough. One question I had is, I hear you guys use IVR a lot, but why not percentile, IV percentile?
Because we had to make a choice. Because we didn't want to confuse our viewers and we didn't want to confuse our customers. So over the years, what we did was we went to our research team. We have some really good pieces on this too. Jacob's done a couple of pieces. Dr. Jim's done a couple of pieces. Julia did a piece. We went to our, really heavy mathematicians on our team. And we said, basically, we have to choose between IVR and IV percentile. Now, a number of years ago, TP and I made the same decision. We chose IVR over IV percentile when we built the Thinkorswim platform. We built Tasty, we revisited it, and we have again decided that IV rank has a few advantages over IV percentile, and we want to be consistent. We don't want people going back and forth because then you can end up with two very different numbers. So that's the genesis of it, and that's the reason behind focusing on IV rank throughout the entire platform. We do offer IV percentile, but we purposely don't position it. We don't prioritize it.
Yeah, I'm gonna hold on one second. I'm gonna answer it the same way. I'm gonna answer the same way as Tom, but just to add one more thing, we defaulted to IV rank because it's the number that moves slower. We kind of defaulted for less risk than more risk of IV percentile. IV percentile is going to fluctuate a lot, especially with events that happen, especially with earnings or anything like that. IV rank is going to be a much slower moving product. So we didn't want you kind of like bouncing back and forth between perceived extremes in maybe a couple of days or a week. Where IV rank, if it stays high, it's high for a reason. It's a full year's worth of data. So we went more conservative than more aggressive, but you can do what you like.
Yeah, because what I use them both. I typically have a filter when I'm selling premium. If I use like IVR greater than 70, IVP greater than 75, something like that, just to kind of filter out things. That was one of those things. But you guys had a couple of things on today's show. I mean, you guys talked about the put-call ratio, if it's still relevant or not, and then historical volatility. But the thing with the put-call ratio, I just want to kind of get back onto that. It's really just like a blunt tool used for, like, let's say, a broader sentiment indicator. But with the zero DTE options, hedging, and, when you talk about non-directional strategies like condors and spreads, do you think that its predictive power has severely diminished? Because that's why I just never use it anymore.
Sure.
I mean, I used to look at it as a sentiment indicator.
Sure. We agree with you. We 100% agree with you. We also think when you add into that, all the inverse ETFs that have options that trade on them, right. When you add into that, the fact that, remember, you go back 30, 40 years ago, 20, 30, 40 years ago, most people only bought options. They really did. Right. Mm-hmm. I mean, it was only market makers that sold them. And so that's why the put-call ratio kind of, I guess, made sense back then. But now people are on both sides of the market, and people use options as different forms of hedges, collars, all this stuff that they never did before. And so I think the whole game with options, you really can't tell just based on put-call ratio.
Right. I mean, that's very true as well. And then also you talked a little bit about, and this is my last point, about the historical volatility as well. In terms of implied volatility, historical volatility comparison, like comparing, let's say, two different maturities, let's say 30-day implied vol to 60-day historical vol, or anything like that. You guys don't utilize that for calendars or diagonals or anything like that?
I mean, you certainly could, but we don't.
Okay, gotcha.
Yeah, you certainly could. It's just, again, we're trying to speed things up and simplify things, not overcomplicate things, and that's why.
Gotcha. Fair enough. Thanks, guys.
Thanks, man.
You got it, man. Appreciate it. Sadnov, we're going to go to, my buddy Scott, who's currently in Mexico. If I had Scott's money, I'd burn mine as worthless. What's up, Scott?
We'll never do that, Tony. You don't need to burn your money as worthless. It's probably worth a lot more than mine. That being
What's
said,
up, my man?
Palantir, as we all are probably quite aware, that, it's so super overvalued, it's just beyond ludicrous. That being said, would you go naked short? It's a very small position at this point with stock, or maybe do something because, their earnings have passed 45 days, the ideal window to sell premium. Would you do a defined risk, or would you just short some of the stock?
It's kind of, its IVR is a little bit, it's borderline. It's 30 still, which is still high. So I think you can get away with either. The challenge in PLTR is that playing that stock naked just has been very difficult, because some of the upside moves, especially if you want to get short, some of the upside moves have been brutal. I don't hate the play of getting short PLTR here, but personally for me, I would do it via either a long put spread or a short call spread. And it could be as wide as you want. So you can create a synthetic short, but the only reason I stay away from like I have a short strangle in there, so I'm fine with a short strangle, but I'm a little less comfortable with just naked short calls. That's all.
I think a calendar or diagonal spread here between June and July warrants a trade here. You got June with a 63, almost 64 monthly implied volatility. You got July with a 62.5. You're not paying any vol differential between the two. You're actually selling a little bit of volatility in June versus July. I think a diagonal spread on your directional bias is a good trade there too.
Yeah, like I said, I'm short strangles in there. I like it, but I don't have as much of a directional opinion as you do.
IB rank at 30 is okay.
I appreciate that. I appreciate you taking my call, and once again, always replying to my email and that video that was posted on Saturday. I think anyone who hasn't watched it needs to, because it was beyond epic.
Yeah, that was
thank
that was
you
a
guys
good one.
for everything you do.
Thank you.
Thank you so much. Appreciate your time, man. Enjoy the sun.
Of course, man.
Yeah, we got one more call for you, Sadnov. Going to come back home to Downers Grove. I got Rob at Downers Grove. What's up?
Hey guys, how's it going this morning?
Hey Rob.
Doing great, man. How are you?
Good. Just trying to figure out what I'm going to do here with bonds. I really thought these things were going to rally, and I've got two short put spreads in here still that I've got 4 days left, and I can't roll for credit. Am I just going to cut my losses and move on, or what? I mean, is there any? What would you guys do if you've got deep in the money put spreads in bonds? In this example,
what's your short strike? 13, 14, 15?
I've got two of them. I've got 117 and 118 for the short strikes.
You've got to just roll them.
Yeah, they're not gonna. It's not gonna reset in 4 days, but I can't roll it. So
I mean,
he can't roll for a credit.
No, you can't roll for a credit, but you either got to roll for a debit or close them out and reestablish. I mean, you're too deep.
I mean, what would you? I'm not really keen to roll it for a debit. I feel like you guys have pounded that into my head, maybe. But
okay, that's fine.
No, I would be rolling.
I mean, those are
go ahead.
Those are at max loss, Rob.
Oh yeah.
Yeah, I mean, they're at max loss. There's nothing, so just let them go and reestablish with something that's at the money.
Yeah, that's exactly what I would do. What Tom was just saying. I would be looking to close those or keep them. If there's a exercise assignment fee you want to avoid, close it if it's mathematically advantageous for you. And then I'd be looking to go to June with 30 some odd days or so. And I'd probably be going right at the money with my spread and just trying to have a 50-50 shot if my directional bias to the upside is still the same on a call spread or something like that. You could sell
Go ahead.
What? No, I was going to say you could sell a short put spread if you want to, but I would probably go with the 50-50 shot.
Yeah, I'm not eager to add back to my position because I still have, I took off the call, but the deep in the money put now at this point, that was, I think the last time I called it, and I've just been battling this thing and rolling it out. And then I've got a lot of TLT that I'm trying to wait for it to rally to get rid of. I could sit on it, no big deal, but, I'm just waiting for these things to start to rally, and they're not rallying. Particular yields, real quick. Have you seen the current basis point difference between ZN and ZT is negative 45? I know. Pete has mentioned this a handful of times in the last month or so, but I have that position on small. But I'm thinking about adding a little bit to that, but I don't know. I'm not jumping at the opportunity.
Yeah, I don't have that. You're doing the twos and the fives, did you say, or twos and tens?
Yeah.
Yeah, I don't have
so
that.
I've got one ZN and 4 ZT.
Yeah. It's probably been working okay.
I'm down about 4,000.
Oh,
that's not good.
Hold it. You're long 4 of the twos and short 1 of the.
Yeah.
Oh yeah. Okay. Yeah. That makes sense. What was I thinking? It's the other way.
When I put it on originally, it was at about 30 basis points. Now it's at about 45. So I don't know if you had seen that. Right.
No, I haven't been trading that. That's weird. You know what? It's the first time I haven't really looked at that trade. And is that the right ratio is it 4 to 1?
I believe so. I'll be honest, I've been using ChatGPT to help me sort of balance my account and allocations and everything, and that's what it had told me. And I feel like I remember in the past when I've done this pairs trade, that's what it was.
Yeah. Well, it's got to be long deltas.
Mm-hmm.
It's long deltas. So you need, this sell-off in bonds does not help. So you just need a rally in bonds. That's all. I would keep that. Personally, I would keep that.
Yeah. All right. Yep. That's it. That's all I got.
All right. Thanks, Rob.
Thank you. Thank you so much for your time. Appreciate all the phone calls. Sad enough, we're going to take a quick 90-second break. Let Liz and Jenny come in here. Even the S&P is down 23. Volatility basically unchanged, up 7 cents. Bonds down 30, 112.14, the middle of their range. We'll be back in 90 seconds. This is Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Whew, let's make this quick. I got to get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm going to go crazy.
Okay.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
And welcome to the Monday edition of the Liz and Jenny Show. My name is Liz. The beautiful brunette to the left of me is Miss Jenny Andrews. Happy Monday, Jenny.
A happy Monday. You did it, Liz. JD graduated. You officially have a college student.
I officially have a college student, and I don't even know how to handle it anymore. I was telling Jenny some of the shenanigans. It was party after party after party this weekend, and my entire summer is going to be locked and loaded with high school graduation parties. Lord help me now. That's all I keep saying.
We did it. Yeah, you did it though. How was graduation?
Okay, so Jenny and I were talking a little bit about this beforehand. I can't actually believe this happened. No tears were shed. It was not at all, because we're driving there. We're driving to graduation, and keep in mind our school, they only give you X amount of tickets, so parking's a little bit hard. So they tell all the parents to get there an hour before graduation. And the kids had to be there, and they were in the gym getting ready, and then they come out to the football field. So we're driving there, and all of our phones go off with this crazy alert I've never seen before. Being like, stay indoors if you can. There's a dust storm coming. Now, Vermont has not seen a dust storm to this magnitude since 1930.
Even though I was not here, my phone was beeping too with the alert, and all I thought was, Oh my gosh. This is JD's graduation. They're on the football field and the dust storm's rolling in.
Okay, so I will tell you it's called like
a haboob. Have you heard it? Did you hear it?
Yeah. Yes. Okay, so the kids are still inside. So keep in mind, the kids are still inside. And so then, football stadium goes like this. Now, JD was on closer to the visitor side. So we went to the visitor side thinking it would be smart. So we did not sit in the big one. We were on the visitor side. Well, we chose wrong because everything was coming at us on the visitor side to the point where like you couldn't even stand up or you'd be knocked down and you were getting pelted with stuff the entire time. So this is before the kids even came out for an hour. We sat there like that. So I had sunglasses on. I mean, you don't need sunglasses, but they were literally to protect
your eyes. To protect your eyes.
But I look over at my daughter and she doesn't have sunglasses on. She's like, I can't even keep my eyes open. I can't see anything. Because
How long was the dust storm rolling through while you were sitting on the football field?
About an hour. So we're there for the entire hour.
The dust storm lasted an hour?
About 45 minutes. That's correct. So all the kids walked into the dust storm and then the principal started speaking. And I'm not going to lie to you. In my mind, I was like, can you talk any faster? Why are you even giving this speech to the principal? Let's get these kids up with the names. It was crazy. Crazy. Yeah, it was about an hour. But by the end of the graduation, it was done. So when the graduation was over, it was done. But Jenny, here's the fun part.
No.
I posted one picture on Twitter of us as a family because I, in my infinite wisdom, had a new makeup routine freshened my makeup up before we left. So my face was still a little tacky when I got to the dust storm. So I went to a party afterwards. And I looked like a chimney sweep. I took off my glasses and there was just white rings with just dirt everywhere. And then the dirt was like crusting in my nose and everywhere. I looked like I just swept a chimney.
Wait. So is the picture before or after the dust storm?
This is the only family picture we have. We're indoors before the dust storm.
Before the dust storm. Well, I was going to say that's a beautiful picture. You all look lovely. This was before the dust storm.
Yeah, because we didn't see JD graduate because Annabelle's eyes were being pelted with dirt. I had sunglasses on so I could watch, but it was a beautiful night was had by all. It was a wonderful time. The kids had a great time. Then they went straight to the lock-in, which I got to tell you, I've never been more impressed with in my entire life. Like that was a great idea that they did. All the kids stayed the entire night till 3:30 in the morning and they had the time of their lives. Like it was perfect.
Oh, that's good. I just cannot believe the dust storm. I want actual pictures of the dust storm because I was not here. I was up north, and my place up north is like on the border of Indiana and Michigan, like up on the lake. So I was pretty far and you could see like a haze rolling over the lake, but we didn't get it. I didn't remember it being like that bad there, or I was indoors and didn't even notice it going by. But when I got home, back to my home here, my entire front door is covered in dirt. And debris.
That was my face. That was literally my face. It was crazy. And you could feel it like, because I do smile a lot. And then you're just like, there's like dirt in your teeth. Everybody was like spitting because everybody had dirt in their mouths. It was crazy.
So like come hell or high water, they were having that graduation. I can't believe they didn't like cancel it, postpone it, move it to the next day, move it inside.
I couldn't believe they didn't either. And you know who was a total trooper? My father-in-law. So my father-in-law was directly next to me. We walked out there and then we stayed for a while and, took a bunch of pictures and stuff on the field. I took pictures of the kids. The chimney sweep didn't need to be on any pictures. But so he sat there with me the entire time and he was nestled between me and my new best friend who's this Irish lady. So we just talked over him the whole time with dirt on our faces. So he was such a...
I hope you did get some pictures of you guys all covered in dirt.
I'm sure I did. It's really not. It's really not that.
I can't. Well, okay. So one good thing, you weren't crying because you couldn't be. You were covered in dirt. And number two, no one is ever going to forget that day. No one's ever going to forget that. 1930 is the last time Lamont's seen something like this. Yeah, Illinois. I think 1930 was the last time Illinois had anything like it. Yeah. Like the entire state.
It was crazy. It was absolutely crazy. But yeah, so it was fun. JD had a great time. Everybody, then it was parties and super fun. And yeah, it was good.
Oh, well, Well, now you got a weekend after weekend after weekend after weekend of graduation parties to look forward to.
Yes, we do. Yes, we do. So it'll be a good time. How was your mom's birthday?
You know what? The 75th birthday weekend was amazing. It was fun. We had great time. Saw some of her best friends from her childhood and partied like rock stars. Literally partied like rock stars. Every night I would say like it's midnight. Can we go home? And I would get a message of, how about in an hour?
That is awesome. Good for them. And I love like childhood friends. That is so fun.
Yeah, so it was fun. I have, like, my normal life, I don't stay up that late. They stay up, the 75th birthday bash, they stayed up later every night than I ever stay up here at home.
Good for them. I like it.
We would go to bed. I would just, like, fall into bed. It was crazy.
So fun, though. I'm glad you guys had a great time. I'm glad you had a great time.
We really did. We really did. And that's it. Now she's 75, and really, I mean, nothing big until my dad won't be 80 for 4 more years. So no big parties for a while.
You got to celebrate every year.
Yeah, but not like
not a big extravaganza.
I'm telling you, it's going to take me all week I have to leave Thursday morning for Florida. It's going to take me until then to recover from the weekend, I think.
I believe it.
We ate so bad. Like, we were out like crazy, ate at good restaurants. So I think I put on 3 pounds for over the 3-day weekend.
Well, you kicked it off at Fuga de Chao, so you can't really. That's getting your stomach ready to eat, right? You're getting that expanded, so you're ready.
I weighed myself today, and I was like, I don't know what went on this weekend, but it wasn't good. And
never get on a Monday.
And I was barely drinking because I was the chauffeur. I was the driver all weekend.
Oh, well, that's fun. I'm glad they had a great time.
But now I'm just, I don't know what I'm going to do between now and Thursday, but all you're going to see me eat tomorrow and the next day at the SIBO are salads.
Yeah, well, that's all we get anyway, but you don't make friends with salads. Okay, do you want to pop in the platform?
Yeah, let's pop in the platform. Let's talk about this. At 9 a.m., 9:05, when it was time to put on the SPX trade, and I'm not saying like it's time, but our time that we've been putting it on, this is exactly where SPOOs were. They were down 17. What did you think? What did you do?
I did not put it on today. I was at the vet dropping off Will Ferrell.
Oh, to have his teeth cleaned.
Yes, he's having his teeth cleaned. And you would thought, he was so mad at me this morning because I didn't feed him. He kept banging on his bowl. He does that when he's hungry. He bangs on his bowl. He banged on his bowl all morning long, and then I drove him to get his teeth cleaned, so I didn't get a chance to put it on.
Poor guy. It's so hard when they can't have food or water, and they don't know why.
I know. He was so mad at me. He kept being like, Lady, I'm right here. You usually feed me breakfast, but I did not.
Well, did he need any teeth pulled, or you don't know yet?
She doesn't believe so. I mean, he's young, and his teeth are very sharp.
Yeah, so at least when he gets home, he can eat. Like, poor Clarence, when he got home, I couldn't feed him in the morning, and then when he got home, I was like, well, you had 3 teeth pulled. Can't feed you now either. Like, so at least he can eat when he gets home. Yeah. So it was crazy because this morning, SPOO's down 60, 68, 50, whatever, bouncing around, down much more. On the open, down much more. So at 9 o'clock, and it was actually closer to 9:05. When I logged in to put on the SPX trade, lo and behold, SPOO's only down 17. I thought, I don't want to put it on because I feel like we could be down 50 in 10 minutes. So I did something different this morning at 9 o'clock.
What'd you do?
Instead of putting on the SPX Iron Condor, because I thought, well, we could drop back down, I put on a bearish Jejune.
Oh!
Yeah.
Okay.
Yeah,
I mean, you can do whatever you want. I was just taking a look. I was glancing as you were talking because that study by Jacob, which I do love. Remember, it said that certain times you can put it on and the low implied volatility, high implied volatility. And if you look, VIX was brushing 20 today. Brushing.
I mean, it was slightly higher, right? It was slightly higher today because of the move in the market. But you know, I thought, because there have been so many days where we're like, oh, well, we were down a lot or moving a lot, and I don't know if I want to put it on because we're moving so much, or we're, pop back up. And so I told myself, if I won't put on the Iron Condor because I think we're going to move in a certain direction, then instead I'm going to put on the Jejune.
Put your money where your mouth is. I agree.
Yeah. So that's going to be my new thing. Like, I'm going to put on a trade one way or the other. It's either going to be the Iron Condor or the Jejun.
I think that's good. Because I do like those 0 DTE SPXs. They are kind of fun to play with. But now the study said this time is not too late. Can we go in and take a look at it? Type in SPX. Let's just see where we'd be right now. Now his is a 30 delta, $30 wide, meaning the one that Jacob looked at. So
30 delta. It's so tight. You're so close now.
You are so close now, and it's going to be less too. 30 delta.
Yeah, I mean, to me, you're $12 away. You know, we're down 20. If we're down 32, you're right there.
The top is even closer.
So 55, 37, 47, 50, so 55, 65, 75, 85. So it just seemed tight. And with the range we had this morning, I thought, I'm curious to see if our viewers put it on.
Well,
let's pop in his Twitter and see. So, let's go top down. Okay, so I just say McDonald's. That's McDonald's. So we'll come back to that. We'll come back and take a look at that. I was just curious to see if anyone put on.
There you go. There's Eric.
Okay, a little caution on this Moody Monday.
Moody Monday, we got downgraded, baby.
Yeah. An initial 85 wide iron condor with $25 wings at 16 delta that I'm already managing the put side up on. So his short call is the 58. Oh, he rolled up the puts. Because his short call is right around here. Where is that? I can click on this. Here we go.
Yeah. So, I mean, he's still in okay shape, but he did roll up his puts, right?
Yeah, it looks like he rolled up his puts.
But I do think, honestly, I know Jenny and I didn't do it. I didn't do it because I was taking Will Ferrell. But I do think, like, a lot of times these have come off and they're okay.
Yeah, right.
It was the $10 wides that you leave no matter what that I've had max loss on. I have not hit max loss on any of these yet. Knock on wood.
59.60 is around his break even. So it's okay here. I know he rolled up.
Yeah, it's great. It's fine here, right? So it is what it is. I mean, now you just got to sit and let time pass.
Right. Yeah, so hopefully we stay right here. I just wasn't sure with the move today. And if you put it on the open, like today, SPX, as far as the open, if you look, waiting, here we go. The open was 59.02.
Yeah.
What? Yeah, 59.02. So 40 points.
Right.
About 40 points lower, right?
Yeah, that sounds right.
60. So if anyone put it on the open, we were much lower. Were you surprised we rallied back? Was there some news or what caused the rally back?
I have no idea. No idea.
I don't either.
But I mean, it's being led by the tech stocks. So it's the tech is what's the percentage is NASDAQ down versus everything else, or is it kind of across the board?
They're all similar.
Well, no, I guess the Rutt's a little bit higher.
The Russell's the most. The most. Yeah. So I don't know. I was surprised. I was surprised when I opened my computer at 9:05 and we were only down 17.
Yeah, but you know what? Today's a new day and we are going to trade, Jenny. We got cash. We have cash burning a hole in our pockets.
So as far as our account, the only thing I might take off is wheat. This has been on for 26 days. It took 26 days for this trade to become a decent winner.
Take that thing off, and we've only 4 days left in it.
I know.
Get out.
Yes. Okay, I'm gonna take wheat off finally.
Can we take a look at our bond position, because bonds were moving heavily this morning, and I think they've come back a little bit.
Yeah, our bond positions are all losers today. So.
They are, but I think they're better than they were, I believe.
So ZB,
and you can pay up for that wheat position.
Sure. Let's see.
Because we want to make sure we get out of it.
I'll let that work for a minute, and then Okay, so ZB, you can see 112.08. We've got the 111, 110 with 32 days to go. We're still out of the money. There's nothing we would do here. But since we put this trade on, this spread is worth more now.
Can I see where ZB was? Because I believe it was a lot lower this morning, and it's rallied a little bit back.
Yeah, you could see this little. This.
Look at that rally.
I mean, what was the low today? 111.05. So a whole point lower.
Yeah, a whole point lower.
A whole point lower. Oh, we still have that, and we never took our TLT up. We were never able to get out of our TLT, and then that's kind of dropped back down.
Yeah, but that's exactly where it was when we put it on, right? If you can see that 85.50, it's now 85.60. This is exactly where it was when we put it on.
Right. So we have those two bond positions. We're not going to add any more. We are going to, I will tick this up one more. So each tick, not that much. What, 6 something?
Yeah, 625, I think.
Yeah. All right. So now we can get out. Okay, out of wheat.
There you go. Push that through. I'll do the other side. Teamwork makes the dream work, Jenny.
Love it, Liz. Love it. So activity, wheat, bought back our iron condor with 47 rank. Would we put it on again in the 32-day?
Yeah, maybe. Why not, right?
Or would we maybe?
It was a slow bleed, and honestly, this is what we talked. We talked about this yesterday. Was it on Friday last week? That was an iron condor. So the 21 days till expiration. It's very easy to manage naked options, but not typically defined risk. We had to leave it.
So here, 118. Is that how narrow our other one was?
Let's look. All symbols today.
Here we go. No, it's much wider. 520, 505, 525. Oh, it's almost like a jade lizard where we had $5. Yes.
Yeah, because we was at the bottom of its range, right?
Okay, so let's look at that again. Like $5 wide to the top.
Okay, so you're getting 137.
505.
Narrow it maybe by one.
The downside?
Narrow the downside by one, yeah, if you want to, I think. Yeah, I mean, you're taking a little bit of risk to the upside, but it's not.
Right, you have a little bit of risk to the upside. And your risk to the downside is only 518.
Yeah, that's not bad. That's pretty good. Now we've got 32 days left. I like this trade. 44 rank, checks all the bells and whistles. I kind of like the jade lizard style. Now, we're taking a little risk to the top, but I don't consider that.
Not much. We're getting 225, 230, and it's 250 wide. So we have like $20 in risk to the upside, and most of our risk is to the downside, but only 518. Now, again, we could end up sitting on this for a long time, like we did the other one, 26 days.
I think we will sit on this for a long time, unless you get
unless we pop up. Yeah. Okay, I'm going to ship this.
I like it.
So we're working that with the 47 rank. Why not?
No, for sure.
We're working that wheat trade. If I have to lower it to 40, let's see, 4 to 4.5. And that's it. Final offer. Hopefully we fill. If we get it ticked down, we'll fill. We should fill.
Yeah.
Okay, so that's working. That was the only thing to close or manage today. That's it.
Yeah, that's the only thing. I mean, I saw something else that's Intel, but that's something that we've had on forever.
Yeah, we decided that we were going to get wait for more
50%. Yeah, we just put GTC in, so we know we're waiting on it. And then that's it. That's all of our management for today, Jenny Andrews. We have earnings, but there's not that many. I think I know NVIDIA's next week. I think there's more next week than there is this week.
Let me take a look at Bob's list. 50% GTC. Okay, put the 50% in there.
Wait. With Intel down today, do you want to add the other one back in? Because that was a covered call.
So there were a handful of stocks today where I was adding puts back on with the down move.
Yeah, I don't mind. Because I know what we had in Intel. We had the out of the money put, and then we had the in the money put. So a synthetic covered call. Let's add the out of the money put back in.
Sure, let's just add the 20 for 43 cents.
Sure.
It's only using $292.
Yeah. Because we only have a little bit of extrinsic value left in our covered call situation anyway. So that's good.
I know. So then we'll have 27 cents plus that 43 cents.
Yeah.
Okay, so that's working. Okay, we're filled. I'll push that out. Everything's going right to the follow page. Okay, that's good. I'm going to go to Twitter, check out the list. And then I kind of looked at, sometimes we don't have that much in our account, right? We've got, if you look, we do not have much. So I think a good, something that might be good for finding trades, like I look through my account of what's losing today. or my bigger losers today. What's losing today, bigger losers today, thinking maybe want to add something if we don't have any of those positions. And I think you could do the same. Like, what do you have that's a bigger loser today? Maybe it's worth us jumping in.
That is true. I mean, we don't have a lot in here though, so there could be. We could look for high because we need some premium right now.
Right.
It's the one thing we're lacking in.
We need some premium right now. But let me take a look at Bob's list. And I do want to look at that McDonald's. So this was, and I don't know if that was his McDonald's trade that he sent in last week. Current spot 320, IVR 13, expected move. So he's looking at the June 20th cycle. He's selling a short iron condor, 310, 300, 330, 340 in McDonald's for the June 20th expiration.
How much is he getting for it?
You can see trade setup. Let's take a look at it.
Yeah, so you've got
the 300, 310, 330, 340.
Yep.
In the June 20th.
Now, we usually don't, and I mean, when I say take a look at it, I don't know if we're going to put it in, only because, filled in, good.
I'll push that out in a second. Okay, so 330, 340, 310, 300. This is the iron condor, and your break even's beyond the expected move. I know Liz was probably going to say with the low rank, we might not put on an iron condor.
That's exactly what I was thinking. It's very hard, especially in McDonald's, to do it with a low rank. But, teach his own. Like, they want to put this on. The risk reward scenario is there. You're outside the expected move.
Now,
it's got a high pop. It's got a 71 P50. That's a very high pop.
And you're only risking 660 to make 340. Yeah. Now, what would the higher rank do? The higher rank would mean this IV is higher than an 18. And so if there were a higher implied volatility, the expected move would be farther, right? So if there's a higher implied volatility, the expected move, this bar that shows the expected move would be wider, bigger.
Yes,
so
it would be.
Bigger implied volatility, higher IVR, you'd have that larger range of expected move.
What's pretty funny when you're talking about that with iron condors? To your point, this is the right collection for an iron condor, 340, but you just have more room in between.
You'd have more, right? There's nothing wrong with this, but if the IV were higher, it'd be wider. Instead of your strikes being 310, 330 on your shorts, maybe it'd be 300, 340. It'd be wider. Yeah. So, but again, not a bad risk reward. You're risking 660 to make 340. Not bad.
It's not bad. I like the setup.
Okay, so that was from Aged. I hope I'm pronouncing that correctly, but correct me if I'm wrong. I'm probably wrong.
It's good. I think you're close.
Okay, this from Permabull. Hi, ladies. I put the SPX trade on at the open. Definitely looking great today. Been rolling up puts all morning. So, yeah.
It seems to be the consensus. The morning we were down a lot more than we are right now.
And you can see the flag is where we're trading
now.
So you're still in that range. We just have to, and who knows what the day will bring, right?
Yeah, we have no idea. I think all the news and everything is out for the day. And do you think that's why, Jenny, that study said to hold off a wee bit? Because a lot of times the news comes out between, 8:30 and 9.
Oh, yeah.
That means numbers. You know what I mean?
I feel like most of those numbers are out right around 7:30, like Eastern time. So 8:30 our time. I feel like most of those numbers are out before the open.
Yeah, true.
Because usually, like, Tom and Tony are on, but opening bell hasn't happened yet.
True. Yeah, 7:30 is the big time for the numbers, or you're waiting till 1 o'clock, the 1:15.
I was like, let's see, were there any numbers? Did Frank post today? Were there any numbers coming out today? I don't think so.
Wow, we got a lot.
This was all last week.
Oh, that's all last week. Okay,
well, and here 4 hours ago from Frank. Friday's option volume, 61.5 million contracts, 11% above recent average levels. Calls leading puts 13 to 8 among the 500 most liquid single stocks. 30-day implied volatility was higher for 142, lower for 299.
Yes. Yeah. Right.
So. Thank you, Frank.
There's Eric who's ready. Oh, yeah, here we go, Bob.
Home Depot and BILI.
Billy.
Yeah, Billy. Yeah, it is. See it down here? Right below Home Depot? Billy.
And
just glancing at this to see if there's anything else. Those are tomorrow morning, and I don't love that because I like at the end of the day watching as the earnings come out, and so those are all tomorrow morning.
And so look at this week. We've got, I thought we had PNW already, or maybe we have some. Maybe we just closed one side. We've got Toll Brothers, Baidu, Target. Like those are pretty big coming up, and then you got Snow, Zoom, and then so we've got some this week.
Right, we do have some this week. Okay. Yeah, it's coming to a slow, like it's slowing down, right? Earnings season is coming to an end.
I know we still have some big ones because I know I'm waiting for NVIDIA.
Oh, that's next week.
That's next week. Yeah.
Yeah, I think that's next week.
No, can we take? I understand they're tomorrow morning, but can we take a look at Billy only because I like the name so much, so much.
Okay, so Billy, 1811. It's been in this range of 15 to 23. Let's take a look.
Did you see that? You don't watch a lot of stand-up comedians, but I watched this, just a clip of Jerry Seinfeld's latest stand-up, and he said, anytime you put two words in the same sentence, you say it with a lot of confidence. It is what it is. What's what and who's who? Like you just, anytime it was so funny when he did it, and that's why I was like, Billy, that you got to say it with confidence. Billy.
I love it. And did you? I don't know if you responded. So our friend group, we have a text chain of like 14 of us.
I had to turn it off. I haven't had it turned on. So let me know if anything is happening.
Okay, breaking news, Liz. Breaking news. One of my favorite comedians is coming.
Nate Bargatze?
No. Oh, so you missed all these? You missed this whole text chain?
Oh, I haven't seen it. I haven't seen it in weeks. I had to turn it off one time for something, and I never turned it back on.
Okay, so and I honestly would say like my favorite comedian. So my favorite comedian is coming to Michigan City, July 19th. So I sent this out.
Who is it?
Our group chat. I'll wait for it. And I said, who wants to move the girls' weekend in Michigan City to this weekend in July so we could all go see her right at the Blue Chip Casino on July 19th? Becky Robinson, the golfer.
Never heard. Oh, the golfer. I have seen her. Okay, yeah.
The golfer. So I said, let me know if you're in and I'll buy the tickets today. And I've heard from most of the group except for you, Liz.
Wait, is everybody in or out?
Almost everyone's in.
I'm in. I love stand-up comedians. I love them. I'm in. She's funny.
So yeah, she's the golfer. She's the golfer that has like Dashel. And if anyone, her videos are so funny, so funny.
Well, now you're even appreciating it more because A, you're a mom, and B, you're a golfer now. So
I liked her even when I wasn't a golfer. I've been watching her videos even when I wasn't a golfer.
You have been. This is true. I'll vouch for you.
And so did she just start on TikTok?
Yes.
Okay.
She just started posting crazy videos on TikTok.
But now she's on tour, stopping at Blue Chip Casino.
It'd be fine. I'm in.
Oh my gosh. Yeah.
Yeah, if you don't ever hear me respond to that, it's because it's off. Because it's out of control. Otherwise, you're up all night long.
I figured I would just get you a ticket anyway, Liz.
I'm in.
All right, Billy, $1.66 expected move. 40 cents on the 17 put.
No, I wanted to look at it because the double name. That's it. I don't really want to trade. I mean, it's not bad, 40 cents on but I don't even know what it is. It's not like we need to get into it. And it's tomorrow morning.
And Home Depot, what has it been doing?
It's $380 stock. It's an expensive stock.
That's expensive. $14 expected move.
I mean, I would do an iron condor in there if anything.
Like then we're too tight. Like if I were going to trade Home Depot and I felt like taking the risk, and for this week, I think I'd get $100 and call it a day. 50 cents and 50 cents, and you're getting $1. But it's almost $5,000. But do you see the appeal of the naked options? You're so far away versus an iron condor would be really close.
Yeah, you would be really close.
I think we pass.
Pass. I agree. Pass. Double verbiage. Good job. Pass on availability.
Liz, we're going to pass.
You say it with confidence when you put them in together. Pass. Love it.
Okay, so just making sure I get to everybody, and then we'll look for some new trades. Let's see. Put on the SPX. This is Jeff, 5905, 5965 with $10 wide wings for $3. GTC to get out with a $100 profit.
Oh, good.
I hope everyone can get out. I think that's what their GTC is.
Oh, I hope they got out for $100 profit.
Yeah, I hope everyone gets out.
Well, so it's so funny because if you would have put it on at 9, let me look at the market right now. Not 8:30, but if you put it on at 9, like you were looking at it, you would probably be out because we're still only down 17.
Yeah. If you put on at 9, you'd be out because it's right where it was. And then Frank Walsh, thank you very much. If someone's on YouTube and you post something on YouTube, Frank Walsh will share it with us. So here he's shared this from Scramble Everything. Ladies, are you going to trade at Home Depot? We decided to pass on Home Depot.
Pass. We passed.
Yeah. So, okay. I did write down a list of bigger losers in my account today, thinking we could get into them if we don't have them.
One of them today is Archer Aviation.
That's at the top of my list. That's at the top of my list.
So that had a big week last week. They had earnings and they had a bunch of different news announcements.
Okay. So Archer. Oh, we have something.
Oh, we're fine.
Oh, it's fine, but we can't add. We have something already. So, yeah, it's had a little bit of a fall. It really rallied last week. It's come down a little bit.
So yeah, my husband was telling me. I mean, once again, I don't keep an eye on all this stuff, but they had earnings, and then they also got approved for things like routes in New York and something else. So it's happening.
Okay. It's happening. I'm gonna keep my Archer. Remember how I had my 500 shares called away from me? I got back in with But my 500 shares were called away from me at 850. So I had to go a little bit further out in time. Went down to these 10.5s. That's what I sold today, added on the 10.5s.
How nice is it though that it was called away from you? It's down today and you can get back in. That's kind of a nice.
Well, it was called away at 8.5. I couldn't get back in at 8.5. I mean, I could have if I wanted 11 cents.
You don't want 11 cents that way.
No, I got in at the 10.5.
You do not want 11 cents that way.
Okay, so that we're already in it. Target, are we in Target? No.
Oh,
no,
Target's big loss. They have earnings when? The 21st after the close.
So it was it must have been a little lower. What was the low today?
I can't read that.
Low today, 96. Yeah. So when I made this list, it was trading only 90. It was down to 96.
Oh, that'll do it.
So they have earnings 21st. So that's later in the week. Wednesday.
Yeah, today's the 19th, so that's Wednesday. And we saw that.
Honestly, we'll be trading it tomorrow because it's Wednesday before the bell.
Well, what would you do in Target? Open it up. Let's take a look. You got a 73 rank. If you were going to do something bullish, you can because it's down today.
I mean, if you look at Target and you see we're at like the low, if you go back in time, we're pretty low in Target. You know, look, when was the last time it's been this low? Not since 2020. Okay?
Yeah.
So I have short. Well, I might have stock in Target now. Some of my puts may have been to sun. I started with short puts in Target. Now I probably have stock. And a combination of that and calls and puts, whatever. But it was on my top of losing list today. And $9 expected move near the bottom of its range. And you get a decent amount of premium. You got a 73 rank.
What do you think of a Jade Lizard here?
Sure. I mean, that's like so low risk. You've got dollar wide strikes to the top.
And I only say that because you're going to get pretty far with your downside put upon glancing at it. I mean, you could do that. Do the 7-8. 107.
You're getting only 20 cents.
Yeah, but that's fine. And then get 80 cents. Look at how far down you're going to go on the put. So you can go to the 85 put.
85
pretty far.
Sure. Yeah. Here's a
okay, so when I take a look at this, these are the alternatives. This is premium selling because you got a 73 rank. You're going to make $1. If it target goes all the way up, you don't get anything. My other alternative, especially through earnings, would be just get rid of the call spread and bring the 85 to the 87 and collect $1 either way.
So durational, I like Jade Lizard's earnings, not quite as much because we've seen this and this happened last week in earnings. Some of them blew through our call spreads and we're like, well, we didn't lose, but we didn't make any money.
And and that's your alternative. So you're selling the put. If you sell the 85 put, you're getting that little inflated volatility where it brings your break even down by 2. Or I would eliminate the call spread and just sell the 87.
I kind of think, I don't need the 22 cents. I'd rather just, if it goes up, be guaranteed the $77 or like you said, move it up and get $90 here.
Or just, take it to the 87 and get it over $1. That's what I'm saying. If you're either going to get $1, what's the difference in $2? You've got a 16 delta there versus a 12 delta.
No, right. So, and I don't mind I really don't. I mean, who knows what they'll say on earnings, but it's trading 98. This is the 87 put, $11 away.
Which brings our break even to 86. That's pretty good.
Right. Last time target was 86. Last time target was 86. Yeah, you're back to here.
Yeah.
2019.
Wow. I mean, could we go there? Sure. Are we going to?
Sure. Yeah, it's possible. Like, what are the tariffs doing to Target? What's going on at the Target stores?
What's crazy is my Target store in Lamont. I know the one in Willowbrook, the one that I drive off if I'm going downtown, is always crowded. The one in Lamont, no one's ever at.
Really?
Ever. But it's kind of off the beaten path. You know what I mean?
I wonder, I don't know. Does that scare you? Does that make you nervous about the 87 puts?
Not at all. I love Target. Not even in the slightest. I think a one lot in Target is never going to take me out, Jenny. So I think we're going to be okay.
Yeah, right. Like, okay, so that's a good point. So when I sell puts, you've got to ask yourself, what's my risk here? Our risk is long 100 shares at 86. And you could do the math. Like, oh my gosh, what if Target drops to 75? How much money would we lose in this trade?
If it's 86 and it drops to 75, you are then out $9.
Yeah, right. Yeah, I mean, right. A break-in 86 drops to 76. We're out $10 there, or $1,000. You can look at the risk and see, are you comfortable with that risk? I did it on Friday or Thursday. I don't know. Last week I was selling puts in Reddit, and I had asked myself, like, what's my risk here, and am I willing to take it? And in my mind, I was like, okay, what am I willing to lose in Reddit if it goes down this much? And if I'm okay with that, then I'll sell these puts. So you can kind of,
I'm actually chuckling as you and I are having this discussion because you and I both know we can switch on and off. Like we can transpose words, meaning like you're going to lose $9, which is $900.
Right.
But I know that and you know that, but it doesn't sound bad if you're new. But like you're going to lose $9 if it drops down that low. It's $900.
So here in Reddit, we just have a put spread, but Reddit's been down the last down this last few days. But I find there's a lot more risk in Reddit than in Target. But yeah, it's kind of same kind of thing. Like if I sold the 110 puts and it drops down to 80, well, I'm out $2,000 or a little under $2,000 on those puts. But I know I could keep rolling them, and there's enough premium to try to make back that loss in premium. You can kind of just like do your own risk assessment when you're placing these trades. What are you willing to risk in the trade?
Yeah, and it's helpful. Okay,
and the buying power is pretty accurate too. Like, what was our buying power on that Target trade? $1,000.
Yeah, $900.
Yeah, and that's what I said. Okay, if it moves this much, like, what's our risk there? About $900.
Yeah, that's not bad at all. Can you do me a favor and push those out though? Because I want to make sure we're doing it in time. There was another one too. I think there was 2 of them that needed to be pushed out.
Oh, we closed we got filled on the new wheat, kind of like a jade lizard.
New wheat, jade lizard, and Target
or
put.
Skewed iron condor, Target put. That's coming out. Okay.
Perfect.
Okay, so we've got a couple new trades so far. It's already 10:42. Time's flying.
I know. Day is flying by, Jenny Andrews, flying by.
Is there anything you want to look at, or should I?
So I did. There's something I wanted to look at this morning only because I was up early and walking Will, and I heard it on another network. Somebody said, and I love when people give direct answers. And this should mean nothing. So I'm going to say the direct answer that they gave. This should mean nothing to anyone. But the direct answer was, if you had to buy one stock, what would it be? And the answer was Rocket Mortgage.
Ooh, Rocket.
That's what I'm saying. So it shouldn't mean anything. I just haven't looked at it in a long time. And somebody actually answered.
We used to be in Rocket all the time, and we haven't in a long time. And so honestly, I'm glad you brought it up.
Well, and I meant to look at it today because when I was walking, I was like, oh, I haven't looked at that in a long time. Once again, this person, they're not saying there weren't because the financials are blah, 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 but it was just an opinion. They said, if you had to buy one stock, what would it be? And the answer that they gave was Rocket Mortgage. So I was like, interesting.
look, only a $2 billion. It's only $2 billion market cap. Rocket Mortgage right now is only worth $2 billion. Doesn't seem like that's outrageous. Let's sell some puts.
And we can sell. Now, granted, we got to keep in mind it's a $13 or $12.90 stock, so you're not going to get that much. But what can you get for the 11-day puts? Ooh.
Oh, and sometimes when these are so low priced, you almost have to stick closer. You almost have to. Now, what we could do would be the 13 covered call.
You could do the 13 covered call. Now, this is cash settled, so buy the 11.
Whoa. Since when was Rocket cash secured?
I think it's because it's so low in price. Sometimes when that happens.
I think it's got to be below $5 that it's cash secured.
But you can buy
and the markets are so wide.
Yeah.
Look at this, 85 cents at $3. There's something a little bit sus about these Rocket markets.
Can you do me a favor? Let's get creative here. And I know I want premium, but close all this up.
Okay.
And let's go out pretty far in time, or even to the June, and just buy a call. Buy an in-the-money call. Do you know what I mean? I just want to see. It's a $13 stock. It's cash secured. Somebody said buy it. If I wanted to buy it, you can go out and spend $600 on it, or you can buy the 12 for $125.
Right. We give up a little bit.
I know it's counterintuitive. We're giving up 45 cents, 50 cents, but you're paying $127. Like, that's all you can lose.
Right. And I just want to see how much more it is further out in time. Like, if you're saying go out in time, like, and
you could even do a zebra if you wanted to. That's going to be super cheap.
But the problem I am having are these markets are wide.
And
right?
look at those strikes. I don't like those strikes.
There had to be some kind of weird dividend or adjustment or something. So if we stick with June, we have regular strikes. And you could just do, if you want to watch your extrinsic value, you could buy the 12.
It's literally $174 for the zebra.
And you could sell the 14. You could pay 82 cents. You could buy the 12 and sell the 14, and then you're watching extrinsic value.
Beautiful.
That's just simple, right?
Yeah. Now, if you want unlimited profit potential, you can spend $174 for the zebra. So I saw that it was pretty interesting because that 12 is, $127. But if you pay the extrinsic value on it, then you're 1 for 1 to the upside. But I don't mind capping it at 14. They're all kind of versions of the same trade.
Yeah, 175.
And you are literally 1 for 1 to the upside. And if it goes to 20, it's yours.
And if it drops, our risk is 175.
Mm-hmm.
Rocket Mortgage.
Isn't it funny? But that's what I love that's what I hope our show is to people. Not you should be buying this or selling this. You hear us say a word and be like, oh, I'm going to go look at wheat. Do you know what I mean? Or look at this or look at something.
But so, and I agree, like you hear something, you look at it, it gives you an idea, come up with your own trade. But what I'm surprised about, and I swear we used to sell puts in Rocket all the time, and I don't ever remember it being cash secured.
I don't remember it being cash secured either.
No. So I think that's a little, like if you know what's going on in Rocket, let us know, tweet us, include the hashtag LIZJNY, because this used to be something we were always selling puts in, and I don't ever think it was cash secured.
Something might have happened. I mean, obviously there was a special dividend somewhere too, because
something happened.
There's those weird strikes.
Yeah.
Yeah.
I don't know.
Food for thought there. Rocket Mortgage, Jenny Andrews. Well, I don't know what's going on, but we're in.
We're working that zebra. The markets are a little wide. There's almost 5 million shares have traded. So there's definitely action in the stock. They're filled. I'll push that right out.
Yeah, perfect.
Publish to follow feed.
Beautiful.
Okay, let me make sure that we're not missing anyone on Twitter. And then, this is coming, Frank Welsh. Ranch, tell them, push it out to 11-day and look at the P50, much more attractive in target.
Okay, and that's true. So your P50 will be. So the one thing I was going to say, and I've got TP coming on Thursday or Friday or both this week. And he had said this, if you're in the 7-day, those numbers on the bottom can't calculate it, right? So he was saying when we were looking at these, and I'll clarify this with him, but if you go to a 0 DTE option, don't go to Target, go to something else so we can kind of compare because we don't have anything in. Go to Home Depot. Who cares?
Okay.
We're not going to put it in. But and sell a put in Home Depot in the 4-day.
I'll just go look for $1. So here's $1.
Yeah. So then it's having a hard time. What TP was telling me, and I don't know, I'm going to clarify this with him, but those numbers on the bottom, that P50 is not calculated right when you get these very, very low days till expiration. Versus then if you go out to the 11-day, it's calculating it a little bit better. There has to be certain parameters, and usually those P50 is for 45 days out in expiration. So it is calculating it.
Yeah, I see that. 50 or 80.
But it's much more challenging for the platform when then the days are very, very low. So I'm really glad that got brought up, and I will clarify it with TP when I have him on. But I remember, because he loves that P50 number so much, and so I remember being like, but look at this, and he said when it gets near term, and it was mostly those 0 DTEs. If you go to a 0 DTE and like an SPX, it'll have nothing.
And so I'm going to do apples to apples, same strike. Like here's the 350 put in 4 days. P50 is only 40%. Now I'm going to do the same put, 350 put in the 11-day. P50 is 88%. So you're right. It's got to be some kind of, and I don't want to say like glitch in the system, but I'm glad that this got brought up and you remember that, because I had never heard that before.
It was one show, TP and I were talking about it, and that was, I mean, it is true. So when you think about this, these are all formulas, and the formula is built for a durational trade. So as you're bringing it into these, when you're putting in something with 4 days left, or even the 0, go to a 0 DTE. I remember the P50 being like 0.
I'll just go to
SPX.
Yeah,
you find anything.
So here's a 0 day. So like 0 day, 586.
You have to get something for it. That's got nothing. There's going to be a P50. Like, see, there's nothing. But they can't do that. Even if you get something for it, get something. There's no P50. Even if you go to the 591 with 50 cents, no P50. It's because it struggles with the calculation when the time is running out.
Okay. Yeah, and this is great. You've got TP on Thursday and Friday, so you can talk to me.
I will clarify that, but that's to the best of my knowledge why the P50 looks better with the 11-day than it will with the 4-day.
And that makes sense.
Yeah,
it makes sense.
I'm surprised I remember.
And if you're looking at the same strike, if you were moving your strikes but looking at the same strike and you go from P50 of like 40 to a P50 of 90, there's got to be that doesn't add up, right?
Yeah, right.
Okay, and then here we go again, looking at an iron condor in BJ, looking at 620. Is it an iron condor or strangle? Earnings strangle, short strangle. 105, 130.
Oh, that's that other company like Costco.
Oh, really?
Yeah, that they have I think they have it in the South.
Oh, BJ's Wholesale, and he's looking at June. 105, 130, strangle. They have a 76 rank. They have a 76 rank.
They have earnings May 22nd.
May 22nd. So that's coming up this week. So like by the end of this week, you'll know if it's gonna stay within this range, because it does have earnings. Now, if someone wanted to define their risk, I'm curious what the open interest is here. So if someone wanted to define their risk, you could make it a $10 wide, and there you're getting
almost as your earnings trade. I would just wait. I mean, nothing is a trading recommendation. I would just wait a couple days.
It is your earnings. It's your earnings trade, and earnings will be this week. So
this week, it's fine to do it, but a lot of times, if you think it's going to move either way, I would wait and give myself a better footing the eve of earnings, because it could move.
But I think earnings are in a day or two, so whatever. Like you can get in. I know we put in Target early,
but Target was directional. I don't mind selling a put. When you have a neutral, I almost like to wait until the eve of, just to give yourself a better footing. Because what if the market rallies? I'm just making this up. But let's say the market rallies or falls, and BJ rallies or falls with it, right? Then all of a sudden you've got an earnings trade where you're directional and you didn't mean to be.
Right. Then you're directional on earnings. But it does. So I would say thanks for bringing it to our attention, because it does have a 76 rank. So this is definitely something that, and honestly, Liz, here's what I will say. I know they have earnings this week, but this is the 32-day trade. So whether you put this on today, tomorrow, or the next day, there are no weeklies. There are no, when you don't have weeklies and you're going out 32 days, it's probably not as much of an earnings trade, where this might not even come off on earnings. This is more of a longer term trade.
It is a longer term trade. That is correct.
Yeah. But thanks for the idea, for sure. And did we get to everyone on Twitter? Let's see. scramble everything. How about an IONQ June 30 put? IONQ.
I feel like we've traded that before, and I can't remember what it is.
IONQ. I think we used to have this stock, or I don't know. It does sound very familiar. I'm sure we've looked at it.
8 million shares. They want a June 30 put.
June 30 put, $1.65.
30 delta.
Then look at the buying power here. So you're looking at a $34 stock. Buying power is $300. I don't understand what was going on in Rocket Mortgage.
I like it. We're in scramble everything.
All right, we're gonna sell this. 34 rank, June 30 put. No earnings on the horizon. 90 rank, $1.66. And ship that.
And filled, you're going to push that out, and that's our final trade of the day. You can review the tape of what we did.
Okay, that's pushed out. So you've got, I will double check. You've got wheat, Intel, closed wheat, sold an extra put in Intel, open a new wheat position, sold put in Target. Rocket, we did a zebra, bullish zebra, and then an IONQ, we sold a put.
Perfect. All done.
All right. That's it.
We're running like a well-oiled machine today, Jenny Andrews. SPOOs are only down 14. That's crazy.
I know. And now at least we have a full page of positions.
I know, it's so funny.
It makes me feel a little bit better.
Well, mine's like scrolling. This looks like my natural gas positions.
I know. Speaking of, what's natural gas doing today?
Oh,
I know
it's
you
amazing.
need it. Yeah, I know you need it down. Like you need it down.
Well, no, I'm good. Like,
yeah.
This is so in anywhere to the depths, all the way down to 1 is my peak for natural gas. I was doing butterfly. Well, downside ratio spread them, butterfly them off as it was going up, and now I have unlimited profit potential to the downside.
You've got them all in this whole range.
Yeah. Let me tell you where my this is where I don't want it to go beneath. I can't have it go beneath $2.30.
Oh, you've got. I mean, it's.
I know.
I'm not going to say it's not going to happen, but I don't think it's going to happen.
But even if it did, it's all butterflies, so I can't lose. I just wouldn't. It's not going to hit one of my peaks. Yeah.
And and this is the end of this week.
No, 8 day. So it's next.
Oh, 8 day.
So what would that be if it's 8 day? Next Wednesday?
I don't. Oh my gosh, do you hear the dog fight going on?
Is that Clarence?
No, it's the two dogs fighting. I have them both in here. They're both fighting over the same bed.
Uh-oh. Who's going to win? Who's going to win? All right, Jenny, you go take care of that dog fight. Everybody else?
I'm going to stop this dog fight. Have a wonderful day, Liz. You're looking great. I think that mud mask did wonders for you.
The dust mask. It looks real good because it sinks right into all your creases, all the dirt. I was like, I look like a chimney sweep, but it was awesome. All right, everybody have a great day, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man Mikey Butler, and of course, Ryan Grace with us in the house today for our crypto takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies Mike and Ryan. Ryan, good morning, sir. How are you? How are things?
Good morning. Things are good.
Yes.
I'm doing well. How are you guys?
Same.
Can't complain.
Doing great.
Yeah.
I got 9 hours of sleep last night.
It's good. That's the Aura ring catching in.
Yeah.
Did you see 23andMe got scooped up?
Saw that.
Regeneron. So now Regeneron has my data.
Congratulations.
Yeah. Thank you. I gave it away for free. I actually paid for it. Paid for the right to give them all of my data. It is interesting to see some of the stuff there.
Did you find out about your ancestors, though?
I did. I mean, it has worked out flawlessly for the Batista clan, as we found some other family members that were, popped up along the way. My grandfather was a bit of a celebrity around the country. If you get my drift, there are many Batistas that did not exist in our world until recently because of 23andMe. So I guess we were a positive case study of that.
It's fun.
Yeah.
It's
fun.
Yeah, it's quite interesting.
So there,
Quite
now you can go to Italy and be like, "What's up?"
Yes, yes.
Should plan a 23andMe trip.
Yeah. Well, this isn't in Italy. This is in the U.S.
Oh.
Yes. Yes. My grandfather.
Oh, around the United States.
Yes.
Okay.
Yes. He was a bit of a player,
Yeah.
it seems. So, yes.
Still
happens.
It's fun, entertaining, at the very least.
Certainly is. Certainly is. You know what else was entertaining? Did you think we were going to have all-time highs? It looked like. Did you see the market? The Bitcoin futures like.
They were ripping last night for a moment.
They were ripping. We got like 107 and change. Looked like we were going to just blast off through 110.
Credit rating downgrades are good for crypto.
You would think so. You would think so. And you know what? That whole thing, the credit downgrade thing, that's what I give it.
It's all just.
That's what I mean, come on.
Just equals more liquidity, more management of interest rates, and printer go burr.
Yes.
Yeah.
Have to go burr.
It's going to go burr at some point, in theory. But yeah, I saw that move, and my brother was a very happy man.
Oh, I'm sure he's been
texting.
texting.
Violently long Bitcoin crypto.
Yes.
So.
And all the derivatives.
Yeah.
God, he's
as one must.
Yes, he is diamond hands. If I've ever met a diamond
He is.
hands.
Yeah. That he is.
Very good.
But yeah, rest of the market not giving us what we want.
Well,
giving us the non-move, which is not fun.
It's been a little bit of a buy the dip. If you watch the markets in the overnight session, the E-minis opened down like 40-ish on the Sunday's open. Not as, crazy as everybody was calling for with the, in my Twitter sphere, looked like it was going to be Armageddon again because of this downgrade. E-minis dropped like 40 on the open. It was kind of a nothing burger. Into the morning session today, they were down like 60 or 70, I think, at the lows. We're right now basically unchanged, considering the move. We've had about a 75, 80 point intraday range. E-minis are down 12 right now. So it's been pretty much a nothing burger. NASDAQ down 72 and the Dow basically unchanged. The Russell down 18, the Dow being buoyed by UNH, which has had a nice little bounce back here. But overall, markets have digested this move. The fear has been overstated, at least for the moment. Oil futures up 57 ticks, 62.54. You have volatility futures basically unchanged. They got into a 20 handle in the overnight session. I think the high was 20.55. So we're kind of near the lows at 1960 right now. The VIX itself at 1835. It's up a little over 1 point, about 6 or 7% here. The real story of the overnight session and into the morning today was the bonds down 30 ticks right now, almost a full point. They were significantly lower. Yields kind of rising across the curve into this downgrade maybe, or just because, inflation is coming back, money printer, tax cuts, who knows. But bonds have been very, very weak. You got gold and silver both bouncing today. Gold's up $45. It was up like 70 or 80 in the overnight session. 32.52 was the high. We're at 32.32 right now. Silver as well, ripping to the upside, up 17 cents. And then Bitcoin has had some wild action today. We've got, what's our range today? About 10K, 9K, something like that. Futures got up to the 107 handle, 107.5, as low as 102.3. So I guess a 5K range. Seems like it was more. Maybe on the Sunday. The Sunday move, I feel like, got a little bit higher than that.
Yeah, I think I saw 107 or close to it with spot, and then it dipped all the way down to 102. So about a $5,000 range or so. Yeah, close to 107.
A week's move in a day.
Yeah. Yeah, we're looking at about a $6,000 move on a weekly basis. So to your point, a lot of volatility here, and people came in and bought the dip pretty quickly. We'll see whether or not that holds, but well off of those lows, about 102.
Mm-hmm. And for those of you looking at the platform here on the right side, I have the Tasty Crypto mobile app, which you can download, tastycrypto.com. You get the mobile app, do all sorts of fun stuff. You can see our bags that we have in our little portfolio here. But anything fun coming to the Tasty Crypto app?
You know, we just added to the Tasty Crypto app.
Yes.
Yes. I can't make the announcement just yet.
Okay.
But we are very close to, let's just say, releasing a new feature.
Ooh, very nice, very nice. I like that. So that's coming next week, tomorrow?
Hopefully within the next few weeks.
Okay.
For the next few weeks, we've got a new kind of program, we'll call it.
Cool.
Yeah.
I'm excited. I'm excited for that.
Love to see
nice.
it. Love to see it.
Good stuff. Do we have any new coins? I don't think we've added.
Yeah, we recently added a few more. Algorand, Polygon, H-bar, which is Hedera, and well, let me check my screens here, guys.
I have the watch list here on the left side. You can pull them up here as well.
Yeah, we're continuously looking to add more products. So we've got more tokens coming. If anybody has a request for any tokens that they'd like to see, a few that are on my personal list, Uniswap, Arbitrum, Optimism, working to add a few more there. But again, if there's something that you'd like to see us offer that we don't currently offer today, let us know and we'll see what we can do.
Very nice, very nice. Love it.
Yeah, Polygon, H-bar, Polkadot, and Algorand were the most recent additions as of last week.
Okay.
So taking the offering up to about 22 or so tokens today.
That's the offering's been pretty much multiplied for over the last couple months.
Yeah. Yeah.
Love it.
Yeah. Cool.
Well, we are streaming live on the YouTubes. If you want to join us there, just pop over to Tasty Live. You'll see this video front and center. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. You can get that for free. Comes out every Saturday morning with an update on Wednesday. But yeah, we've got some slides for you as always. And we can pop over to the YouTube chat afterwards, see if we got any crypto questions, trade ideas, what have you. We'll get to it. But yeah, what do you make of last night's move in relation to the credit downgrade? Do you think maybe we see heightened implied volatility, realized volatility?
Yeah, I think naturally out of the gate, you're going to see a little bit more volatility as people work to price this in. If you're on X over the weekend, bizarrely, I think, people talking about this as if it's, again, something that's going to result in kind of limit down price action, which, again, I think is somewhat bizarre.
Was it in the crypto space as well? Because, I mean, I'm in there, but, like, I didn't see it as much there.
No, not at all. I mean, you see Bitcoin over the weekend really didn't move, traded about 103. Kind of that was the floor in there. And as I understand it, I was out of town, so I wasn't paying close attention. But this came out on the credit rating on Friday after the close, right?
Right at the close.
Right at the close.
I think it was after the. It was at like 340 Central. So it was like kind of right at the close of the after hours session for all the options and whatnot.
Okay.
Not that I think that was like, maybe it was planned. I don't know. But it was right after the close. Yeah.
So the first place you'd look then to see what the impact of this is going to be in those 24/7 markets, which are crypto markets. And you really didn't see that at all in Bitcoin or in Ethereum. Obviously, we got a little bit of a pullback here, but I think that's attributable to the fact that we were up 40, 50% in some names in the last week.
Yeah.
Taking a little bit of a breather, I think somewhat unrelated. This is more so forward-looking in that, one, we're entering into a more conducive economic environment where you're going to see a little bit of an increase in growth and inflation. We've come out of that period where we saw a little bit of a slowdown going back to February up until now, likely looser financial conditions moving forward. And I just think that that's what the market is pricing in here, why it isn't collapsing when, again, we look at crypto, because the likelihood of lower interest rates on the horizon, possibly monetary stimulus. And again, this is not just specific to the US. This is global digital gold, if you will. It's going to trade on other variables, and I think that's a lot of what you're seeing here.
Yeah, I think the move in gold as well is a proxy story there, in that the moves have been fairly correlated, but I think it's a bigger story of just the fact that I think everybody's getting a little bit is thinking about dollars a little bit more now in terms of inflation, global kind of hoopla that's going on everywhere in terms of rates, wars, all this sort of stuff. People are kind of looking for a safety net. And I think that's been kind of the story of both gold and Bitcoin and has kept it relatively bid. We haven't seen those two move in the same correlation with equity markets. They've kind of been doing their own thing is what I want to kind of get at.
Yeah, absolutely. And we'll look at the correlations across assets here in just a little bit, but you'll see that in the very short term, that positive or very strong positive correlation that we've observed between the equity market and crypto has come down substantially. Yeah. Now, on a 30 to 90-day basis, it's still positively correlated as we would expect with risk assets coming out of this kind of period of volatility. But when we look at the last few weeks in there, really almost zero in terms of the correlation.
There we go.
Yeah, Bitcoin's really been leading the way in terms of the recovery back to highs. Bitcoin's much closer to all-time highs than the E-minis. E-minis still have about 5% to go.
Yeah.
So, interesting stuff.
One thing, what do you make of the Coinbase edition in the S&P 500? Do you think that's do you have like an interesting take on that? I think it's kind of a cool, or at least a starter for crypto being a little bit more mainstream. Do you
absolutely.
Kind of find that as well? That it's a validation of sorts.
Yeah, I think so. I don't. Not that it needs to be legitimized at this point.
Yes.
But yeah, further signals the institutionalization of crypto, of blockchain. Huge for Coinbase when you think about the passive flows that likely go into this stock as a result of being included in the index. So I think it's a positive thing all around.
Yeah. Are you surprised?
No, not necessarily. You're going to see more and more crypto companies go public in the United States here. Prior to this, it was really just Coinbase. I think now we have Galaxy, Kraken, Circle, or others that are rumored to be looking to go public soon. So, not surprised.
Okay. Very nice.
Yeah. Big reaction, big news. But yeah, we'll see where this all goes for sure. Should we pop over the slides? Get to a little crypto market update. Lovely. May 19th, almost done with May.
I know.
Who would have thought?
Wild.
Almost done with fiscal year.
June for us.
Yeah.
I don't think that matters to the most of our.
Correct. Yeah. Most people are on the calendar like
Yeah.
December.
Yes.
And you get your fun money, you pump it into crypto.
Well, use your vacation days, guys.
There you go. Yes, yes, yes.
I shall be rolling some over.
Yes. Yes. Very nice. Very nice.
All right, you want to hit them with the first slide?
Please.
Through our performance update. So when I put this together, green on the screen continues here, with the exception of what we're seeing here today. A little bit of a breather, pull back. We are about $1,000 higher than we were when I put these together earlier today, but right around 104.5 as we speak. But yeah, I think what you're seeing here is a little bit of a pullback. Clearly, we were higher last night, as you mentioned. When you go up 50% in a month, or in this case, when you look at something like Ethereum, and the majority of that move was over a 1 week period, things happen fast. You're going to see a little bit of a pullback as we consolidate here at slightly higher prices than we were just a month ago. That said, look, it's still been Bitcoin over everything. Bitcoin market cap dominance, as we'll see, is back up towards 64%. Most crypto assets are trading pretty positively right now, but on a 3-month basis, a lot is still in the red versus Bitcoin year to date versus Bitcoin as well. Bitcoin's been the relative outperformer. Volatility is still fairly low. Realized volatility for a lot of these other tokens has come down a bit and has kind of stayed in the mid to low 60s to 70s, even given the large upside move we just experienced over the last couple of weeks. But I think that, again, this has just largely been a correction within the bull market. When you go back historically and you look at crypto bull markets, we'll focus on Bitcoin here, but previously you quite often will experience 30% drawdowns, 25% drawdowns, somewhere in the range of, let's call it 30 to 40%. That's what we just went through. I don't think that anything has changed. I think if anything, you're entering into an environment that's going to be a bit more positive for crypto prices and asset prices going forward versus what we just came out of. So you're seeing that here. I would again just point out that volatility is relatively low. Implied volatility for Bitcoin, about 45%. We'll see in a second that that's towards the low end of the yearly range. You look at IBIT volatility, about 50%, arguably. Upside call options are cheap. I'm not really selling puts in there. They're cheap. So if you think that you're going to get a broader correction, and you certainly could. You could be back to 90. You could be back to mid 80s. We know how quickly this can trade. So volatility is relatively cheap. Doesn't mean that it can't get cheaper. But we'll point that out. With Bitcoin specifically, you're towards the low end of the implied vol range. That said, the trend is bullish. The trend is your friend.
Always. Have you been seeing like just generally the volume and just liquidity in the crypto space? Has it been increasing into this move, or is it still kind of in the middle of its range? Is that something that you guys like look at or follow along? Or
I don't track volume too closely, but when you look at inflows into ETFs picking up, some of the larger days that we've seen since the start of the year, really since the beginning of the ETF approval process. When I look at open interest with listed futures, trending higher and higher. And so there's some measures of, increased participation, obviously, certainly big inflows into those ETF products, both Bitcoin and to some extent Ethereum. You're seeing on-chain, specifically when you look at decentralized exchanges, you're seeing increase in volume there as well when I look at Uniswap. So I think, positive signs of participation for sure as we continue to trade higher. If we break out above our prior all-time high, which is about 109.5 or so, call it about 110, I do think you're going to really see this take off.
Yeah, the Ethereum ETF, ETH-A, which I put on like an iron fly there in the options are not that great currently. Hopefully there is more liquidity coming in, but if you look at like the volume there, it's certainly starting to pick up and has picked up into this rally in Ethereum. So maybe you're getting a little bit of a boost in liquidity from these ETFs, especially with the new ones coming out here. Hopefully we get a Solana one and the rest of the other ones. Have you heard anything in that front?
I haven't seen anything recently. I know that the SEC has kicked the can here around the approval process, which is maybe no surprise. This is what's happened previously. Likely to see a final decision by the end of this year into the fall. I'm hopeful that you'll see a few more ETFs approved. There have been a lot of applications that have been filed, not just Solana, but you name it, XRP, Doge, Polkadot, etc. I'm hopeful. What I'm more so looking forward to is eventually, again, hopeful, that you'll see the ETH ETFs allowed to pass on ETH rewards from staking in the form of a dividend. I think that attracts more institutional capital that's kind of looking for that yield.
Yeah.
That said, in terms of volume, again, I'm just looking at IBIT right now. 23.4 million shares have traded. You look at that against the SPY, 28.1 million shares have traded. So very, very liquid, high volume. You look at the options markets in there.
Not the same notional, because different prices.
Exactly.
Yeah, it's a lot of shares. I'm with you, yeah.
But when you look at the IBIT options in there, I mean, we're a few cents wide in most cases, right? 3, 4, 5 cents wide. So very, very liquid relative to what we've seen even, a year ago.
For sure. The ETH ETF, you think, what do they do with those rewards? Do they just eat that? The manager? I mean, like,
I don't believe that the ETH is staked currently. So it's not generating any rewards. What this would allow is permission to stake that ETH and then generate those rewards, which could be passed on in the form of a dividend.
That's interesting because with the staking, you have to hold it staked for a certain amount of time. Right?
Yeah, there would be an unlock that's involved with that. Yeah. So from a liquidity perspective, something to consider, right? Even if you go in and you stake ETH today, let's say that you do that with Coinbase, you'll notice that once you stake that ETH, it's going to take a few days, if not longer, depending on what's going on chain. but you have to unstake that ETF. You have to unlock that. And so it's not readily available to use or to sell in that case until after it's unstaked.
Yeah, because that would create an interesting dynamic with the ETH ETFs, because they rebalance based on the flows day to day. So if you had to, like if you had a negative flow out, there'd have to be some sort of like cash redemption because the staking is locked. So like if you had an outflow of, $10 million, whatever the number is, you'd have to have some sort of, like there'd potentially be an ARB there because you have a couple days of staking.
Yeah, I would have to assume that
they would have to keep some portion like unstaked, I would think. Maybe.
I would think so too. Yeah, I don't think that like the entirety of the fund would be staked in that sense, but the ability to stake some of the ETH and then pass on those rewards would certainly be to the benefit of the ETF holders, as well as just making those ETFs a bit more attractive.
That would be cool. Cool.
So yeah, quick look at some of the larger market cap tokens that we track here, and then continuing down the list of altcoins. Pretty much the same story here. Aave, I suppose, is the exception at the time that I put this together. Hadn't budged much from where it was in the prior week, right around 225 or so. But everything else pulling back a little bit, and these moves are fairly normal. Not surprised at all to see double-digit pullbacks when, again, we can go up 30, 40% in a week. The 3-month view here has still been kind of bearish, and year to date, it again has been Bitcoin over everything. So looking for that to change, and then when it does, when you get that signal, if you get that signal, I think it's off to the races. But we have seen price momentum shift bullish here over the last couple of weeks, seeing some of those signals trade or trigger on the weekly basis as well. We saw that first with Bitcoin, seeing that with SUI, seeing that with XRP. So you're seeing, some green shoots there outside of Bitcoin as well. But we're not necessarily in altcoin season just yet. I mean, maybe we're beginning to see some signs of it, but this is not at all what I think you're going to ultimately witness in the market.
Yeah, a lot of these altcoins are down on the week, and just anecdotally, I don't see as much of the Solana pump and dumps on my Twitter feed anymore. It seems to be just the big names. It's kind of my read.
I think you'll have stuff that pops up here and there, but I think a lot of people are just gravitating towards Bitcoin as we continue to see Bitcoin dominance take hold.
Yeah. Trump coin's not moving.
Yeah, haven't seen much there either.
Oh, but that'll be the sign of alt season. You'll see that thing pump first.
Yeah, absolutely. I think these things will still pump.
Yeah.
All of them across the board. I think you need confirmation that you're in a better economic environment, and probably confirmation that you have loose financial conditions on the horizon. Maybe that's the Fed cutting rates, and just a slightly different environment that we might be in right now, where we're kind of on hold. But I do think that that's coming, and you certainly will know when it happens.
I love it. E-mini's only down 5 now. Rally, buy them all. Buy every dip.
They'll be up 30 by the end of the day.
Oh.
Because that would bring us directly to 6,000.
6,000. It is a round number. Yeah. All right, what else you got for us, Mr. Ryan?
All right, jumping to the next slide here, guys. As we mentioned, Bitcoin dominance still at 64%. We did get that trigger in terms of price momentum. If you want to measure it that way, we can look at moving averages for Bitcoin dominance as well. And it did move lower, but has kind of held up here. We're not really seeing that full breakdown. So you got a signal there that maybe you want to pay attention to. On the flip side there, you saw quite a move in the ETH BTC ratio, up 25% in the last month, but kind of just taking a pause for now. So waiting for further confirmation. We'll note that Solana has traded a little bit weaker to Bitcoin versus how it was trading, and also trading a little bit weaker in the short term here against ETH on a relative basis. But the ETH move was huge. We'll see if there's some follow through. I think that you will get that eventually, but until you see a further breakdown in Bitcoin dominance, again, I think you kind of lean a little overweight Bitcoin. Doesn't mean that some of these others aren't going to rip higher. I was just in Toronto for the CoinDesk conference, and the discussion really still centers around regulations. And then once you get stablecoin regulations, once you get crypto market regulations, you're going to see large institutions enter into Bitcoin, well, starting with Bitcoin, but enter into crypto and take a position most likely where we have a very large fund, 1%, 2%, maybe 3% or more, just making that allocation. That hasn't happened yet, really not in the sense that it will following regulations. And so I think, again, the theme has been kind of a focus on Bitcoin, at least for now at this point in the cycle. Doesn't mean there aren't opportunities elsewhere. There's always a bull market somewhere, as people like to say. But to me, you kind of just stick with what's working at this stage. If you're just getting into crypto, I think Bitcoin is probably what you want to focus on to begin with.
When that time comes, you think it's a full bore, or you think it's kind of a nibble? Like, you think when it's free and clear to go, you think it's a rush, or is it kind of just like a
Oh, it'll absolutely be a rush. Yeah. So? Yes, I think that people will chase price as we always do. It's going to be much higher Bitcoin prices in that environment. But I think that there's, at this point, I think many people are aware, many institutions are aware, and are just waiting to make that allocation.
Yeah. I tend to agree. You look at like the IBIT volume, and when it first came out, it was like, are people going to put any money into this? It's so risky, blah 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 blah. And it's consistently one of the most highest volume traded on a day-to-day basis. So it tells you that the appetite is certainly there. I just wonder if your JP Morgan jumps in there with a 1% allocation or something else, the hedge funds, the bigger hedge funds.
I would imagine that they would have to spread it out if they have a certain number, that they do kind of a systematic implementation. But I think once it's approved, that will open up everyone's eyes to be like, oh, this is happening. And that's when I think you see that rip higher. But yeah, we've been calling for it.
Ryan has been calling for it.
We'll be
ready.
He's
ready for it. He's fully allocated towards it. Yeah. Ryan and your brother are ready for it.
Yeah. I think, like we said last time, there's no reason not to have a little bit of a sprinkle in there. Like, it makes sense to have the volatility in that portfolio.
Very nice. What else you got for us, Mr. Ryan?
All right. If we jump to the next slide here, quick look at our volatility dashboard. As I mentioned earlier, you've seen implied volatility for Bitcoin come down quite a bit near those one-year lows. When we look at the IV rank, ETH, it's low, but it's certainly not as low as Bitcoin here. 1 year IV rank at 40 with an implied volatility of 74%. That said, these things, when they do get to that 100 level, they can really explode. We've seen Bitcoin implied vol, we've seen ETH implied vol well above 100. That's typically on, certainly on those up moves as people start to speculate on higher and higher prices if that does materialize. When we look at expected moves off of those spot prices and implied volatility, it's been pretty much the same week over week here. Hasn't budged. About a $6,000, $6,600 move here for Bitcoin, $250 or so, close to it for ETH. Solana's been kind of stuck at $15. So here's your trading ranges. You absolutely could see on a pullback here, mid 90s. Wouldn't be surprised if we get a larger pullback correction. You get back into the 80s, not necessarily calling for that. But if you do see that, I'm not freaking out either. We just came off a 75, traded back to 107. You're going to chop around here. We haven't completely seen a breakdown in the VIX either. So to kind of jump back to equity land for a second, you're not trading at a 12 VIX or a 15 VIX. So you are going to chop around a little bit. Same thing here with crypto. So trade the ranges. I think it's an environment that's definitely much more conducive to being able to buy the dip here. Whether that's 95 or it's high 90s on a pullback. You also want to take some of that off the table when you do trade to 107, you do trade to 110 or whatever it might be. I think it's certainly an environment in which you can trade a little bit more versus where we were. You kind of have to wait for that bigger dip and just hold on. So you're going to continue to see this chop around here, but no signals yet from a volatility perspective or what we're seeing in any changes in the implied moves.
I know you're a long, you're long this stuff. Do you think because I'm just trying to think of ways to trade this. If you're long spot into these kind of ranges, do you trim at the upper end of these ranges and roll into something like a IBIT call option, like a longer duration option as kind of a way to downsize position and lock in some sort of profit on that move? And same thing to the downside, like you get these big downside moves and you buy spot and sell calls, like that sort of dynamic. Is that how you look to trade this, or could you trade it that way?
Yeah, I think you absolutely could trade it that way. Personally, I sold some ETH last week or 2 weeks ago whenever we traded up towards 2,600, close to 2,700. Been buying a little bit back here. These aren't huge moves, and in the grand scheme of things, if you think that ETH goes to 5, makes new highs, or goes to, arbitrarily goes to 10 or something, it really doesn't matter if you buy it at 2,400, you buy it at 2,500.
Yeah.
But if you're trading small amounts and you just like being active in the market, if that's your approach, that's how I like to do it at times. Buying a little bit of Solana back that I sold previously, own some long calls in IBIT just because I think the volatility is cheap.
Yeah.
It's not necessarily a view on Bitcoin one way or the other. I own a lot of Bitcoin, but playing it this way as well gives you some exposure, gives you a little bit of leverage. But I do think that, if you're, in here to trade, then maybe those products are at times more attractive.
Mm-hmm.
If you're trading futures, you have leverage. If you're trading options, you have leverage versus just the spot. But a lot of people are comfortable just trading, the dip and selling on some of those rips in the underlying spot cryptocurrencies as well. But I think you do want to take some off the table when you get these big moves. Sometimes these moves are just exasperated by the leverage that's in the system and the auto liquidation that occurs with perpetual futures. Maybe that explains sometimes how you get these extensions. And as well on the downside, right? When you get these massive dips, it feels a bit oversold. A lot of that might be due to the embedded leverage in the market. I think as a result, it's prudent to just manage your risk by, if I bought it at 75, unless I'm just in it because I think it's going to 200 or 150 or whatever your arbitrary price might be, and 75 was your big dip and your local low, I am looking to take a little bit of profit at times, right? I mean, these moves can happen very, very quickly. We got, a $25,000 move in just about a month.
Yeah. It's all managing winners in a different sense.
Yeah,
like you're
absolutely.
just taking, especially when you're getting these moves like in a 30-day time frame. It's the same thing as selling a put and it's 50% profit. It's the same sort of trade there, but you're using spot and in something that moves, with these big moves. So yeah.
And the number one thing to put context around it is understanding these ranges, and then you realize, okay, we've had a 25K rally in the last 30 days. That is likely outpacing implied volatility in one direction. And you can, if you assume that there's going to be moves to the downside and you're taking some off at 105, you can just redeploy at lower prices. And if you have long-term exposure too, you still get that. But yeah, understanding these intraday, intra-week ranges and pinpointing when they're being exceeded in your direction is what we're getting at.
Wow. Biggest gainers we got.
Yeah, so just looking, clearly everything is pulled back a little bit here today and on the week, but looking at, what has been standing out on a 1 month basis as everything has exploded higher here recently. SUI or SUI, however you want to pronounce it, SUI is a ticker symbol there, up 74% in the last month. Aave, that's a borrow lend protocol, so it's DeFi. Ethereum, Doge, kind of across the board here, seeing some nice moves. And then versus Bitcoin, on a relative basis over the last month, these have been significant outperformers. But just wanted to highlight some of the larger 1 month gainers there.
You dabble in any of these? I know you do.
Yeah, at times. I own, in terms of my portfolio makeup right now, personally, majority of it's in Bitcoin, ETH, Solana, SUI or SUI. Some Tau, BitTensor, not something that's available via the tastytrade platform, at least not yet. But that's pretty much it. I mean, I'm kind of just overweight the larger market cap stuff. I'll trade Doge at times. I'll trade other names. But I've been in it early enough, fortunately, that my positions are kind of sticky for myself personally, where I've got the Bitcoin position. I'm never going to go to no coin. I will take some off the table. I took a little bit off the table at 95. Didn't really buy back much of that on the dip, but allocated towards BitTensor in that sense. But there's just so much going on. It's tough to trade all of it and keep track of all of it. So
FOMO.
Yeah.
FOMO gets you.
And you get chopped up too.
You do get chopped up. You see these things moving 1,000%, whatever.
Yeah, and then they're down 80% the next month or so. So I've been kind of sticky again in Bitcoin, Solana, ETH. I staked some ETH and some Solana. And then more recently, what's got my attention in terms of, okay, how do you try to play that narrative? What do I think is going to be part of this cycle? Maybe front run that narrative in a sense. And I think that's SUI. I think that's, it's AI, it's BitTensor and others in that regard. But mostly I'm just in Bitcoin and ETH.
Is there any, because Tau you kind of pitched to us, and I think Dan was involved in it too, in that thought process. Is there any other coin that's kind of under the radar, something that you're looking at that kind of interests you in that same realm?
Not really. I think like from a thematic perspective, DeFi will still have its day in the sun. So you start to look at, okay, what are the real use cases there? Exchange, borrow, lend, kind of pseudo banking services.
You talking Aave or
Aave,
Polkadot,
Uniswap? Yeah. Wildly volatile though, right? And on a relative basis, just have not outperformed in any sense versus Bitcoin. Hence why I continue to say, look, stick with what's working. I've primarily, again, been focused on Bitcoin. Uniswap is off of the lows, but it's also well off of the highs, right? If I go back to the beginning of the year, this was closer to $18, $20. It's like $5, $6 right now.
Yeah.
It was $4. So, okay, nice bounce. If you bought it at $4, good trade. Maybe you're taking some short-term profits. Maybe that was the low and it goes back to 20. I have no idea. I do think that once you get regulatory clarity, you're going to see a lot more participation in some of these tokens, and it unlocks some value as well, right? If fees from the actual activities that these protocols facilitate, if they can be passed on to the token holders, that's going to unlock some value. But that's likely not to occur until after we get some regulatory clarity. Yeah. When do you get regulatory clarity? It could take some time. So for now, I'm sticking with Bitcoin. It's near all-time highs. A lot of this other stuff is still beaten up quite a bit, but can present trades or opportunities at times, just given how volatile they are. So I think, DeFi as a theme is something I keep an eye on, but I'm not seeing any signals in the market where, okay, that rotation is underway and there's a rush to bid these higher. I think you're still looking at, largely a market that is seeing inflows on larger market cap tokens on those dips.
So,
and ETH is still, in my opinion, like the macro trade there for DeFi. Or Solana. So you stick with kind of the macro trade versus trying to pick the individual companies, right? It's similar to, okay, is it a good environment for gold? Possibly. Does that mean that gold miners might do well? Yes. Which ones? It's not exactly like that, but I think it's easier just to probably buy gold in that sense.
So looking at like Uniswap, for example, $5 billion, almost $6 billion fully diluted market cap. Do you, like with the kind of regulatory space, do you see some of these companies getting, more competition just as the rules kind of lighten up? Like what's stopping a BlackRock or a JP Morgan or something like that, a Wells Fargo, like a big bank from having their own swapping protocol or, being involved in that space? Do you see that sort of as like a risk to crypto at all if the regulations kind of ease up?
I think there absolutely could be more competition, whether that's from institutions that are building in the space themselves. It's just that some of these protocols are exactly that. They're protocols, open source protocols that you can build on top of. When you look at what Coinbase is doing, for example, or what others are doing in the space, they're looking at and have made announcements around building on top of some of these protocols. There are products that are being developed that leverage or utilize the underlying liquidity that exists on Uniswap and the smart contract infrastructure. Uniswap has a first mover advantage. Now, there are other competitors to Uniswap. You have, they kind of have funny names, I suppose. SushiSwap, PancakeSwap. You have Solana that has its own DeFi activity. You have Jupiter. You have Radium on there. And so there's a competition among the protocols, I suppose, and even among the blockchain networks. I don't necessarily think that you're going to see, a large institution come in and, build their own blockchain network, a private internet, if you will, versus the open internet that exists. That was attempted at one point in history.
Yeah.
And we saw, which version won. And so I think that you'll see these companies use Ethereum, build on Ethereum, which they are doing, right? When we think about some of the real world assets, the structured products, these yield bearing kind of vehicles that exist, you're going to see more participation in that form. And that's why I think the macro trade, again, is to be long ETH or to look at some of these protocols themselves. But I wouldn't be worried about a big bank is going to come in and overtake Uniswap. Maybe. But we're talking about something that, has a real use case, real users today, and has solved that liquidity problem.
Okay.
They exist already, right? It's the NASDAQ.
Yes.
So I think in this case, it's more so how do they adopt this technology?
Yeah. But what if NASDAQ had a blockchain exchange that was, they would own that. They would own all that liquidity. It would be in their space.
Yeah, I guess it's what problem are they solving then versus what exists today compared to a globally accessible, permission, decentralized P2P kind of internet version of this, which is what DeFi is.
Yeah.
I just think that you're going to see this kind of convergence of traditional financial services that leverage blockchain infrastructure and some components of DeFi today. But I don't necessarily think that it's going to be a competition between institutions building their own version of DeFi. I think more so we'll be leveraging DeFi.
And building on top of it.
Yeah, in the same way that, really a bunch of companies just use the internet, sit on top of it. Some of them are rent-seeking entities, but they didn't go and build their own version of the internet that you use,
All right. Correlations. What do we got here?
Yeah, quick look at cross-asset correlations here. So as we mentioned earlier, that very strong positive correlation that we witnessed just a month ago between, let's say, the S&P or the NASDAQ, the Russell, and the price of Bitcoin, that's come down quite a bit here. Same thing in terms of volatility, right? At one point, very, very, very strong inverse correlation, as we might expect, between risk assets, Bitcoin being a high beta risk asset, and the VIX. Not seeing that so much. That doesn't mean that can't change almost in an instant, but it's a signal to me that we're moving out of that environment, and you can see that as well when we look at sector performance. You can see that, certainly in the VIX, but as well in bond market volatility. So we talked about the move in bonds earlier here today. Do you really see that show up as an explosion in bond market volatility when you look at the MOVE index? If you do, I'd be a little bit more worried about Bitcoin prices. I'd be worried about the stock market as well. Typically, that matters. Not seeing that at the moment. And so I think it's definitely an environment in which you can feel a little bit more comfortable kind of stepping into some of these kind of smaller dips.
MOVE index actually near the lows.
Yeah, it's come down quite a bit from where we were.
Even into this move today, which was a huge move. I mean, we got back into I think that was kind of the low. I guess we spent a couple days in the 110 handle, but 111 has been kind of the lower end of where bonds have traded. So a little bit of a surprise, I guess, to see not as much volatility getting pumped in there into that sort of move. And that was when bonds were getting killed, that was when you had, Bessing come on and Lutnick talking about the bond market. Everybody was kind of that was the story. Now it's kind of rear view mirror, it seems like.
Yeah, and you can see the same thing when you look at corporate credit spreads as well. Look at U.S. high yield option adjusted spreads well off of those highs. I think my quote is a little stale here, but I'm looking at about 450 if I go back to the beginning of April versus, what's about 320 or so as of last week. So you're seeing a lot of positive signs that you're, again, moving out of that environment and into one that's probably a bit more, conducive to risk taking. I'm not overly bearish. I'll put it that way.
It doesn't sound that way.
No.
Very nice.
And yeah, speaking about the move last night and the people saying limit down, et cetera, et cetera. Like the volatility didn't move at all. Like that was another thing. Like it moved a little bit, actually,
A little bit, yeah.
but not nearly as much as if it was going to be a limit down day. The VIX futures would have been in the 20s by the open, not 19.
Yeah.
And until we see more volatility in VIX futures, it's hard to be super bearish.
Yeah.
Say that.
Curve's still very flat across the board. So telling you that there's not tons of fear, but I wouldn't say we're out of the woods just yet. Volatility still just under 20, which is, on the higher end.
Yep.
Very nice. Good stuff.
Beautiful.
Thank you, Ryan.
Yeah.
Thank you guys.
It's always fun.
See it. A couple questions here from the YouTube chat. What's your thoughts on QE? Do you think the Fed is pumping money back in the market, resulting in bullish equity, bearish financials? How might that affect crypto too?
Oh, I think, look, if you have not just the Fed, but you have central banks that kind of work in concert, everybody's either cutting or hiking kind of around the same time, right? It's obviously the dollar's reserve currency. It's unlikely that you have, a couple of these central banks are, outside of probably some areas of emerging markets or frontier markets. But when you look at, your larger kind of G20 nations, they all kind of move together. And so in an environment.
Not too late, Powell, though.
Yeah, well, maybe he's a little behind. I don't know.
He's a little bit behind. All right, the rest of the buddies are cutting.
Yeah, so I think you'll see that eventually out of the Fed. But I think loose monetary conditions, monetary stimulus tends to be pretty positive for crypto. Zero interest rate policy, lower dollar, that tends to be pretty positive for asset prices, generally speaking. Are they conducting QE? No, not at the moment. Now, there's probably some backdoor ways that you see liquidity enter into the financial system. That's on the fiscal side as well. But if they are conducting operations, in terms of open market operations, bond purchases, mortgages, no, that's not happening. I believe that we've paused the QT side of that, or the quantitative tightening side of that, which on the margin, I suppose, is bullish in terms of balance sheet reduction. But actively expanding the balance sheet, it's going to ebb and flow a little bit, but nothing like what we've seen previously when you had this emergency monetary policy that was buying $100 billion of bonds or more on a monthly basis. So we'll see what happens in terms of, does that Fed have to step in with treasury auctions? Possibly. I saw some headline around that last week. But in terms of open market operations or kind of broad-based QE, whether they call it that or not this time around, I don't think that you're necessarily seeing that. You still have interest rates at 4%, or roughly around 4%.
What are your thoughts on trading something like MSTY as a play on Bitcoin that offers corporate buying leverage of MicroStrategy, but also provides a large monthly dividend?
Have you seen this one? What's the multiplier on this? I think it's it's an option income one. They've had all sorts of, and I think YieldMax is the one that does all of them. But there's leveraged, there's option income strategies, which are basically just covered calls. I don't know the exact makeup of it. I will say with a lot of these funds, and have you looked at any of these, Ryan? You probably don't mess around with any of these.
I don't participate. I've seen the ticker symbols, making the rounds. I know a lot of people on X are in these, and there's probably different ARBs where I'm short this, I'm long that, or there's points in time where I want to be, simply I want to be long MicroStrategy versus I want to be, short Bitcoin, or I'd rather be just invested in MicroStrategy versus Bitcoin. I don't do that. I keep it simple. I'm just in the plain old crypto myself. If you want to sell options against those things, you can take a position in IBIT as well, and you can sell calls. You can generate income that way. Honestly, like the price appreciation that I believe is going to occur in here, that's what I'm in it for. Less so kind of the yield. Those yields are going to be variable, and unless I fully understand it and honestly have not looked at these things, I'm probably not going to participate.
Yeah, I'll have to look up the
I tried to. It's hard to find
the actual
makeup of it.
Yeah.
But yeah, I agree with Ryan. I think when you're involved in these products, you're looking for those big upside moves. You're not necessarily looking for this larger dividend, but also like I would rather just be in IBIT and do option strategies in there. Like if you're buying 100 shares in this, I'd rather buy 100 shares in IBIT or 50 shares in IBIT and sell a call spread against it. Like you can have more personal manipulation, especially if you have 100 shares of IBIT and you have a short call. You can have the short call on, and if it gets tested, you can roll it up and out way further out of the money and kind of manipulate your own risk profile. Where this, you're kind of in the dark. So
E-minis just ticked green.
Yeah.
So you might be right on the up 30 by the end of the day here. Bitcoin hitting high of the session here too, 104 and change, continuing to move higher. Ethereum 2,500 up 100 and change here from the overnight open. Rallies on, buy the dip.
Paul's telling us that there's nothing, whatever we're seeing is not being translated into the market, but that can always change for sure. Let's see. Scanning. Can you speak on the relationship between bonds and crypto? Is there a connection between stablecoin and treasuries?
Okay, let's start with, I guess, the relationship between bonds and crypto. I mean, all I can go off of right now is
correlation matrix.
Is our correlations, right? And we haven't seen, and I guess it depends on what you're talking about. If we're talking about bonds, the long end of the curve, right? Really less of a correlation there. I think that I wouldn't so much call it a misconception, because obviously if you have high rates of inflation, that's going to be negative for fixed income.
Mm-hmm.
But I think that quite often we take this kind of singular view around interest rates and what drive interest rates higher or lower.
Mm-hmm.
And recently, because we've come out of a period over the last few years where we had historically very elevated levels of consumer price inflation, then we think, okay, inflation is a bad thing, right? Or if bonds are going down in price and yields are going higher, it must be because inflation is coming back, possibly. But, it's a measure of risk. It's also, a measure of, in terms of, the amount of money that you're receiving or the yield that you're receiving for taking that risk, right, versus the alternatives that exist. And so, when yields are going higher, it's not necessarily a bad thing. It could be a reflection of the market pricing in economic growth, right? Mm-hmm. So we want to look at the curve. Is it flattening, which is typically a red flag, an indicator of kind of weakness ahead, mm-hmm. or is the curve steepening? And so when I look at, if I pull it up here, if I look at yields, U.S. yields, you can look at, the curve across really any sovereign here. Mm-hmm. But, recently we've seen a little bit of a steepening. We're off of the lows if I'm looking at, I guess it also depends on what part of the curve you're looking at. But if I'm going to look at just 2s, 10s, we've steepened a little bit here recently. If I look at the whole curve, let's call it 3-month bills to the 30-year Treasury bond, it was 0.367 on April 29th, and we are at 0.613 as of May 19th. So you have a broad-based steepening of the curve. I think that's a reflection of, the economic environment that we're likely entering into, one in which, sure, the rate of change of inflation is likely accelerating off of those lows that we saw in terms of, use your preferred measurement for that print. It's very lagged as well, but also a reflection of, economic growth. Coming out of that period where we just had a negative print with GDP, for one reason or another. We can argue about the impacts of tariffs and how people behave around those. But you're seeing a steepening of the yield curve, which tends to be, an indication of, forward growth being positive in terms of the outlook. I think that forward economic growth, if you look at it historically, you can look at business cycles. You can measure this by the ISM. Is it expanding? Is it contracting? Is the yield curve steepening? Is GDP increasing? Right? When you're in a positive economic growth environment, it tends to be pretty good for what we like to call value stocks, or those US-based companies that are in the Russell. It's also really good for those alts. It's good for crypto, right?
And crypto as a whole is an alt. I would say. I mean, it's still a small marketplace. So even though Bitcoin's a big thing, when you're talking about alts, it's anything that's a smaller
Absolutely.
cap.
Right. And so if we look at rates as a reflection of economic growth to some extent, right, then you want to see economic growth because it's a positive for companies in the S&P 500. It's a positive for risk assets. It's a positive for risk taking. The worst environment is one in which, and this gets back to maybe that relationship, right? If I see the treasury yield, 30-year treasury bond, just absolutely jump off a cliff, there's probably a reason for that because the market is pricing in a slowdown in growth. Initially, that's going to be really bad for crypto. It's really bad for the equity market. Typically, there's an inverse relationship between that yield, and that's not always the case, right? But that's what we historically typically observe. Because get me out of the risk, get me out of the high volatility stuff, get me into the risk-free, low volatility stuff. So the opposite of that is often true, in which if we're in an environment where the economy is expanding, economic growth is robust, the rate of inflation, you do not want, by the way, you do not want deflation. You do not want disinflation. The worst environment for risk assets is when inflation and growth are going down at the same time. You don't want hyperinflation either, but you want a moderate degree of inflation. I think that's healthy, all else equal. And so when you have that environment, it's usually risk on. It's usually a positive for, assets that have a long duration, tech stocks, crypto, things that are normally volatile, versus the opposite where the VIX spikes, get me into treasuries, get me into US dollars, into cash, get me out of all of this stuff.
That's
I don't care what it
short-term
is.
reaction, though. That's the short-term reaction, yeah.
But longer term, if we keep interest rates low. See, we had such a perverse environment that distorted everything, and it was in place for the better part of a decade.
Yeah, 20
That's the
years.
problem here, right? Like, zero interest rate policy distorted everything, right or wrong. And I would argue that going forward, like, you kind of have a situation from a demographic perspective where it's likely that rates are going to be lower than higher. It's very unlikely, in my opinion, that we're going to be at 15% 30-year treasury yield. Maybe. But we've seen how low rates have been in Japan for the better part of the last few decades. So I just think, again, you want an environment in which rates are, or you have a steeper curve, you have higher long-term rates than you do short-term rates. That's positive for crypto. And that's the relationship as I see it between, bonds, or what are bonds really, and crypto.
You can't say much more than that. We should cut that and
yeah, we also ran out of time. I apologize.
No. That was perfect.
Yeah, that was amazing.
That was great.
We're out of time. Thanks for tuning in. Thank you, Ryan. Always.
Yeah, thank you guys for having me.
The cyborg, as the people are calling.
Yeah, people are loving the tweed.
Yeah.
Loving the tweed.
Yeah, it's very stylish. I need some style tips from him.
Thank you.
100%.
Yes.
If you want to follow us on Twitter, you can find us there. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat, so get that for free. We got plenty more content coming your way on the YouTube channel as well as tastylive.com, so stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Twitter versus Facebook. A rap battle. First up, Facebook.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We are back. It is Monday, May 19th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, tell us something that we don't know about the state of the U.S. economy. There's a question I'd like to pose to Moody's.
It's a very lovely time for them to come out after, of course, in 2011, we have these abstract concerns from S&P. In 2023, after 10 years of wagging a finger, Fitch finally comes around. Oh, look, Moody's has actually decided to do something. None of this matters, and it makes Moody's look like they have egg on their face more so than it does anything else.
Yeah, this downgrade is obviously something interesting that happens. Whether or not it affects people's ability to buy U.S. Treasuries for charter reasons that various funds have is another story. Yeah. For the market, it's just another thing that the rating agencies have told us that we already know. And we can go to the slides here. I find this news, I find it interesting timing, of course, on Friday. I haven't tweeted about it much because I've been trying to figure out the right way that I want to approach it. On one hand, it's an interesting wake-up call because we do have significant spending bills making their way through Congress right now. On the other hand, the rating agencies really don't matter when it comes to a country-by-country basis. We've seen this over the past 15 years, Ilya. Downgrades of France or of threatening to downgrade Germany potentially, Italy, Greece down, back up, hasn't left a significant imprint on the market. In part because the rating agencies are, including on a country basis, issuer pay models, right? They don't do this work for free. Someone's got to pay for them to do the ratings. And so they tend to be a little bit slower because they don't want to piss off their customers. In any event here, equities are back to unchanged on the day. What was it? 1.5%-2% loss earlier, Ilya?
It's the bonds that really grabbed my attention. I mean, equities were sort of unmoored by this for a little bit, but it didn't even last there. It was really the bonds that had a little wiggle of sovereign risk to them, but we've completely erased all of that at this point. It's really interesting also to see, of course, which things have held on to their moves. Gold is a little bit higher, and it's off the highs, but it's holding some decent gains for today. The dollar is lower, and it's holding some decent losses for today, especially against the likes of the yen. So some things here have an intent seemingly to go in a direction, and they liked this as a catalyst, and they still like the moves, even though the catalyst is obviously nonsense. It's a very funny thing to say the U.S. is not AAA. AAA is the most eligible borrower. Are we saying the U.S. is not the most eligible sovereign borrower? Because if that's what we're saying, well, that's just ludicrous. And if it's not that, then your whole system is wrong. So it's not the rating agency that's going to wag a finger here. If the U.S. in your architecture of ratings, because they're relative, they're not absolute, if in your architecture of ratings, the U.S. isn't the benchmark for AAA, your rating's worth nothing. Because if you're not giving that rating to the most eligible borrower with the deepest pool of collateral, probably in human existence, what are you saying? And so it's not unusual to me here that the markets look at this and go, yeah, okay, sure. You've downgraded the U.S. Some people have covenants where they're going to have to rewrite them because they're just not going to have to take your rating at face value when they figure out which securities they hold. Because to say that you shouldn't hold treasuries because Moody's thinks that it is something that isn't reflective of the world's most eligible borrower, well, then it's Moody's that's wrong. It's not you.
If the U.S. isn't among the highest rated countries, if not at the top, then who is? And really, if the U.S. isn't considered a eligible, like competent borrower, then no one really is.
Well, and this is the whole thing. It's like, well, what defines you as a good borrower? Your ability to backstop what you owe with collateral. Your ability to repay. Who has more expensive, more valuable collateral than the United States? Don't worry, I'll wait.
the reasons that Moody's listed are not unreasonable. I suppose it's worth going through. There are rising debt levels. The interest rates are too high. There are large fiscal deficits, and the ability to solve any of these problems is hamstrung due to political polarization. I would challenge anyone who doesn't think that rising debt, high interest rates, large fiscal deficits, and political polarization has not been at least on your radar as a potential macro issue at some point in time over the past 15 years. Ilya, it's nearly 15 years since we got the first downgrade from the S&P Global.
Yeah.
So stock market is having a different story today than, say, gold or bonds, which I think is worth looking into. And I think the action today in the stock market, Ilya, provides a piece of evidence perhaps to an idea that we tossed out there last week, which we'll get into shortly here. But before we get there, let's take a look at where our economy is heading right now, according to GDP trackers. This is a week where we're not going to have a lot of substantive U.S. economic data. Perhaps, as we reviewed on Friday, the most important thing that we'd be watching for is the S&P global PMIs that are due out for the U.S. But that still leaves Monday, Tuesday, Wednesday, Thursday, where there's not much of anything to do. And we're kind of left with a view on the economy that's not going to change much until perhaps Friday. So where do we stand then at the start of this week as our attention turns abroad, as we pay more attention to the news in D.C., the fiscal happenings, because the Fed's not really doing anything, and of course the earnings calendar is also lighter. The economy's in an okay place. 2.35% here on the right-hand graph. That's the New York Fed Nowcast. Left-hand side of the Atlanta Fed GDP Now growth tracker. That's still sitting at a robust 2.3% right now. Excuse me, 2.4% right now, Ilya. And we're not going to have another update for the Atlanta Fed until next Tuesday, just to go to show that there's no real inputs coming this week. Why shouldn't this be our source of focus right now? That the economy, by all measures, looks to be a little bit more stable than people, myself included, have feared it would as we look into 2Q.
Because I don't think you can really hang your hat on that being the case. I think the data that we got last week told you the most worrying thing you needed to know about the economy, which is the state of U.S. consumers, which collectively make up 68.5% of GDP, that they're not in a good spot. That they weren't in a good spot in the first quarter. We knew that already. We got those first quarter GDP numbers, and when you leave aside all of the weirdness that happened there with imports, with tariff front running, with that going into inventories, you were left with the weakest consumption growth since the second quarter of 2023. And the concern, of course, is that you're going to have something similar, all of these headlines, whatever, in the second quarter. You got some pretty compelling evidence last week that that's exactly where we're heading. And it was a 4-report progression where first you got retail sales numbers that didn't give you any tariff front running in April of all months, where there was all the goading in the world early in the month to go and do exactly that. There's Liberation Day, and then just a few days, barely a week later, The president goes, oh, here's a 90-day window in which to front run this. And consumers don't take the bait. You learn in PPI numbers that they don't take that bait, even though businesses are absorbing the cost of higher tariffs for them. So consumers are being insulated, which helps to explain why CPI the previous week was not all kind of crazy and didn't show you a surge in goods prices. It's because the businesses are eating it themselves. It hasn't been passed on. And then you get god-awful consumer confidence numbers for May.
Comically bad.
Comically bad. It's just...
the inflation reading is just...
It's just... I mean, when the one-year inflation outlook is close to 2% higher than it was at the peak of the post-COVID inflation scare in 2021, kind of tells you where people's mind is at. They're like, that was bad and we didn't like it. That was inflation that caused us to flip over the entire U.S. government. Now, 2% worse.
You know, there's part of me, Professor Plum on Twitter, Michael Green, he goes, he had a chart the other day talking about how the methodological input of how these surveys are conducted changing in recent years is perhaps leading to more extreme readings. It was in 2022 that they switched from phone-based surveys to internet-based surveys. And as we know, internet-based surveys are famously reliable. So, yes. You know, it's just, I think that's perhaps one of the reasons why the data look a little bit different. But even so, if you want to discount that, it's still showing that there's a level of hysteria out there where these are there going to be bumps in inflation and drops in growth as a result of the tariffs if they proceed as currently constructed? Probably. Yeah. That's what some of the best economic models in the world that our policymakers rely on suggest will happen. Right. But it's not going to be a 5% crash in growth and a 7.3% rise in CPI. That's not what the data suggests.
And that's also not what matters. Because if consumers are afraid that that's psychological. What it's going to... Yeah, if consumers are afraid that that's where they're going, it'll be self-fulfilling. And April's retail sales data, in spite of the PPI data, tell you that's where you're going. And jobless claims tell you that there's a sort of vicious cycle starting to emerge where companies go, we're going to eat this margin for you. But that means we're not enthusiastically hiring anyone because we need the money, because we're going to eat this margin. And then consumers go, oh, wait a second. This means we have to dial back on consumption because the job market isn't that good out there. Oh, well, that means that businesses need to eat more margin because they need to enthuse defensive consumers back in. And so you get the highest 4-week average on initial jobless claims since October because people are not getting sucked back into the labor market once they take a step out with nearly the pace that we'd been accustomed to, let's say, last year. And so you get to this thing where if consumers retrench, if they don't care that the president is out there saying, hey, 90-day pause. Hey, deal with the UK. Whoa, we're talking to China. If they don't care and they're not paying attention and they're just saying, hey, well, who knows when this dust will settle in the meantime, I'm going to keep my spending nice and tight. Well, then that's the part that matters.
That part matters. Question of timing is when.
Yes.
You talk about companies eating margins right now. Bears need to eat their spinach because they were handed a golden gift of an opportunity to short circuit a rally here. And if we were to close at these levels right now, Ilya, that would be a bullish engulfing bar for the S&P 500, whereby we put in a higher high than yesterday, or Friday rather, and we move below Friday's lows. So in closing above Friday's high, above the 1 week moving average, this is about the incentive structure in the market right now.
Doesn't want to roll over. No.
Last week, Ilya, I posited that maybe because of the positioning situation that we found ourselves in, whereby traders prior to the China-U.S. trade detente announcement, we're looking at a market where they were still offsides. That is, the market was rallying and people were by and large still short. Would mean that for the second quarter, you created this incentive structure where you were forced to chase the market higher in the short term. You missed the rally for the most part if you were a professional trader. And so to paint the numbers for your second quarter performance, you kind of get sucked into a buy the dip mindset. Really, I always like to say that if you're a bear and you lose money in a bull market, it's really tough to keep your job. If you're bull and you lose money in a bear market, that's okay. Everyone's losing money. But if the market's going up and you're not making money, then as a professional fund manager, you have an issue.
Oh, yeah.
And so today, if we want to find some evidence of a nothing matters anymore, I just need to paint the tape and boost my Q2 performance. And I need to buy every darn dip there is out there because I need to make up for my mishandling of the first week of April. I would suggest that what you're seeing in stocks today is part and parcel to that kind of behavior.
Very plausible.
You know, the
Very
bonds and the
plausible.
Bond golds and dollars are a different story, but the equity market incentive structure seems rigged right now. I don't say rigged because that connotates corruption. It's geared and set up in a fashion that would suggest that unless there's something real bad, I mean, even that China news today, China is saying that the U.S. is not sticking to the spirit of the Geneva Agreement. That didn't shake anyone off. So I don't want to say that we're resilient and we're running back into all-time highs, and yet there may be a kink in the hose, if you will, for bears right now, which is that people need to get better numbers on the board before June 30th comes to a close.
There could certainly be an element of chasing here. I mean, that's absolutely a possible way to interpret this. There's just no knowing. There was a really interesting end to the week last week on Friday where after the cash close, the market got sharply marked down on ES futures, NQ futures, sort of all of risk in the kind of post-close resort. And some of this was the downgrade announcement, to be sure. But nevertheless, when you look at, let's say, a 4-hour chart of ES, an 8-hour chart, what you see is something that looks a lot different than the daily. Because what you then see is this testing of the highs that failed into Friday's just after Friday's close. And this is really a put up or shut up kind of spot. We have to decide what happens basically at these levels. And that's been the case for the past several days. We're testing what is essentially the line in the sand that says, not only are we not afraid of some sort of crisis-like environment, we're already past the growth scare. We're not there yet. It seems like we're deciding. And it seems like, for now, certainly, the upside is winning out. It'll be interesting for me, especially in the absence of news this week, to see what the market decides is its default. And that'll be very interesting because, in my mind, the economic evidence to be concerned about is there. That isn't the question. The question is, does the market care?
Yeah, in the absence of news this week, what guides you higher? I mean, if we're not going to see a debt downgrade and news that China's unhappy with the way that the trade negotiations have progressed over the past week, if that's not going to bother anyone, then what can over the next few days? I'm certain that there is something that would bother people out there. But I got to say, Ilya, last week was genuinely shocked when I saw the COT report on Friday. I was expecting, after that big rally come Monday and the continued gains Tuesday, Wednesday, Thursday, Friday, that you'd be looking at an S&P 500 where traders threw in the towel on their shorts and started to pile in back long, and that is not the case. Small speculators, if you will, if we want to distinguish between smaller speculators and larger speculators, smaller speculators did get a little bit more net long, from 36,000 to 60,000 525 contracts. But larger speculators, they got more net short, from 76,000 to 122,000 contracts. So net, your net short position among speculators in total in the futures market from week to week. And again, this is a week that closes last Tuesday, so you have the Monday China-U.S. detente reaction in play here for the data series. You go from a balance of about minus 40K net short positions in the futures market to now about minus 62,000. So it grows, which is all the more fascinating because it means there's more kindling on the fire, that people are now more short as this market has gone to the upside. Now, of course, that discounts what happens Wednesday, Thursday, Friday. It discounts today's reaction in the market. We don't have that in the data series. And so by this coming Friday, we may look at a CFTC COT report that says people did ultimately throw in the towel when all was said and done. But for now, it would indicate that there's fuel to burn still to the upside here. There are people who are watching this market rally and are selling it and are getting deeper underwater. And I think today, in the wake of this downgrade, if you're looking for an excuse to sell, today would have been a great excuse to have, and yet it's bearing no fruit whatsoever. And I think that's one of those warning signs.
6 weeks now, net short positioning has been building in ES. I've been looking at a very simple, kind of very crude measure of cumulative speculative positioning minus cumulative non-speculative positioning, just to tease out overall where speculators are, just as a very broad group. And we're looking at the biggest net short position there since late March. Yeah. Now, again, that's as of Tuesday. As of Tuesday.
But that's the Tuesday with this big rally that occurs, right? It's not like we can turn. This is one of the things about the data series that so intrigues me. I was operating under the impression that, okay, people finally capitulated. Like this was the last gasp. And not quite. That may not be the case, is the point I'm getting at here. And that's, again, there's a very particular.
They seem to have sold that rally.
People are going into the rally and selling it. Professional traders are still going into these rallies and selling them. And that means that you set up the nasty scenario where it's not sell in May and go away. Ilya, as you know me, I do not believe in that at all, because that's not what the seasonal data suggests you should do. The seasonal data is buy through July. And it's very much rounding into being another one of those type of situations. Volatility here, Ilya, at the start of this week. VIX on the other side of this U.S. debt downgrade, there is a pop and a gap open to the start of the week. We opened up at 1984. We're now down in at 1803, so erasing much, if not all of that. And the term structure here, still in contango. We didn't really see a jiggle or a wiggle out of this. Front month, you're looking at, 1948 right now? You go all the way out to March 26. You're looking at a VIX or a volatility future that's about 22.5. There are no kinks along the way. I'm looking at the curve right now, and better to show than tell, as always. But it's a pretty normal looking term structure too. So on the other side of this Moody's downgrade, I mean, that's why I called this show "Tell Us Something That We Don't Know."
Yeah,
Elliot, we know all this. We know that the U.S. is in a bad spot. We know that we're spending too much money. we got it. We know.
Yeah.
But
we've been.
This is not news. This is not news in calendar year 2025.
Right. And I mean, if you thought this was a reason for the market to sell off, then any kind of theory like that would basically be predicated on the idea that the market wanted to sell off, found an excuse, hung their desire to sell around that excuse. We've seen markets do this, where everybody's sitting with their finger on the sell button, and then a piece of news comes out that spurs everybody, and off we go. It doesn't matter if the thing is flimsy. What matters is that the market got the thing it wanted, because the market will always get the thing it wants magically.
Right.
And so what you then find is this idea that, okay, well, the market's not in the place where it's minded to sell. Because if it needed an excuse, it had one. It could hang that around this. On the other hand, all of April, the entire episode in April, was all about how what Moody's just did here is nonsense. What we resolved in April was that there was the threat of a sovereign crisis in the United States, and the markets went, yeah, but that's ridiculous. Because if these guys have a sovereign crisis, then the whole system is going to collapse.
And everyone has a sovereign crisis.
Yeah,
That's the rub.
We're all on this hot air balloon, and if these guys have a crisis, then the engine's out, and we're all falling together. So there is no crisis.
Not exactly. You're not exactly
that kind of crisis.
You're not exactly incentivized to scream that the plane's going down when you realize that you're criticizing the pilot. You're like, hold on, I don't want panic.
While on the
I'm on the
plane.
ride too. I'm on the ride too, right?
Yeah,
Like I don't want people panicking. So we find ourselves at the line in the sand once again. 5% in the 30s, around 4.5% in the 10s. Today, the market sells off, gaps open lower, as one might surmise bonds would do on the other side of a ratings downgrade.
Yes.
And yet, here we are.
Nice hammer, though.
Moody's is telling us something that we already know insofar as the U.S. government spending a lot of money that it does or doesn't have. Either way, the new bill, $4 trillion in new spending, not counting interest expense, which could bring the total spending package to $6.2 trillion over the next decade. Maybe that's why bonds were soft last week.
The size of government? Isn't that what we were doing? I thought that's... I was wrong.
Can't shake my head, but I want to. And
well, I was wrong. I guess I thought we were about government efficiency. Okay.
As it turns out, the government is pretty, I still haven't seen the lawsuits for fraud because that's illegal. At any event, the move here at the lows, the technicals, I don't know if you could follow, but if you did, you would... I don't know how you'd feel about this, actually. Is this an evening star cluster at the lows suggesting more losses deepening, or is this the hammer candle you pay attention to at 5%? Either way, what Moody's told us last week, the market was pricing in. We got the spending bills that had come out, and we saw bonds pressured. And Moody's is saying, like, okay, well, if you guys keep doing the things that you're doing, it's going to, could lead to more stress. Okay, yeah, we got it.
Like, yes.
Ilya, are you surprised that there's...
already? We've seen the phone board. Take it easy.
This is a higher level than we would have closed out last Wednesday. If this is the best bears have got in the bond market right now, are we still thinking that the 5% in 30s, 4.5% in 10s are viable levels to trade around?
Yeah, I think so. I think what this tells us, and I think that line you have through the chart is exactly the line that I'm focused on. And the lows there as well. We can see a little bit of wicking down into kind of the upper 110s there. Right there, yeah. So low 111s, upper 110s. I mean, that held almost to the tick. So I think, yes, we're looking at a market that is very reluctant to go through these levels. That doesn't mean that it can't, and it doesn't mean that it won't. But it means that it's very reluctant to cross these levels. And again, it had every reason. If it wanted to take this downgrade and take it as seriously as it took the foam board on Liberation Day and say this is a real big deal, and we're going into sell America mode. If that's what this was, this would not be what this chart looks like. The bond shrugged off a big wallop here, a very relevant wallop, specifically to it, especially at the long end.
Especially at the long end.
Especially at the long end. This is long-term borrowing viability for the United States.
This is the term premium. This is what you should be all worried about.
This is the term premium.
And
this should have been, if you took it at face value, and it's why you and I always harp on saying, people say macro don't work, and you go, well, no, it's not that I'm talking too fast, it's that you're listening too slow. macro isn't supposed to work the way it is written in a textbook. You have to contextualize in price action because you have to know what's already priced in, because volatility won't happen relative to what's already priced in. It'll happen when reality doesn't match speculation, and then speculators have to reposition. Macro is a contextual overlay, so you can see what the variables are. It doesn't work the way it's written in a textbook in real time. And so this is a very important signal, because in a textbook it would say this downgrade should be killing the bonds, and that it's not is a market signal.
That it's not as a market signal. Yeah, I mean, if this was going to be the new regime shifting factor, we probably would be looking at a 10-year yield that's closer to 4.6% today than 4.4% today. And in the 10 years, at least, you could see how we've kind of pulled that all back in. We do gap open higher here. The open is 4.475%, and that's effectively where we're sitting. We're off the high of 4.566% in the 10-year yield itself. It's a messy looking chart, but the point is the uptrend off the yearly lows is still thus maintained. Swing lows that you have around the original Liberation Day hijinks are thus far maintained. I'm still playing these broadly directionally neutral. I'm not thrilled with the upside kicker I have on them. And yet, today feels like those upside kickers may actually get some second wind.
Yeah. I mean, I'm not doing anything to unwind anything about my long exposure at the long end of the curve. I think if we survive this wallop and we look like the way we're looking, it looks like we're very close to some kind of an all clear higher, at least to the top of the range on bonds, because they're looking like they don't care about this in a very sort of deliberate kind of way. They go down, they go, yes, see, look, we've acknowledged the news. Look. We're doing the thing that you would think we would do. Now we're pointedly turning around and saying, no, incorrect. Just please believe us. And it's very obvious in the price action. And again, maybe it's wrong. Maybe something else happens tomorrow and upsets the apple cart. But as far as the downgrade is concerned, the bonds are very clearly telling you, nope. And if ever there was a reason, this was a good one. So,
because the downgrade at a time of budget negotiations gives fiscal hawks more ammunition in their pocket to prevent an unwieldy budget from actually being implemented.
We already hear there's tons and tons of grumbling inside the Republican conference itself saying, a lot of us are deficit hawks. This is not what we believe in.
I personally believe in getting the SALT reinstated.
Yeah. Can we do that? Which, by the way, hey, these negotiations can fail. It's fine. If they fail, then SALT gets reset to where it was pre-2017 tax cuts. So, okay, fine. But the least they can do is negotiate it in a way that not all of our benefits get reset to us.
For every dollar that us entrepreneurial, innovative New Yorkers send to the federal government, we only get 91 cents back in funding. So we pitch in more than we return, get given back to us. And so maybe that SALT, you just pass the SALT, please. That's all we're asking for. And Ilya, it's the same thing for California, Illinois, Florida, Texas, Minnesota.
Yes.
For those that live in high productive economy states.
Those of us in Northern California building the future for everyone, we'd sure appreciate it.
Yes, thank you for giving us Chamath and the All In Pod, guys. Much appreciated. Gold here, getting second wind. These metals really getting a second life, as it was looking last week that we were trying to carve out a double top, and once more today. I remember gold's ascent in the summer of 2011. I remember gold, it didn't really take super advantage of it at the start of 2023, and I think that's also worth noting. Gold doesn't go up in 23 because of the downgrade. Gold goes up in 23 because of the geopolitical shifts.
And we're going to start cutting rates.
Right, September into October, right? If we're thinking about our gold charts back then, you have a non-farm payrolls report the weekend before Hamas attacks Israel, and that marks the low in gold. But gold was falling. It was heading into its lows.
And it makes sense, of course, because the Fed was on a tear hiking rates until the end of 2022, and they were not off that train going into 2023. They hadn't told you that they'd blinked yet.
And so today, gold gets a bump at itself by 1.31%, but it can't scale its 1 month moving average, Ilya. That yellow line on the chart just can't quite poke through there.
The only reason I'm not long here, I like that it doesn't want to stick with the breakdown. It had that clean breakdown through support, that right around where you've got that 100% extension level.
Basically 32.
Yeah. I mean, it's a very clear range support, right? You go up, you come down, you set a bottom, you rebound to retest near the high of the range, you come back down, and then the question is, do you hold that range or don't you? And then you crack it. And you go, oh no, sell off. But then it doesn't stick and breaks back in and then breaks back out. And now it's back in. That should be fairly encouraging if you're bullish, because it tells you the market cannot, for the life of it, find momentum on what is a clear downside breakout. But at the same time, it can't really find the gumption for a rally back into the range in a convincing way. And so you go, would you just make up your mind? But in the meantime, I don't have any exposure here. I'm waiting. I would prefer to be long. Being long comports better with sort of the way that I see the macro picture evolving. But the price action's got to show some conviction here. And I'll be happy to short as well if that's what the price action decides. I'll just have to say, well, you know what? My macro idea was wrong. The market's going down. I'm not going to let it go down without me. Let's go. Just because I'm wrong doesn't mean I can't make money. So the setup here needs some resolution. And right now we just don't have it.
No, that's the frustrating part about the past few days for bulls and bears alike. I think it's worth noting. If you're looking at a breakdown on Friday, okay, you get your weekly close, you're below your neckline, you have your potential double top, depending upon where you measure it to. If you're being a little bit more aggressive, maybe it's to 29. If it's a little less aggressive, it's closer to 29.60 or so, and that lines up a little bit better with where we were at the start of April. But then today we pop back into the range, but we don't clear the 1 month. And
frustrating.
Should gold be doing better than this? I remember in 2011, gold rockets, and the only thing that puts a brake on the gold train post-U.S. downgrade is the S&B putting the floor in the Euro Swiss in the first week of September 2011. And there's no gold rocket today. It's a second lease on life. I don't know if it's enticing enough to suggest that anything has significantly changed here for, say, copper or silver, which to me is the exact same chart right now, right? You have this move up, crash, rebound, start funneling into a downtrend. Kind of looks like a triangle. Copper here up higher, breakdown, move back up, funneling into what could be the downtrend, seemingly like a triangle. Gold and silver a little bit more, silver and copper a little bit more growth sensitive. So they're not ready to tell us we're all clear just yet. These are coiling springs right now. I think we're about to see big breakouts in the metal, but I don't know if it's because of the lack of action today that I'm not convinced that it's going to be to the upside, even though that's where my chips lie.
I'm kind of thinking it's going to be to the downside.
They should be doing a lot better today.
I'm kind of thinking this thing can't seem to stomach a higher high. It's consolidating without being able to even come test the previous swing high. I mean, just look at the range that we're getting locked into. On copper here, let's say the top of that upswing is around 5, give or take. We're not settling near a test of the high. We're settling near the recoil from it. This is a lower low. And then it's a lower high.
Yeah.
Setting up for maybe another lower low.
Even just incrementally. High.
Yeah.
Low. Lower high.
Yeah.
Slightly lower low. Right.
Yeah,
so you're seeing it.
This is not encouraging.
Silver today gaps higher, but can't clear its 1 month. It can't clear its 100-day. Copper as well. And there's no vol here. So look, from the silver perspective, if I'm trying to take a bullish position, it's really not by selling puts. Certainly not around an IVR 14.2. As a bull who has been just rolling up calls and call spreads over the past year plus, the current iteration of this trade is probably not going to work out, but that I'm not disincentivized from trying to do so again because of how low volatility is. If I am bearish, I'd much rather go through something like SIL and just short it rather than trying to do a short call spread through something like SI here, at least through SIL. Again, the micro contract, you're going to have a little bit more ability to get in and out because you're just trading the direct futures. So depending upon which way this breaks, there's substantive reason to think that silver and copper could be leading a decline. There's also reason technically to think that there's a move up for the bounce. Getting exposure on the upside is pretty cheap right now, and yet declines in volatility in the metals, Ilya, have not been friendly by and large for the past 18 months. So low silver vol, low gold vol may not be an indication that these things are going to see much more significant rally here the next few days, especially if stocks are bouncing back.
Yeah. Yeah.
Troubling times. Not a fan.
It doesn't look great. It's tempting to then extrapolate, well, these are growthier names. What are they telling you about where stocks resolve? But you have to take those piece by piece and be careful here because markets sans news can start to diverge. Relationships can start to weaken between kind of risk on, risk off dynamics. You just never know, especially in this environment. So you have to be very, very careful. Similarly to crude. I mean, I'm short a little crude here at the top of the range. I'm doing it again. Risk defined, MCL contract, very kind of small and locked in as far as the worst case scenario. But this is another one where you go, well, if stocks are so buoyant, why isn't this rallying? If we're through the growth scare, why isn't this going up? Or are stocks just going through the last afterburn of we don't have a crisis? Who knows? But it's dangerous to over extrapolate. You just have to trade them as separate things and not conclude that you're seeing what you're seeing until there's evidence from both sides of it.
Crude oil here today, it was higher prior to the start of the show. It has swung to the downside now, joining natural gas in what's been a pretty aggressive move to the downside. Natural gas is off by 6% in today's session right now.
Not exactly the growthiest indicator.
No, and I have difficulty finding a compass by which I want to follow for natural gas because I do see it as something that's highly sensitive to tariffs. We never quite got to the downside level near 2.9 in natural gas in that double top I was trading. So I never quite got where I wanted to go to flip long. The rally back here, though, you have this swing low back on February 18th that became resistance up against that 100-day moving average here just a week ago. And now we are seeing ourselves back to the downside. I'm intrigued at natural gas down in that 2.8, 2.9 zone. It's a 49.6 IVR, so it's a little bit more juice to it than some of the other names we looked on the board here today. But crude oil itself also still has a 48.6 IVR. And today it's not exactly showing great signs of strength. Then again, it's a downgrade day, and we find support on our 1 month, a level that has been holding up as support ever since we crossed that barricade a week and a half ago, Ilya.
Mm-hmm.
What do you make of crude here? I mean, I'm still playing the short put spreads right now because it's working. right? On one hand, it's working. Second, I don't think we're breaking 54, 55 anytime soon. Why shouldn't I continue to embrace that point of view given the action we've seen over the past few weeks?
I mean, I'm being very small in my ambition here. So I see us rallying up into the top of the range. If you look at the 4-hour, you look at the 8-hour, you can see there's a failing there. At the top of that range on the daily, it looks like a very clean-cut evening star that since has not found a way for markets to build higher. You look at that and you go, okay, maybe you get a downswing into the bottom of that range, somewhere in the 55, 54 direction. That's really all I'm looking for here. And I have, I bought a put vertical basically at the high of that range. So once you got that evening star completed on the daily, I was in. And so I'm holding it. It's very well defined. It's less than 1% of equity that's getting risked here on this, basically a flyer. Let's wiggle down. Let's see. If we believe in a world where there is a growth scare that's still completely valid because absolutely nothing about it has changed, it was there before Liberation Day. It's only there in greater impact after, and that's with the 90-day pause. Because before Liberation Day, you did not have an average tariff of 10% facing U.S. trading partners. It was 2%. And now it's 5 times bigger. So if the growth scare has done anything, it's grown. So do you want to own a cyclical thing? Well, it's at resistance. It's telling you it wants to roll over. Let's see if it can get to the bottom of its range. That's really it. If it breaks higher, I'm out.
On a sell America kind of day where if you start the week, you're looking at higher gold, weaker bonds, weaker stocks, weaker dollar. In the wake of the downgrade, I suppose that makes some sense on paper. Sure. And we've seen a little bit of that reverse, although bonds are still weaker and the dollar is still weaker and gold is still stronger. Stocks have bounced back, though. We're basically back to break even. I think if you were a bull looking on Friday and saying, oh, God, this is the news that we have to digest over the weekend, what's going to happen? You'd be quite content with seeing a market that's flat today. I do want to draw the attention to the dollar, though. It's off of its lows. The euro, of course, tried to cross the barrier that is 113, here. We've seen here in recent weeks in DXY, that's going to comport with the swing lows that you have from September of 2024. And so that's basically right around 100. You see that the last few weeks, this inverse head and shoulders pattern that was forming in the left shoulder head. Right shoulder here for DXY is effectively the mirror image of the left shoulder head. Elongated right shoulder here in the euro. Either way, the neckline on those positions, both inverse and normal head and shoulders patterns, 113 in the euro, 100 in DXY. Mm-hmm. That's where we traded to today is the point of this long-winded explanation. You get to those thresholds once more, and the market stops at both of those places. So you can kind of tell, right? Gold gets to its 1 month, but doesn't climb through it.
Interesting. The euro chart and the gold chart look almost identical here.
Right. This is all, today was bad news. Was it enough bad news to get us off of the pre-scheduled programming that we were on by the end of last week? Did it really fundamentally change what we know about the market? In 2011, it was a taboo event. I personally will never forget where I was, part because I was so young. I was starting work. It was after work with a bunch of guys from the office. We're sitting on a bar in Wall Street, and the big flashing red headlines go across the monitor. Mm-hmm. I will never remember what happened when Moody's downgraded the United States. It's just not that kind of event. I forgot
about the Fitch one completely because they were talking, they'd been talking about it for like 10 years until they did it.
Yeah, I don't want to admit that out loud, but I will say that when I saw like, oh yeah, Moody's joins Fitch and S&P, it's like, oh yeah, Fitch did downgrade us.
It's like, oh yeah, Fitch finally did pull the trigger after wagging a finger out loud for like a decade. That's right.
It didn't matter. So
nobody even noticed.
I'm pressed. This is the kind of thing, Ilya, and I think there's part of me that wonders when this news came out. I would hope that Tom would be thinking about you in May, and would be thinking, "Oh God, Ilya and Chris are going to have such a field day with this." When in reality, I think our view is probably more like this matters less than anyone actually cares about.
We talked about it with Tom on First Call yesterday, and the idea that this is completely irrelevant to anything, and agreed on it. I would say if you want to hang your hat on anything as a reaction here, what's interesting is that the dollar doesn't want to reverse like stocks have. Bonds don't want to give the dollar even that. Bonds ultimately hold up, as we just looked at. Gold's a little bit higher. It doesn't want to capitulate on this, but really it's the dollar. The dollar is telling you, I don't want to take this as good news. And that's very curious, especially when, I mean, granted, you don't clear any lines in the sand, but 0.6% rise on the euro, 0.6% rise on the pound, 0.4% rise on the yen. For major currencies, 0.75 for the Aussie. I mean, for major currencies to have moves like this, these are not small moves.
Not small moves, but we've seen much bigger moves over the past month on a day-to-day basis.
We have.
I think also that's the context here, right? Like much bigger move on April 2nd, much bigger move on April 9th, much bigger move last Monday coming out of the U.S. trend.
April 9th.
Right? So just if we want to put this in like the pecking order of does the market really care about this, we've also unwound all the moves from April 2nd and April 9th.
Except in the dollar, which refuses to rebound.
So let me just take the question from start to finish then and close the loop here on this Monday edition of Futures Power Hour. Are you placing any trades today in the market predicated on a U.S. debt downgrade?
Not a single thing.
That's it. What's next on the calendar? It is a light week for the U.S. economy, right? The most important U.S. economic data comes out on Friday with the S&P global PMIs. Until then, it's a smattering of things abroad. Tonight, if you are trading the Australian dollar or perhaps anything China-related, if you're trading FXI or Bob or Baidu, this could be of interest to you. RBA rate decision, one of China's largest trading partners, sell a great deal of coal, energy to China, of course. And so if the demand is impacting the Australian economy or the trade wars are having any implications, you're going to see it and hear about it tonight. So let's pay attention to that, of course. Of course, we have tomorrow morning's Canadian CPI data. So again, 6C should be on your radar. And then a whole host of Fed speakers, which not for nothing, Fed speakers, what they say is important. Not important enough for the markets, though. It's a terrible running joke here.
Their name is Jerome Powell.
Exactly. So none of them are Jerome Powell. Unfortunately, the market has not been responsive to any other Fed speaker. Ilya, with that said, you and I are done here for now. You and I will be back later today, overtime, 4 p.m. Eastern, 3 Central, right after last call. So I will see you then again, my friend. Until then, everyone else, good luck trading. More Tasty Live coming at you next. After a brief break, we're finishing early here. My producers are going to love that. We're going to have Dr. Jim Schultz on with From Theory to Practice. See everyone soon.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Stephen and Lan, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. go on record as saying that. Tom,
Thanks.
you were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. Number 1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. Number 30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. Number 6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. Number 18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right, that's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Man, welcome to the birthday edition of what it is that we are trying to do. So today is Beth's birthday, our producer, our leader, our visionary, and I actually have the humble honor of sharing a birthday with Beth. So whenever someone asks you, do you share a birthday with a famous person, I, of course, always say it is Beth, the producer of the Tasty Live show. And so here we are. It's Monday. You made it. I made it. Hopefully, my video lasts for at least more than this, 7 or 8 minutes that we made it this morning with the Skinny on Options Abstract Applications with Tom and Tony. But alas, we will power through one way or another. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. You can celebrate if you're a bull. You can commiserate if you were all in on the Moody's downgrade as a bear. So Josh, bring us into the market. Do we still have a market? Yeah, we still got a little something. Okay, we're selling off all of a sudden now. The E-mid S&P's down a point. Whoo, baby, that is not looking good. That is not looking good at all. Got the risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product, down 8 points. Got the boomers leading the way, up a honey. And then you've got the Russell 2000 futures index, down 15 on the day. And so bonds are down. Notes are down, oil's down, UB40's down. Man, look at the shifties, though. You got gold up 40. Man, what's silver doing? How are the Hunt brothers doing today? I know that they've been slanging some pizza slices as of late, but okay, silver up 10 cents. Okay, it's not amazing, but it's a little something to the upside. And so the metals are, I guess they're kind of acting kind of safe haven-ish. Hey, look at the Bitcoin bros, though, man. You need a safe haven. Man, you go to Bitcoin. Like, you need a safe haven, you go to something that isn't even real money. BTC up $1,700 today. And so that is some impressive stuff. And then, of course, you've got volatility futures down 21 cents. You've got, which is right here, actually. So you've got volatility futures down 21 cents. And then you've got the spot volatility, the old VIX, is going to be up 84 cents on the day. And so, man, that's hard, man. That's slim pickings, man. Like, guys, we have fallen on hard times. Like, man, VIX up 80 cents to 18. Like, it wasn't that long ago that we were trading VIX, 26, VIX 28. The VIX would drop $2 down to like 31, and we'd be like, man, again, why even get out of bed? Like, VIX at 32, like, why even put pants on? And now we've got the VIX rallying 80 cents up to 18, and man, it sure feels pretty slow out there. Pretty slow indeed. But yeah, Friday, you had the Moody's downgrade. After the bell, I was sitting there actually getting the skinny ready. I was polishing up the skinny on the old Wiener process that I went through this morning. And it's funny, I saw people in the chat after the show, and I saw people, and several people emailed me, and they're like, Jim, like, this is way too theoretical. Like, this is way too out there. Like, how is this going to help me make money? Like, how is this going to help me become a better trader? Like, how is this going to help me adjust my strangles? And the answer to that is it's not necessarily. The answer to that is it's not necessarily going to give you kind of, the frontline ammunition that you need to kind of fight the battles that you're up against, day in and day out. But that's not the purpose of that show. Like, the purpose of that show is to kind of be a little bit out there. The purpose of that show is to kind of be a bit more theoretical and a bit more abstract. I mean, it's in the title of the show. And so honestly, we've been way more abstract than a Wiener process. Like, the Wiener process actually matters. Like, the Wiener process is actually relevant. Like, 7-layer dips, not relevant. Like, trading thermodynamics, these are names of segments I've done before, by the way. Not relevant at all. And so this was a huge uptick. Not only did you guys get the still shot Dr. Jim, which is obviously a huge uptick over the live feed, but the theoretical uptick, man, it was all there. It was all there. And so I don't know what more I can do. I'm going to try to find some things, but I don't think we're going to get too far indeed, because this morning was pretty much the peak. But all right, so let's go ahead. And remember, guys, if you have any questions for me, drop them in the chat box. I see lots of people are wishing me happy birthdays, which is amazing. Not only because I appreciate you guys so much, but now the algorithm appreciates you, and I appreciate you because the algorithm appreciates you. And so this is going to get pumped out to, people that are not even aware of tasty content, and they're going to think it's quality programming when it's really just a lot of B- humor with some birthday wishes kind of mixed in there. And so, but we'll take what we can get, man. Beggars can't be choosers. As far as the portfolio is concerned, if you have a question for me, drop it in the chat box. That's kind of what I meant to say there, as we got a bit sidetracked, which is not that uncommon. But if you have a question for me, drop it in the chat box. I'll get to as many as I can in the next few minutes here. Man, I see you guys in the chat, though. David Gallimore, I see Colonel's in the house. Man, I see Theta Traders in the house. Man, Chad is in the house. 40% just kind of slid into the YouTube chat there. And so that is some good stuff. As far as the portfolio is concerned, there's not too much going on, believe it or not. Like, we could go through kind of top down, but it's going to be very similar to everything we've done recently. I kind of want to do something a little bit different as a bit of a celebration, right? Just a little bit of a birthday something in the next couple of minutes. The only thing I did want to mention in classic victory lap fashion is our GLD. So GLD up $3 today. Again, you've got the shifties over here. GC, those are going to be your futures contracts, and then GLD, that's going to be kind of the equity ETF version of gold. Of course, they're both tracking to the cost or price of bullion. I don't know how much bullion is in Fort Knox, and neither do you. Are we actually going to live stream it? It doesn't look like we are. And so maybe they've got it, maybe they don't. I have no idea. But either way, GC is kind of the futures price of gold, and GLD is going to be more of a spot price of gold, like a today's price of gold. And of course, one is a futures product, and the other is more of an equity kind of ETF product. And so with GLD, we did this short put spread in gold. I think, did we do this just on Friday? I think we did do this on Friday. May 16th. We did this, so right before the weekend, right before the Moody's. I had no idea the Moody's was going to happen. Nobody else had any other idea that the Moody's was going to happen. But apparently the market kind of loves it. Like, the NASDAQ was down 300, earlier this morning. Now it's unched. Even the S&Ps were down 70 earlier this morning. Now they're unched. And so it looks like, man, we're just, if they take this thing down to AA, we're going to be all-time highs. Like, if they take this thing down to, like, single A, like, man, we are going to be 7,000. Like, that's crazy, man. You just got to trade the Moody's. You just got to listen to the Moody's tea leaves there. But on 5/16, we did this short put spread in gold for $1.95. And, over the weekend, as I was trying to process how I felt the Moody's situation would impact the market, and I tweeted about this. And so if you guys want to see if you want to check the tapes, then you can check the tapes. It's all there on the Twitter feed. I never delete any of my tweets, and I'm almost always wrong. So it's all there. But this time, I was kind of right a little bit. Like, not a lot of it, but a little bit. I said, hey, I don't know what's going to happen to equities, and I don't know what's going to happen to bonds. But I think being long gold going into Monday is probably going to be your best bet. Now, of course, I mean, I jokingly said it's going to gap up to 3,500. It didn't gap up to 3,500. So, maybe I was wrong in that regard. But, the shifties are happy with the move. I'm happy with the move just because we were right for the first time in 2025. And so usually, when it comes to my being right, the old adage kind of sell in May and go away is pretty accurate. So I would say that's the last time that you can expect a correct prognostication out of me on this show and or on my Twitter feed. So, but this spread is looking pretty good so far. We're not going to take it off yet because we still have a ways to go to get to 50% of max profit, and there's no reason to take it off right now. In my opinion, I'm not really if you've seen the show for any length of time, then you already know this is true. But I'm not really a should I stay or should I go kind of guy. Now I'm open to it. I'm open to it. I'm not so hard-lined, never change my mind, get new information, get new data, but I'm just going to stick with something because I'm just so, stubborn and so hard-headed that I'm not willing to kind of, adapt, and I'm not willing to be a bit flexible. But generally speaking, still, I like to stick to my profit targets, even if something works out really well in just a day or two. If something works out really well, like this gold spread, I mean, look, we're up 40 cents in a day. That's pretty good. That's a pretty good move for this spread. I know a lot of traders, when they get a move like that, they're going for 50% of max profit, but they get, 15 or 18%, or 20%, which would be the case, I guess, in this. Is that 20%? 40 cents on $1.90. That's a little over 20%, actually. 20% in a day, it's man, take it off. Take it off and redeploy the capital. Again, I'm open to it. I'm open-minded to change my stance, but my own personal default setting is to still just kind of stick with the original profit target and treat it more as you're having now kind of you've earned it. You've earned a catalyst into a higher probability of hitting that original profit target. Because that's the case. Of course, this thing could turn around. Of course, gold could fall out of bed. And of course, Peter Schiff could be wrong, which, I mean, he's been wrong a lot over the course of the last 38 years. So that could certainly happen again. And so if that does happen, then this put spread is going to be not doing so great. And I will wish I've taken it off. I would have taken it off. But right now, I'm going to leave it on because I still feel that being bullish gold right now in this environment, that might be the move. Now, again, if GC goes back to 34.50 or 34.75 or it prints all-time highs, then you got to be short. You got to be short. The buy them high and sell them higher, the sell them low and buy them lower, type of crowd. I don't know, man. I know a lot of people are making money that way, at least theoretically, at least according to the internet. But it doesn't make a lot of sense to me. It just doesn't resonate with me. And so anyway, that's our gold commentary. That's not really, that was kind of like a Rafael Devers Grand Slam victory lap right there. It was a victory lap in the moment, but we still got crushed. It was a victory lap. They were in the third inning, whenever it happened, but we still lost by 6 when the game was over. And so that was pretty much what that victory lap was right there in gold. And so, all right, so GLD, that's all I really want to talk about. And I want to get to you guys, man. I see you guys in the chat, and I appreciate you guys so much. Let me see you guys. I see Vinny's in the house, man. I'm Piprick in the house, man. Away from the numbers in the house, man. Look at you guys. See new people in the house. That's amazing. Here's what I want to do. So I was just thinking about this, right? I was thinking about how do I want to celebrate my birthday today, right? So my kids, that they're very excited about. They're like, "How old is Daddy? Is he 1,000? How old is Daddy?" Right? I'm like, "Yeah, I'm pretty close to 1,000." So they're very excited, right? They're like, "Well, what do you get for someone on their 1,000th birthday?" Amelia was like, "Mom, do we have 1,000 candles? This could be a problem." Well, so they're very excited about my birthday. They're very excited about, the celebration and whatever. And there's all kinds of things happening in the house right now that I don't know anything about. Well, when I was thinking about how I personally want to celebrate my birthday with you all, I was like, all right, for my birthday, there's 2 things. You really can't go wrong, right? Banana daiquiri in one hand, that's going to happen later. But then a freshly lit stack of cash on fire in the other hand. These are the 2 ways to celebrate a birthday properly. And so I thought, man, let's go to SPX. There's no binary events tomorrow. There's nothing on the calendar. Do you guys know of anything on the calendar? I don't know of anything on the calendar. I mean, yes, of course, we've got the Canadian durable goods, estimate forecast revision that comes out reliably every Tuesday. That's always a market mover. But other than that, we don't really have anything that is on the calendar. So I thought, man, let's do some SPX. Let's do just a little something, like a little warm-up set, This is like, a couple light sets of leg extensions before you get into your belt squats, before you get into your leg presses, right? We hit a little quads this morning, celebrated the birthday with some quads on a Monday to let the week and let the birthday know that we mean business. And so belt squats, great squat alternative, by the way, for those of you that are looking for a good squat alternative and you don't like, the spinal load from, putting something on your back or doing whatever. Belt squats, man. Find yourself a good gym with a belt squat apparatus and you can thank me later. And so for this, though, nothing crazy. I think that this move, though, is going to get reversed tomorrow. And by reversed, I mean, you look at the move, you're like, Jim, there is no move. Right? It's unched. That's no move. That's literally the definition of no move. That's the definition of a non-event. Yes, that's true. But this absolutely feels like an up day. 100%. Anyone who has been following the market, if you just jumped in midstream, then you have no idea what's going on, right? But if you kind of were watching like last night and then into the morning, it was obviously weak all morning. I didn't necessarily think it was going to crash or the bottom was going to fall out, whatever. But I said, all right, it may stay weak all day and then maybe a kind of a weak start to the week. But then it rallied all the way back, and we've had a slew of Fed speakers, so I don't know what all the Fed, cronies have said or haven't said or whatever. But whatever it is, the market basically likes it, and now we're unched, and it feels green though. This doesn't feel like a gray. This doesn't feel like a black, like a non-event. It's no longer red, and it feels very, very green. So I think that this is going to get reversed tomorrow. Now, again, keep in mind what I said earlier. My track record is not very good. My track record is right on par with the 2025 Boston Red Sox. On any given day, on any given Sunday, for my Willie Beeman fans, we're going to lose. I'm going to be wrong. And so I'm going to play the market going lower tomorrow, but you have been forewarned. I would not tail this trade. I would fade this trade till the cows come home. So if I look at the expected move, though, in SPX, so I'm just looking to do an expected move butterfly, which is kind of fun, honestly, because we always do these related to a binary event. Like we always do these when it's some kind of Fed number or some kind of CPI number or some kind of PPI number, PCE, jobs reports, jobless claims, Canadian durable goods, etc. Like there's always something attached to these butterflies. It's kind of fun. It kind of feels free, honestly. Like I feel like I've untapped some freedom here, like some William Wallace type stuff when it comes to doing a butterfly. It's not tied to anything. It's just tied to the market tomorrow. And what's cool is, the expected move and the implied volatility, for the day, it's going to bake in anything that might be kind of happening on the horizon. It's going to bake in your Canadian durable goods prints. It's going to break in, or bake in, I should say, your NFP numbers. And so it's like you don't necessarily need a binary event to kind of get the juices going. Like if you really have a hankering to light a stack of cash on fire, the market's there for you, man. Like the market is there for you. It will oblige your every desire. And so that's kind of what I'm looking to do here. So what I want to do, well, actually what my assistant wants to do, which she's kind of off her game today because she's in there baking cakes and stuff. And so keep in mind that this may not be her best work. But I'm thinking 59.50, 59.15, 58.80. These are her strikes. If it doesn't work. If it worked, then it was my trade all along. But we're just thinking maybe, $35 wide, expected move butterfly. $6? Wow, that's super expensive. All right, so I'm gonna have to adjust this a little bit. We got to do a little bit of work on this because that's a little crazy. I'm all for lighting stacks of cash on fire, and if you've seen the show for any length of time, you know that's true. But still, we want to be somewhat mindful. Like there's a certain level of thickness that I don't like to surpass when it comes to, said stack of cash that is going to be set ablaze here pretty quickly. What if, let's move, well, I'm actually not even really at the expected move, so that's kind of a little bit of a problem. So if you look at the screen, if you're an audio-only listener right now, man, I appreciate you. I appreciate you more than the A plus V crowd because you're really getting after it, man. Like you really, really want it. Not quite like the AV crowd. They get it easy. They get the visuals, they get the audios, they get everything. And so you guys that are just listening, I am looking at a 59.50, 59.15, 58.80 put butterfly in SPX. SPX is currently at 59.50, so I'm right with the at the money strike on that top side put. The expected move actually runs down to about almost 59.10. maybe 59.11 or so. And so I'm actually inside the expected move with my short strike selection. And so I don't really want to do that. I'd rather peg this kind of right at the expected move or maybe even slightly beyond. And so I'm thinking here, and what will happen by moving this away from where it is now, this is going to lessen the cost because it's going to become a lower probability trade. Essentially, whenever you do a butterfly, the closer you stay to kind of neutral, it's going to be the highest probability proposition. It's kind of similar to selling a triangle in that regard, where you essentially just need kind of non-movement to make the most amount of money. And that makes sense because if you think back to like leptokurtic distributions, another theoretical piece that we did on Monday mornings that's extremely valuable. That's not going to help you roll your untested side, but it is going to help you kind of set the overall theme of what it is you're trying to do. Well, leptokurtic distribution reminds us that many observations stay around the mean. They kind of stay around where the current stock price is in a financial asset context. And so that's really helpful to know and to understand when it comes to, it looks like this reversal, it's actually happening now. I need to get this trade on. You got EME S&P's down 8, risk-free instrument down 47. Man, we got to get this thing working here really quick. But leptokurtics, Wiener processes, martingales, Markov chains, all kinds of crazy stuff. I think it's helpful from a background standpoint. Not to mention, the content's not going to write itself, guys. Right? This content's not going to create itself, right? If I look at this, though, let's move the strikes down. Let's make this really simple. I'm going to move it down. I'm going to go from 59.50 to 59.40 on the top side put. I'm going to go from 59.15 to 59.05 on the middle puts, and then 58.80 to 58.70. All right, that's much better. So now the cost is around $5, $5 to $5.20 it looks like. We'll see where we get filled here in a minute. But I like this a lot better because now the stack of cash, the amount of ashes, the pile of ashes in the end is going to be a bit smaller, and so that's good. Like there is going to be a pile of ashes, and all you can really do is just try to minimize that to the best of your ability. And so I think this is it. A little SPX butterfly action to the downside. The crash is happening right now. Even the S&P is down 9.25. And so you've been warned. Moody's tried to warn you, man. They tried to do it, and you just didn't listen. So let's go ahead and let's see here. Let's go. Let's try 520. See if we can get filled here really quick. All right, so we got filled at 520. Boom, there you go. So SPX butterfly, we're in. We're ready to go. And that's going to be our trade for tomorrow. And now this gives you a reason to watch the show tomorrow, right? You probably didn't have a reason to watch the show tomorrow. And if you're brand new, you're like, I'm certainly not coming back. But now you're like, I don't know, maybe I'll give it a look. Maybe I'll see how he manages, this trade when it goes completely against him. So you got to tune in tomorrow to find out. So all right, let's see where you guys are at. Man, where are you guys at? We're right at about the halfway part of the show. And so what I'm going to do, man, I see you guys. Look at you guys. Man, look at you guys. Dave S. in the house. Arjun Pur's in the house. Andrew Cortado's in the house. Man, it's awesome. Let me try to find somebody in the middle to surprise and delight. And so let me see if I can find one. I'm trying to find one that just strikes my fancy. It could be a question. It could be, a story, a joke, a comment. It could be a lot of different things. And so let's see. Trying to find something that is appropriate. Lots of inappropriate comments today. And so let's see. Where are we at? Oh, here we go. Oh, this is kind of funny. And this has nothing to do with trading. So I'm about to steal 4 or 5 minutes of your life that you're never going to get back if you came to the show for trading only content. Which if you did that, that's your own fault. Right? You only have yourself to blame for that. But Data Trader says low bar back squat. The only acceptable modification is a properly fitted belt on the heaviest work sets and find some flat, hard-soled shoes. Everything you said is correct. Everything I've done low bar squats, or did I should say. Low bar squats for many years, probably close to 10, I would say. And I was using a fairly, I would say appreciable weights. Everything you said is correct. Use the belt, hard-soled shoes, squat shoes, flat shoes, well, all that stuff is all correct. Once again, you've got to know what you're signing up for. Your elbows are going to get beaten to a pulp. Your shoulders are going to get beaten to a pulp. So as long as you know what you're signing up for, that's fine. Go for it. Look, if you don't want to be able to lift when you're 45, I mean, I'm 44 today, so I got about 12 months left, right? But if you want to not be able to move your arm fully when you're 47, go for it, man. 100% go for it. Low bar back squats will get you there when there are so many better alternatives, so many superior alternatives, right? And so yes, low bar back squats, 100% agree. And by that, I mean a 0% agree. There are so many better alternatives. But thank you, Theta Trader. I appreciate you, my friend. And so let's see, where are we at? Sam L's in the house. Says Dr. Jim's in the house. What's going on there, Sam L? I appreciate you, my friend. Thank you so much for being here. And then Sam L says, Doc, nothing scares the children anymore. Not even Moody's. That's correct. Man, Moody's came out and they gave the old USA Credit Karma score a little ding, and nobody cares. Nobody cares. It's unbelievable. I mean, maybe they're starting to care now, though. NASDAQ down 50. And so we'll have to see. What are we even doing here? I don't know. Our risk-free instrument might just close green today. Yeah, I mean, it certainly feels like it's going to close green. And again, in my opinion, and maybe I stand alone in this regard, but I would be willing to say a lot of you agree with me on this. An unched day today would feel green. It would feel very green. NASDAQ down 40 kind of feels a little bit green. It may not be bright lime green, but you're getting kind of you're getting a little something, kind of like a sea green, where you look out to the ocean, you're like, is that blue? Is that green? I'm not really sure. But NASDAQ down 3840 is, it feels pretty good, man, relative to being down, where was the NASDAQ? Hold on. I know it was down 300 at one point, but was it even lower than that? Let's take a look. So the NASDAQ, the old NQ, the low today was 21,112. So the low today was 21,112. It is currently 21,466. So that's 350 points lower than where it is now. So that means at one point today, whenever that point was, I don't feel like looking at the, my Errol Coleman settings to figure out when that was. It was down almost 400, 390 or 395 at one point. That's a pretty significant drop. Now, it's not limit down like the internet assured me it was going to happen based on the Moody's downgrade, but it's a little something. It's something to catch your attention. But yeah, only down 44. Pretty impressive stuff. And so let's see here. Daniel, greetings from Italy, Dr. Jim. Doing strategy, right? The do nothing strategy, oftentimes the most effective strategy, right? Oftentimes the best adjustment approach that you could take, but it's very, very hard to do. Very hard to do, especially when, I think one thing too to remember is we are kind of trained up. We are conditioned as active traders to be active. We are conditioned to look for opportunities. We are conditioned to use our skill set, to take all the things we've been equipped with and deploy them in the marketplace kind of as we see fit. And that's all well and good. I mean, that's what we're training ourselves for. But we need to remember, and you're kind of going through this right now, so just let me encourage you, that the do nothing strategy is so powerful. The do nothing strategy, is absolutely effective so much of the time. And part of the reason why is because of all the heavy lifting, pun intended, that we do on the front end. It's very similar to you go in to do some quads. I don't even do my extensions first. I do my extensions last. Right? I do my belt squats, and then I do my presses, and then I do my extensions. So by the time I get to extensions, it's man, I mean, I'm gonna get into these. I'm gonna do the best I can. But the heavy work's already been done. The growth has already happened. And so it's kind of the same thing when it comes to sitting on your hands with selling premium. By the simple strategies that we select, selling premium, short strangles, short puts, ratio spreads. I mean, defined risk too, but the undefined risk is where the real magic is. As you guys know, that's how I feel. I've said that so many times on the show before. When you get into these strategies, they're so effective kind of on their own. They don't need you to get in there and meddle with them too much. They really don't. Now, it's not like a set it and forget it, dividend reinvestment program. It's nothing like that. But still, I think a lot of us, sometimes feel like we need to zig and zag and dance between raindrops, kind of day in and day out. And I really don't think that that's necessary. And I think a lot of times it actually backfires. And so, Baruch Denu, I know you can do it, my friend. I have ultimate faith that you can get it done. And so let's see. Paul Heyman says, chance for a beer before Dr. Jim. There you go. I hope you got it done. I'd go banana daiquiri, though, personally, if it were me. Brad Glazier's in the house. Greetings, Professor. Is the likelihood of a short put on ES being assigned early the same in practice as what would be seen on a short put in stock being assigned early? Okay, so I think the question is, the indexes versus individual stocks? Is that kind of the question? I think that's the root of the question. Is there any difference between, early assignment probabilities between indexes and individual stocks? I don't know. I genuinely don't know. I don't think so. There's nothing that is jumping out at me in my head as I think through the question that would lead me to believe that there is going to be a difference, but I could be missing something. There could be something out there that I'm just not aware of. But there's nothing that makes sense to me here on the front end that would cause there to be a great discrepancy between the probability of early assignment on an index like ES or even SPY relative to an individual stock. And if your question is also futures versus kind of equity option positions, same answer. I don't know. I don't think so, but I don't know. I don't know in full. And so I appreciate you though, Brad Glazer. Thank you for being here. Space Explorer says, happy birthday. Thank you, my friend. I appreciate you so much. Sergio says, greetings, Dr. Jim. Happy birthday, man. I appreciate you. Kyle Hamill, JDD, man, look at you guys. Colonel, man, look at you guys. I appreciate you guys so much. David Gallimore says, hey, Dr. Jim, can I get a high gloss copy of the pic of you from this morning? I want one for the bathroom. Yes, I guess it's going in the bathroom at the Tasty Live Studios there in Chicago, which my express apologies for all the, all of my, male counterparts that are going to have to, deal with that. That's going to be brutal. That's brutal. But yeah, it was fun this morning when they got the still shot of Dr. Jim. That was a huge uptick over the live feed, and we had a lot of fun with it. And I always like to, we throw shade at each other, we playfully jab at each other, whatever. But Tom and Tony are the best. They're literally the best. And I love being on air with them, and we had a lot of fun with it, and we made the best of it. And so if you missed this morning's show, go back and watch, because it was only within the first few minutes, my video feed dropped, and then we just kept going. We just kept going with my radio only voice, which is kind of, is that an uptick? I don't think so. But once they brought in the still shot, that's what drove it home. And so David Gallimore, I'll see, you got to reach out to Tom. He may take all the copies for himself. And so he's probably going to have the full supply. And so he's probably going to be the one you need to go to, unless, a black market emerges, which could also happen. So Theta Trader says, greetings from Big Scotty, Wisconsin. I guess so. Big Scotty. That's got to be Wisconsin. Let's see. Current market position. Long SPY at 600. Short the 615. 615 call. Just over under all-time high. I hate this trade, so probably a good one. I'm assuming you meant to say short the 615 call. I'm guessing. And so, yeah, I mean, that's kind of it's a covered call, right? I mean, that's right where you're at. SPY is 593. Yeah, I mean, it's a covered call basically, And so, I mean, 615 is that's up here, right? So that's going to be, I think, above. What is the high over there? The high of SPY is 613 and some change. And so, yeah, I mean, if you're looking to bring premium in against long shares, I mean, that's the way to do it, right? I mean, you have out of the money calls. I mean, that's the best case scenario, of course, the best case scenario for you is SPY runs up to 615 and goes no further. Right. If it goes in the money, it goes through 615. That's still a good outcome for you. It's a high quality problem. If the stock goes nowhere, it's a good outcome for you too, because you pick up the premium on the short call. So that's not a bad thing either. But yeah, best case scenario for you is another 20 points on SPY. So you should be rooting for some more Moody's downgrades. Again, I think you need 20 points in the SPY. You're 1 to maybe 1.5 downgrades away from hitting that number. And so that should be you should be good to go. So Vincent's in the house. What's going on there, Vincent? Thank you, my friend. Sam L says Doc's back in the shirt rotation. Rocking black. It's actually dark gray. You guys can't tell this is dark gray. It's kind of like a charcoal, I would say. Like it's leg day. It is leg day. Serious, heavy, and no room for excuses. That's 100% right. That's 100% right. And so this morning, when I had actually done quads before I before I did the show on the Wiener process with Tom and Tony. And so I needed to be in the right mindset. And obviously coming off of quads, coming off of belt squats, presses, extensions. And I got into some extensions. And so I was like, yeah, today's a gray shirt day. We can't be messing around with magentas. We can't be, there's no lime greens today. And I'm not even working at Publix today. I got a shift tomorrow, but I'm off today. So Theta Traders in the house says, let's see, get Swifty. Was that a Rick and Morty reference? No, it was not. That's a Peter Schiff reference that we use often here on the show. Dab's in the house. What's going on there, Dab? I appreciate you. Chad's in the house. The video is showing a bunch of crime candles On the 3-minute chart, man, I didn't know that you guys had access to the Errol Coleman settings, but apparently you do. Let's go to a 3-minute chart. Man, 3 minutes. Can I even do a 3-minute? Hold on. Let's do, yeah, there we go. 3-minute chart. Let's just do like today. Whoa, look at that. Yeah, I don't know what any of that is. Man, this must be all the, the dark pool liquidity, whatever that is. And, do you guys remember, man, I should know the answer to this, but I don't. Do you guys remember, this was not that long ago. This was maybe 2 years ago, a year and a half ago, I want to say. When there was that huge, mistake, that huge error by the NYSE, like on the open, that like all like the Dow stocks and like all like the S&P 100 stocks, like a bunch of stocks had like a huge drop, like in like a flash. It was a bit of a flash crash, but it didn't stick, and they just came all the way back. This happened. It was very recent. I'm not talking like there was obviously the flash crash from like 2013 or whatever that was. I'm not talking about that. This was in the last couple of years, where like everything crashed, but then within like 2 to 5 seconds, I want to say, everything was back, and we were like, "What was that? Like that's crazy." And I think the NYSE came out and said like there was a mistake, there was some kind of quote fee, some kind of something, and I'm like, that is vicious. That is vicious, right? When you start getting into like stop orders and stuff, like that's really crazy. Now, again, I mean, that's a small reason why I personally don't like stop orders, but it's one of the reasons. I'm just like, man, you get something crazy to hit the tape that really didn't do anything materially either way, but it gets you out at the worst possible price and then just comes right back. And I'm not talking about market manipulation. I'm not talking about, stop hunts. I'm not talking about any of that. I'm talking about actual like errors that do happen, right? Because again, I mean, the VIX interns, I mean, they messed up that VIX 65 print from, August or whatever. And so it's like this stuff happens. It's like, man, like how do they reconcile that? And this is what I should know the answer to, but I don't remember ever kind of figuring out what happened with that. Because I just remember looking at it and say, wow, that was crazy. And then I just kind of went on about my day because it didn't really impact me one way or another. And you guys, I don't remember you guys asking me about it too much either. But am I crazy? Do you guys remember that? Like, I'm pretty sure that happened in the last couple of years. And I don't remember what happened with it. But that's vicious, man. And it looks like the same thing is happening there with that NVIDIA chart. Pretty crazy stuff. 40%'s in the house. What's up, Dr. Jim? How are you trading with UNH? I'm not touching it. What about a 280, 290 put spread for July 18th? I may touch it now, though. Let's go to UNH. Let's go to UNH. Why light one stack of cash on fire when you can light two? All right, so we're back. United Health up 7% today. Looking pretty good. Looking pretty good indeed. And so is the strength going to continue? I don't know, and neither does anyone else. 40% wants to play this thing as a continued play to the upside. Let's get off the Errol Coleman settings. Let's go to like a daily. Give me like a 6-month. Man, that looks like some Solana or something. Man, look at that. Is that the Batcoin? Or is this an inverse fart coin? I think this is an inverse fart coin chart, because we all know that, I mean, fart coin that's what we really should be doing. Messing around with all this other stuff is just a waste of time. But man, look at this. So is it going to come off the bottom? I don't know, maybe. I like it there, 40%. So let's do it. And I like the fact that it's undefined, or that it's defined risk, simply because I do think that undefined risk is the way forward. But still, when you're doing undefined risk in individual names, you have to be, you got to be a little aware of what's going on. And apparently right now UNH is absolutely in play. Lots of things happening. And you're thinking, what, July, I'm guessing? Yeah, July 18th, 290, 280. Can we get $4 for it? Okay, 358. All right, so I may snuggle up against the stock price a little bit more, a little closer. Yeah, I'm going to do a 300, 290. Which gives me less room, right? Obviously, but I like collecting more just in case it doesn't work, right? Because when it comes to defined risk, you only have so many opportunities to reduce your risk and to kind of mitigate your maximum loss. And the best opportunity, in my opinion, is at trade entry. And so one of the ways to do that is to collect a little bit more. Now you have to give something up, of course. A gimme must be met with a gotcha. And so the thing that we're giving up is going to be our probability of profit. So the pop now is 55%. When we were at the 290, 280, which is what 40% suggested, it's 60%. I think this is a great trade. I think this is a fine trade. You're over 1/3 the width of the strikes, which is kind of the reference point based on kind of the tasty mechanics. But again, the goal of the tasty mechanics is not to have you just blindly follow them through the forest, right? At least that's how I interpret them. The goal of the tasty mechanics is to get you thinking for yourself. The goal of the tasty mechanics is to give you reference points and guides. It's not for just rote memorization and it's like, well, I'm just going to do that and not think for myself. No, it's to give you reference points that have been looked at and studied empirically and say, all right, this is a really good starting point. And then take from that and start to make it your own. Like take from that and start to kind of craft your own style. Like, you know, some of the things you see me do. Like, for example, collecting more on a defined risk strategy. For example, being a little bit more patient with some of my, you know, undefined risk adjustments where I don't always adjust when the strike is hit. Sometimes I'm a little bit more patient. Yes, that means Tom texts me more often. Yes, that means that Scott Sheridan may come by the property from time to time, but it's worth it. It's worth it. Now, I do try to avoid as many Tom texts as I possibly can, but sometimes, man, he's relentless. I'm like, this dude is just lonely. But right here, 290, 280, it's good. I like a 300, 290, though. I think we go 300, 290. This is going to give us a little over $4 and kind of minimize that max loss. So let's go ahead and let's see here. We'll go in at about 4. Yeah, okay, so we're filled at 413. I like it there, 40%. Thank you, my friend. That's a good looking trade. I like it a lot. So let's see who's next. Dav's in the house. What's going on there, Dav? Ajit says, do your Wiener presentation from this AM. Yeah, I'm not going to do that. That's kind of a one hit thing. I did a similar presentation back in 2020, but I was like, man, that was 5 years ago. So I was like, let's do another Wiener presentation again. And so, you know, if I'm still at Tasty in 2030, right, what do you guys think the delta is? I'm curious. Let me know. Even if I don't get to it on the show, which obviously, I mean, it won't. But I would like to know, what do you think the delta is that I'm still at Tasty in 5 years? If I'm still at Tasty in 5 years, in 2030, I will do another Wiener presentation. I will do another Wiener skinny. So what do you think the delta is that in 2030, right, you get to, again, tune in for a Dr. Jim, Tom Sosnoff, Tony Batista, skinny on options, abstract applications, right? Personally, I'm not sure it's positive. I'm not sure it's above zero. I'm like, man, so many things would have to go right. You want to talk about dancing between raindrops? You want to talk about cheating death? I'm like, man, I don't know, dude. 5 more years? I mean, everybody in the room when I was hired didn't think it would go past 36 months. And so we're all surprised, myself included. And so 2030, whoa, that would really be something. But yeah, Ajay, you can watch the one from this morning. I don't know that I could do a better job right here, right now. And so Vinny at 187 says, it's my birthday today as well. Man, look at you, Vinny. In the UK, also going to the Tasty UK event. It's going to be amazing. It's going to be absolutely incredible. And so that's so cool that you're going to get to make it out to the Tasty event. That's awesome. And happy birthday, my friend. This is your 50th, May 19th. It's a cool birthday because I feel like it's very feng shui. And again, we're biased, right? Vinny, we're biased, but who cares? This is our birthday. We can do whatever we want. It's very feng shui. Like, we're not like, you know, we're not crowded out by Christmas. Like, I'm not like up against potentially Easter. Like, I don't have to worry about sharing it with like Memorial Day or like, you know, Thanksgiving or Halloween or whatever. It's like, man, we stand alone. We stand alone in the middle of May. And usually if the weather's beautiful outside, no matter where you're at, like even in Chicago, I think it's beautiful. And by beautiful, I mean, you got a 20% chance of flurries. But that's still better than most days, right? And so I'm like, man, it's usually amazing outside. Everybody's happy. It's just a good day to have a birthday. And so, Vinny, happy birthday, my friend. Theta Trader says, no Wiener presentations. Yes, I agree. I'm going to sidestep the inappropriateness of all of this to the best of my ability. Chaz in the house, looking like he wants to do some Forex stuff. I think that's what that is. Oh, by the way, special announcement. So this Thursday, in 3 days, we're going to do a totally different from Theory to Practice. I'm having Glenn come on the show, and we're going to talk about some Tasty FX. So he's going to come on the show. We're going to talk about Tasty FX. I'm going to have a co-host from Theory to Practice, and we're going to take questions from you all about Tasty FX. So it's going to be awesome. I'm really looking forward to it. And so be on the lookout for that. That's going to be on Thursday of this week. I'm Piprick says, Moody's setting the mood for the market. Yes, apparently they are. Away from the numbers says, hey, Jim, UK-based. I appreciate you, my friend. Thanks for your options crash course. Super content helping launch me into using Tasty. Man, that's amazing. away from the numbers, thank you so much for investing in my content and the network and obviously Tasty Trade. And that's really cool, man. Thank you so very much. If I can ever help you, man, please reach out. I'm so happy to do it. It's very encouraging and rewarding for me professionally and personally when I get really positive feedback on, the content like that. We have the new crash course. It might be released. I haven't heard anything because I was out, not last week, but the week before. It could be released very soon. And by very soon, I mean, it could be like just a week or so. I don't know. But I know that, I'm done at this point. I've given all the content, all the recordings and whatever. Now, Ryan and, you've got Matt, you've got Jessica, you got Cassie and Dean, you got Rachel. They're all working so hard on getting this thing out there. So, it takes as long as it takes, right? It's like, they're going to do an amazing job. So we certainly don't want to rush the process. But man, I'm really excited about this one. It's very different from any of the ones that we've done before. Very different. It's very different from a content standpoint, and it's very different from a presentation standpoint, like a graphic standpoint. And I really hope that you guys like it. I think you guys are gonna really dig it. And so let's see. Theta Trader says, a quadruple A rating. You send over a bat team and reason with them. Yes, send over the Batistas to negotiate the USA credit rating. They could probably do pretty good. My man sold jeans out of his trunk in the 80s to make ends meet. And so if anybody can negotiate, it's probably the bat. And so that's who I would send. Send all the Batistas. Send the whole trio, man. Send Tony. Send Nick. Send Vinny. Send all of them. Right? Hit them with a little triage of Batistas. That's probably 3 too many Batistas. And so they should wear them down just from simple overwhelm. But Lobo does Chicago style wieners. They have the Wiener circle, I think, which is huge, right? That's your classic Chicago style wiener. I never had one. I honestly never had one. And so, I kind of feel kind of ashamed to admit that publicly. But, we were in Chicago for almost 5 years, and I never made it over there. And so I'm not a huge hot dog guy, but I should have made it over there just from a kind of like a landmark standpoint. But I never made it. And then AV said, "Hey, Dr. Jim, what's today's leg day?" Man, how did you guys know? You guys knew this before I even started talking about quads and leg extensions and whatever. Man, you guys are on to me. I'm going to have to start doing delts on Monday. I'm going to have to start doing buys and tries on Monday, which we all know you're not allowed to do. But just to kind of throw you guys off the scent a little bit, I'm gonna have to do a little something. But guys, we made it to the end of the show. I can't believe it. I really can't believe that this is over. Man, crazy stuff. But it's exciting for me because now I'm only a couple hours away from Banana Daiquiri. So I appreciate you guys so much. I appreciate you guys so very much. And if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultz F3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's going on, everybody? Downgrade of U.S. debt? Not a problem. Market easily buys up that issue between now and in the past weekend. So we're going to talk about that and all the stuff going on this week. Welcome to the most dangerous show on the tastylive Network. Folks, it's Engineering Trade. I'm your host, Jamal Chandler. But enough about me. It's Monday. And I got a special guest in the house, Josh Fabian, rocking the mic on the ones and twos. What's up, man?
Yeah, I thought you were referencing my MTV shirt.
I did see that. Yeah, I did see that. It's kind of cool.
Yeah.
Is
Like,
that new?
Like,
or is that all?
No, I just got it. Yeah, my kids are like, I was watching music videos and like, what is this? Your guess is as good as mine. This is back when people that made songs thought that they could also make like art.
Yeah, right. Yeah. Oh, my wife records whatever. Well, so we have MTV. She records like the '90s, but whatever it is. I don't even remember the name of the different shows. What are the shows? I don't remember. There's one like with just 90s rock.
Yeah.
Record that one. There's one like hip hop. We record those and we'll just like rewind them and watch them.
It's hilarious.
Yeah.
It's absolutely hilarious.
Yeah, it's good stuff.
Yeah, that's what I do on the weekends.
So that's what you did this past week.
That's what I did yesterday morning. How about you? What did you do?
I was pretty chill. I really don't even remember. It's funny. I was talking to Tom. We were walking. I was like, what'd you do this weekend? He was like, oh, I played golf. It's like, but other than that, I don't remember. Is that bad?
Yeah, I don't.
And as much as I wanted to make a senior moment joke, I'm like, no, actually, I really don't remember much of what I did this weekend.
I have no idea.
I didn't really. Well, I was pretty chill this weekend because the weekend before, as you know, I was moving around. We traveled, so this weekend was really chill for sure. And not a whole lot going on. Been watching basketball though. Been watching the playoffs. Both hockey and basketball have been good.
Yeah.
You know what's interesting? It would be fascinating. I know you said this off air about you think Minnesota and the Knicks are going to be there.
I had said I want them to be there.
Well, yeah, I mean, obviously, what makes it even more interesting is the trade. Remember that?
The trade for what?
Everybody keeps forgetting about the trade.
What trade are you talking about?
They had a big trade. Remember, Julius Randle was playing for the Knicks.
Oh, yeah. Oh, yeah.
Right? So that's what makes that potential matchup even more interesting. I mean, obviously, I would say that's probably the one that the NBA would be rooting for. So if it's really rigged,
for sure,
like it was for the lottery thing a couple of weeks ago, then that shit was rigged as hell, dude. Come on, man. Look, I have always refuted when people say something's rigged, like in professional sports. But it's getting more and more ridiculous. And you know what? Nobody can say anything. It's not like you can go to a commission and say, I need you to redo this. Who's going to complain in the NBA?
Rigged.
Who's going to complain? 1.8% chance, and it just so happens to go to Dallas.
1.8% chance.
The team that just got rid of their biggest star in a very long time.
Yeah. You're telling me that if the pick hadn't gone to even Chicago would have been a huge pickup. It would have made them pretty serious contender. I think.
Yeah, so why didn't it go to Chicago?
Because it's rigged.
Because they wanted it to. Dallas already had they already made a decision it was going to go to Dallas. It's rigged. Who's going to complain? That's the best part about it. Who's going to complain?
You, apparently.
Yeah, but who's going to actually complain that can do something about it? There's no commission that's going to be put together to check and see if it's rigged because they can just rig it and nobody can do anything about it.
Something happened in the last week, or what went against?
Why wouldn't you think it's not rigged? Why wouldn't you think? What makes you think it's not rigged?
Because I believe in statistics, and sometimes the long shot pays.
Really? It's paid quite a few times in this NBA lottery, by the way. Certainly paid for us.
When
we got Derrick Rose, we had like a 1.8% chance. Yeah, exactly. See what I mean?
That may have been rigged.
That was definitely rigged. This week is chock full of nothing to do.
This week is so boring.
I mean, but don't you think that's we earned?
I think we earned that. Yeah, I think that absolutely. That is not a coincidence. That was going into Memorial Day weekend. Like, just you have everybody in the Fed that's worked at the Fed that knows somebody that worked at the Fed. They're all speaking, other than Powell.
Yeah, so it's like, who cares what they have to say? I mean,
You've got basically nothing going on with. I think you have manufacturing and services PMI later in the week, but like whatever.
Yeah, I don't really pay attention to those.
Yeah. The only thing that I'm kind of interested in hearing is the retailers, like Target.
Is that a lot of those earnings this week?
Yeah.
I guess you're right.
Because after what Walmart said, and the fascinating thing about Walmart is 2/3 of Walmart products are either made, grown, or assembled in the U.S. That's on their website.
Is it?
Yeah.
So why would they say that? Why did they complain about that? I mean,
I don't know, because apparently 1/3 of the products are going to go up in price, and I don't know what the breakout is in terms of what products are imported, but
I don't know neither.
But it's interesting that they made the statement. They got their hand slapped for saying that they were told that they should eat the tariffs that nobody was going to have to pay for, but now apparently somebody does. But I'm just curious what these guys have to say. Are they seeing signs of pricing pressures, or what's their plan?
Yeah, I think it is. I'm looking at some of the earnings that are coming up. Home Depot, Intuit, TJX, Lowe's, Penn W. And this sorted here by like the largest market cap. Any of those interest you?
Nope. Not the least bit. No. I feel like if you do an earnings trade this week, it's because you're trying to force something. I think that this market, I actually think one trade I probably interests me the most would be like to sell like a straddle for Friday in the index, in an index product. I just don't think we're going to move much.
No, I don't think we are neither. You talk about that's a good time to let's pull up the platform here and take a look at the straddle for the week. Right now, 59.55. You want to sell this straddle?
$82. I mean,
cool. You got 119,000 to give me? I'll sell it for you.
I could do a few of those in Tom's account.
No, I'm with you. I mean, that's my.
What if you go 50 points wide on it? What do you?
50 points wide?
Yeah.
You mean from here?
Yeah.
So
like just buy wings 50 points out. No, do the straddle, do the.
Oh, gotcha.
The iron fly.
50 points wide. Well, here. And then that way.
Like what, $40? I'm guessing.
Yup.
You can even that I find. I don't know. It's not. I just think that it's going to be a sideways week overall.
I feel like it might be too. I mean, it's just been nonstop tariff talk for a while, and then obviously over the last couple of weeks that's calmed down. Markets have bounced back, and yeah, I mean, this could be.
I think it's going. Yeah, I think it'll be a quiet week. I think that I don't think you'll hear much on trade talk this week. If I had to guess, everybody's gonna get out of town for the weekend.
I'm gonna do it.
Early. What'd you do?
See if we get filled.
You 50 wide?
Yeah, 50 wide.
I just
see what happens.
If I was gonna take a shot, this is the week I would do it.
That's what I was saying. Honestly, I think it's the week to take a shot for something like that. Maybe even in some of the higher vol, like high flyer names. I just did that actually a little earlier. I sold a strangle. Oh boy, that was still fast, Phil. I sold a strangle in CoreWeek, which is named and moving around a lot. CRWV. I sold a strangle in HIMS. Yeah, maybe I am forcing trades, but I actually had closed out a bunch of things like early last week.
Yeah.
And maybe you put on a few. Like I said, I'm long the Dow future. I'm long a Russell future. Obviously, those are the ones that really been underperforming since the market got flying. And yeah, I don't really have much on right now. You asked me offline, do I think that we could see volatility again? We could see market pick up again? I don't know, but I guess that's the interesting thing about right now is that anything is possible. And so I just figured it would be cool to close up shop and on a lot of capital and just look to redeploy if we do get some crazy things going on. You know what I mean? Like, why not?
I guess my question is, like, where's VIX now? 18? Like, I don't see us going back to 16. I just don't see how you can, because all the stuff that caused the volatility, it's not over. We're on, tariff things on pause. And there's still a lot of stuff up in the air. I think we've just sort of gotten to a point where we're like, okay, for the 90 days, this is where we can kind of expect things. Like, nobody's really expecting a huge shock, but I don't know that as we get, what was it, May, June? So as we get, that'd be like 4th of July weekend is when that stuff would expire.
That's really not that far away.
No, it's not. That's what I was thinking. Like, you're almost selling.
Like, is that 6 weeks? That might be 6 weeks.
You're at the point now where you're kind of looking at July positions to sell, and it's something that I probably would be keeping in mind that, like, hey, you could get, some volatility just leading into that, even if nothing's announced, as people are waiting for something to be said.
Data Trader says the SPY momentum is stupid. It's been on the run recently, and
27.
You know what? It's crazy. Again, we started overnight down. It was interesting how that went down because the two things. I believe this was on Friday. This is really messed up. What I'm about to say. I shouldn't say it, but whatever.
Go ahead. I need to drink my Red Bull.
There was the downgrade, which was news on Friday after the close, right? And Smokey Robinson too, man. It was some news about Smokey Robinson and sexual assault. Damn. What?
Like, how old is he? He's gotta be 80, right?
Oh, he's like 80 for sure, easily.
Yeah.
Like 83. He looks great for his age, but man.
He's had a little work done.
All of our heroes, man.
I know. Yeah, I saw that about Smokey. Like, really? Are you sure? Are we sure?
Only bad news gets released like on Friday.
It's called throw out the trash day.
Yeah, you know what I mean?
Take out the trash.
It was not good. It was not good. Those are the two
politics,
things.
they call take out the trash day.
I was much more concerned about Smokey than the downgrade of the U.S.
The downgrade thing, listen, it's no secret how I feel about Trump and his policies, but the downgrade thing to me is just dumb. Like, whatever, who cares? We were talking about this a little bit this morning, and I said, if you are the number one lender, if you're the reserve currency, and everybody's buying your bonds, and you take us down from whatever it is, quadrupled, triple, doubled, to the next notch down. Well, that next notch down just became the highest notch because that's where we sit. So it's like, that didn't mean much to me. It's like, all right, fine, whatever. The smoking thing was
it didn't. There was a reaction, obviously, when we opened up, and then there was a reaction up until early today when market just bought it up. I just feel like that kind of tells you everything you need to know at this point.
It's just not.
If that had come out maybe like in the beginning of April when all this was happening,
story, probably.
It would have been a different story for sure.
Yeah, it just adds to the powder keg. But if you go back and you look at when Fitch and S&P cut, you had a little bit of a pullback at the time, but then within a month or so, we rallied.
Yep. In 2011 or whatever?
2011 and 2023.
Yeah.
Yeah,
so I know. I'm starting to wonder if I was interested in probably getting long bonds, but or even selling the put. I think I was actually looking at that. But man, I mean that opportunity seems to. Yeah, that opportunity seems to have gone away. I mean, this was like 45 IVR earlier, and it was a little below. It was right around. It was just bouncing back up through 112 when I was looking at it, and then I just kind of decided against it. I feel like, I don't know. Just kind of back to your question earlier, like, do I think volatility is coming back? I feel like things are a live wire right now, and any different news can move things one way or another. Mm-hmm. So I just want to have capital ready for those moves happen. That's kind of how I'm starting to feel. Yeah. Again, even the short things that I put on today, I might close them up by the end of the week if things work out well, and just have capital ready, man, because, again, these moves, like if you had traded that move this morning.
Yeah, no, be nimble. Just like, and I think you just take the opposite. Like you get a gap open to the downside, you get long. If you get one to the upside, you get. I mean, I think that's just the trade right now is don't stick around for too long and take the opposite side. I'm looking at VVIX. This is the one that I've been actually.
VIX.
Yeah, I don't know if you've been watching this or not, but
at times
as we were going into this rally last week, that was something I was watching. It got down, I think it got down sub 90, if I'm not mistaken.
Yeah, on what day was that? The 13th?
Yeah.
Last Tuesday, is that right? Yeah, last Tuesday?
Yes. Yeah, last Tuesday. I just was watching, I was like, this is really, really coming in. Like, and I'm watching, now we're back up at, just under 98. So, I don't know. I don't know if it's a tell. Like usually it correlates with what's going on. Like you see it in VIX and it's like, okay, I can put 2 and 2 together. Mm-hmm. But right now it's like, 98's not ridiculously high by any stretch. 100 is kind of where you start
kind of lie in the sand. Yeah. Man, it's been remarkably fast. I mean, look at some of these IVRs here. ES is 16.7, NASDAQ 18.7, Russell even 14, Dow 14. When you look at some of the Mag 7 names that I got here, Apple's at 23.4, obviously most all of them, except for NVIDIA, have had earnings. Microsoft's in 9 level. NVIDIA's 30 with earnings to come next week, I think. Amazon 17, Google 26, Meta 13, Tesla 27.
It's all gone.
It's all gone. It's all gone.
I got to go back to Theta Trader with that 600 long call in Jan 2027. Like, I don't even know I'll be alive in 2027. That's just not. I could even what if I'm not here? My kids will have to close that out.
That is too far of a trade for you.
It really is. It's like 2027.
Like what's your optimal trading range area? Like 2 weeks, 3 weeks, a month, 2 months.
Well, I like the scalp. So 5 minutes. But for selling premium?
Yeah, for just option trade in general.
Option trading in general?
Like option trade in general. Like where do you look first? Or are you just conditioned to look 45 days?
I'm pretty conditioned to look at the monthly nearest 45 days. I usually don't do the weeklies if I'm selling like a what I'd consider a core position.
Yeah.
But yeah, I'm pretty conditioned to 45, 21 days and just.
Yeah, if I'm selling for sure. If I'm buying, it's probably
I go farther
2 months out.
Yeah, buying I'll go about 2 months
maybe
out.
2 to 3 months out. Just depends on the situation.
Yeah,
depends on how expensive something might be.
Yeah,
buying.
I want to give myself
what up? What up?
Yeah, I think you got to give yourself time when you buy. But selling, it's.
Donald said, "Free Smokey, free Smokey." We need some Free Smokey T-shirts.
Thought he was going to ask us optimal lifespan. Mike, I did too. Thought the question was going to be, how long do you think you're going to live?
These earnings this week, Home Depot. What are people doing with their houses? Are they
that could be interesting because I think a lot of people were hoping rates would come down and they might be able to move. And that's not going to happen anytime soon. And so is it, are they investing in their homes or are they just not investing, period? But I'm not, again, like that Target low, like I'm not interested.
Target, I'm interested in the stories. I'm not interested in
exactly
as much. Target, this stock's gotten rocked, man. I mean,
down 40% for the year.
The theft thing is still an issue with them, I believe. And I don't know, what's their market cap, Target? $44 billion. Just trying to, when a stock gets down like this and it gets so, for lack of a better word, oversold, you got to start wondering if there are entities that are able to buy it. But I don't. Does Walmart ever care about buying Target at some point?
No, I don't think so. I don't think that happened.
Walmart is. They got the freaking cash. $784 billion. Like they could scoop up Target easily if they wanted to.
Do you go to stores still?
Do I
like
go
Target? You go into those stores?
I try to avoid going to Target. My wife likes going to Target a lot. I don't.
I don't go to stores anymore. I have my groceries delivered. Like if there's other things I need, I get it through Amazon. And I just wonder how much.
Grocery store at times when you need to go.
Stores.
Huh?
I hate grocery stores.
I know.
I hate the people in grocery stores. It's just, you people are all dumb. Just move. Do whatever you're doing.
I know.
But here's my question. That's why I'm asking you. Do you think that, because I think I'm probably pretty public in the sense that I'm having a lot of this stuff delivered, and I'm not impulse shopping anywhere near what I would if I would go to the store. Is that hurting these places like Target because you don't have guys like me coming in and being like, oh yeah, I need whatever the hell the stupid thing is that catches my eye that's shiny and has a power button on it. Is there this effect from the delivery services like Uber hurting the Targets of the world?
No, I just think the theft is hurting them more than anything. People that do go in there that are just blatantly stealing stuff. I think that's what's hurting them. I think that's really what's hurting them.
That's a fair point.
Yeah, when your inventory is just getting snatched. Maybe does that hurt them?
Do people order more? They order less?
That's actually a store I don't order from much at all.
I don't either.
I would say Amazon is hurting Target more than anything.
Yeah, for sure.
I have, and so to your point, I used to, up until probably the pandemic, 2017, 2018, I would religiously leave the house to try to go get something. If I needed something, I would go get it. I'm because I just didn't feel like they always had the stuff that I wanted specifically on Amazon. I feel like they didn't. And I felt like the store inventories did. And then after pandemic, 21, 22, inventory was low. We talked about a whole lot. Most of these stores especially didn't have inventory because there was a backup on a lot of times. Right. So that's when I really made the full switch. And so now, I don't really step in these stores as much if I don't have to. And most of the time I'm ordering something on Amazon. So I ordered a guitar recently. I think I kind of want
Really?
Yeah,
Can you play?
No, I've never played, but I've always been interested in it. You know what I mean? I can sing a little bit. So, I figure I want to get a guitar.
Hang on. I'm going to warn you right now, okay? Because I've tried this multiple times. Okay,
guitar?
Oh, yeah.
For real?
Yeah. Oh, yeah. So my daughter, Jamie has a guitar I bought, I'm going to say it's right around 2000, the year 2000. And I'm going to say I spent $500 or $600 on it at the time. And I remember going to the store.
I didn't do that.
The guy was like, can you play? I said, no. He goes, then you're going to want this one.
Yeah.
It sounds better. And then my dad played, and when he passed, I took his guitar because he'd always play when I was a kid. It's I'll take my dad's guitar and maybe, I'll give it. I've probably tried to learn guitar 4 or 5 times, and it always ends the exact same way. With just maybe I should try piano instead.
I feel like piano's a lot harder though than guitar.
I don't think it is because first of all, to play guitar, you have to have fairly long fingers, or it's hard because you got to be able to get the grip. And I just I can't go from. And it's a lot.
I'm just gonna mess around with it, dude. I don't really. I
stick with sports.
Whatever. I'm gonna mess around with it. I don't even care. But my point in bringing it up was I ordered it from Amazon. I didn't go. I actually went to a store initially, a smaller store nearby, just to look and talk and look at prices. And you know what? That's actually one of the toughest things has to be now for a shop in general.
Oh, when they see people come in and hold their phone up?
Well, yeah, and I didn't do that specifically, but the fact that you can do that, right? I would have bought, this guy had a guitar, it was an older guitar, and it was $150, and he was going to sell me a stand for $20, $170 all in, right? And again, he wasn't pressuring me, which was nice by him. I wasn't going to do it anyway. But as soon as I got outside, I'm like, I could buy a new guitar, and it's $20, $30 less, and a stand is $5 to $10 less. I ain't buying that shit. Like, why would I do that? You know, like, that's got to hurt prices a lot in a lot of different stores. I don't know how retail does it these days. It's a trip.
If you're going to try guitar, so electric guitar is a lot easier to play.
Why is that?
Because you don't have to press down nearly as hard on the strings versus acoustic. So that's what I was doing.
I'm not that worried about it.
I was learning to play on electric, and I left my electric guitar home when I went back to college one day, or like over a break. And I come home, and I'm looking for my guitar. I'm like, Dad, where's the guitar? He goes, oh, I traded it. You traded it? What, my guitar? What did you? He goes, I traded it for a juicer. Like, what is this, the freaking Blues Brothers? You traded my guitar for a juicer? Who?
It was for the benefit of the family. That's what he did.
I'm like, who trades a guitar for a juicer?
God, juicer. Remember that was such a huge
Oh my
thing,
God, we
right?
never used the juicer either. I never even saw the juicer. But it is easier to learn.
So how come TJ Maxx's stock looks so different than Target stock?
I think
because people always need
people are
clothes.
looking for discounts.
Huh?
The discounts. TJ
Target
Maxx
has discounts, no?
Well, TJ Maxx is discounted stuff, right? Isn't that their deal? It's like,
I guess, but how come Dollar General sucks then? Dollar General's very...
Because their stuff is crap, okay? TJ Maxx has name brand
I
stuff.
thought you were going to say they were on crack, because that might be true, too.
Well, that could be true, too. No, but TJ Maxx's name brand stuff that's discounted. It's like they take the excess inventory stuff.
Yeah, I guess so. I guess you're right. Yeah, I mean, you're right. It's going to be a lot of these retailers this week.
I think the stories...
Look at Ross Stores, same deal. Look at that stock. Making moves. I'm not trading any of these for earnings.
But that to me is, like you said earlier, it's the story. What's the story? And to me, just looking at those charts, it's, hey, people are making that trade down to places where they can get deals. You know, and I get it. That makes sense to me. Like, there's a lot of uncertainty, so why wouldn't you do that? But it'd still be interesting to hear what their outlooks are for the rest of the year.
That's really the only interesting part of it for me is what their outlooks, what they're going to say. Target, Ross Stores, Home Depot, obviously. Williams-Sonoma, I don't care about. I mean, it's high-end stuff. Like,
yeah, Williams-Sonoma's not cheap.
Yeah, no, hell no, it's not. Hell no, it's not. Yeah, this week is. I would expect it to be fairly quiet, but again, who knows? Who knows what kind of? There's always been. Since the start of the year, there has been some market-moving news.
Oh, yeah.
Just about every week. And
I'd like to get through this week with it just being like...
I certainly would now. It's not I got this trade on. But...
So you talked me into this stupid trade ass.
I don't know. We'll see. We'll see. No, I like it. It's a good trade, honestly. I mean, a G to potentially make one, but collecting one to potentially make four. I mean, I'll take that for sure. Any words of wisdom? Any parting words for the people? Anything that you think is important for the people to know?
I'll be in Fort Wayne, Indiana, not this coming weekend, the weekend after. If anybody knows where the nearest hospital is, I'll probably need it.
Yeah, you didn't even tell them why you're going.
I'm playing in a basketball. I volunteered to play in a basketball tournament. I'm playing in a basketball tournament. I don't know what possessed me to say yes, but I did. And then
you're playing 10 games in 2 days.
10 games in 2 days. Yeah,
that's speed, man.
Yeah, it's not good. At my age, I should not be doing this.
Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See you.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading. Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hey, everybody. Tonight, I'm enjoying today a lot more than I was last Monday, I can tell you that. The news came out on Friday after the close that Moody's had downgraded the sovereign debt of the U.S. from their very, very, very highest level to their second highest level. I think there's 21 tiers. So instead of the first tier, we're the second tier now. It's a pretty optimistic view of a country, $37 trillion in debt, but there you have it. And so the market opened today very weak and, of course, started climbing immediately. And we went green for a while there. So it's like nothing can stop the bulls at this point. I'm okay with it because, like I said, I think it's a stock picker's market again. I think the miasma of the trade war having lifted, we can analyze and execute properly again. I have 25 different shorts. 23 of them are down today, which isn't bad, especially since the market is cratering by 0.1% on the ES. So that's what I mean by stock picking. Just try to find the opportunities out there that will defy even this absurd, preposterous, overvalued market and fall regardless. So so far so good. I've got the charts ready. Let's jump in and go swiftly. The spider, same old, same old. We're near the day's highs. There's no lines of meaning. Let's just all move on with our lives, shall we? Here's the tilt, the bonds. This one is a little interesting because naturally, with Moody's saying U.S. debt ain't so great, this is slipping. I kind of sort of see a pattern right here. We'll just mark it just for grins, like so. But considering the ostensible import of this rate drop, I'm sure ain't moving much, 0.25% down. The diamonds are up, just because. Here we have pushed above the March 26 high. So one of our few surviving lines, goodbye. That's out of there now. And like so. IYT is down. Transports have been very weak. This is way more vulnerable than the industrials, I believe. The transports have been just in a demolition derby. And we have, as with everything else, exploded higher since April 7. But this is in seriously broken shape. If IYT didn't stink as a trading instrument, I would be shorting the bejesus out of it. But it does stink. There's a big old bid-ask spread on it. The volume is lame. No thanks. But I think this is headed way lower. I ain't going to do anything about it, though. And the EFA, which I have written off a while ago, continues to muscle its way higher. A lifetime high on the EFA. I don't care because I have no position. But it is a beast. The rest of the world seems to be leaving the U.S. behind. Their great markets are just doing beachy. I am short, however, IWM, which, God bless it, even with all this green, is still down about 0.75%. The pattern I've pointed out on a daily basis for weeks now is an analog this as compared to this. My view is that with this blast higher, we're basically at a you are here kind of moment, like so, which equates to around about March 2022. If the analog holds. But yeah, I'm still cheerfully short IWM and a hodgepodge of other ETFs and lots of individual equities. As I said, I've got 25 open positions now. And unlike last weekend, when I couldn't even sleep out of the terror of the whole U.S.-China nonsense, which ended in surrender for the U.S., I was fine this weekend because that trade war stuff is behind us. We gave up. Cool, fine. You can read charts again. Here's the SMH, which I've also am short. This is down, not as much as earlier today, but we're off about 0.5% on this. It opened rather weak, it's been fighting its way back. And we still have a series of lower highs on this. This is a lifetime peak. This is sort of peak NVIDIA madness. Lower high, and presently a lower high. Okay. Fine. And then a different way to look at this is with the SOXL, the leveraged semiconductor bull fund, which is down surprisingly a lot considering that the SMH is only down like 0.5%. This is down like 5 or 6 times that much. I'm not sure why, because it is not a 6X fund, but the pattern on this kind of paradoxically is much cleaner than plain old boring SMH. So you can see this topping pattern as a whole is lower than this one back here. And we have been for months now just banging down on our own private bear market in this particular sector, which whose moves are exaggerated, of course, because it's a leveraged fund. The cubes are down a little, and I direct your attention to the same line that we've been obsessed over for some days now, which is this fella right here. I'm not going to show Ethereum again, but the equivalent behavior is over with the number 2 crypto out there, Ethereum. So long as we do not cross above this broken trend line, we'd be cool with it. So I covered my cube short earlier today at a teeny profit because of the strength we saw. But overall, what's important is that this kind of risk on and risk off behavior maintain intact. We need to stay below that line. Now, energy is a funny beast. We're down 1 penny right now on crude oil, but I'm doing okay with the energy shorts. XLE, for example, is down 1.5%, which beats the heck out of the 1 penny, 0.01% drop on oil itself. So there's XLE. I've tightened up my stop on this, and I think there's plenty downside to go prospectively. But given the past insanity, the past 4 weeks, I'm very cautious, tightening on those stops as we tiptoe our way lower. And XLE being an example of that. XOP, bless it, is also down about 1 1/3%. And here too, instead of the like all hope is lost top is resistance, is that dashed line way up there, the gap. I'm not using that. I'm way down here at this lower one. Let me shove that arc to the back so we can see what we're talking about. So instead of using this gap for the stop, I'm using this one here, which is simply Friday's high. So that's XOP. Getting away from all this grimness for a moment on the long side, quantum computing is hot again. D-Wave Quantum, QBTS, qubits, is at a lifetime highs now. And take note of the volume. This used to putter along with 1 million shares, 2 million shares a day. Now it's in the tens of millions every single day. You can see this real sea change that took place with the volume. And this is, by no means am I saying this is going to happen, but this is the funny thing about long-term success stories, going back to like America Online or Apple back in 2001, or Tesla back in 2011. They all look kind of like this at a certain point. So it's lifetime highs. It looks nice, but it looks really expensive. It looks really overpriced. And then a decade later, this entire pattern is just like a smudge on your screen. It's so small. So that's the challenge of getting into stuff and just hanging on to it, because they all start off kind of like this. By no means am I comparing quantum computing to Tesla. I'm just saying that that's the tricky bit of getting into the big long-term winners cheaply. On a different note, but also bullish note, those who dove into United Healthcare when it was getting just torpedoed on Friday have done quite well for themselves. This thing bottomed, I guess it bottomed on Thursday. This thing went down to $248. Keep in mind, this was a almost $700 stock a few months ago. You get down to $248, and since then we had a hammer pattern on this, and so a big push up Friday, big push up today. I would suspect for those lucky and bold enough to have gotten in, maybe if you want to be bold but prudent, that gap's probably not a bad target, that resistance gap. But yeah, United Healthcare recovering very handsomely. It's up about almost $70, not quite, from its bottom on Thursday. On the short side, as I said, I got a whole passel of these things. It's just a quick survey of some of the favorites. Here's Apple. We've got a new gap on this one. We've got Best Buy down over 3%. We talked about this last week with respect to its broken lifetime long trend line. BHP Group off modestly, 0.75%, but it's a nice top. Caesars, not sure if we've talked about this, short this one as well. There's the stop on that one, breaking below long-term distribution zone there. Microchip, MCHP, this one blasted higher. Tighten up the stop on this one. I've got a number of semiconductor shorts. This is one of them. Matador, definitely talked about this. Below that very pretty head and shoulders top right down there. Tighten up the stop on this one as well. Restoration, RH, I guess they call it now, off again, about 4%. So that's doing nicely. And I'm probably crazy for doing this, but today I got into Shopify, SHOP. It's a tricky one, but it's off about almost 1.5%. We'll see if that works out or not. So I've tried to go quickly because I don't like to step on the toes of the next show. So I just got a couple or three more to show you. Just to kind of put a bow on all this. The semiconductor cash index here, the stocks, continues to be just pitch perfect with respect to its Fibonacci. We got rather close last week to the 23.6 level. We appear to be backing off of that. That blue line is an important level of resistance for us. The NDX, as I said, we talked about that broken trend line. This is the much longer term channel. And the equivalent of that line is basically the midline of this multi-decade channel. We want to stay below that. So far we have, in spite of this intraday strength that we're seeing. And lastly, our old friend, the RTY, the Russell 2000 Small Cap Futures, Fibs working good on this one as well. And as we zoom in, again, we've got a blue line there to keep an eye on. But through all this bounce, from April 7 to really Friday's peak, we have returned to some important resistance areas that are well worth respecting. So all in all, a slightly down day, even though the Moody's might have been a bigger deal this morning, but charts are working out. It's going well. So good. Thanks for joining me. See you on Tuesday, and take care. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I had a pool like 30 years ago.
Okay, what do you want, a medal?
You did?
Huh?
Yeah, he did. No, indoor pool. It was quite nice.
Yeah.
You had an indoor pool?
1988.
Yeah.
I built it because it was a big warehouse. So we built an indoor lap pool, and it was 40.
The dog loved it.
Do you have an indoor basketball court too?
Yeah.
Wow.
But that was
and a racquetball basketball.
Yeah, but then, remember, it was a big warehouse, and it was like.
No, I don't remember. I was not even alive.
Wait, listen for just a second. I want to go to Buc-ee's. I've never been to a Buc-ee's. I have watched a lot of Buc-ee's TikTok videos over the years, and I have watched everybody do food reviews of Buc-ee's, and I feel like I've never had the opportunity to go into a Buc-ee's because I've never been around one.
Sadnov, it's a humongous gas station. It's like the size of a city, and it's super clean. And they've got everything you want, from new underwear to food to eat. 24 hours a day, 7 days a week. It's beautiful. But don't sleep on the bathroom, Sadnov, even if you don't have to go. Go into the bathrooms. They are amazing. They are so freaking clean, and you can watch the attendant go in after you're done. Like every time somebody's done, bathroom attendant goes in there. It's the most amazing thing I've ever seen in my entire life. It's the best run bathroom in the world. When you're on the road, Sadnov, and you're looking to relieve yourself,
I have so much to say. I have so much to talk about this.
Please don't.
Here, he said he was listening to a podcast.
Yeah.
And he said somebody on the podcast was talking about, they knew us and they were talking about it.
Yeah.
And the person said, I don't know who the person was, they were the ones that gave you the beret. And I said, that's BS. I said, I think, but I got to ask Tom, I think it was a marketing company that sent it. I know the Goldfish was. Where did you get the beret the first time?
Where'd I get it?
Oh my God.
Yeah.
I'm telling you, I wish I was in the mafia and he was the only one that saw like what went on. He's amazing. He's great. You'd be a great witness on this.
Great witness.
I got it. I just had it made myself.
No, you did not.
Yes, I did.
Go ahead. Where'd you have it made?
I'll tell you exactly what happened.
Go ahead.
So sometimes like my hair would get in my eyes. I'd like to wear glasses.
Like if the windows were open.
You always wore glasses.
Yeah, always. But
always.
If the windows just
Summer,
so
I'm explaining. Will you just let me explain?
Go ahead.
So we were coming up with different ideas over what we were going to give away. So we bought things like we got some barbecue sauce that was branded. And we gave away stuff each month.
Yeah.
So 1 month I decided to make berets. We made aprons and sandals.
Yes, true. Facts. I still have my apron. I have my apron.
Okay. We made all.
I don't think they weren't sandals.
You made sandals?
They were flip-flops.
Flip-flops.
They were flip-flops, not sandals.
And so one of the first things we got was a beret, but I didn't order them because I was like, these are too hard to like stretch.
They didn't fit your head. Be honest. They did not fit your head.
Can we explain how we originally shaped them? We got a basketball. Stretched them over a basketball.
How we originally? That's how we do it to this day. Are you kidding me? We're like an Italian.
And not a WNBA size. It was an NBA, not WNBA.
So that's how I did it.
Get the full scoop by checking out the archives at tastylive.com.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. It's time for the last call. Even the S&Ps, well, they're basically unchanged. So I don't know if they're down 7 with all the hoopla of downgrades and upgrades and everything else. We're basically unchanged. NASDAQ down 40. Russell's the weakest of the group, down 14, and the Dow's actually up 71. Volatility basically unchanged at 1968. Bonds with a good mover from under 112, 111.5 to over 113, 113.03, and there's just a couple of ticks off of those highs right now. Bitcoin caught itself a bid too off of lows made earlier at 102 and change. It's 105.5 right now after being up to 107.5 just a little while ago. Oil unchanged at 61,000. Gold has stayed bid all day. It is bid right now. It's up 47. Silver up 14 cents and change. Some big movers today. I think everybody needed this one. UNH up 21. IV rank of 76. You can see here from 140, 50, 60, just about 48 hours ago in trading times. Couple other movers here to the downside this time. FSLR down 16. Tesla down 7. Reddit down around 5, Netflix down around 5, and Apple's been weak all day, down almost $3, but it was about $4 lower than that earlier today. PLTR lower also by $2 and change. On the upside, well, you got some good ones. Enough. MSTR up 11. I already mentioned UNH up 21. Costco and Humana up 9 and 6. Microsoft up 3 3/4. $1.50 off of its highs. So that's all I have for you right now. I don't know, 1 million, just over 1 million. Even the S&Ps have traded. Volume was pretty heavy in the S&Ps early on. It kind of waned for the rest of the day. What do you make here? We both felt that volatility did not uptick as much as you would expect under the circumstances, given a little bit of legs to this market. I didn't think we'd be unchanged though.
I wish I'd held my bond position from early this morning. That's what I wish. But I didn't, I didn't get out of anything that came in with, so that's a good thing. Just scalp some stuff. But the bond move, I think the stock move, anytime you reverse like 70 or 80 points off the lows, that always is, you can't expect it. So it's always something good from a trader perspective. So I like the S&P move. I like the bond move, obviously. To be selfish, I loved the UNH move. I appreciate the CEO of UNH, whoever he is, for buying $25 million worth of stock and showing the street that he's probably going to. I figured it's probably an arb for him. He gets probably $100 million bonus, and he gives up $25 million in stock. It's probably not a bad trade, but gave me a chance to get flat and basically call UNH.
UNH up 23. It traded all the way up to 16. Sad enough. So it was up a little bit more earlier.
Yeah, I cleaned up my UNH mess, and now I just have strangles that are wide instead of in the money. All in all, was it worth the risk? Absolutely not. But
and that's a hindsight trade. You could say that about any trade that doesn't work out.
Of course. But we did a pretty good job of coming back the last 2 days in there and salvaging most of it, or all of it. I don't know, whatever it is, close. Now I got to hope
today was a big day. You were leaning a little bit long delta, and you had a lot of premium to sell. Calls are up $3-4. Puts are in $15-20.
Yeah. So so it all worked out today in UNH. Got all that money back. That's a good thing. And Delta's kind of flat. Most of our stuff worked today. We probably over adjusted in the S&Ps, but that's about it. Nothing else. Again,
another hindsight trade, right?
Yeah, another hindsight trade. Yeah. The market that didn't move today was gold. The markets that did move were, like you mentioned it, Microsoft turned around. Apple was like garbage all day, and everything else was kind of just hanging around. I mean, I was very tempted to throw on a few shorts when they got back to about even. I didn't. I don't know if you did.
No.
I figured we might get better prices. What makes me nervous is this week. Anytime I feel like there's a markup, I feel like there's going to be a little follow through. And I kind of thought like you did, that they're going to have to test 6,000. So I've been holding out. I really want to get short Microsoft, and it's up 350 today. I just don't know how. And what are you doing there? I know. What do you do?
You have the technology.
I know. What do you do? What's a trade? Give me a short trade in Microsoft.
I've given it to you before. Diagonal spread between July and June. You won't do it big enough because you got to buy the 460 puts, and you got to go $10-15 wide on your June puts. Split the baby, 447.5 for $8. You give yourself some 18 short deltas. Buy the 60s, sell the 447.5 since you have $half wide markets now. $8.27 is the mid price. June volatility is 21, and July volatility is 22. That's it. Define risk trade, $825. You make yourself $1 or $2 on a $6 move lower.
Yeah, I don't love it.
Well, it worked really well in Apple for me. I got one down day in Apple since I put the trade on Tuesday, which is option trades today. I was able to take $1.30 out of it this morning. So I could have taken more, but I butchered it.
Bum, 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 bum.
One down day in Apple. One. I was wrong for 4 days. I was right for one. That's a good entry, Sadnov. Good entry, good exit.
I'm looking for a lot of trades in here, and I can't find the one I want. But
well, Ivy rank in Microsoft is 9. What are you going to do?
I know.
I mean, you could sell stock, but that's so capital intensive. I'm looking at an $800 trade and change.
Yeah, I know. I can't find what I want to do yet. I've been looking for the last couple of minutes. I haven't found anything yet. I'll find it.
Well, you haven't found anything because you haven't been able to copy off of anybody. Hey, I got a quick question. This weekend, when you're going to Buc-ee's, do you think you could live stream it for us?
Sure. For you? Sure.
Do you know how to do that?
Yes, but I won't make it in time for when you're on air.
It's okay. The world needs to see this. I mean, this is.
It's like 5 or 6 hours.
Groundbreaking stuff right now.
It's like 5 or 6 hours away. I can't make it in time for you.
I think it's more.
I know it's groundbreaking. I can record everything. I mean, if you think it's that important, that it's life changing.
Well, let us be the judge of that. I mean, let your peers be the judge. I mean, that's the way to do it, isn't it?
I will do my best, peer. I will do my best. All right, what else do you see here that you think is at a little bit of an extreme?
Oh, my Taiwanese sources want you to do kind of like what Scott did with Waymo. He did a little B-roll. He did a little commentary. He asked himself questions. They want to see
Scott's that's Scott's thing. He's like
choose up a scene. He chews up a scene.
Yeah, he chews up a scene. He's like an influencer.
Right. That's right. You're just a mere mortal. Right, I got it. Yeah.
He's a social media influencer. I'm just, I'm a talking head.
Okay. All right. Home Depot has earnings. That's about it. I know you did a couple of trades in there. I don't think you did much.
I didn't do much. If I remember correctly, I sold some junky puts this morning. Let me take a look quickly. Home Depot, HD. HD. Yeah, we didn't do much. Where's the stock? Oh, the stock's down $1.40 now. The stock was only down 60 cents this morning. Let's take a look here and see what we did. Oh, you know why I can't see? Because I don't have the weeklies open. In the May weeklies with 4 days to go, we sold.
You sold the 350 puts
when the stock was about 75 cents higher, and we're still up about 5 cents.
You are right. You sold them at 76 cents.
Yes, they're at 71. They're 74. They're 72 cents right now.
Yeah.
I did that this morning so I would watch the stock and come back to it later. But here's my issue with Home Depot, and I don't know if you've traded it recently, but it is $370 stock, but it only traded 2.9 million shares today. And the options in there's a couple strikes that trade. So there's definitely some volume in there.
Go no further than earnings, $380 stock, and an IV rank of 29.
I know. It's not
too expensive to do anything. Spreads are going to trade so cheap. It's just risk reward. Unless you got an axe to grind on direction.
I agree with you.
No reason to do anything at Home Depot.
I looked at it this morning, didn't love it. That's all it is. Looked at it this morning, didn't love it. Sitting around.
You love your app loving again, Sadnov? Up $10.71 again. App loving.
No, I don't love app loving. App loving is a stock that's it's really hard to trade. The stocks when volatility starts to dry up a little bit, you really have to stay to liquid stocks. Like a stock like AppLovin, when things are flying all around, you can trade like APP because you can make it back. When the vol drops in there and the markets are still really wide and you can't get filled with anything, just be careful. Yeah, it's not really.
My Taiwanese sources they really want this, and I know you like to give the audience what they want. You're an overperformer, you're an overachiever. There's really nothing that you can't do, but they really want to see you do a video a la Scott with a little bit of background and some B-roll, and you ask yourself questions and answer. They really would like to see the true, what would they call it, range of your ability as a thespian.
Thank you. I really feel humbled by that response from your one follower.
And Fran Dresser said you can go back to doing voiceovers and everything else like that. They settled all of the lawsuits.
Oh, thank God.
Yeah, contract disputes or whatever. You're all good.
Thank God. All right, let's take a quick look here through all the other stuff that moved around today.
You got an unchanged market sound. Did you scoopy anything this morning?
Only bonds, and that was it.
Yeah.
I mean, I was pretty aggressive rolling up UNH all day, and it worked. I think I rolled up puts like 6 times in there today, and so it did work. So
I did the same.
Yeah, that worked.
Ivy rank's still high in there at 77, although it's been cut in half.
It's been cut in half. We did 150, 145, 138. Now we're doing it at 77. I just sold some July strangles in there, so keep the dream alive. I think it's the best use of capital right now still. Looking around at anything else, nah. You know what? I was kind of quiet. I did make 55 trades, but a lot of it was UNH stuff. You know what?
Well, the UNH stuff was good. That was closing.
Yeah, that was good. Yeah, Microsoft is the only stock that I've been eyeing up and down as a way to get kind of short it. I think I'm going to end up just buying a put spread, and I may. I think I'm going to end up just buying a put spread. You know what? I think I'm just going to stick to Tasty Mechanics, and with the IV rank under 10. I either go straight calendar or I do both. I do the June, July put calendar, and then I just buy a straight put spread above. That's what I do. That's what I do.
Okay.
That's what I'm going to do.
That's what you got to do. Even the SP down $1.75.
That's what I'm going to do. Let's see. 45 puts, June, 45 puts. Sold June 45 puts, June, July 45 put spread, and we're going to buy. Okay, I got this, Mr. Batista. I actually got this. I figured this out.
I don't think you know how to do a diagonal. My peeps are telling me.
A diagonal?
Yeah.
I don't like the way you do diagonals. Considering I invented the diagonal, I think I know how to do it.
They said you can only do diagonals that make you a nickel. That's why they can't do the diagonal that I showed. That has dollars of risk.
Tell your peeps, I invented the diagonal. Okay, the term diagonal I actually invented. So
diagonal is what you.
Tell your peeps.
You did diagonal.
Tell your peeps to get a life.
Mm-hmm.
I'm gonna
reverse
buy
diagonal for 18-cent credit or something. That's the bad stuff.
All right. I just got a little short Microsoft. Bought a put calendar and a put spread because I wanted to get short. And I always regret when I want to do something and they rallied up nicely. So it gives us a chance to do something. Everything else, I think I want to wait here until tomorrow. Palantir, I was hoping it was up on the day because it's another stock I want to get short. And what do you think about NVIDIA here? It's getting kind of rich, don't you think?
So you did do the June July count diagonal, but
I didn't do the diagonal. I just did the June July calendar spread, and I also bought a put spread in June. I did it as a four-way.
There you're good. Yeah. I got it.
It's a little complicated for your simple-minded pistol.
Well, it's 11 short deltas per 1 by 1 by 1 by 1 contract. It
for your
like Taiwanese
sources.
It seems like a lot of work when you could have just done my diagonal spread and actually.
It's a little complicated. It's a little complicated for your Taiwanese sources.
Complicated. Mm-hmm. Yeah. The 6 deltas per 5.5 deltas per is really different than the one that
It's early. I'm telling you, it's early. You got to wait for the big moves. That's when they get a big rally tomorrow and Microsoft's up a couple bucks, then I'll lay it out.
Got it.
Let's see what else do we got here going into the close and to see if there's anything exciting, and I don't think so.
It was a pretty exciting day, Sana, for a quiet-ish day.
I think it was exciting. I think Sunday night was, the downgrade gave us something to talk about and yak about. And so I think for a Sunday night move, but again, it's very hard for the average it's very hard for retail it's hard. I shouldn't say this. It's very hard for institutional investors. It's probably a little easier for retail investors to fade the move, but you had to literally fade the move today.
Yeah.
I mean, you had to buy the opening in the S&Ps because they never went lower, and you had to buy the opening in bonds because they never went lower. And that is not something you see, too often. And it was so freaking orderly. It took all day. It just was one tick at a time. There was no explosive moves. It wasn't like it was, it wasn't an easy trade. Let's put it that way. You couldn't just buy it and sell it out. You had to buy it and hold it all day.
So we closed green today. It'll be the 7th day in a row that we closed green, and I only can see basically 5 of the last 18 or so days that we've been down.
I think that the first time that we get a good down day will come from an up opening. I mean, that's why I didn't love getting short today at any point, and that's why we really didn't, because I just don't think you're going to get a big down move from a down opening. I think you're going to get if you're going to get any kind of a down move, it's going to be from an up. It's going to be from a higher opening and higher prices that go lower.
Yeah, I get it. Nobody knows anything, but that does seem to be the logical way I agree with you there.
Well, I mean, it's just fading everybody else. That's all it is. Yep. All right, what else do we got going on here? So as we stumble and rumble and like little, bounce around into the close, I don't see much here to hang your hat on for tomorrow. It was funny pre-market. We were looking at the Dow and wondering how that was going to get up, and now it's up 120, and it's also a big move in the Nasdaq today, almost 350 points or something. It's a big move.
Yes, definitely a big move. A good move from the market too. If things hold here, Sadaf, we might get all 4 indices green at the end of the day. Be hard to do. You got Nasdaq down 10. I guess the Russell would be the hardest one because that's down 10. That's a half percentage point. And the Dow up 140. And you've only got about 6 minutes left. Bonds over 113, 113.01, Sadnov.
Like it.
Cancel crash.
I like it. I like it. All right, let's bring in the boys.
Yeah, overtime crew. What's up, boys? Say hi.
Hello. How goes it?
Hello, boys.
It goes well.
Hello,
I'm
Dylan.
really happy about how well
Hello,
the
Tom.
bonds held up.
I love that Sosnoff sits there, and he likes to talk about it and this and now the mechanics and the 45 days and the tasty methodology and all this. And then he's like, it's not going to go down until we get an up open. He sounds like a gypsy, like a superstitious gypsy. This guy, he wants an up open
Dylan,
to go down.
That's what we do, Dylan. That's what we do here on this network. We are the modern day version of superstitious gypsies. Absolutely.
I like that. I think that's probably a good identity for the Tasty Nation.
Yeah, we are the modern day version. All right. Well, what do you think, guys? I mean, Chris, it was the day for the contrarians by the opening. Again, for the 973rd straight consecutive time.
We got some headlines today that it felt like if they arrived in early April, the market would have puked. China complaining that the U.S. is not honoring the terms of the Geneva Agreement from last weekend, and then of course the debt downgrade.
You have to find the most crazy stuff. Just talk about the big stuff. Nobody cares about China.
Here's the big stuff. The big stuff is that right now the market's still short. And so if today can't produce a down headline, you see that there's still an incentive for people to chase this thing higher. If you can't get knocked down for this, then what? But Ilya and I had the whole futures power hour today. Rating agencies don't matter. Who cares about this?
Yeah.
Well, I agree with you that they don't matter they don't matter except for the initial emotional move. There was clearly they mattered for 3 days over the weekend. They didn't matter once the real money came into the market today. For the nervous Nellies, it mattered. But when the real money came back into the market today, they looked at it as an opportunity, not as a cause for concern.
that
the opportunity
bonds
being
ended
that
up
you missed out
holding as well as they held, and that the dollar was still down. All of that together just sort of reinforces conviction in, I think, what I would like to see. It's just equities don't really want to comply. They're basically closing on Friday's highs. So I suppose we're still waiting, but very encouraging that the bonds hold here. Very encouraging that the dollar doesn't do much of anything. That seems to kind of reinforce that the trends there are holding. And especially in the bonds, there's maybe a very attractive spot here.
Buy them or sell?
To be a buyer, yeah. I mean, okay. I'm long here.
I think that 111, whatever, 20 number, 111.15, wherever they got to today, I think that's really a good number. But we'll see. Dylan, what do you think here? You're awfully quiet.
I mean, no, I'm gone full. Sometime last week I became a full bull. Full
bull? What did you say? Full of bull?
No, I myself became a full bull. Okay, I think Trump is. I think people are discounting Trump as a liability to anything. I think that whatever recession, non-recession there is, whatever, is irrelevant. And I think that the lack of rate cuts, you're getting a lack of rate cuts for good reasons, not for bad reasons. Because of economic strength. The the AI super glide lives.
Okay.
You laugh all the way to the bank, my friend, when you take a look at Microsoft, Meta. I mean, those things are cranking. Tesla, I think Tesla is fabulous. I think that the spook that Trump was really going to.
Did you have lunch with Victor Jones?
What did you have? Did you have lunch with me or something like that?
I'm saying, did you have lunch with Victor Jones? Did he trap you into lunch?
Debate with these two fellows. I was talking to Chris.
It sounds like, did somebody drop you on your head at lunchtime or something? What happened today?
I did hit my head.
Wait a minute. Did you find your testicles or something, Dylan? What happened at lunchtime?
What did you do to your head?
I hit it. Maybe that's why I'm feeling bullish.
Yeah, you're concussed.
I had an incident. So you need to take whatever I say with a grain of salt. But anyway, I'm feeling very bullish.
She caught up with you?
An incident. That looks like a frying pan to the head or something. Yeah.
It's a story for another time. You don't need to hear this particular tale, but I had an adventurous few days. And but it's no problem, and I'm feeling very bullish. So I'm happy with all my situations.
Okay.
Other than this, which is bothersome, but it'll heal.
Okay, we've seen it 6 times already. Tomorrow you put a bag on your head, okay?
Got it.
Listen, you got a company. It's like the Postman. You got to do the Tasty podcast under any circumstances.
100%.
From a hospital bed, whatever it may be.
How's the healthcare in Italy? They have universal healthcare there.
I was in the ambulance for a while. That was exciting. I'll send you some coverage. And then I did get checked into the hospital, but I found the hospital experience, while satisfying, a bit excessive. And so I realized they were going to try to keep me overnight for no reason. And so I had to remove the IV from my arm and sneak out the back.
That's always good. The escape from the hospital is always good look for Americans.
I had to do the full escape where you're ripping the bracelet off. I had no choice. I wasn't going to sleep in an Italian emergency room. Do you understand how these people ride Vespas? The whole emergency ward is just like Vespa accidents. Horrible.
Oh my God.
No doubt.
Never let your children ride a Vespa. Let them be. If you want a Vespa, spend a night in the ER in Milan. Then you'll change your mind.
All right, boys. Chris, Ilya, he's all yours today. I think you're going to have your hands.
Fair enough. On that note, I'm going to say au revoir, everyone, and see you tomorrow.
It's arrivederci. It's arrivederci.
It's arrivederci. We're going. The city of Milan is chirping for Sosnoff. There's rumors in the Duomo. There's all sorts of. There's lots going. There's a lot of talk right now. It's only going to get more.
We're very excited. We're very excited. Arrivederci.
Overtime next. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
Well, I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What downgrade? It's Monday, May 19th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. I take you through the rest of this hour. Futures market closes at 5 p.m. Eastern. If you're joining us on the platform on tastylive.com, welcome. Thanks for coming. Otherwise, join us on the YouTube platform, come over, join the chat. Tell us what you're trading here today. What you think of this market reversal where, for all the warts of this morning's news of U.S. debt downgrade over the weekend, stocks closed a little bit above Friday's highs. S&P 500 up by 0.09%, NASDAQ up by 0.06%, the Russell shade weaker down by 0.47%, the Dow up by 0.34%. Bonds staged a pretty meaningful rally over the course of the session. Gold's able to hold on to most of its gains. The dollar slightly weaker, although it does bounce back. Moody's, thanks for telling us all something that we knew, that we're spending a lot of money here in the U.S., and we're not really taking any steps to addressing it. That's the news of the weekend, though. Putin and Trump talk today. Of course, this is a week where Fed speakers dot the calendar, although I don't think anyone cares what they have to say. Dylan, you're feeling awfully optimistic here. Is today's price action where stocks stay the entire downgrade effort, is that part of the reason why you're so bullish?
I mean, it's validation of the bullishness that we were talking about last week. It's just, it's like exhibit number 977, 433,000. I mean, the fact that the downgrade can happen, which there has been some may have been some point in time, somewhere, someplace where it mattered, but it doesn't matter. And it's the latest thing that doesn't matter. The Trump tariffs don't matter. The recession, threat of a recession doesn't matter. You know, Ilya's going to say it doesn't matter until it does, which is also true.
That, and I don't think this one should have mattered. And so
you don't think the credit downgrade was a worthy?
Yeah, I don't think this one should have mattered.
Negative.
So I don't really look at the absence of a negative
response
response to this.
Well, what about the tariffs and the recession?
Well, the tariffs are apparently on some sort of a new cliffhanger, right? So July 8th is the first round, and early August, I think August 12th, if memory serves, is the China cliffhanger. So we're basically going to wait until the next episode in the series, I guess, unless somebody decides to
ignore it and
tweet something. Basically. But this is where I think it gets interesting, is like all of this has been about the drama, especially since the beginning of April. But the growth data is steadily deteriorating. The question is, do the markets decide to care, and when? So not yet. They cared in mid-February because that's why they started to sell off. There was a growth scare. Then it became something much more scary and hysterical, and obviously that part of it is over. They've unclenched fully. Will they start to care about growth now? We'll see. There's some interesting data this week, but there's not a lot of it, and it's all late in the week. And maybe that's part of this. Maybe the markets get a chance to find a default.
Look at this vol compression that Chris just brought up. I mean, if that doesn't tell you that the market is off and away.
And it's compressed, interestingly, not all the way back to the lows, though, of course, doing technical analysis on VIX is a fool's errand. But it's compressed right to where the growth scare sort of starts to really bite. So now you have to ask the question, okay, we've reset. We've reset across markets. The only market that sort of really stands out as where you haven't is the dollar, which is sort of encouraging to the idea that all of this unclenches in a growth scare. But when? Not yet.
Not yet. I mean, Ilya, there's part of me that thinks what happened to bonds after the 2011 downgrade? They rallied. What happens to gold? It rallies. What happens to stocks? They actually settle higher at the end of that week. the Dow Jones has 4 or 5% swings in a row.
Mm-hmm.
Down 5, up 5, down 5, up 5, and then kind of just peters out until we gain. And while there's turbulence over the next few months, the market finds its low in October of that year temporarily.
It almost seems like we did all of that today, basically.
We speed ran the entire month and a half reaction. I would, Dylan, maybe it's just my memory here, or maybe I'm memory holding it. Apparently, Fitch Ratings downgraded us in 2023.
Yeah.
I don't recall that being of consequence itself. Dylan, do you think the fact that we now have fully lost our AAA rating across all 3 major agencies is a problem, or I don't know?
I think it's one of those things. That the short answer is no, but I do think that it's one of those things that in some intermediate or distant future, if the United States does not find some other way of existing, meaning fiscally, that people will look back and they'll be like, oh yeah, they've lost their AAA rating in 2025, and then whatever, this happened in 2035 or something, or 2075. But in the era, in the world of now, it obviously doesn't matter.
Doesn't matter.
It's a marker retrospectively.
Dylan,
it just seems like it shouldn't matter. I mean,
it should matter,
Chris.
No, it should matter. It doesn't matter, and I think that's part of the problem.
It shouldn't matter in this sense. Of course, it should matter that borrowers are expected to pay back or aren't, and it does matter. We saw it matter with Greece, sort of famously. We just saw it matter with the UK, with the Liz Truss situation. Obviously, it matters. But It matters if there is a legitimate threat and if the rating actually matches what is reality. It is not logical to say that the U.S. is not the most eligible borrower in the world. And if the rating isn't relative to who is the most eligible borrower, then what does it mean? The question isn't, is the U.S. facing a fiscal difficulty? The Fed's been talking about it. Everybody's been talking about it for years. That much is clear. The question is, who's AAA? That is, who is the most eligible borrower? Is there any doubt that that's the U.S.?
No.
Okay. So what do we even say?
No, I mean, I think it should matter insofar as I think it would be good if we had an objective, nonpartisan, completely unbiased group of individuals whose discretion and job was to provide unbiased analysis about the state of government credit ratings. The reality is that these are issuer-paid ratings, and there is capture here, very much like there's capture in 2007, 2008, where the rating agencies don't want to lose any clients, so they continue to just whistle past the graveyard. You shove enough crap into a mortgage-backed security, the diversification makes it AAA rated. It doesn't matter that all the bonds are BB rated in there. The fact that there's a whole bunch of them means it's diversified. Dylan, I mean, I think of your rant all the years ago, the famous Dylan Ratigan rant that people can look up on TV about how institutions are broken, completely captured by a system that doesn't help the American people. The rating agencies are part and parcel to that.
Central.
They are supposed to be the people.
They facilitate the corporate bond market and the mortgage market. I mean, they facilitate the leverage.
Right. And so the fact that you're getting, when did U.S. If we want to say that this is a legitimate problem and we think that there's a problem in spending and taxation in the United States, when did we go off the rails? When should the rating agencies started to have act? You could argue it's when Medicare Part D expansion passed in the 2000s, right? When we give up the Clinton level surpluses and then we start to go down into let's spend more money than we actually have. The Iraq War, digging out a global financial crisis, yada, yada, yada. So telling us this in 2025, after we've accrued $36 trillion in debt and have run deficits for decades in a row now, what information edge does that provide anyone? How does that help anyone at this point in time?
I mean, right? The problem with the rating agencies now, like when you see them, especially when they do a sovereign like America, I see that and I feel like it's a reflection of the rating agency trying to posture or position its own relationship with its own self-perception of its external reputation, if that's not too convoluted a thought, that it actually has nothing to do with the credit of anything, and it has everything to do with their desire to project themselves as authoritative or credible in some way, and that they make decisions based on not the creditworthiness of a given fixed income entity or asset or country or whatever, but rather based on their perception of what is most valuable to support their reputation, knowing that they're a captured regulator, if you will, who's paid by the very people that they rate.
Which precisely explains to you why, if AAA is some nebulous concept, rather than a relative grade of who is the most eligible out to who is the least eligible, then the object of the game is to protect the sanctity of this arbitrary yardstick. And that doesn't help anybody in practice. Because what matters
but
is
it also, I think,
actual
explains
credit
why
risk.
it doesn't matter. I think it also
That's
is
right.
the answer to the question as to why it doesn't matter.
That's exactly
like to your
right.
point, Chris, it should matter.
It should matter, yes.
There should be an independent, point of view or whatever rating on creditworthiness, but it doesn't exist, which was one of the many revelations of 2009 and 2008.
Don't, I mean, like the political polarization thing to me, it's like, yeah, really?
I mean, you could even go so far as to speculate that Moody's just doesn't like Trump.
No, but I mean, honestly, like what's been triggered? That there's been no change in law. There's rumors of a potential deal going through, although given the consternation from the SALT caucus is what they're calling themselves versus everyone else who doesn't live in a blue state. There could be a big expansion of the government debt and deficits moving forward, but by no means it's a fait accompli. If anything, I think Moody's just gave all the deficit hawks some ammunition, right? The people are holding the line saying, like, President Trump, we're spending way too much money. This is not the promise that we were elected on. We were promised to cut spending, right? Now they have this rating agency downgrade at their, wind at their back, and they could say, see, like everyone else thinks it's a promise, not just my ideology that tells me it's an issue. Maybe that's one of the reasons why the market's so stable today. Instead of embarking on a fiscal policy that would probably be inflationary, right? Deficits approach 10%. If you thought the 7% debt to GDP ratios that we had under Biden were outrageous, highest that we've had outside of wartime era, the current legislation as it's proposed would bring them to about 10%. So that's going to increase the government spending net. And so maybe this gives the hawks something to lean on and prevents actually a bill of this stature, $6.2 trillion in new debts, including the interest payments over the next 10 years. But Fitch, like telling us that the country's polarized. I don't know what that does.
Yeah, but that's why I think it's all in reference to themselves. Like I don't think it's a value to them. I think it's in value to the ratings agency's perception of themselves.
Could we raise money? Yes. Can we print our own currency? Yes. We try everything else except for raising taxes around here. So I mean, if you raise taxes and cut spending enough, could you pay off the debt? Yeah. Do we have assets in the country? Right. This is one of the unique things.
This is the thing that drives me nuts about the whole thing. It's like
the private sector is what gives the government its credibility, right? That's the tax base from which. So are you suggesting that all U.S. companies, the private sector here is also not as valuable moving forward? The government's not going to be able to tax it if it needs to moving forward?
Let's just consider for a second just the land, just the value of the land that the government owns. Like, let's talk about securing borrowing but with collateral. Like, if I'm a billionaire but I haven't worked in 2 years because I've been sitting in a hammock in Bali somewhere, but then I decide to walk into a car dealership and say, I want a no money down, low interest rate loan on a car. Am I going to be denied? No, because it's my asset base that's going to matter, not whether I worked last year and what my income was. It'll be my ability to pay. Who sits on the absolutely biggest, most valuable asset base as a sovereign? This is not a conversation. This is obvious. So the idea that the AAA rating is an ideal rather than a reflection of who's the most eligible borrower makes it practically useless.
Practically useless. A day like today where the market does bounce back a little bit after this harrowing U.S. credit downgrade news. Gold is your top performing sector among the equity sectors. GDXJ lead to the upside. It is a more defensive kind of day, though, so I don't want to say that this was all roses on the way to a green candle here as we make our way through the session. XLV, XLU, healthcare, utilities, and then staples, XLP, among the winners here in this session. There's only about 12 ETFs of the 15 that we track that are in the green here, and names in the red are like your XLK, your XLY, your XRT. So it's not a perfect kind of session where we bounce back and it's the growth stuff leading the way higher. It's also not a terrible day here, Ilya. I mean, did we learn anything at the end of the session? You always say the market cares about something and something matters insofar as the market cares about it. So the ratings downgrade today, right, categorically different than what we see in 2011. 2011, we wake up Monday morning, the Dow's down 5% on the close. And then Tuesday, it's up 5%. Sure. And then Wednesday, it's down 5%. And then Thursday, it's up 5%. And then we kind of just all chill out. Mm-hmm. Today, we just chill out right away. I I couldn't even tell you. I mean, maybe it's a knock on me and I'm kind of outing myself here. I couldn't tell you what happened the day of the Fitch rating. I have no idea what happened. I don't remember at all.
I remember having a similar conversation around the desk saying, look, this doesn't matter. You can't downgrade the world's most eligible borrower. That makes you look dumb. The problem in that equation isn't the borrower, it's you.
What happened to S&P Global after it downgraded the U.S. in 2011? Stock market rebounded by the end of the month, by the end of August that year. But in August 2011, S&P Global was still off by, I think, 7%. Right? Like people.
The general consensus was
these people are idiots.
This is ridiculous. This is ridiculous.
The market decided that the collective experience of U.S. equities was not weaker because of a perceived credit rating downgrade. It was that the people who would approve such a measure from S&P Global fundamentally do not understand how the world's economic system works.
Right.
They don't understand what it means to be the world's reserve currency. And if it was political at the time,
to be the issuer of its risk-free asset internationally.
Yeah. So is there political polarization? Yes. Should we do more to get our debt and deficits in check? Perhaps. I think so.
Yes, of course.
But this doesn't matter. It doesn't matter that it happened under Obama, and it seems scary because it was the first time. It didn't matter that it happened under Biden. I completely forgot it happened under Biden. I think that in a week's time, after Memorial Day, Dylan, I don't think we're going to talk about this.
I mean, I don't know if you're going to talk about it tomorrow.
Oh, challenge accepted. Let's not talk about the ratings downgrade anymore because it really, I mean, what are you telling us that we don't know? And I still have the memories of the global financial crisis, Dylan, of all the rating agencies, the same rating agencies, by the way, telling us that all these products were okay, that we were okay to trade them, okay to buy them, and that the banks were okay. There was no risk there. And sure enough, they just didn't want to lose the business.
But I mean, I think the ratings agencies with the upper end of the information curve in terms of people knowing what happened or more about what happened in 2008 and 2009. I believe that the ratings agencies basically lost a huge amount of their overall credibility permanently.
Yes.
Permanently. And so I think that the fact that whatever it is, I don't know how many years it's been, 15 or 16 years, and the ratings agencies can do something like to your point, Chris, a downgrade of America's credit should matter. And I believe the reason it doesn't matter is because for the reasons we've discussed, which is that the ratings agencies proved that they are not an objective judge of creditworthiness, but they are a regulatory stamp of approval that can be purchased.
Yes.
And that's a different thing.
A self-appointed regulatory stamp of approval, which, by the way, they're willing to overlook your problems if you give them enough money. That's what history told us in 2007, 2008, 2009.
And a lot of people learned that. Sorry, go ahead, Elliot.
Yeah, I mean, just let's give them due credit, right? Institutions do. Well, hold on.
You have me out here defending the Trump administration, Elliot. You must know how low on the totem pole rating agencies are in my book.
So let's give them due credit. Institutions do change. No. Well, hold on. Institutions do change. But when you go and you downgrade the U.S., that tells us you've learned nothing. And you don't want to change. And so we shouldn't care.
If you're going to downgrade the U.S., you have to downgrade everyone else too.
This is
all the companies, exactly. All the businesses, all the people,
exactly.
All of our trade partners.
Exactly. So I don't want to say that they're not credible because they bungled what happened in 2008. They had ample time to change. They could have done that. That we're seeing a downgrade of the U.S. today tells me they have not. And there's no reason to think that this is Moody's now. Obviously, maybe things have changed at S&P, or you haven't seen them downgrade again. Maybe things have changed at Fitch since 2 years ago. Who knows? Doubtful. What this tells you is they had their time to change, and they're not credible today. Not because of what they screwed up then, because of what they are screwing up now. And there's no reason to care.
Here's a future headline for everyone to trade around. When we say that these companies are issue or pay, I mean, literally what it means is that they go to a country, a sovereign, right, or a business and say, you want to have access to this market, you want to behave in this capacity in financial markets. Our rating helps provide a glimpse into your financials, tells the world your worthiness from a balance sheet perspective. It's a shortcut. You pay us, we give you a rating. Makes life easier for you. I wouldn't call it a mob racket, but the point is that you have to solicit these ratings. The rating agencies may do unsolicited rating activity, but we as the United States actually pay for our rating. We solicit the rating from these agencies.
And then the rating is even worse. Even worse, the rating is then used as a filter for institutional asset managers. State pensions, the teacher's pension, the fireman's pension. They have the bylaws, as we all know, where it's like, well, you can't buy anything above a triple B and blah, bullshit. So the whole thing, I mean, it's a racket.
I think I see where Chris is going here.
Well, it's a risk-shedding racket, because then the fund manager could say, it wasn't my fault we lost money. I did what the bylaws said and didn't buy anything less than triple B. I mean, the whole thing is a way to move liability away from each other, basically. Everybody's trying to make sure that whatever happens, if I lose money as a fund manager, whatever it is, there's no legal liabilities with whatever happens, basically. The ratings agencies are like a giant liability shield.
That is in part why they exist, but I'm looking forward to the future headline of when Trump announces that we're no longer soliciting ratings for many of these companies. And that's going to produce a market sell-off, of course. But again, who cares what any of these people think?
But then we might magically become AAA.
That's going to be funny how that works.
Because if we can accept jets, then we can buy.
Well, now, or Trump could start his own rating agency and just give the country a AAA.
That's it.
It's not hard.
A triple T, if you will.
Trump could just be like, it's a AAA. There, next. He'd just say it like a king.
I think that this is we're going to hear about this again in the future, but it's not. For one, Ilya, I think you're being awfully generous by saying that institutions like this can change. They are still issue or pay models.
Now, in his defense, he said
I have to be open-minded to the possibility that they can, and to then look at the evidence now to say, nope.
If you want to be open-minded, go to the recommended For You tab on YouTube.
That much stronger.
If you want to be open-minded, go to the For You recommended tab on YouTube. Okay, go have your spice of life in there. Do not bring that shit about rating agencies.
I think their failure to understand that you can't downgrade, and not there. Let's keep it to Moody's. They did this. S&P hasn't done anything since the 2011 thing, and man, did they get heat for it. But if you're going to do this now, that's more glaring than if you did this back when S&P, say, did it. Because S&P did it relatively quickly after the 2008 crisis. Their reputation was in tatters.
But they did it amidst the debt ceiling negotiations over the summer of 2011, right? Like there was a
and the Eurozone debt crisis.
We were talking about the U.S. breaching the debt limit and defaulting, and then kicking the can down the road, right? So it's like, okay, like there was where is that right now? What's the springboard for?
Exactly. That you're doing this in 2025, even if we are generous enough to give you grace to learn in 15 years, if you're still doing this in 2025, that's more damning.
It's kind of like
you should know better.
It's like an analyst who comes out before, like you have all your ratings going into an earnings release, and if you come out and change your buy, hold, sell rating right before an earnings release, people are going to think that you know something, right? And if you're wrong, you're just going to look like an idiot. No one's going to trust you anymore. They're going to think you have bad judgment. So I don't know. I'm worked up about this only insofar as it seems like should be something that matters. These rating agencies have completely new to themselves, and I suppose this outs me as an institutionalist. I believe in strong institutions. I think all the institutions around us and in so many forms and function of life have failed, Dylan, right? And the reason why you have populist nationalism on the up and up in a lot of the West is because institutions have by and large failed. And that does not just mean government institutions. That means pillars of the private sector that are supposed to be kind of the referees that make sure the game is being played fairly, that everyone has a fair shake. Turns out that they're just on the sly like everyone else, right? Like, if you told me that Moody's was out here,
I believe all of this is why Donald Trump is the president of the United States.
100%. I mean, if you told me that Moody's was out here collecting PPP loans or got USAID funding, I wouldn't shock me, because apparently everyone's on the take except for us three, right? Like, the overtime boys, we didn't get PPP funding. What was that about? We didn't get USAID funding. But I bet you Moody's did. Okay. That's obviously said in jest. Please don't sue us. NASDAQ here, 21,527 today. Ilya, that is a bullish engulfing bar to give this a little bit less of a vamping, shooting the shit vibe and more of a technical vibe here. The high from Friday is 21,512, so we do clear and close through there. We're a little bit softer here after hours. What do we make of this price action right now? I mean, Tony was saying it before, 7 days up in a row. That's not nothing. That doesn't happen that often. Typically, rallies of this form and function, like they did back at the end of April, 9 days up in a row, 80% of the time they're occurring in bear markets. And yet we're closer to the highs of the year, arguably, than we were to the start of the month. So what's the next move here for stocks this week? Meandering, steady state higher?
I think now we find out, because we're in the same range where we were when the year started, where the markets were essentially trying to figure out what all of this is going to mean. If you look at the bottom line, the situation does not look any better from a growth perspective, and you could argue that it looks worse, because you've now seen all kinds of hard evidence about the economic slowdown. You saw it in the GDP numbers for the first quarter, and no, not the crazy weirdness with imports and inventories. Even if you take that completely out of the equation, what matters is consumption, and consumption weakened significantly in the first quarter. The numbers we just saw last week, retail sales, PPI, they're suggesting a weak second quarter in the same direction. The consumer confidence numbers were awful. So April, May, you're already heading into a weaker sort of second quarter. The question is, does anybody care? And at these levels was the last time that markets cared. Right around here. So it'll be interesting to see now that sort of the hysterical part of the episode is over, and may be over, let's say, until July the 8th through August the 12th, when the new cliffhangers come. The growth story is something that hasn't improved. The tariff overlay has become worse, if only because the base tariff is now 10, whereas it was 2. All around, including China. So you're in a down growth environment, no matter how you slice this. If the markets have a week now where they don't get substantive sort of stuff to speculate on day in, day out, there's no like, oh my God, on Wednesday there's this number. If they just are left to their own devices and they're left to think, I can see both ways that this works out. There is an inherent upside kind of magnetism to stocks. They're biased that way. And so they just find their way to the top of the range. And we test the yearly highs before we really decide. Or the markets get left to their own devices and they remember what is going on in the bigger picture. On Friday, the PMIs should help to clarify that, but that's on Friday. There's a long time between then and now. We'll hear
lifetime.
from the RBA. That's a good barometer of what's going on with the impact of the U.S.-China thing. We'll hear from a bunch of different notables on the data front internationally. So inflation in Canada, inflation in the UK. That's interesting again in terms of where global growth dynamics are and what central banks are ready to do about it, which isn't much. But really, it's, do the markets use this lull to zoom out or don't they? And this is where we find out.
Dylan, let's swing our attention away from broader stocks into some of the commodities here. Oil has been something that you've consistently said for weeks now is worth fading when it moves lower. It holds up here today. We get knocked lower initially, but we bounce back. Is this just another notch in the belt?
Don't you think oil is ultimately still trying to sort of calibrate economic strength and global trade? Like last year, I feel like oil was very much a barometer of probability of global conflict-based supply disruption. And this year, I feel like oil is a discounting growth and number of widgets moving per gallon around or per barrel around the world. And I just think that oil got cheap on that. And so I think that how can I be bullish how can I be bullish on everything and not be bullish on oil? Which is kind of where I've been coming from. I mean, I was bullish on oil before I was bullish on everything. I was bullish on oil when I was bullish on nothing else, and I didn't even understand why the stock market was up so much. But at this point, growth, I think, is more good than bad, and global demand for energy to move objects around the world, I think, is unlikely to be meaningfully disrupted.
Dylan, so you're still leaning long deltas here. Ilya, you have the opposite point of view. You're kind of riding this out on the short side.
Mm-hmm.
How do we know that this is perhaps the issue that I'm trying to overcome? I acknowledge the macro issues more than I would have, say, 6 months ago.
Sure.
However, given the dynamics in play right now, in a typical 45 and 21 day out cycle, it doesn't seem like this may be the window with which those fears are realized after having just come off of such an extreme sentiment event like we did in early April. And then, of course, the various incentives in this market to kind of chase higher for second quarter so people don't lose their jobs as professional money managers.
I mean, maybe not. Sure.
Why is the timing right now to be short oil as opposed to, say, later in the summer?
Let's talk about tactics and what you actually see on the screen, because I think that's how I'm in this position. I'm not looking for some sort of grand unraveling of growth as a catalyst for this, though, of course, it jives with my world view on the macro side. But here it's the price action. First of all, you're at resistance. You're at the range top where you've held before. So the risk reward to going long here is awful. There's not much room above you. There's all kinds of room below you. The risk reward is better on the short side. If you're wrong fast. If you're right, you have more space. You have on the daily chart signs of reversal. You're setting lower highs. You're starting to set lower lows. If you zoom in on, let's say, 4 hour, 8 hour, you start to see the bounds of the last upswing from the range bottom. Those have given way as a kind of sequence that's pointed higher highs, higher lows. That's violated now. So, and we haven't undone that. We haven't set a new high. We haven't broken out, nothing. So for me, this is just opportunism. You've stuck in a spot where the risk reward makes sense better on the short side. You're stalling. You've put in some signs of topping, moderate, but some of them. Okay, if you can take a risk-defined shot, as I've done here with an MNQ put vertical, then okay. I'm not looking for some grand unraveling here. Revisiting the range bottom would do just fine.
Dylan, I'm still leaning net long, but not like long CL. I'm still short the put spreads myself, kind of in the sense that I think that it's stopped falling. And, you know, again, on the other side of OPEC's announcement that it's going to raise production by 411,000 barrels per month, it shrugs it off immediately. You get one down 4-hour candle coming out of the break that first week of May, and then since then, it's just been a slow and steady grind higher. It feels like we've neutralized a lot of the fear that's been in the market. It's still a 47.2 IVR. I think perhaps the most promising aspect of the chart is that for traders who are looking to engage us now for the first time this year or this month, or they're just looking for a new opportunity in oil, we're pretty darn close to the halfway mark of the high-low range that forms around all of this tariff talk. The pre-Liberation Day high down to the post-Liberation Day swing low. The midpoint of that range comes in right around 62.60, 62.75 or so. And taking a directionally neutral position going out to 59 days, as it were, wrapped right around a dollar wide, the one standard deviation of the recent trading range, 71.72 on the upside, 52.53 on the downside. You'll see that that's basically the high-low range here. Even if you're bumped out to the next month contract CLQ5, you're looking at 65% probability of profit, risking 3.5 to make 1. It's not the sexiest trade. It's not a madman's delight where it's like 10 to 1 plus on the gain, but also it's kind of just steady work if you can get it, it feels like.
And it's more likely to pay, obviously.
Yeah, and going, $2 wide, right, you can make small adjustments here to perhaps change the risk to reward. It's, each their own. But there are ways to slice this apple right now where I don't think you need to be directionally, well, bold or bared up, even though the three of us happen to be directionally bold or bared up on the table right now in variety form and fashion. You're full bull. I'm like a cautious. It's my wedding crashes trade, right? Like you're going to stop falling. I don't know if you're going to rally. And Ilya's a little bit more bearish, so pick your poison. But I think that you have there's still something to work with here. This isn't like the end of last year when oil was chopping around and you were looking at like a 17.2 IVR. At least there's something to do here in the short term. Ilya, gold today is worth discussing as well. 1.46% to the upside. Unlike stocks, which fell at the open and rallied back, gold rallies at the open and more or less stays up there. It can't clear that 1 month moving average by the close, but it still gives you a near 1.5% gain, we'll call it. Do you have any more conviction today than you did during Futures Power Hour? Because this kind of feels like a no man's land. Yeah. In the short term, technically, given the broader implications of a decline at top that could be in play.
Yeah, I mean, it seems like what we said earlier today basically holds. So this thing had a really clean sort of range break that it ultimately couldn't make anything of. You tried to break lower, right, where you have the 100% fib level there around 3,200. There was a clear kind of support there. It held. The market came into it, stopped at it as if to acknowledge it, then clearly cleared it on the downside, then recoiled back up, then back down, and now it's holding, and it isn't really recapturing any ground. So it's aborted a break lower, but it can't muster a bounce. This is kind of inconclusive here. So I'm biased long, sort of thematically, but I don't think there's anything to do here until this thing decides.
Dylan, gold seems like it should have had a good day today. I can't help but think of a 2011 move that gold has in August and early September that year. Then again, I don't think that gold did anything spectacular after the Fitch ratings downgrade because, again, I couldn't tell you what happened when Fitch downgraded the U.S. It's such a non-memory for me. Do you think that this is the deciding factor for gold, or like everything
Don't
else?
ask me about gold. You know I don't know a damn thing about gold. I'll talk about tech stocks, bank stocks, oil stocks, silver.
Well, surely
I mean,
gold.
I will lose the last shred of my credibility if I start giving opinions on gold. Gold is nonsensical to me. It doesn't make it. I don't know why it even exists. I don't know why it goes up. I don't know why it goes down. Risk off, risk on. I don't know. But why is it going up in a risk on environment? I can't tell you. Then you talk about the Chinese. What can I do? I have no idea.
Okay, so give me something on Bitcoin, though. It feels like this is,
Bitcoin is, I think, all of this, the thing with Bitcoin is, as annoying as it is the longer it sticks around, the more likely it is to be valuable, right? Like now it's just in a game of like, the more sort of wacky things it can live through and perform through, the more it takes on the ambiance of a store of value, which is sort of, I think, the fundamental ambition for this idiotic digital con job. But I believe that it is, I actually think that the last year has been really good for Bitcoin. Not obviously it's been good from price point, but just in terms of longevity and presence as a store of value. I would rather own Bitcoin than gold. Let me put it that way.
Dylan, if you just called it a con job, I'm going to have to question your I'm bullish on everything credentials.
Just because it's a con job doesn't mean it's going up. Or not going up, sorry.
Look, 105.880
my moral opinion is that's a different show. I mean, we're in this racket is which way is she gonna go, Sam? I'm saying up. Whether it's really a value creating enterprise or a real store of value. I mean, look at come on. Bitcoin, come on.
Oh yeah. What's the price point by which you say something positive about Bitcoin?
If you want to look at Bitcoin here as just any tradable asset, I have no problem saying that it'll go up, it'll go down in a completely dispassionate kind of a way. Where I stop saying nice things about it is in the part of the story where people go, this is more than just another financial vehicle that can be increasingly in an increasingly liquid way punted back and forth depending on what you think your opinion is. Oh, good. Where I get off the boat is where you start to tell me that this is the future of money. And that's where I go, right, okay. What I think is very, very interesting is actually the cover of this week's Economist was about how crypto has become the swampiest of financial assets in terms of its closeness to power and influence in the sort of political Tammany Hallness of the current moment, to invent a concept. But if you look at the price dynamics here, it's pretty clear. I mean, look at it on a continuous contract, or even here, but on a continuous contract, you see it a bit closer. You're basically at the range top. What business in the world do you have going long here? If you don't have exposure already, either it breaks or it doesn't. But the risk reward to buying until it does is terrible. Absolutely terrible.
Yeah, it has been a very good year for crypto in that regard. Yeah, I mean, I don't find it surprising. Not an original thought, but I don't find it surprising that crypto is swampy. There's a really good documentary. Vic and I have talked about it on Jones and Friends years ago. It's called Line Goes Up. I believe it was released in January 22 or December 21, right near before you go into that big crypto winter. But they talk about the genesis of the crypto industry and, the early days in the global financial crisis. And
well, remember, can I just interrupt you? Because also I have a reason that I'm a little bit irritated. Because remember, I was the host of I was very active as a very high profile financial journalist in that 2008, 9, 10, 11 zone, and had many, many individuals approach me and insist that I buy Bitcoin.
Buy Bitcoin because it was an alternative system.
Not the dollar. Money. The dollar's screwed. America's screwed. Blah blah blah. I was like, America may be screwed, but I sure as hell ain't buying your stupid funny money.
Well, I think
was not a good decision on my part, if you understand what I'm saying.
If you think it's a system that's set up to be an alternative to the U.S. dollar, to be a parallel to the fiat currency world,
or just to be a non-sovereign currency.
A non-sovereign currency, but with that comes power, right? And one thing that this documentary Line Goes Up pointed out is that a lot of the original people involved in crypto looked at the state of the world, and this is not to say that this is Satoshi, but the people who were early adopters, and said, the banks and government put their foot on our necks. It's time for us to design a system so we can put our foot on theirs.
For sure, they approached me with that very email.
Right. I'd encourage people. Yeah. I would encourage people to watch the documentary. It's interesting. This is during the peak NFT era, and it's really in a response to how NFT is just all bullshit, which if you don't think it is, go check what that Beeple NFT was auctioned for what was that, several tens of millions of dollars years ago. See what it's trading for 60. Right now. So it was 60 million. I think it was around 100K was its most recent listed value. Check the JPEGs of rocks. How much are those worth right now? Or the crypto dick butts? I can't believe that's a thing. That word just came out of my mouth.
I mean, don't you think those NFTs were just money laundering at the end of the day, or some sort of racket?
My most controversial opinion, Dylan, is that all high art is money laundering. All of it.
I think that's reasonable.
All of it. How can you assess a proper value to anything? I, the beholder.
And you're going to move $100 million in a painting? Come on.
There was this really great piece. It's a wonderful documentary called Thief in Law about Russian organized crime. And they're talking to this guy living in France, and he's explaining that everything is relationships. Money means nothing. And he goes, look, give me a piece of paper out of the printer there. Scribble something on it. I'm going to call my guy at Sotheby's, and I'm going to tell him to hang it up there for $100 million. And because he knows me, he'll do that. And 100 people will walk past it and think it's nonsense, and the 101st will say, there's no way I'm giving you 100 million, 50 tops.
Yeah, that's my opinion.
That's why they call it a racket, my friends.
Mm-hmm.
Also, I'm not an artist, so I have not laundered any money through paintings or PPP loans or USAID.
But maybe you should get a PPP loan in order to finance some painting that you can sell to USAID.
Keep going. Keep going. You're cooking. Keep going.
Then call Hunter Biden and get him to buy it from the USAID.
And we'll get the Trump coin financing.
And then resell that for Trump coin to Don Jr.
Yeah, for warrants on.
Now we're talking.
For warrants on future. Okay, yeah, we got this. Yeah.
Well, but
okay, this is
all jokes. What do you guys need? What do you need to see Vecchio to get pulled up here? What's your problem?
On what? Equities?
Yeah.
Oh, you and I didn't have a chance to speak last Wednesday because I was nursing this neck thing, and then Thursday you were out. I purchased calls in the NASDAQ for new all-time highs last week. So I'm there. I think that the incentive structure of this market is totally warped right now in the short term, thanks to the fact that retail held its ground throughout early April and institutional and professional money managers jettisoned the market over the course of March and early April and really never jump back in. I know Tom will quip that if you look at overall account balances, it's not that people were necessarily buying the dip, it's just that they held their ground per se, and that's fine. That's good. You didn't lose the money then. But in the short term, Ilya and I were talking about the positioning update from the CFTC COT report that was released Friday, which covers the trading week through each Tuesday afternoon. So this does cover the market reaction last Monday and Tuesday on the heels of the China-US trade detente. And professional money managers who speculate in the futures market got more short. So they were already short, and they got more short coming out of...
By a lot, actually.
But yeah, so Dylan... people right now are saying that this thing is going to go down when it's going up. There's room for short covering to fuel a move to the upside still. There's also the fact that now you have a lot of people who are staring down the final 6 weeks of the quarter who abandoned long equity positions are now looking at a market that's 17, 20% higher in the rearview mirror. And they have to paint the tape to justify people keeping funds with them through the middle of the year. Because if they were saying, don't panic, don't panic, don't panic, Trump's just another president, don't worry, okay, he's not going to do anything, he's all talk, and then the market melted down, and then you capitulate here in April, and then the thing just ripped higher. Sure, you were right that he was eventually not going to do anything destructive, he's all talk, but you still lost money along the way, so tough shit.
Mm-hmm. Are they getting more short because they're hedging more, because their core position is long outside of futures?
There is okay, so this is the thing that I keep, Tom and Tony bring this up with me too. Within the COT report, we know if people are using the contracts for bona fide reasons, like hedging off existing risk. The speculative position that I'm talking about is explicitly for people who are just playing CeeLo on the sidewalk to try to make an extra buck, right? Like, we are not talking about people who are using S&P 500 contracts for hedging reasons. We're talking about people who are purely using them.
We know this.
We can disaggregate the data
with confidence.
We can disaggregate the data. It's in the CFTC COT series. We can look at bona fide hedgers, commercial hedgers. Who's a commercial hedger in equity futures? No one's out there growing equity indexes on the stock, right? Right. So the only reason why you would be a bona fide hedger by definition for equity futures is because you have the underlying. You own the underlying and you are hedging the underlying stock that you own. So that's how they disaggregate it. People who are rolling the dice in the equity market still are trying to fade this thing, and that is not typical action. So I think the incentives, Dylan, are for this market to squeeze to the upside. Ilya, I think the PMIs this Friday are going to be absolute garbage. It's funny that it's happening 3 months later on the dot because it was the February batch that gave us this spillover here. So maybe that's the move this week. We rally up a little bit more, and then Friday checks us back down. We close the week unched. And then we go into Memorial Day week, where next week it is a shortened week. But you know what? With that, overtime is now out of time for this Monday, May 19th. We'll be back tomorrow on Tuesday, May 20th. Until then, for Ilya Spivak, Dylan Radigan, I've been Chris Vecchio. Ilya's coming back, though. He's here with Macro Money up next on Tasty Live. See you there.
See you there, everybody.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
All right, Julia. All right, Nick. All right, Mike. All right, Jamal. All right, Glenn. What was the last trade that you made?
Oh, it was bad.
Oh, man.
I bought SQQQ. It's like a 3x inverse ETF. I feel like I get shit on for the inverse ETF trades. They're not, I wouldn't say they're always good trades, but I'm like, I kind of don't want to get in the options right now, but I want some leverage.
I got long some Apple and it just happened to work out in the last about 5 minutes here. So I sold a wide put spread out in May and it basically lost half of its value in the last 5 minutes.
My last trade was closing out a meta calendar spread that was worthless prior to the 500-point rip in the E-minis.
Last trade I placed was I closed out a put spread in SPY. It went well. I regretted to say it was a long put spread that I put on yesterday into the big move, and I closed it out since we retreated in price today, and it's worked out well.
Short gold options.
How'd it pan out for you?
We're still alive, but we're not looking good.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Oh, yeah. Tasty Nation, good morning.
U.S. credit downgrade? What U.S. credit downgrade? That's the question the markets are asking themselves after Moody's decides to lower the U.S. sovereign credit rating, and no one seems to care. We'll take a look at what all is going on here momentarily. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we won't dwell too much on what happened here over the weekend because, frankly, its impact on the markets was minimal. It is interesting, of course, what that leaves on the table. So we'll look at what the week is likely to bring in terms of macro event risk and put that in context with what else is going on for the economy itself, because it does look like a picture is starting to crystallize here. And of course, as ever, the question first and foremost is, when do the markets start to care about it? So as we kick off here, let's first consider where we were at the end of last week. We can see equities had a nice run. S&P 500 up 5.2%, NASDAQ up 6.8%. Interest rates nudged up a little bit more as the risk-on move basically extrapolated across markets. It looks like, generally speaking, the overall sort of growth disposition was broadly well supported, and maybe not necessarily because of the economic data, because it didn't give anything particularly growthy. As a matter of fact, it looked more in the opposite direction, but it did look like there was a kind of further unfurling of the concerns that struck markets in April and a further recovery in sentiment, because the entire setup seemed to look like a little bit more favorable from bonds. Crude oil edged up a little bit. Gold fell. The U.S. dollar strengthened a touch against the euro and the yen. And so the overall landscape seemed to be one of relief and normalization across the whole range of assets. And then, of course, we opened this week having heard on Friday after the close that Moody's lowered the U.S. sovereign credit rating down from AAA. This, of course, follows the 2011 move from Standard & Poor's when they did that. In 2023, Fitch did as well. Moody's was the last holdout, so this makes all three of the big rating agencies that have done this now. And needless to say, the markets don't really care because, of course, not. It's silly to say that the world's most eligible borrower is not AAA, because that, of course, means the rating is some sort of academic barometer rather than a practical reflection of actual credit worthiness and risk. And that, of course, means that it doesn't make much good use to anyone in practical terms. So the markets duly shrugged this off after an initial wake-up call at the open of trade. You can see here the S&P 500, very little changed on the day. Ultimately, we gap down, we try to extend lower, and we ultimately close essentially on Friday's highs and ultimately don't go very far at all. Very tellingly, on the bonds side of things, we spike lower into these lows here on the 30-year note and very pointedly hold them and actually erase the entire decline following the initial gap. So again, bonds here telling us there is no sovereign credit risk that has been marked up significantly as a consequence of this downgrade. The market is very straightforward looking at this and saying, we don't care, this doesn't matter. The US dollar, a touch lower. This is the DXY dollar index, so an average of its value, of the dollar's value against the major currencies, albeit one that's tilted to the euro in the basket, because this basket was created before there was a euro, and so there's a bunch of legacy currencies that were there, like the Deutschmark, like the French franc, the Italian lira. And so the basket now, since all of those are now the euro, is very sort of lopsided, but Nevertheless, it is looked at as a barometer of overall U.S. dollar performance, and you can sort of see here that you get a little bit lower on the dollar today, but ultimately you're within familiar ranges here, and a breakout is averted. And so the markets basically shrug this news off, which then fasts forward to what comes this week. And unlike last week, we don't have an obvious U.S. cliffhanger on the data front. We don't have an obvious standout like a Fed rate decision or an NFP report or some such thing. It is a more nuanced week, and it begins in Australia with a monetary policy announcement. And before we launch into it, it's important to consider that we are now in an environment where, without that kind of cliffhanger risk, the markets have perhaps a bit of room to ponder where they're at, especially since the reintroduction of tariff risk is probably off the menu somewhat until these 90-day cliffhangers for overall reciprocal tariffs above 10% in early July, and then those having to do with China in early to mid-August. Until then, this story is perhaps on the back burner unless something comes out of left field. And so the markets have a bit of room here to ponder just what exactly is the broader picture, having looked at, in a very focused way, headline by headline, how this trade war scare is going to evolve. This is maybe a moment where the dust can settle. And so the lens for the markets may well be evolving as well and broadening to the overall picture, as the sort of initial shock of Liberation Day and everything that followed really seems to, at this point, fade into market memory. So with that, we have a fully priced in rate cut from the RBA that's on the menu. We can see here it's not quite fully expressed in May because, of course, the meeting is relatively late in the month. It's coming Australia time on Tuesday. And what you have here is the spillover essentially into July's contract to really see it, but the expectation is that we're going to go from 410 to 3.85 at this meeting, and we can see it's fully baked in at this point. We see further rate cuts over here, at least one more cut on the menu before year end. Moreover, we can see that between the February and the April policy announcements, there's been a meaningful dovish shift in the pathway for rates that is expected. And since that early April meeting, now going into the May one, the calculus hasn't really shifted. So this has been relatively stable. If we look at the way that it's evolved in overall policy expectations, we can see, again, the markets expect just about 2 cuts for this year, and then stasis next year. There's a bit of optionality on a third cut this year, about 50-50 chance, but the market isn't leaning that way yet. And in any case, we've seen that since the beginning of May, policy expectations have unclenched somewhat and have become less dovish. Growth in Australia has held up reasonably well. This is the composite PMI, and although it ticked a little bit lower in April, we can see that the trend in growth since basically the fourth quarter of last year has been generally pretty positive. At least the incline is going in the right direction here. And the upshot seems to have been domestic demand, which in Australia has held up a little bit better despite stress externally. Moreover, we can see inflation has started to kind of anchor around the central bank's target. So here's 2%. Australia allows for a range. And so we're kind of anchored right where we need to be, give or take, relative to history. And so the RBA perhaps finds itself in an interesting position here, where they're expected to cut. They will almost certainly deliver on that cut, looking at what the markets have priced in. But the question then becomes, well, that much is expected. What's going to be the market moving bid? Australia looks to China as its largest trading partner. And the export mix, the goods trade between them, is very sort of industrial input growth type of a mix. It's mainly coal, iron ore, and the like. And so there's a lot of sensitivity here for the kind of knockback to Chinese growth that a trade war with the U.S. would ostensibly bring. And so the really interesting thing here might be not so much the decision, which is well expected, but the RBA's vantage point on the economy and how it is likely to evolve in this environment. Because what that essentially gives you is a view of how this trade spat is spilling out and where its impact might be appearing relatively early at the start of the global supply chain, at the commodity inputs part of it. And so, in this sense, what the RBA says about what is coming next might be more interesting than what they ultimately do. And with inflation anchoring near target, with growth generally well supported, or so it would seem over recent months and quarters, the upshot may well be that there isn't really a reason to do much of anything, but to back away and let the dust settle. Seems to be a popular perspective on the fate of the trade war at this point. And what that would suggest is that this is a central bank that isn't in a hurry to react and is waiting to see, and is generally taking a relatively hands-off approach. It is a similar upshot when we get to the UK, which is the next place where we look to event risk. The CPI numbers here due for April, and they're expected to show us that inflation picked up considerably, 3.7% expected at the core, 3.3% at the headline. These are significant historical reference points when we consider where this has been before. This is quite the increase, actually. For the headline, this would be the fastest since February 2024. For the core, the fastest in 3 months. We see here that the Bank of England has seen its rate cut expectations moderate somewhat. We're looking for 59 basis points in cumulative easing now through the end of next year. We can see next year is about a coin toss as to whether we'll get another cut, but this year seems to be tilted in the direction of 2 more moves. What's really interesting here is that since March, so over the past 2 months, we can see that the range of speculative amplitude, so how much the markets are prepared to swing to dovish or hawkish, it's significantly narrowed. So policy expectations seem to have really anchored around a sort of mean here. And March was a little bit less dovish. We can see here earlier this month, that policy announcement gave us something that was a little bit more dovish relative to where we are currently. And so the markets ostensibly read that announcement as having a little bit more sort of defensive of a tone in terms of the current posture, a tone that wasn't ready to really get behind a lot more easing. And so we've backed away here. And so we can see that the markets don't really expect any fast changes from the Bank of England. And if we were to see inflation pop higher, that would at best reinforce that view. So once again, we have a central bank here that is unlikely to get pulled into action quickly. Now, this is not unlike the Fed, which also has been resisting calls to act, even as growth indications have started to point lower. And this is really where both the UK CPI and the RBA policy announcement make for welcome stage setting, because they tell us that global central banks are not in a mood to react powerfully to growth risks. They are at this point sitting back, and they are inclined to be reactive more so than proactive. Now, this all gets very interesting on Friday when you get an update on global growth dynamics via the S&P Global PMI roundup for May. And we can see really the main story here is the composite for the Eurozone expected to remain near standstill. Of course, these are as ever in a range where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so at 50.7, after a reading of 50.4, you're essentially hugging standstill. And looking at the US side of it, similar story, 50.6 to 50.4, again, hugging standstill. That's not especially encouraging when the last time we looked at these numbers, this is April's bottom line, the global PMI numbers. These gave us the weakest performance in 17 months. And that's largely as the service sector unraveled globally, which pulled the overall composite closer to this 50 neutral level. And that's despite the fact that on the manufacturing side, there's actually been a little bit of a bounce, ostensibly amid front running of the trade war, trying to stock up inventories, which is, of course, exactly what we saw in U.S. GDP data. More on that in a second. But we know from having repeated it extensively on this show, 58% of global growth is just three economies: China, the Eurozone, and the U.S. These PMI numbers due Friday are going to tell us, or at least the expectations are, that this part of the pie is at standstill. Now, that's not news for the Eurozone or, for that matter, China. In fact, if we look at how these composite PMIs have evolved, the Eurozone and China have drifted into essentially standstill over the course of the second half of last year, and there they remain. The difference maker last year was the U.S., which was growing very strongly and at one point at the strongest level since back here in 2022. But that has since given way to standstill, and these numbers are likely to tell us that that remained the case from April into May. Which, of course, raises the question, if all three of the world's top growth engines are out of commission, and the other 42% are mainly vendors servicing demand from these three, well, then where is global growth supposed to come from? And if it's already at a 17-month low in April, where is it going in May? Now, the indications that we've seen about where the U.S. is heading in this framework, since it is the U.S. making the adjustment, the other two are already at essentially anemic growth, then it behooves us to remember that in the first quarter, we just saw these GDP numbers. The bit that was consumption was already the lowest in almost 2 years, going back to the second quarter of 2023. Obviously, there was these massive distortions to imports and inventories, a part of investment here, as a response to front-running the tariffs. But if we take a look at what GDP is actually made up of, it is 68.5% household consumption. Once we net out exports and imports for their contribution to GDP, we're talking about less than 5% of the total. Now, last week, from retail sales to PPI, the story seemed to be that this weakness in consumption is liable to get worse in the second quarter. The retail sales number was soggy despite goading from the administration to front run still more tariffs with Liberation Day and then its pullback just days later, at least partially. The PPI numbers showing businesses are eating the increase in the cost of imports for now and insulating consumers. So they had every reason to try to front run these tariffs, and yet they didn't. And then, of course, there is what the landscape looks like going into May, which saw the worst consumer confidence readings since the lows following the opening from COVID. Moreover, a surge in inflation expectations that exceeds those COVID highs by almost 2%. On your inflation expectations now at an astronomical 7.3%. Now, that doesn't seem likely, but it tells you where consumers are. And of course, again, if consumers are what matter, and they are not going to stop being defensive, if that's the case, well then this is likely to continue. And this is likely to get weaker. And global recession is likelier on the horizon, with central banks, perhaps Exhibit A from the RBA and an implied Exhibit B from the Bank of England this week. They're likely to follow the Fed's lead and do relatively little until it is painfully obvious that action is required. Now, will the S&P begin to care about this part of the story? Will that start to register in sentiment? Well, the last time it cared was right around here. This downturn starts with a bad set of PMI numbers. That triggers the beginning of the growth scare that then becomes the hysterics of Liberation Day and maybe a sovereign spook in the U.S. and maybe a currency crisis until cooler heads prevail. And so the question for this week will be, with the benefit of a lull in U.S. headline-grabbing data, at least until the PMIs, will this be the point where the markets reevaluate and come back to the idea that after all the fire and fury, what they're left with is more global recession risk, not less? Or will we continue to ride the sentiment improvement as relative to the beginning of April to still higher highs? This is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be on with Chris for Monday and Friday editions of Futures Power Hour, as usual, this week. On with Victor Jones for The Price of Truth on Tuesday. Back with Victor and Tom for First Call on Sundays. Writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Thanks very much for joining. Macro Money's back tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today. All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, fan favorite Greg Magadini, co-founder of Genesis Volatility and now director of derivatives at Amber Data. Greg, thanks for coming back on the show. How you doing?
Doing great. Thanks for having me on, Ryan. It's always a pleasure to be on.
Absolutely. It's good to see you, and we have a lot to talk about. I think when we last caught up, that was about a month ago, I think April 23rd to be exact. There was a bit more positive sentiment in the market, if I recall. Bitcoin trading back above 90 or so. A lot's changed since then. What do you make of the price action? What are you seeing out there?
Yeah, I mean, we're getting kind of just a nice climb higher in sort of the spot prices for Bitcoin. So to me, this is doing what it's supposed to do type of deal. So I like that. And in terms of the vol markets, there's still interesting opportunity there. We have a very steep contango term structure. We're kind of hanging out right below all-time highs. Implied vol and realized vol are kind of at lows year to date. And I have a hard time not seeing, if we get that breakthrough to new all-time highs to be kind of a mover and shaker type of event. So there's, things might be lining up, like it might be a vol trap too. So keep that in mind. But I think we're getting towards that inflection point where things are getting really interesting again.
What do you make of the low volatility here? When I look at Bitcoin, I've got an implied vol, let's say, closer to 40%, 50% or so. A little bit different when I look at ETH. And then we often like to just kind of measure where that is on, let's say, a 1 year basis, a 6 month basis, what have you, but just kind of get a sense of, where is that within the range? And you look at Bitcoin implied volatility, and as you alluded to, or as you mentioned, it's right there near the low end of the range. At the same time, you've got Bitcoin prices that are pushing towards almost new all-time highs. We've got a range of about 75 to 110 or so here on the screen. But what do you make of the low volatility is it here to stay? Is this a reflection of institutional participation and kind of the maturation of the space, or is it only a matter of time until we're back at 100% implied vol for Bitcoin?
Yeah, that's a great question. I would say your point about the institutional activity, those are kind of the structural flows. I do think the structural flows are a downward pressure on volatility as the asset class matures. But I wouldn't discount sort of the cyclical moments that we can get. Maybe I could just share one of my charts here. I have a chart showing the implied versus realized volatility. So this is the 7-day implied versus the 7-day realized year to date. So just as we talked about, we're really at these year-to-date lows, realized and call it the 35 handle. They're very short-dated, implied around 35. As you mentioned, sort of the 30 days, more around the 40 range. So this is kind of interesting for a couple of reasons. One is there's the absolute level of vol, but then there's the variance risk premium, which is actually pretty narrow here. There's not a lot of implied premium to the realized, which is usually what you're selling implied for, is to capture that. And then something else that's really interesting is if you look at the term structure, the front end here is very cheap, or is the lowest part of the curve. And if I go ahead and contextualize that historically speaking, you can see this chart here. It's looking at the backwardation / contango extent through all the relative markets. 1.0 is a perfectly flat term structure. When we have these vol events, call it COVID or FTX bankruptcy, we get about a 1.32 sort of top formation, which means the front end is 30% more expensive than the mid, which is 30% more expensive than the back, so on and so forth. But today we're kind of at, near that lower end of steep contango. So I do think this is something to keep in mind in terms of opportunities. And if I look at this nice little chart we have here, that's showing us past implied versus current realized, which is giving us the realized variance risk premium. We can see that vol buyers are starting to get paid here on the front end. Back end stuff, 60 days out, 30 days out, vol buyers definitely overpaid for realized, but we're kind of getting a little bit of that turning point in the front end. And I do think if we're making new all-time highs, and we're not there yet, but if we are going to make new all-time highs, once we're in that territory, it's hard to call tops. And I think there's a lot of momentum behind it.
You mentioned a volatility trap earlier. Is that a scenario where, sure, at this point, it looks like we, certainly have lower implied volatility levels. It could be cheap. Is that volatility trap a scenario in which it actually doesn't get more expensive from here, and it could get possibly cheaper on those longer dated options? So even though you're going out, you're buying a leap, you're buying something with a little bit more time, it actually gets a bit cheaper.
Yep. So that's kind of the thinking that I have in mind. I'm more thinking of the medium term to short term. So with that steep contango, you might be tempted to buy 30 days out, 60 days out, but don't forget, you're not only paying theta, you're paying roll down vega on that contango. So as we approach maturities, you kind of have that exponentially decaying theta, but you also have vega points leaking out of the market. So there's a lot of cost to being long vol in that scenario. And then something else to keep in mind is, we've seen these patterns before where assets make new all-time highs. Sometimes they consolidate right below that all-time high for longer than expected, which is very much a vol contraction type of move. So I would keep those things in mind. I'm very interested in sort of the upside, delta, upside, vega, as we're making new all-time highs, as opposed to anticipating a break of the all-time highs.
Okay, so you're kind of waiting then for, let's say we get the break of 110, and then you'd be a little bit more active in terms of going out and buying some of those options if that's your strategy?
Yep, I think that's a better way to play that.
What other strategies would you look at using here, to maybe offset some of that theta decay, or is there anything else that you'd look to do kind of with the current setup?
Yeah, so I mean that's a really good question, Ryan, because you wouldn't know it from my 2 appearances here on the show so far, but I typically like to trade short vol structures a lot better than I like to trade long vol structures.
Okay.
There's just something about, the long vol profitable profile is you buy something and you got to make the 10x because the other 9x it loses. The other 9 times it loses, 100%. So you got to be able to hold winners for a while for the long ball to pay off in the long run. And so typically that's not my favorite type of structure. But as of right now, those are the 2 opportunities that I see. We talked about the long dated IBIT leaps. Last time I was on the show, that's still a position that I think is really good. And then here, kind of breaking these all-time highs, I like to play the options market a little bit better as opposed to the futures market or the spot market, just because there's just a little bit less spike down risk, shakeout risk from a levered long futures position than there is with just a long options position. But in terms of offsetting that, I would still probably keep it simple on my side here with this type of trade.
Awesome. Yeah, since the last time you were on the show, Greg, I actually went out and bought some longer dated IBIT calls myself, and they're working out. I've tried to kind of bounce around in some shorter term stuff, and what's nice about those options, obviously, you've got weekly expiries, but I've tried to, offset a little bit of the theta decay. Fortunately, there's not too much in there at the moment, but kind of followed you into that, and appreciate the trade idea. Yeah, forgive me as I bounce all over here, too. I've got a lot of questions for you.
Fantastic.
So when we go back to, I guess just looking at what's on the screen here, we've got, I believe this is looking at data that's coming from Deribit. Is that right?
Yes, Deribit data, yeah.
Is it fair to say that you would see or you're seeing the same thing in IBIT options? So a lot of what we're talking about, term structure and contango, some of the strategies that you could use in these environments, would that be applicable to IBIT as well?
Yep, absolutely.
Awesome. I think we got it loading on the screen here.
Yep. Bring this up here. So we can see that kind of term structure here right now in IBIT. And the vol is very similarly priced.
So when you go back to your personal portfolio construction, I know you've mentioned that you typically trade shorter dated stuff, and mostly you're in the options market. Do you carry spot positions? Do you ever trade other derivatives such as futures? Like, how else do you approach the market? Or are you primarily just trading options?
So yeah, there's a few markets that I trade. So I'll trade some equity options here and there once in a while, but I usually trade S&P 500 future options, gold future options, CME yen future options, and then IBIT equity options. Those are kind of the main instruments that I trade. I'll trade some NVIDIA here and there once in a while, but that's basically a SPY option in a lot of senses. And then once in a while, I'll have like an equity bias. But I usually stick to the option market for the exception of very wide markets. If I really want to trade something that's kind of a off the beaten path idea and the equity is just much more liquid, I'll trade the equity in that case. But the reason why I trade options, even for delta plays, is because there's just always a shakeout risk in any type of asset. And I've seen it so many times where you get like this wick that kind of, any prudent risk management strategy would cause you to essentially cover your position. And it's always just hard to get back in after you just got wicked out like that. And that's what I like about options. There's that risk is not necessarily the same.
What about kind of longer term, I guess, investments in crypto specifically? Do you hold positions in anything outside of Bitcoin? Do you have any spot positions where you're looking at this as a longer term trade, whether it's 1 year, 5 years, et cetera? Like, how do you think about that if you trade those positions?
So when I was a younger man, yes, I did, and I had longer term positions. Today, no, I don't. All the money I made in crypto, I put it in real estate and put it in bonds and just use that as income. And the way that I trade my portfolio, I trade pretty aggressively and I take the profits out every year and I put it in safe assets.
Awesome. Makes sense. I'm sure, though, you still have a Bitcoin price target or maybe other price targets in your mind. When you look out, let's say over the next 6 months or so, right? We've had a ton of noise over the last month. Tariffs, recession fears, the kind of ongoing trade war as well related to the tariffs. We just recently got the U.S. debt downgrade from Moody's, following Fitch and the S&P over the last couple of years, though arguably, given price action today, it's hard to say that matters much. But when you look at everything going on and you look at kind of the resilience of the Bitcoin price, do you have a sense of, or kind of a view as to maybe how high we go if we do break out? Are there levels where you think maybe now it might be time to buy put options and we're looking to play a reversal? Like, how do you think about the market over the next 6 months?
So I would break that question into two parts. There's always short-term trades that I think are interesting, and those are kind of like independent of my long-term bias or thesis. I think the longer-term thesis that I find interesting today, the gold market is at, I think it's around 24 trillion market cap. It's pretty high up there, and gold doesn't seem done to me. And again, I still think Bitcoin trades like digital gold. I think there's a few scenarios where the scariest possible thing would be trying to short Bitcoin. And one of those is, do people start buying Bitcoin as digital gold? And I'm talking about central banks, governments. Do we get that there is no offers on the books type of scenario where we get that squeeze higher in Bitcoin? That's where I think, my long-term investment is those, IBIT leaps, at least as of right now, that's what it is. And in that case, I want all that upside. That is one of those, the sky's the limit. That's one of those charts where you look at like railroad stocks in the 1930s and they just did crazy things. That's that scenario in the modern era. Sky's the limit, no price target, just don't get squeezed on the wrong side of it is the thought. In terms of kind of more realistic targets where, does Bitcoin go to 200K, something like that? Yeah. That's we could grind higher till those kinds of levels, but that's not really the scenario that I think people are kind of seeing could happen. We have like this fundamental shift in the world where maybe the U.S. dollar reserve becomes a different type of world reserve currency. I want to see that play. That's not for the country, but for the fundamental value of Bitcoin. I think that's what happens in terms of making the asset worth a lot more.
Yeah, I completely agree. I mean, I think you're starting to see maybe the early signs of a shift away from, not so much the dollar, obviously as a reserve, but just the idea that the only pristine collateral or within the broader financial system, the collateral that you constantly want to hold is dollars. Not that you won't have dollars, or dollar-based collateral, but you're seeing some diversification away from it. I think to an extent, it kind of explains the price of gold here today and some of the flows that we're obviously seeing into these Bitcoin ETFs. I just came back from Toronto at the Consensus Conference, and as you can imagine, everyone there is super, super bullish, throwing out price targets of 150,000, 200,000. So you almost think that it's maybe self-fulfilling in many ways. But it also kind of concerns me, as a contrarian, when everybody's on one side of the trade or one side of the boat, you kind of look for opportunities elsewhere. Do you see a trade in the short term to the downside? Do you see any room for a correction? And if so, where would you look at kind of in terms of price levels that this might be going to?
I don't. I think right now there's a lot of upside momentum, and I'm not interested in downside trades, and I don't really see them right now. Especially with equity assets, risk assets, risk on assets having this nice recovery. There's nothing that I find interesting. There's always you could be in cash trade. That's totally fine. But playing the short side here in this momentum, there's just better opportunities in my mind right now.
Yeah, and I think we kind of already saw it, right? I mean, throughout a lot of these bull markets historically, not that this has been around that long, but previously you do often get these corrections of 20 to 30%. We just had the 30% correction, local low of 75, and the buyers stepped in. So it would be odd to me that you would get an immediate correction. But at times too, I wonder, does this with a very low volatility, does this present an opportunity to maybe buy puts as a potential kind of lotto ticket? But I tend to be with you that you want to stick with the trend here.
Yeah, that's a great point, Ryan. Like I definitely think still stick with the trend. But if you want to do a lotto ticket trade, like the risk reversal trade is always interesting. You could buy the put, sell the call, delta hedge with the asset, That's kind of a delta neutral position. Nothing happens, no harm, no foul. If you get sort of that crash lower, put vol's going to come in. You'll pick up negative deltas on the way down. That's kind of a nice way to play that. And if we break all-time highs, take that position off.
Well, I hope that we do. Are you active in anything else outside of Bitcoin options? You trade ETH options, or I think there's Solana options and probably many others on Deribit. Is that right?
There is, yep. There's some interesting trades on Solana right now that I've been kind of pointing out. We've had a big seller of May 31st expiration $200 calls. It looks to me like an overwriter, someone who owns the asset is selling covered calls against it, but they're selling in size. So they sold, I think, last time I checked, was a block trade of 100,000 calls, something like that. That to me seems like one of those times where you're an investor who sells a covered call, and then like a couple weeks later, you regret selling that covered call. I think there's one of those opportunities where taking the other side of that flow could be very interesting. So to me, Solana still has wild card upside in it, and I would not be a seller of 200 calls, even if it's just 2 weeks out. There's just too much risk there. And I think this could actually be an entry on the buy side.
What about ETH? Are you seeing anything there in those markets?
So ETH is very interesting. I like that ETH has been a beat up asset. And if you look at the Bitcoin ETH or the ETH Bitcoin ratio on a weekly chart, for example, the past 5 years, weekly candles, there's a lot of upside for this ratio to keep going higher in ETH's favor. So to me, it might be one of those assets that's very under-owned and we get above 3,000 pretty quick. So I wouldn't discount that scenario. And if we look at the Bitcoin dominance ratio, let's remember, Bitcoin is trading as a risk asset and a digital gold asset, whereas all the altcoins are trading more as risk assets. So if we're looking at outperformance in the crypto space in this sort of equity recovery or risk on recovery, I expect altcoins to finally start making up some ground. ETH would be one of those.
Do you think we have to see Bitcoin hit a new all-time high? Let's just throw out an arbitrary level. Let's hit 150. Does it have to go there first to then ignite that FOMO and maybe some of the rotation into relative underperformers like ETH? Or could you see, just simply given that ETH BTC ratio is relatively cheap, you could see traders step in there and bid that up to, let's say, 500ths of a Bitcoin? Man, if it got to a tenth of a Bitcoin at this price, you'd certainly want to be long some ETH. But what do you think kind of happens first? I mean, ETH has been, as you mentioned, so beaten up. It's been left for dead. No one's really paying attention. But that said, I mean, Bitcoin dominance is what it is at almost, at 3-year highs here.
Yep, that's a great question. That is, does crypto trade like 2021 or does it trade like 2023? 2021 was really like risk on, rah, let's go crypto. Altcoins did very well. 2023 was more a SVB banking crisis, geopolitical wars, monetary policy hedge, digital gold. That's what's driving crypto higher, therefore Bitcoin leads. I think we're still in the Bitcoin is digital gold, Bitcoin leads higher world. I think those are really the big questions that the world is asking itself in terms of trade wars, global supply chain disruptions, global monetary policy. When does the Fed finally cut rates? Blah, 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 blah. To me, those are Bitcoin narratives. Now, risk assets recovering over the past 4 weeks since the trade war sort of initial spike down. That's been good for altcoins. But I think that's a nice short-term trade. But I think that the narrative in the medium to long-term continues to be Bitcoin-led.
Okay. Bitcoin over everything for now.
Mm-hmm.
Outside of options, I mean, what else do you have your eye on? Sticking with crypto, are there any other themes that you think could emerge, will emerge this cycle? Is there anything else that people are kind of sleeping on? We had the AI narrative for a moment. I don't think that's dead, but clearly it's again been Bitcoin over everything. We've had real world assets, layer twos. What are you focused on, if anything, outside of kind of short-term options and what we've talked about already?
Yep. I think one of the things and one of the themes that we're going to start seeing, so we're going to see consolidation in the space. We had, this Coinbase acquiring Deribit announcement hit the wires. That's very interesting. But some of the other unknown things or lesser known headlines, for example, Derive, formerly Lyra, just got an offer for acquisition by SNX or Synthetics. And so obviously there's a lot of altcoins that are governance tokens floating around in the ether. There's an incentive for someone to buy up the tokens and essentially do sort of a acquisition, whether it's hostile or not hostile, but to essentially buy that tech. And when we're in this kind of people are not thinking about that environment, I think we could see some more of these types of acquisitions. That's very, very interesting to me. So we'll see what's going on there.
Yeah, that is interesting. I didn't see that at all, the Synthetics Derived news. So that's pretty cool. What do you make about the Coinbase Deribit acquisition? I mean, clearly it's positive for Coinbase.
Yeah, I mean, I am very excited. I think this is really good for the space. Obviously, Coinbase has Coinbase International. I think for the most part, business as usual, international only, U.S. investors still kind of closed out. But I think kind of thinking down the road, Coinbase is telling itself, hey, we're going to fight that regulatory battle a little bit more for the derivative side. And I think that'll be great for the crypto vol space.
You think we'll be able to trade crypto options via Coinbase, via Deribit in the U.S. soon?
Soon? I'm not sure. But eventually, yes, I do think so.
Fingers crossed. I guess we have IBIT options for now.
Mm-hmm.
Yeah. Anything else, Greg, before we wrap things up that you've got your eyes on? I appreciate you coming on the show as always.
Yeah, thank you so much, Ryan. The only other thing that I have my eyes on are, ETH ETFs that are returning staking rewards. It's going to be kind of interesting, especially if you look at the futures market and the futures term structure of ETH versus those ETFs, those hedgeable ETFs. I also think the Solana futures market is very interesting. That's trades at different valuation than the Bitcoin futures market in terms of futures basis. So I think those are interesting opportunities out there as well. So let's not discount basis trades. There's some good stuff out there.
So is there, I guess really quickly, is there a decently wide spread when you look at the basis trade for Solana futures?
Yeah, so there's a negative basis in Solana futures and or call it a backwardated basis in Solana futures and a contango basis in both ETH and Bitcoin. Now, let's remember that a basis trade is delta neutral, and so you can essentially do some very interesting stuff against those and bet on some sort of convergence, or just wait it out and get paid. Or you could do some sort of relative pairs trade and capture the basis along the way through both of them. So, short the ETH future, buy the Solana future type of thing, get a built-in, call it 7% spread to own that, and so on and so forth.
I love it. Greg, thank you, as always, for coming on, delivering the alpha per usual. Always love to hear your unique insights and take on the market. So thanks again, my friend. Before we let you go, where can everybody find you or learn more about what you guys are doing? And you're doing some great things over at Amber Data.
Yeah, absolutely. So anyone who's interested in looking at some of the volatility surfaces or futures basis or anything like that, you can go to pro.amberdata.io. And if you want some weekly recaps, you can go to amberdataderivative.substack.com.
Awesome. I'm already a subscriber, so we'll leave it at that. That's going to do it for our show. Greg, thanks again for coming on. I will be back on Wednesday. Until then, I'm Ryan. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, Are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The tastylive research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All right, Mike, we have earnings coming up next week in a time of high volatility and a lot of uncertainty. What advice would you give to traders in terms of attacking earnings in a time like this?
It's a great question. I think every so often we have this pocket of time where everyone is talking about the same thing. Or when Bitcoin and crypto came out, we had Radio Shack talking about it. We had a coffee roasting company talking about it. Now I think you're going to hear a lot of tariff implications. So there's going to be a lot more heightened implied volatility in that weekly cycle where earnings are. Just doing your due diligence, have an understanding of what might impact the company you're trying to trade and how potential tariffs might impact that.
And what would you say your earnings checklist is? What criteria do you look for in a company if you're going to try to make a play on earnings?
You have to be really small. Even when you have a super strong assumption, you can be really wrong with earnings. The options market's closed when the earnings come out. You can't adjust unless you're hedging with stock, which I would say maybe size down more than you normally would. Stay defined risk. Just because a company reports good earnings numbers doesn't mean the stock is going to go up. Just be prepared for a lot of uncertainty.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realized it was just a big competition. You know, it's like a big poker game with really smart people who know game theory and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go wherever the opportunity is.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend. I really appreciate it. You made my weekend, man.
All right, Tony, we have a big week of earnings coming ahead in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important when you have volatility in the overall market, because sometimes a lot easier to find a higher probability trade in a longer dated time frame than you would for earnings. But if you are going to trade earnings, I think you have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Oh, yeah, it's Monday, May 19th, a little bit after 5 p.m. Central Time. The best time, you know what that means? It's time for Tasty Live's Evening Show, a little podcast. A little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, do yourself a favor and go get them. But if you want to be part of this little guy, there we go. I forgot which finger it was. If you want to be a part of that little guy, the chat box on your screen, there's only one place you can do it, and that's on the evil, and I do mean evil, but potentially underpriced Google YouTube. So head on over to YouTube, subscribe to the channel, and then start moving those phalanges, those metacarpals, or just even bash your skull into the keyboard to create random ass characters or appropriate or inappropriate thoughts. Whatever it takes to spoof the Google algorithm and put us in front of as many people as possible. Shout out to all of you that are already in the chat It's so good to see all of you. Honestly, after a long day or early morning, wherever you are in the world, to come in and see all of your bright, shiny, smiling faces. I mean, I don't know. Maybe it's not shiny. Maybe you're not even smiling. Maybe it's not even bright. Maybe you're in a dark room. But the point is, I'm glad to see you. Shout out to Sleepy Mocha. Shout out to Theta, Catan, Mark. Are they running commercials over my face? Mark, Cato Prime, Donna, Sun. Oh, man, we got the whole crew in here. Jay, what's up? Emmett, did I ever say your name? If so, go buy a lottery ticket. Brian Watson, the YouTube goat over there. Edward, Kyle, JDD, scrambled everything. So many more. Shout out to all of you. Great to see you. Off, and away we go, people. End of the world is here. Oh, didn't happen. Again, it didn't happen. But you are getting more bullish, aren't you? It's making you a believer. It's making you a believer. That's how these things work. S&P, my babies, cash, ended the day up 9 basis points. So if you were freaking out last night when the NASDAQ was down 2%, they did the same. They did the same thing. They did, what was that, April 3rd. They bought $4 billion worth of stuff. It's like the same pajama trader. It's all retail. It's like the same pajama traders. You give them a discount. They do this every time. Click. Thank you, sir. May I have another? I'll take $4 billion worth of stock, please. It works until it doesn't. One of these days it's not going to work, but that day is not today. The NASDAQ up 9 basis points. The Dow Jones, my babies, up 32 basis points. This is easily, you all know this is the worst index ever created, right? Sorry, I'm a bit thirsty. I'm parched, as they say in the business. The Russell down 0.2%. So much for that rotation trade, huh? They'll come back tomorrow. But easily the Dow Jones is the worst index ever created. And guess what, my babies? Give me a hip hip. I'm going to imagine you said it in your basement. Some of you need to put some pants on. Give me a hip hip. There we go. That was a little bit better. Better participation that time. The point is, my babies, wouldn't you know it, United Healthcare up 8% today. Now, eventually, this thing's going to crater, and we're probably going to trade down to 230. But the point is, for today, you feel good, don't you? It feels good to push the button when everybody else is scared, when you don't really have a reason, when all the smart people are telling you why a stock should go down, and everyone's freaking out about a potential investigation, because you knew what I knew, didn't you? You knew that if that investigation gets bad enough, somebody's going to disappear. And as sick and twisted and sort of quasi-satirical as I'm being right now, you know, in the pit of your soul, it's probably true. And so you push the button anyway, and you're up 8%. Congratulations. Grumpy Mike says, what a stupid day. Don't fight it, Grumpy. I'm telling you, the market's right. It's us who's wrong. Don't fight it, my friend. Who? Happy birthday, Nicole. Nicole, at the end of the show, if it is your birthday, I may sing happy birthday to you specifically. We should do a thing. Just come in here and tell me if it's your birthday. The problem is, most of you are going to lie. Most of you are going to lie, and I'm going to be singing happy birthday at the end of every show. Let's talk bonds, my baby. We'll get back to stocks here in just a minute, because I think there's a lot of interesting extremes here as we inch closer and closer to 6,000. And as I said yesterday, I don't know that you have a massive. I don't know if you've got a massive upside catalyst here, which sort of makes me think we kind of might be in this slightly right distributed curve here, with not necessarily a fat left tail, but a tail that keeps you honest. I think we could be in a sort of a sideways chop for a little bit to slightly positive. The hardest trade right now is to buy them. I think you can say that very easily. The hardest trade right now is to buy them. And so sort of the greatest irony is the hardest trade is generally the one that tends to work out. I don't know if that's always true. Just anecdotally, I think I believe that. Let me see what's going on here. I knew it. Look at you guys. I knew you were screaming out hooray. Some of you said it. Some of you said it out loud. And I want you to know, if I was at home watching this stream, I would have said it out loud too. Don't feel silly. We just connected in a way through the internet. That's what this thing was supposed to do. It wasn't supposed to be used as a surveillance and tracking device. It was supposed to be used to connect us as humans. And we had a little connection. For those of you who sat idly by and said, I'm not doing this, this is silly, shame on you. You let that 8-year-old that's deep inside of you, you let him or her out. Please sing, says Nicole. Ugh. You'll never come back here again if I start singing. ZB, my baby's 113 and 7 ticks. Huge range on the day. God, they scared the crap out of me this morning. I'm not going to lie to you. This morning, I guess it was my morning. It's not necessarily your morning. But they scared the bejesus out of me. We were down 2 points in bonds. And I'm going to be 100% honest. I didn't even press the button. Yeah, they scared the crap out of me this morning. But they came back. We're at 113. No, that's not true. That's not true. I puked one part of my position. I somehow last Friday had some long bond futures on that I didn't. I was like, where the hell did these come from? So I got rid of those and then replaced them with a bunch of upside call deltas. So it wasn't the worst day. But if we get back to 117, baby, I'm taking you guys back to Sizzler. But that was a hard hold. That was hard to hold them today if you came in long. Shout out to everybody that wasn't holding them or maybe scooped up a little bit. You got a nice 2-point rally in bonds, a massive range on the day. I just think I'm just not scared. You're downgrading. Give me a break. You know what I mean? That was the first thing I thought. The first thing I thought when I saw that headline was like, yeah, welcome to reality. But the problem is when you downgrade the debt, it's like relative to what, man? Relative to what? It is the risk-free asset. So it's like, yeah, okay, you're playing this game, and some people, I don't know if there's any credence to this, right? I don't know if there's any credence to the idea that you've got this big, beautiful bill that's going to be voted on, and all of a sudden you get this downgrade that shows up on Friday to U.S. debt, which then perhaps says, hey, that $3 to $4 trillion you want to add to the deficit, maybe that's not such a good idea, and that allows some Republicans to vote it down. I don't know if that was a political move. I could totally see it. I don't think it's conspiratorial to put that on the table. It's oddly timed, but whatever. The point is, does it matter? And if S&P has already downgraded the debt, if Fitch already downgraded it back in 2023, and this is a catch-up downgrade, which one of you does not know by now that we're in a really tough fiscal situation? Which one of you needed the downgrade? None of you need this. You know who needs this? All the Sunday news, Kristen Welker over at NBC News. She needs this so that she can sit down with the Treasury Secretary and just pretend like the world is ending every Sunday. That's who needs the Moody's downgrade. Because Andy Constant made a really good point. Maybe I'll bring up his tweet. He made a really good point about this, which is, okay, imagine the first thing you want to say is, okay, but some institutions can't hold anything less than a certain rating, can't hold anything less than AAA rating. And his point was like, yeah, okay, they're going to change the rules to be able to hold U.S. debt. Do you think all these institutions now deem U.S. risk too risky to hold and are going to pitch it all? So at the end of the day, sometimes I wish I got more worried than I did, because one of these days it's gonna burn me not getting worried on some of this stuff. I'm hoping I'm gonna get worried at the right things. see if I can find it. I should have found it first. Let me come back. But I just think I was more worried about. I'm more worried about what happens with the bill. You know what I mean? Debt downgrade. Give me a break. Bro. Come on, people. We're smarter than this, right? We understand our own fiscal situation. I mean, this show launched in March of last year, and I think that was the very first episode with Jim Garcon. The very first episode a year and a half ago. Anyways, let's continue. One of these days it will matter. That day is not yet today, and I don't know. I think maybe I'm getting too cute here. And on the Sunday show, when I'm long bonds, Tom is long bonds, Pete is long bonds, and Ilya is long bonds, and all four for different reasons. Some part of me was like, and this is no disrespect to them, because in one way, if there's any other three groups of people I want to have a similar opinion to, it's those three. It has nothing to do with that. It has more to do with just the positioning of the market. If all of us are long, it makes me nervous because the market's job is to ruin the consensus, right? It's like Vegas when they make a line. Who does Vegas want to win? The money, the betting side of that market, or they want the house to win? That's sort of the job of the market. So I get a little bit nervous, but I still think it's the right play. I totally think the market could catch everybody off sides here, being complacent at 112, thinking, I'm at the bottom of the range, and you start to get some people that get a little bit too long here, and you ruin them. But I at some level, I do think today's action was a bit constructive. Let me say it like this. I think it's constructive. So yeah, I like the long end of the curve here, and you're not supposed to. I don't think you're supposed to like them here. I think as the market moves away from the recession call, I think as they start liking individual stocks and start talking about a broadening out of the rally and start getting more optimistic about trade discussions and geopolitical affairs, as that happens, you're supposed to start pricing more growth and inflation into the curve. And so what could happen is the long end starts lifting, but people don't get as concerned. They're going, the long end is lifting, but stocks aren't going down. Why is that happening? And you're going, the market's going well because we're pricing growth and inflation. But at some level, I could see that happening. It wouldn't surprise me, which is why I wanted to stay risk defined. I have no idea how I got long futures on, but I wanted to stay risk defined with just with bond futures options here. Because some part of me thinks the opposite. Some part of me thinks the flattener's in play right now, and it's already flattened by 20 basis points from 67 basis points 3-4 weeks ago, now down into the 45 basis point range. I think less and less. I think the stronger the data is, the more risk appetite there is, the less cuts you can price, the higher the short end yields go. The higher the short end yields go, the more attractive longer end yields are, in addition to making these deals and easing geopolitical tensions here and sort of trade flows being known and understood by the world. I think that makes U.S. financial assets not as attractive as perhaps before Liberation Day, but at least there's certainty with money flows, global money flows. I think that's generally net positive. It's just the biggest question mark is how much funny money are we going to make? I don't know the answer. There we go. I was looking for this for like the last 2 minutes. Our probabilities of a cut starting in September are starting to firm up a bit. Market's at 93% that the cutting will resume in September, with another one followed in December. Now at 2. We are starting to get to the point. If they would take one more out, if they would just take one more out, if we go from 2 cuts and back into like 1, we would get to a really interesting place to have the over-under discussion again. If we can get back to 1 cut, if they can take one more out of these, we get to only 25 basis. I don't think that's going to happen anytime soon. But if they can take one more out, and we can get to 25 basis points price in from now until December, the narrative's going to be hilarious relative to what it was on April, like, what was that, 7th, 8th, 9th? It's going to be hilarious how far people will pivot. You know that scene in Men in Black? A pinnacle of cinema? You know that scene in Men in Black where Tommy Lee Jones is sitting down with Will Smith on a bench, and he says something to the effect he said, a person is smart. People are dumb, panicky animals, and you know it. I mean, that movie came out when I was probably like 10, 11 years old, something like that. I never forgot that line. I think that's one of the most, it's not exactly like classical cinema, but that's one of the sickest lines I have ever heard related to markets. And I know it's not necessarily a trading movie, but that's one of the most gangster lines of all time. A person is smart, but people are dumb, panicky animals. And there's one more part in there, but I can't remember. And you know it. We are, man. But anyways, let's see. I don't think there's anything to be done here in the 2s. I closed that out because I didn't think the risk and reward made sense to just try to squeeze out another. I don't know what this would be, but I do think if we can get back to like just the market pricing one cut for the end of the year, I think we have that over-under discussion, and I think it might be time to start betting the other way. But for now, I think it stays intact, and I still like the long end for a little bit of a rally here. Who knows? We'll see what happens. I might be wearing this like a big old idiot. We'll be down at 109 in the bonds, and stocks will be at 6,200, and people will say you're an idiot. That could happen. That's the game. All right, I'm so sorry. I've barely engaged with the chat. My sincere apologies. Let's see what you guys got. Let me see if I can find it. McNutty says, adding to my long bonds this morning, underwater, but not scurred. Good luck to you, McNutty. We're probably all on the same side of the boat, which makes me so nervous. I so love it when I come in here and I have some point of view and everyone goes, you're an idiot. Are you out of your mind? I'm way more comfortable when that happens. But everyone's like, yeah, me too. I'm like, oh no. Cato Prime says one of the most hated rallies. I totally agree, Cato. I totally agree, which is why it goes longer and farther than people expect, myself included. I think, again, one of the hardest, sickest calls this morning is to go buy them here, right? Because you're top end of the range, you're overextended, you're thinking to yourself, this can't go any higher. Let them come down, let them cool down 5 to 7% from here. And some of you guys you got ice in your veins. You come in and you go, I'm buying 0 TTEs today. I got rent to pay, bro. I got bills, son. Grumpy Mike says the House Committee on Rules is scheduled to hold a meeting on May 19th at 1 a.m. Eastern Time. The meeting will be held in H313. The Capitol will focus on emergency measures, yada, yada, yada. Thank you for that one. Grumpy Mike says nothing unusual about that. Yeah, the passing of the bill at 1 a.m. when everybody's asleep. Wonder what items are in there that they don't want anyone to report. Negative yields. Here we come. Deficit schmeficit. Eventually, right? This is all a shell game, and we all know it. It's all just a big shell game. How many of you have read Neil Howe's The Fourth Turning, or Ray Dalio's Principles for Dealing with a Changing World Order? I think it's a mouthful of a title, but I think it's something like that. Neil Howe just did a really, really great podcast. First and foremost, that book is incredible. I think he wrote it in the early 90s or something like that. And he talks about the social change that would occur after the 2024 election. It's wild. It's so insane. So to read that book and know that it was written in the 90s, absolutely insane. Anyways, Neil Howe just did a really great podcast the other day. I don't think I posted it. I'll post it on my Twitter feed. So if you're curious about content, particular sort of social cycles that line up with debt cycles, I'll post something at Victor Jones. The Owen Jones is 0 because I like to be difficult. I'll post it later today. Lone says, I can't comprehend. Donna says, when everyone agrees the trade is already over with. Lone says, I can't comprehend why some people think like this. Like what? Did I miss something here? 1 out of every 7 USD goes to pay down debt. I don't think that's true. 1 out of every 7 USD, or 1 out of every $7 collected by the U.S. government for revenue in a tax year. Is that what you mean? I think that's what you mean. But I don't even think that's the case. What do we take in? 5 trillion? We spend 7 trillion? And we pay $1 trillion in interest. So isn't it somewhere in the ballpark of 1 out of every $5 the government collects in tax revenue? But maybe that doesn't include corporate taxes. Anyways, the point is, I get what you're saying, Katan, and it's wild. It only goes up. I'll get a couple more and then we'll keep cruising here. JDD says, I'm leaving bonds in my retirement portfolio, not trading them anymore. Yeah, man, I'm not mad at that. I'm not mad at that at all. I think the reason I talk about them so much is I pay attention to them, and anything I pay attention to, so long as it's liquid and tradable, I'm going to trade it. I'm just a degenerate in that way. You know, if I like UFC, I like boxing, you know, I watch political outcomes. I like the macro. I like studying macro. So I bet it all. If I study it, I'm just got a weird thing. I'm going to bet it. I'm going to bet my opinion because I'm so opinionated. But I understand. I don't think you need to trade bonds or interest rates. I do think more people would benefit by having an understanding of the debt market. Yeah, if there's one thing that I would wish upon, sort of maybe if I had a short wish list of younger students, it would probably be that, one, we teach kids at a younger age, we teach them game theory. 2 would be debt markets, understanding interest rates and the cost of money, and the history of money. And the third is cognitive bias. I said something like this on Twitter the other day, which is, man, I think I saw this video that they used to show in high schools in the late 40s. I think it was made in 1948, and it was all about how to think about propaganda. It was mostly designed so that a high schooler had some sort of sense for how politics and how politicians speak and how to parse propaganda from political speak, mostly in campaign rhetoric. It's fascinating to watch this and know that they showed this to high schoolers in the late 40s and early 50s. And I think about all the cognitive bias tricks that I see, whether it's like social media, whether it's like on the news, it doesn't matter, pick your channel. I've said this before a couple of times on this show, but like the easiest example to show is like, have you ever seen a panel on the news? I'll give you an example, okay? I'll give you an example of a trick, and both sides do this. Here's what they do. Let's say you do an interview, right? You do an interview with some person, and the interview is over, and then they go to a panel to discuss the interview. Right there, that's a cognitive bias trick. What's about to happen is something called anchoring. What this means is the first piece of information you get, you're likely to over-rotate into or anchor your opinion into the first thing you hear. So whether you're on CNN or you're on Fox, the perspective you're going to get after an interview or after a major piece of news is announced is likely going to be the opinion that you adopt. So right away, doing the panel after they show this stuff is a method of anchoring, which is a cognitive bias. Furthermore, the number of people that'll be on these shows, it's always an odd number. It's always like 5. It used to be 3, but now like they need more action because we have ADD brains. So now they have 5. One of them is usually there for the illusion of fairness to present the other side. Then there are 4 that have the opposite opinion. That's something called the bandwagon effect or herd. So what you do is you hear 4 people with one opinion and one with the opposite. You're like, well, our human monkey brains go, well, it must be the 4 who are correct. So you're anchoring in the first opinion you hear, and you're likely to believe that because 4 believe this one thing and 1 believes the other, that the 4 must be true. And they do it all day long, 24/7. Then they throw it in your feed. And now all the clips that you see do the exact same thing, and you only see clips that you're likely to agree with. That's something called confirmation bias. So we're like locked in this world. We're locked in this world of all these cognitive bias working against us to try to make us either on purpose or just accidentally, because the incentive structure, that's what's there. And if you do not understand this, if you don't see the world through the lens of the incentives and to hack your brain for somebody else's benefit, to hack the weakness in your own human nature, then what chance do you have? Why would we not be teaching high school kids that or middle school kids that? You don't teach them that because it's not in their benefit. I don't know, maybe we just don't understand how important it would be. But anyways, if I had my small wish list, that's what I would pray that we start teaching kids. Game theory, debt and the history of money, and cognitive bias. I think we did that. That's a pretty decent start. Sorry, that was a tangent. McNutty says, I'm way too long right now chasing the momentum with all the bearish fund managers. Go get it, McNutty. Go get it, man. I'm not mad. I just told you guys, I'm not the guy. When the momentum trade is here and you're just supposed to stay long until the short-term moving average crosses below the short-term moving average or whatever that stuff is, I'm not that guy, man. That stuff is not interesting to me. But I'm not mad at anyone who gets it. I'm just the guy who shows up when you're scared. I take a puff of my cigarette. I say, "You're scared, aren't you?" "I don't think you should be." Flick the cigarette. Go, "I'll buy them." Or the opposite. It's like, "You're pretty confident. You feel really good about the future right now, don't you?" "I think you should be more scared than you are. But here you go. I'll sell them to you." I'm that guy. I'm just kidding. I'm the guy getting whipped around by the markets, trying to pretend like I'm some big shot. Still waiting for those dollars from Reaganomics to trickle down into my wallet. Says Emmett Morrison. Oh, you are the GOAT, Emmett. That's pretty funny. JDD says, that would be a great requirement for a high school diploma. I totally agree, man. And you know what? One more thing while we're on the topic. Because there's this movement to teach financial literacy in high schools. And, one of my buddies got tapped on the shoulder to help to collaborate on what that program would look like in New York City. And he sort of asked me some questions early on and what I thought about the whole thing. And I said, I couldn't be a part of that group. He said, "Why not?" And I said, "Because I know the game too much. And I don't think they're actually trying to help anybody. At least I would be highly skeptical, and I'd be kicking and screaming at every meeting." And he said, "Why?" And I go, "Because I don't think that even the people who are putting together this program understand what it means to be financially literate." I said, "What are you going to teach kids? How to read their credit score? You're going to teach them how to read the ridiculous APR on their credit cards? You're going to teach them, simple things like appreciating assets versus depreciating assets. Is that what you're going to teach them?" Because I think that's just making a slightly better debt slave. And he goes, "Jesus, Victor." And I said, "I'm serious." I said, if you really care, if you are really going to design a financial literacy program for kids, they wouldn't let you do it. Because you would be teaching them how not to be just a straight consumer. You'd be teaching them to minimize their debt and only take out debt to actually purchase assets. You'd be teaching them about positive and negative carry. You'd be teaching them about game theory. You'd be sitting them down. You know what? I think I said, you would be better off teaching kids poker than what this program is likely going to end up being. You'd be better off teaching those kids to play cards. Teaching them how to think about risk and reward, teaching them about sort of game theory and the play behind poker. I think that has crossover. It helps them in decision making, and I think teaching people how to read a credit card statement and then checking the box, making administrators feel good, like they're creating financially literate high school students. I think nobody's going to end up winning. And I said, you got to push. You got to push for real education. You got to push for something a 16-year-old actually needs, a perspective that they're not going to get. Not just somebody who can not go bankrupt. Take out as much possible debt, but avoid bankruptcy. If that's the goal, this is a bad program from the outset. Brian says, go out there and buy something, Victor. Exactly. The future seems more like idiocracy to me. I actually want to be, Victor's drinking our milkshakes. I want to be more positive about the future. Because here's what happens. The reason why Neil Howe's fourth turning, the reason why there are these cycles, it's because of generations, right? It's like that saying, what is that saying? Hard men make soft times and soft men make hard times. Did I get that right? Hard men make soft times, soft men make hard times. Something to that extent. So it's like, at some level, all the things that I think are important, I'm going to imprint into my children, right? They're going to know that stuff, which then creates a whole different mentality a few generations out. And I'm sort of praying that that's what's going to happen here. That all of our generation woke up. We saw the game for what it was. We saw politics for what it was. We saw money for what it was. We saw assets versus consumption for what it was. And so the offspring of that generation has a completely different mindset because of what they're ultimately taught. Catan, he's going to sing later. I think I unknowingly and somehow created some like reason to stay to the end. Let's see. Mark says these tariffs, taxes will not offset the cost between the U.S. and Chinese labor. They're nothing but a consumer tax to raise revenues to pay for wealthy tax cuts. I agree with almost everything you said, except the framing. I agree with almost everything except the framing. I think the framing of cutting, like paying for wealthy tax cuts, I see it as, and mind you, everybody that watches this stream, they know how I feel about the wealth tax, okay? They know how I feel about, you know how I feel about the wealth tax. I think the tax cuts, you're going to hate, some of you are going to hate me for saying this, but this is the way that I think about it. This is the way so politics is all about a negotiation, right? Especially if you're a populist leader or a faux populist leader, whatever you want to call them. It's a negotiation between capital and labor. So a politician is negotiating one thing for another. And I think the tariffs, I 100% agree that money is not going to offset the tax cut. I think the tax cut enables margin expansion, which is an offset to some policies that create margin contraction. And so it's like if I'm negotiating between these two counterparties, and I want more jobs for this group of people, I want to create more incentives like no tax on Social Security, no tax on tips, all that stuff, right? If I want to give more to this group of people, I got to give the other side something. And I think the tax cuts are an offset. That's the way I've always seen it. It's like kind of like this. It's not like a bribe, but if I don't do that and you get margin contraction, what's going to happen is, a shareholder, a CEO of a company, and a board is going to say, well, how can we protect that contraction, especially in an era where we have all of this productivity and AI and robotics that we can utilize to expand our margins. And so I think you end up with just straight populist policies, you end up with higher unemployment. And the tax cuts in the very short term are sort of this offset to that real potential of margin contraction. I'm not here to speak to whether that's good policy, bad policy. All I see politicians as people that are lining up things on one side to go to labor and things on the other side to go to capital. And you can make the argument that one side's getting more or one side's getting less or one side shouldn't get these certain things. But I think people kind of get locked in this world where only giving to one side is what you should be doing. And I don't know, maybe you make the argument that capital has had their fingers on the levers of power. It's probably it's time to give a lot more back to the labor class. You can make that argument. But that's probably speaking to a world you want to see and not the world as it is. And the world as it is a negotiated settlement between labor and capital, and the policies are just lining up who gets what. And so that's what I see it. It gets framed as tax cuts for the wealthy to pay off his rich friends and his donors. That's how it's framed. And maybe there's truth to that, but I think it's all, this is all a negotiated settlement. And so me as an objective observer, I just go, okay, you put that's coming over here to pay for, well, what's over here? I'll move on. I think if I do a good job being neutral, most people don't like me. Most people don't like what I have to say. I'll piss off everybody. Yeah, so that's the weirdest place to be. And it's also where you have the most, I'm not going to say alpha, but like you get the most contra. If you say something that people hate, like your market position, you're probably on the side that has the highest payout potential. So it's weird. Saying the thing that the most people hate most of the time is the most beneficial and likely mostly true. But living that life, horrific. Saying things that people constantly hate. All right, let's keep moving. Sorry, I got locked in that was a 40-minute weave to use the term. 40-minute weave. This was one. I would love to see this thing rally again and fade it. We got a little bit of a rally here today. I don't know what's up with me lately. I don't know what's up with me, but I like the currency trade. I like the very short-term long dollar trade. It might already be over, that little 2-week period might have been it. But I like it a little bit. And it's the same reason I like bonds. Same reason I kind of like the flattener. Kind of the same reason I'm getting neutral on risk, or have been. It's all the same. Bitcoin at 105. Excuse me, what's up with me? Bitcoin at 105, nearing the highs. Let's play the over-under. Let's play the over-under game. Give me the month that Bitcoin makes new highs. Maybe we should do weeks. We should probably do weeks. Weeks until, that's probably better. Weeks until Bitcoin makes a new all-time high. We're about 4,000 away. There's a built-in assumption here that we do make all-time highs, so it's possible that we do not. If that's your bet, just call it 0 or infinite, I suppose. Let's call it 0 for now. Number of weeks until Bitcoin makes a new all-time high. And the over-under is 2. You take the over, the under, the push. What say you? I think we're going to be at new all-time highs in the next 2 weeks. I loved everything about today's move. I almost feel like you can't dump them. You can't, even if the market does roll over, you can't roll them until Bitcoin makes a new high. Bitcoin making a new time high is like the foghorn for the markets. If you want everybody to capitulate and go buy risk, you You pump Bitcoin to a new all-time high. Boom! It gets in it's in everybody's feeds. People come back, start betting on risk. Now you roll them. You can't roll them till you get a new all-time high in Bitcoin. I've loved everything about the way that it held in through a period of volatility and its performance, the narrative, the legislation. You know, Brian, what's the name? Brian Armstrong has been in Washington for the last couple of days, has he not? Working on Bitcoin legislation or crypto legislation. How gangster, by the way. I never talked to you guys about this. The Bitcoin hack. If you didn't see, Bitcoin is hacked. I think they basically used some form of social engineering. I think they bribed some people that work at Coinbase. It sounded like maybe some parts of their business they've sort of outsourced to maybe some other country, maybe. And somebody bribed those people for access for personally identifying information for PII. I don't know the whole details of the story. I'm sure I'm just telling some parts of the story wrong, but this is the gist of it. And they wanted $20 million. They threatened to sort of expose their customer data. And I don't know if you've ever seen the movie Ransom with Mel Gibson, but there's this part in Ransom where he's supposed to give, I think it's like $1 million or something like that, because back then that was a lot of money. I mean, it is a lot of money today, but let's face it, it's not the same. So I think it's something to the extent of he's supposed to pay $1 million, and he has a press conference where he's supposed to announce this or something like that. And then he basically says, I'm not going to give you this $1 million. You'll never touch a penny of this. Instead, I'm going to give this $1 million to anyone who turns in my son or turns you in. So it's like it was a mechanism to turn this group of people who kidnapped his son against each other. It's a really fun. I mean, it's not funny, but. And then that's exactly like I think Brian Armstrong saw that movie, and that's exactly what he did. So he made this video. He posted it on his Twitter, on his social feeds, and he basically says, "You're never going to get a penny of that $20 million. Instead, I'm giving it to whoever turns you in." And I mean, it's not funny, and I thought it was gangster that he did it, but some part of me chuckled a little bit. Because it's a scene straight out of a movie. Sometimes art imitates life, sometimes life imitates art. But good on him, man. That takes courage. I think he did the right thing. I think he showed a lot of leadership, incredible leadership skills in that moment. And I think he was transparent about what was happening. I thought it was a good move in all ways. And I watched that video to speak to that study that was done that said retail traders spend less than 6 minutes on a trade idea. Here's what it took. I watched that video and I go, I'm going to buy some Coinbase. I think I got a little bit of upside deltas that day just because I watched his ransom video. If you love this concept of ransom videos, then you got to go watch you got to watch The Office, where Michael does a ransom video. That's pretty funny, too. What did you guys say in the over-under? Even Jamie Dimon may be getting on the BTC for customers' angle. I don't get what his deal is. I mean, I kind of do, right? It's like everyone says, no, that's a Ponzi scheme. So you should be trusting this Ponzi scheme because I have power and control in this Ponzi scheme. Don't go to that Ponzi scheme. I have no say in what happens, or I have less say. But in a way, I think as soon as they did this Bitcoin ETF, I think whatever Bitcoin could have been was compromised. Whatever it could have been was totally compromised, in my opinion. And I don't like the same thing they say happens with gold and silver, which was enabled by GLD and so, like all the paper markets, the paper aspects of gold. That there are so many more receipts or claims on gold than actual physical gold. I don't know why people don't think that exact same thing isn't going to happen in Bitcoin, or you at least opened up the attack vector for that to happen. But hey, if it pumps your bags, who cares? That's somebody else's problem. We went from save the world to pump my bags. Funny how that happens, man. Rational self-interest. Rational self-interest. That's the mechanism of control. You know what I mean? If I know your rational self-interest, I just change the incentive structure to dictate your behavior. That's the whole lesson in Prisoner's Dilemma. It isn't don't rat on your friends. The lesson is, and it's not how to optimize your play. The lesson is the structure of the game can be controlled as long as I know your incentive structure. I control you. But if you care more about loyalty to your friends, if you care more about the people you're with than your own individual self-interest, it's harder to control you. And ironically, that's where your best outcome comes. Work as a team, but socialism is bad. All right, let's keep cruising. Gold at 32 and change, they just won't break it, man. It's the same thing that happened like around 26. It just wouldn't, it was like we could not go down further than 2,600. And at some level, let me show you what I mean. Let's go to the continuous contract. It's like, it's like somebody was just sitting here and they would not let this thing break 26. And at that time, I was like, if we get below 2,500, it might be a good entry. And they just wouldn't let them break 26. And at some level right now, 32 is like this little line that we haven't. I'd love to see him break 32. I'd love to see him get back down to 3,000. And in a way, the miners seem to have priced that already. The miners gave up hope. GDX is down from 54 down to 47. Newmont got absolutely clobbered last week. But if you remember, some little birdie said to collar up those gains. I'll feed you, my babies. So we got out of the way a little bit of that, but I mean, you can make an argument here if you are a longer-term bull in the miners like I am, that you gave you a decent price here. I think if gold can break 32 and gets back down to 3,000, miners they'll have a little bit further to fall. But I kind of like them here. I wish they'd crush gold. I really wish they would just crush it. I wish they would crush gold down to 3,000. I wish Bitcoin would be at 120,000. I wish it would be at like 6,100 in the S&P. I wish vol would be down at like 16 and change. And then we can just start buying up some cheap puts and get ready for that 5% puke. Because everyone's still skittish. They want to get bullish, but they're still skittish. And the moment they run that headline that says, China and the U.S. discussions are falling apart or getting more aggressive or further away from the deal, the moment they run that headline, everybody runs for the hills again. What do we actually have right now? A deal in principle? I think Besson even today, he made some mention that if our trading partners are unwilling to negotiate, that tariffs could go higher. I think he said something to that effect today. I would not be surprised, man. But maybe, I think you almost can't bet on that. You know what I mean? Because if it happens, you're not going to know when it's going to happen or why it's going to happen. I think the more important thing is to just be prepared, have the risk you want on, so that should something like that show up, you can properly frame it. Okay, I had this in my, I planned out the distribution. I have my left tail risk, I have my right tail risks. All of these are sort of like known risks in the market. And when they show up, I sort of had a feeling this could happen. This is how I would think about the world in that, if that were to be true. What is happening now? Does it match what I thought could happen? I think it sort of helps to frame things. You know, why would you be afraid? There's no room for fear when you've sort of thought through your left tail and right tail distribution risks. So when the world manifests themselves that you've already sort of thought through, there's no room for fear. It's just execution at that point, given what you see on the screen relative to what you thought would happen. Give me back my son. Soul Train. Okay, let's do this. Who can tell me the lead? So there's a guy in there. He was both the cop and the engineer of the kidnapping. Don't Google it, okay? No Series, no Groks, no AI. Let's get these synapses in our brains working. Who can tell me the name of that guy? The name of that actor? Let's see how good you guys are. What do I think about Netflix and Disney? I honestly, I completely miss the Netflix trade. I don't get it. I honestly do not get it. I mean, I sort of get that they'll get a lot more money from their advertising tier. I get that. And I think people are starting to think about Netflix as sort of like a defensive stock. This thing that I heard Josh Brown say this the other day. I don't know if I believe it. I think he's a really smart guy. That I think the way he's thinking about it is right. I don't know if it's the right way to think about it. I'll explain what I mean. He called these stocks like defensive. He said in a downturn, in a recession, people aren't going to stop buying iPhones. People aren't going to cancel their Netflix subscriptions. People aren't going to stop being on social media. And I think he's right that people think that. I don't think that is true. I think if you're in a downturn in the economy, or the broader economy starts to look like what it looks like for the bottom side of the K, is probably a better way to say this, because I think some people are living a recession right now, and they've been in one arguably since like the third or fourth quarter of last year. But I think then one job becomes two jobs becomes three jobs. And what happens to your time on social media? Does it go up or does it go down? If you're working two jobs to make ends meet, do you buy a new iPhone or are you buying used iPhones? And if you're buying a used iPhone, is that benefiting Apple? If you're not paying $1,000 a pop or $20 a month or whatever that thing is, if instead you're buying used goods, which I think, a higher percentage of these types of purchases would go towards buying up used products versus new ones. Are you going to spend a few hours on Netflix? Are you going to spend a few hours on Netflix? You're more likely to cancel a Netflix subscription to save $20 a month, or whatever the price is now. I don't know. I don't have a subscription. So I wouldn't think about these things as defensive. I totally think that there are some cyclical elements to those stocks. I do think that they're maybe not the same as other cyclicals. And I think that he would probably say that as well. He's like, bro, I'm not telling you that those stocks are going to hold, like they're not going to go down in a recession. He would probably is just saying they're less cyclical than, I think he used an example in the past of like Alcoa. It's not that type of cyclical, or doesn't have that type of beta to the actual real economy, which I would agree with. So I think from a trading point of view, I would look at this and go, yeah, I'd fire against this for sure. I would want to fade this. I don't look at it. I don't have a feel for this market at all. And I don't usually love to come in and short things that I haven't been watching at all. Unless something goes super, super dumb. I've mentioned this many times on this podcast before, but like Rivian, when they made 10,000 cars, but were trading with a market cap that was more than Volvo, which made millions of cars in a year. I go, okay, this is stupid. And I didn't have to have a feel for that market to go, this is stupid. You just have to stand in front of this long enough, and then it eventually all came apart. So I don't know. I haven't been watching this. I wouldn't fade it. I don't know what the deal is here. But if you put a gun to my head and you said long or short, I go short for sure. And it's hard for me to wrap my mind around the fact that, like, why are people buying this stock? I don't even know why people subscribe to Netflix. So I might be the worst person to ask about Netflix. I don't even have a subscription anymore. I'm telling you, it's nearly impossible. I will say this for myself. I've made it really hard for advertisers to find me. I pay for YouTube Premium, so I don't watch any ads on YouTube. I'm not on Netflix. I don't own a TV. I don't listen to the radio. I don't listen to Spotify. Like when I have music, I buy the album. And so when I listen to music, I'm literally playing the album. That's the way you're supposed to listen to music, everybody. See, that's what you young kids, I'm such an old guy now. That's what you young kids will never understand. Putting in a CD or a tape, and you listen to it all the way through as the artist intended. They wanted to take you through sort of this emotional journey. The good ones did anyway. You know, you'll never know that feeling of when a song ends, you already know the beat that's about to hit. You'll never know what it's like to listen to a song, like it comes on the radio or something like this, or you don't know what the radio is. To listen to a song, and then you know what the next song is supposed to be, because you've listened to that album so many times that once you get to the end of a song, you have this Pavlovian response that wants to move into the next song. There's probably a word for that. I should grok that later. You'll never know what that's about, but I still do that. I still listen to albums start to finish. So you can't put an advertisement in when I'm listening to music. So, you know, they're reading my phone and my emails and my texts and my searches and all that. But other than that, it's kind of hard to find me. So like movies that are coming out, I have no idea. Absolutely no idea. Games that are being played, no idea. Like award shows and all this, I have no idea. Absolutely zero idea these things are happening until after they happen. All right, we'll do a couple more here. Lawrence says, I just paid $8.99 to add a household to my account, and I hate myself for it. I hear you. Greedy, you know what? You're part of the problem, Lawrence. You're part of why I'm looking at this Netflix chart scratching my head. People like you adding households. You paid for a service, and they made you add a household. Can you believe that? Imagine if newspapers did that. We're going to send you the newspaper, but if you give that newspaper to your friend, you need to pay us again. F you. I pay you for the service. See, that's the thing, man. If we were this is the game, bro. The more you digitize something, the more control somebody else has. Do you understand this? You remember when Netflix was mailing you a physical CD, do you think they would be able to monetize you giving that physical CD to DVD for somebody else to watch? No, they couldn't do it. But when you digitize it, you get a benefit, which is more, more convenience, but they get more control. And guess what else? Guess what that is analogous to? It's probably not the way to say that. Money, bro. Money. You guys better hold on to physical currency as long as possible. You will rue the day that you jump in with 2 feet to CBDCs. You will rue that day, my friend. You don't want it. That's why I have physical books. I started thinking about everything in my life, and I said, all right, what is it that I keep digitally that somebody else has, and that technically means they control? I thought about everything. I go, well, all my photos, I don't actually have those. Technically, they're in a cloud somewhere that's in somebody else's servers or on somebody else's server farm. I don't have those. Those could disappear one day. I said, my money, I don't have my money. It's at some other place. I was like, my books, they're all digital. I don't own any of those technically. Even the stocks I own, I go, they're held in street name. Those aren't even held in my own name. Worst case scenario, I got a big problem there. I thought about everything in my life, and I tried to understand, what do I actually have? And the answer to most of those things is nothing. So that's why when I think about like the Klaus Schwab line, you'll own nothing and be happy, and sort of this, I think people have this idea that that's out into the future, that owning nothing means assets. You won't own your house. You'll have to rent it from the rentier class or something like this. You won't own a car. You'll get picked up by a self-driving Tesla. There's probably some truth to that aspect. Like there's these bigger things that we could be on our way to moving towards. But I'm like, most people don't even understand that they don't own most stuff anyway. Even your house, technically, I guess you're on the deed, but like the mortgage sort of supersedes ownership. So do you really own it if you've got a mortgage, if you haven't paid it off? And if you don't own it in a trust or something that can't be garnished? I think when I heard that line and I see people talk about that line, I'm like, bro, you're 85% there. You don't even know it. You're 85% of the way there. And you don't even like cognitively understand that you don't actually have anything. Somebody else has it all. McNutty says, paranoid much? Maybe. I don't think I'm paranoid, I don't think the end of the world is coming. But I think that's just the way my mind works, man. I just think through risks in all parts and all facets. And so it changes my behavior. So then some part of me was like, okay, I would like to diversify some of this risk. So some of the money I took out of the bank at that time, I bought more physical gold, more physical silver. I bought more Bitcoin, things that I actually had. And then I bought all physical books. I have a big physical book library now in my house versus the digital one that I kept before, because the ownership to me was more important than the convenience of having it on an iPad stored in the cloud somewhere. It also pissed me off that I'm like, what's the marginal cost? If you create one digital book, it's the same cost. So like, if I'm gonna buy a book, why wouldn't I actually pay for the cost of production to have a physical product versus a thing that had almost no marginal cost? Like, I'm gonna pay the money, give me something for it. Don't give me a digital bit that it didn't cost you any money. This is a wild show today. What a weird show. I just ranted for 80 minutes. Just look out the window. If no meteor in sight, you're good. I agree. I'm not I don't think I'm a doomsday person. When you get on here, does it seem like I'm angling towards the end of the world or end of day scenario? I don't think so. I think I'm just trying to see the world as clearly and objectively as possible. I'm going to leave you with this one before I sing happy birthday to Nicole and get everybody out of here. I kind of want to spark a debate here. I don't know how much you guys are going to engage. My wife and I don't really do the Santa thing with our kids. I started for the first 2 years, and then I said to my wife, I don't want to do the Santa thing anymore. I go, I don't want to tell them that there isn't one, but I just want to quietly not do it, and I don't want to mention Santa Claus anymore around Christmas. She goes, what are you talking about? She has to live with me. She has to deal with these crazy, you know what I mean? She has to deal with this. She goes, what are you talking about? I said, well, I don't ever want to lie to my kids about anything. I don't want to create a false reality for them that then gets shattered later. I want them to be anchored in the real world with a real sense of what life is, not sort of this fantastical thing that's not true. It has to be there. So then their whole life view gets shattered, and they have to rebuild on top of this idea that all of society lied to them for the first 9 years of their lives, including the people that they loved the most. And bro, I'm insane. I'm batshit crazy. Anyways, so she was like, I don't think she totally agreed, but she grew up in Singapore, and Christmas isn't a big thing out here. So she was like, all right, whatever, whatever. This is more your tradition than mine. So we really don't do it that much. And I'm sort of curious what you guys think about that. Again, I'm not a monster. I didn't go to the kids and say there's no Santa Claus, but we kind of phased it out. We don't talk about that aspect of Christmas at all. And it's for the reason that I don't want to lie to our kids ever. And I want them to be rooted, have a strong sense of reality. Am I wrong or right for this? Hopefully I see the chat starting to move. Somebody goes, Santa's not real. Let's see what happens. Oh, look at Victoria. Santa ruined your worldview. No, that's not what I'm saying, McNutty. You're taking everything I say to like a massive extreme. I know. That's so, Kyle says the saddest kid in 5th grade was the one who was the one who believed in Santa. 5th grade. You made it to 5th grade, Kyle? That's tough to do. That's got to be super tough to do today. I'm going to read all your comments. All right, let's do this. Nicole, all right, everybody, do me this favor. Let's use the internet the way it was supposed to be used. Let's connect with each other on a human level. We've got a birthday in the chat. Let's do something we've never done here, which is I'm going to sing one verse, not the whole thing. But let's connect with Nicole. Don't be some too cool for school person looking on your phone or your tablet or your desktop and say, I'm not going to do this. Just do it. Connect with all of us as human beings in this moment through the internet. Nicole, this one is for you, my friend. Happy birthday to you. Happy birthday to you. Happy birthday, dear Nicole. Happy birthday to you. Nicole, have a good one. So just don't clip that and put that on the internet, everybody, okay? Let me get out of here with some pride. And shout out to all of you who actually sang. That was a cool moment. I'll see you back here tomorrow, everybody. Same time, same place, same great network. Only on Tasty Live. Peace.